business restructuring and reconstruction. Business restructuring and reconstruction. What is the weightage of the chapter? So confirm 8 marks. Some cases that will be increased to 12 or 14 also. In one attempt, they are given nearly 14 mark question from this chapter itself. Very, very important chapter. Just listen carefully. What are the following? What are the contents we have to cover in this chapter? What are the contents we have to cover in this chapter? Yes. So the first one, amalgamation, ma. Sir, I think in your corporate financial reporting, amalgamation, merger, business combination, etc. So here also normal only, that is an amalgamation. That means two companies are merging with each other, one company acquiring another company. This is an amalgamation. But here we want to know that what are the tax consequences we have to face if any amalgamation happen. So we are not about the balance sheets and the P&L accounts, but just we are thinking here about only that what is the tax consequences if any amalgamation happen. The same demerger also. So what are the tax consequences we have to face if any demerger happen? Next, conversion of that sole proprietorship concern into company. So I think initially we have started as a sole proprietorship concern. Day by day business increases. So that's why I want to follow that more compliances. So that's why entirely sole proprietorship concern can convert into company. Here at the time of conversion, what are the tax consequences we have to discuss? Next, conversion of partnership form into company. So please remember, sole proprietorship form also can convert into company. Form also can convert into company. But in these conversions, what are the tax consequences? Last conversion of private company, unlisted public company. You can't convert the listed public company, ma. Only private company, unlisted public company can convert into LLP. So here, what are the tax consequences we should know? So these are only that 5 ESMA recognized conversions, like including amalgamation, demerger, form into company, sole proprietorship concern into company, private company, unlisted company into LLP. These are all related to conversions. These are the recognized conversion. So you need to think about only these 5. If anything is going to happen, example, LLP is converted into SR company, the type of conversions are not recognized. So here, if any one of these 5 things are happen, then what is the tax consequences we have to discuss? Last concept, slum sale. Last concept we have to discuss about what slum sale. Next, I think if you are observing the question paper related to this chapter, normally if you are observing the question paper, always in our question paper we have a depreciation question also. Next, apportionment of depreciation question also maybe you can get. Yes, ma'am. Next, slum sale normally you can get. So you can't take these two concepts as an inter-concepts, because in our syllabus we have a depreciation as well as apportionment of depreciation also and slum sale also in our CMA final syllabus. But this depreciation and apportionment of depreciation alone I will cover under the head PCBP. So I think we need to discuss the PCBP chapter. Within that PCBP chapter, I will give you that what depreciation and apportionment of depreciation concept. So because exclusively if you are read those all the concepts in the chapter, then you can get the clarity. So that's why I shifted the depreciation and apportionment of depreciation to the PCBP chapter. That means we have to discuss how many concepts exclusively in this chapter, totally 6 concepts. Okay. Shall we start the first concept, all of you? Yes. Section 50B we have to start. Slum sale, that is section 50B. So I will tell you how much extent this concept will be important. Also I will tell you, if you are reading the 2 or 3 attempts, 99% of the chances you can get this slum sale question in your examinations. That much of importance, yes sir, you need to give to this concept. Just very, very important. Just listen. Yes, ma'am. So Mr. A having that one factory. Mr. A having that what, one factory. That factory established in which year, please let me know. That factory established in 2005. Yes, we can call this as a factory or undertaking or unit also you can call. I think you know how many assets involving in this undertaking also. So many assets may be involving in this factory. So all of the sudden, you want to solve this entire factory for the ESMA 50 lakh. Ma. What is the actual consideration for the selling of entire undertaking? Ma? 50 lakh. So if you are observing that, then fair market value of the factory is 60 lakh. That means you can solve this ESMA factory for 60 lakh, but you are selling only for how much amount? Ma? 50 lakh. Okay. Here, can you tell me this isn't called as a bulk sale? Yes. If I am selling only this pen, this is a normal sale. Ma. If I am selling my entire classroom assets, this isn't called as what? Ma? Bulk sale, lump sum sale. That is only slum sale. So definition of slum sale is a very, very important. Ma. So based on these only you can get the clarity. Sale of one or more undertaking. Can you tell me here one undertaking we are selling for lump sum consideration? How much lump sum consideration, ma? How much lump sum consideration in our example? What is the lump sum consideration in this example? 50 lakh. Okay. Without assigning the values to the individual assets. So I don't want to give you the individual assets value. For this entire undertaking, I will give you the 50 lakh. I don't want to mention about the how much I am giving for the building, how much I am giving for the plant and machinery, how much amount I am giving for the staff, how much amount I want to give you for the furniture. These are all the things I will not take it out now. I want to give you only what is that amount for the building, what is that amount for the plant and machinery, what is that amount for the staff. I can't give you. Only I will tell you the lump sum consideration. So this is only the slum sale definition. A very, very important. You can get the MCQ also. Sale of one or more undertaking for lump sum consideration without assigning the values to the individual assets. Clear? Next, suppose if you are observing the factory, you have a factory, Mr. A. Here you are selling. That's why you can call it as a transferor or seller. Who is receiving the or who is purchasing that? Mr. B is purchasing the factory. Here, that person called as a buyer or transferee. So you are doing the sale of the entire factory during the previous year 23-24. Can you tell me Mr. B is paying how much actual consideration now? 50 lakh. But what is the fair market value? 60 lakh. Here, we are selling one capital asset. That is an entire undertaking can be considered as a capital asset in my hands. So that is transferred during the previous year. So that's why we have to calculate what was section 50B. So capital asset is there, the capital asset is transferred during the previous year. So that's why we have to calculate the capital gain under this section was section 50B. So why we have to follow the section 50B? Because we are not selling the individual asset. We are selling the lump sum. We are selling the on undertaking for the lump sum consideration. So that's why you have to calculate the capital gain under prescribed section. That is only called as what mass lump sale. Are you following me up to now? Yes, ma'am. Next one. Okay. Here, who have an obligation to compute the capital gain, ma'am? Mr. A have an obligation to complete the capital gain. Wait, just 1 minute. Yes, ma'am. Okay. Then you are selling the undertaking or unit. So that is only capital asset in our hand. At the time of calculation of capital gain, always you have to remember whether transferred asset is a short-term capital asset or long-term capital asset. So because if you want to calculate the capital gain, end result may be long-term capital gain you can get, or you can get the short-term capital gain. Here you have to know about whether it is a long-term capital gain, short-term capital gain. Yes, ma'am. If your undertaking period of holding is more than 36 months, can you tell me? Here we are established that factory in 2005 and we are selling in the 23-24. So that's why this is an what, ma'am? Long-term capital asset, and that we can get the what, ma'am? Long-term capital gain. Are you clear? So if the period of holding is less than or equal to 36 months, that is a short-term capital asset, on that we can get the what, ma'am? Short-term capital gain. On that we can get the what, ma'am? Short-term capital gain. So always you should remember, at the time of calculating the capital gain, we have to decide about whether the calculation of capital gain will be resulting into long-term capital gain or short-term capital gain. That is based on period of holding. In our example, what happened, ma? In our example, we have a long-term capital asset in SSA hands. So that's why we have to calculate the long-term capital gain under section 50B. Example of what, ma? Slum set. What is that, ma? Slum set. Clear? All of you? Next, sir, what is the computation procedure under section 50B? What is the computation procedure under section 50B? Yes, ma'am. Particulars amount. Particulars amount. So first thing, sale consideration you have to take, ma'am. But here there is one provision is an inserted here. We have to observe the what is the fair market value or actual consideration, whichever is higher you have to take, ma'am. Fair market value or actual consideration, whichever is higher you have to take. So but if there is no this if there is no insertion of this provision, always all the persons are taking as in what, actual consideration only FMP. Here actual consideration only sale consideration. No, you can't do that. Here fair market value or actual consideration, whichever is higher, fair market value only. So that is only you need to take it as a sale consideration, minus you have to reduce that what, transfer expenses. Finally you will get the net consideration. I think you know this format in our intermediate level itself. Yes, ma. What is that, ma? Always for the purpose of computing the capital gain, first you have to take the sale consideration. From that sale consideration, please reduce the transfer expenses, then you will get the what, ma? Net sale consideration. Are you clear, ma? From that we have to reduce the cost of acquisition, but here we are unable to reduce the cost of acquisition because in factory lakhs of assets are there. Every asset cost we are unable to identify and we are unable to reduce it also. That's why instead of the cost of acquisition, while calculating the capital gain in case of slum sale, please reduce the net worth. Please reduce the what, ma? Net worth instead of what, ma? Cost of acquisition. Are you clear? If you are reducing the net worth of the undertaking, then you will get the capital gain. That may be short-term capital gain, that may be long-term capital gain. But in our example, that is what, ma? Long-term capital gain. Are you understood this format, ma? What is the change we have to follow here? So whatever the sale consideration is received or fair market value, whichever is higher only you have to take it as an what, ma? Sale consideration. Yes, ma. Yes, are you understood, ma? So please give me clarity about it in this entire format. So please check it out. In this entire format, what you have to know, ma? Net worth only. Because the remaining things always they will give you in the problem directly, ma. So always they will give you the directly all these things, ma. But we have to know only what, ma? Net worth. How to calculate the net worth. Yes. So net worth computation is first, please take the total value of total assets. So in your balance sheet, whatever the assets are there, please take the total value of total asset. From that, please reduce the outside liabilities. Can you tell me? Outside liabilities means what, ma? Debentures, trade creditors, trade payables, bank loans, etc. These are the outside liabilities. So then you will get the net worth. So please don't reduce the assets minus liabilities. Maybe you will get zero. Please reduce the total value of total assets minus what, ma? Outside liabilities. You will get what, ma? Net worth. So there is another shortcut also for calculating the net worth, ma. So normally assets is nothing but what, ma? 100, liabilities is 75. So outside liabilities is what ma 75. If I am reducing these two, I will get the what ma net worth of 25. Instead of taking the total value of total asset, instead of taking the total value of total asset and minus outside liabilities, please add these three things. Maybe you will get what ma net worth. It may not be worked out in all situations. Yes, ma, you can use the shortcut also. Yes, ma, net worth can be defined in another way. Please add the equity share capital, preference share capital, and resource and surplus. Maybe you will get the what ma. Can you tell me? Maybe you will get what ma? Net worth. So how to calculate a net worth ma? Please let me know. Total value of total assets minus outside liabilities. Then you will get what ma? Net worth. So here, what is my doubt? What is my doubt only? Sir, we have a number of assets in our balance sheet, sir. We have to value that asset and we need to total up that value also. At what value we have to take? Whether it is in book value, whether it is in revalued values, whether it is in purchased cost. Yes, ma'am. Whether it is in case of depreciation, whether we have to take the WDV, what we have to take, that is only the point. That is only the what, ma'am? Yes, ma'am. Total value of total assets. What is that? Total value of total assets. How to value the assets? That is only the important one. In case of depreciable assets, if you have any depreciable assets in your balance sheet, then you have to value that assets at what value ma? Opening WDV. If that is a self-generated goodwill, nil. If any asset on that section 3580 deduction, can you tell me what is the 3580 deduction? Specified business man. If you are using any asset for the specified business, on that 100% deduction which was provided during the year of incurrence, ESMA, that is under the head PCBP. But here, if already on the asset section 3580 deduction was claimed, then what value we have to take for the purpose of total value of total asset ma? Nil. Any other asset that is in what value ma? Book value. I will ask the few asset. Please let me know what is the value we have to consider. So please type your answer. Ma. I will ask the 5 or 6 questions. Very, very important. If you know these things, then entire discussion is over. Okay. Plant and machinery. What is that value we have to take, ma? Okay. If any plant and machinery was there in balance sheet, what is that value we have to take for the purpose of total value of total assets? Okay. Opening WDV. Second one, ma. Purchased goodwill. Purchased goodwill. Purchased goodwill, not self-generated. Yes, that's enough. Ma. If any revaluation figures are there in the balance sheet, please no purchase price valuation. They have to consider only book value. Okay, maybe purchase price is a different book value means nothing but what is the amount we are recorded. So next month. So if any revaluation figures are included in the assets values, please ignore the revaluation figures. Ignore the what ma? Revaluation figures. Next one ma. Next one. A CA report has to be submitted. Normally, what is a tax audit due date ma? Tax audit SSC's related due date 31st October. Within that 1 month before, we have to submit the CA report. Within that CA report, he has to submit that what ma? Yes ma, he has to give one certificate. Yes, these are all the net worth calculations are correct. This type of certificate he has to give to that SSC. He has to give to that Huma SSC. Because in net worth calculation, we have to add the what different assets values, then we can calculate the total value of total assets. So that's why in these all the things, maybe mistakes can be happen. That's why income tax department wants to get some assurance with regarding these from the CA. Okay. Sir, normally up to now, if you are perfect, then you can get the capital gain or short-term capital gain or long-term capital gain. But here you have to know about what is the tax rate. So if you are observing up to now that calculation, then you can get the only whether it is in short-term capital gain or long-term capital gain or short-term capital loss or long-term capital loss. But if you are observing this is an income, then what is the tax? So on this income we have to apply the rate, then you will get the what more tax. Shall we know about the slum sale related tax rates? Shall we discuss the slum sale related tax rates? Yes. First I want to give you the clarity about the tax rates in the capital gain. So normally if you have a short term capital asset, that short term capital asset also in my hand, listed equity share, equity oriented mutual fund units, business trust units. If these three assets are short term capital asset, on these three assets if you are calculated the capital gain, that is taxable under section 111A. So nothing but my capital asset is a listed equity shares. I am selling that listed equity shares. I need to calculate the capital gain under section 111A. I have an equity oriented mutual fund. I have an units of business trust. If I am transferring these as a short term capital asset, then I will get the capital gain under section 111A. Then tax rate is nothing but how much more? 12%. Then tax rate is how much amount? 12%. Are you clear? Next, any other assets. What is that, ma? Any other asset like what, ma? Building, yes, ma? Plant and machinery, etc. If that or any other asset is nothing but what, ma? Short-term capital asset. If any other asset is nothing but what, ma? Short-term capital asset, then we have to calculate the capital gain under other than 111A. Then we have to pay the tax at what, ma? Normal tax rates. Then we have to pay the tax at what, ma? Normal tax rates. Clear, ma, up to now? So can you tell me our undertaking, our undertaking or unit isn't classified under any other assets? So that means if you are transferred that any undertaking or unit as a short-term capital gain, then what is the tax rate is an applicable, ma? Normal tax rate. What is the tax rate is an applicable, ma? Normal tax rate is only applicable. Normal tax rates only applicable. Next one, ma, long-term capital gain is there. So can you tell me on long-term capital asset only we can get the long-term capital gain? If you have the long-term capital asset, that is an listed equity shares, equity-oriented mutual fund, units of equity, units of what, ma? Business trust. If these three assets are the long-term capital asset, then we have to calculate the capital gain under section 112A. What is the tax rate, ma? 10%, and basic exemption limit is 1 lakh. Can you tell me basic exemption limit 1 lakh means if you have in that 1,20,000 under section 112A, 1 lakh is exempt, and the 20,000 only we have to pay the tax at the rate of what, 10%. So normally, other than these three assets, if any capital asset was there in your hands, then on that we have to pay the tax at the rate of what, 20%. Tax at the rate of what, 20%. So if you are observing that here long-term capital asset in the form of undertaking or unit is classified under section 112, what is the tax rate, 20%. So that means for us, what is the relevant related provisions, other than 111A, 1. So if there is a long-term capital asset, so if there is a long-term capital asset, 112, yes, ma. If there is a short-term capital asset, 111A. What is that, ma? 111A. So please check it out. Once again, I am giving the clarification with regarding the slum sale tax rates. If that is short-term capital gain other than 111A, we have to apply normal tax rates. If that is in long-term capital gain under section 112, what is the tax rate? 20% is there. Are you understood the tax rates? You can't restrict with the computation of capital gain. You have to know about the what is the tax rates are applicable for the slum sale related capital gain also. Clear? Okay. Yes, ma. With respect to slum sale, these two only the sections are relevant, ma. These two are not relevant. Okay. Next one. Uh, Please open the workbook relating to business restructuring and reconstruction chapter, ma. Please open your workbook. Okay. Sir, slum sale questions are very, very important in this entire discussion, sir. I want to list it down the what are the questions relating to slum sale. So I want to give you a list of the questions relating to slum sale, ma. Question number 3 is slum sale. So please write it down. Question number 3 is slum sale. Yes, I want to give you that homework for all of you. So question number 3 is slum sale. So question number 3 slum sale. Next, question number 6 also slum sale. Question number 6 also slum sale. Question number 7 slum sale theory question, ma. Question number 7 slum sale theory question. Question number 11 also slum sale. Question number 11 also slum sale. Question number 13 also slum sale. Question number 13 also slum sale. Question number 14 also slum sale. Question number 14 also slum sale. So totally we have 6 questions from the slum sale concept, ma. Totally how many questions we have from the slum sale concept, ma? 6 questions. So okay, we'll start the first question, ma. Question number 3, study material question and present MTP question, ma. How can I repeat? I don't remember. Okay, no issue. Go with the flow then. So I didn't remember, just I read it out only. Okay. If you want, okay, question number 3. Question number 3. And next to question number 6. Question number 3. Yes, ma'am. Question number 3, question number 6. Next question number 7. Next question number 11. Next question number 13. Next question number 14. Next question number. So I think we need to get in total 6 questions, sir. Yes, 6 questions are over. These are only the 6 questions related to what, ma? Slum sale. Okay, so why I am listing out the entire questions? In your study material, you have only one question, ma. That is only right now question number 3. The remaining all question I am taken from the past examinations are nothing but what, ma? MTP, RTPs only. Definitely you can get the slum sale question out of these only. Otherwise, they are changing the numbers, ma. So if you are observing that, if you are doing that only question number 6, remaining all the questions are same. Just 1 point or 2 points maybe differ. That easily you can understood, no issue. So first I will start the question number 5. So can you imagine, yes, can you imagine if they are giving the question like this, the many students are confusing as in, yes sir, this is a capital gain question. Because in the end they are given the capital gain. Because of these questions only, they are reading the entire capital gain chapter. That is not correct. Please check it out. Please check it out. Flux Limited having several undertakings. Okay, they have in the several businesses, they have in several undertakings. During the 23-24, they are selling the one of its undertaking as it generate the losses since last 5 years. So continuously that undertaking giving the losses only. So that's why we are selling that undertaking. For lump sum consideration of 300 lakh without assigning the values to that individual asset. Can I call this as a meaning of slum sale? Can I call this as a meaning of slum sale, ma? Yes. What is the lump sum consideration, ma? 300 lakh. Okay. So what are the book value of assets, market values they are given? Can you tell me? Yes. Here you haven't already taken the yes, ma, sale consideration. Yes, ma. And next, you know the transfer expenses also. Then please take the sale consideration minus transfer expenses. You can get the what, ma, net consideration. From these net consideration, what we have to reduce, ma, please let me know. No, net worth. Net worth means total value of total assets minus outside liabilities. Total value of total assets, market values are irrelevant now. Please strike it off. So if you are observing that while you are taking the total value of total assets, do you take the any market values now? No. Maybe WDV, nil, book value, these are only the three things we have to consider. Then why we have to consider the what now? Book values, please, market values, please take it off next. Land, what is the value we have to take my land? This is only depreciable, that's why what is the value we have to take my book value? That's 50 lakh. Machinery, please take it out my machinery. Is it depreciable? Yes. If that is a depreciable, what is the value ma? WDV 60 lakh. Furniture depreciable 90 lakh. Stock book value, debtor book value, creditors also. Yes, ma'am. Total value of total assets if you are doing, yes, ma'am. Please take the calci 50 lakh plus 60 lakh plus 90 lakh plus 30 lakhs plus 40 lakh minus 50 lakh. Then you will get the net worth of how much, ma'am? 220 lakh. 220 lakh. Here, is there any cost of improvement? No. Please reduce the 220 lakh from the 285 lakh. Then you will get the long-term capital gain because this entity generating the loss from how many years, ma? 5 years. You are holding that entity for the 5 years. That's why this is a long-term capital asset. That's why you are getting the long-term capital gain. The very, very important observation in this question is nothing but what, ma? Very, very important observation is nothing but what, ma? Here, the entity is generating the losses for that 5 continuous years means that is a long-term capital asset. One more thing you have to know. There is no indexation in case of section 50B slum sale computation. There is no indexation benefit. Why? Why they are not given any indexation benefit? Because we are taking the book values as well as what, ma? WDV values. So every asset related purchase date and that related indexation calculation impossible here. So instead of that giving that indexation only, we are calculating the total value of total assets minus liabilities. What is that? This is also current values only. That's why no need to give that what my indexation. In case if you are calculating the slum sale under section 50B, even if the transferred asset is a long-term capital asset. Are you understood this question number 3? All of you? This is only that question given in our MTP for 7 marks. Please refer. Can you imagine this type of an easy question that they given for that? How many marks? 7 marks. So don't ignore any question. Please prepare all the concepts along with the problems. Then definitely you can get some conceptual questions in a very, very easy manner. So maybe for others it may be difficult. Reason they are reading the entire capital gain, but what they need to read also they don't know. Clear, ma, up to know? Yes. Okay. What is that homework I want to give you? What is that homework I want to give you? The remaining slum sale questions, yes, ma'am. First note point I will tell you. I will give you the solutions. I will give you that explanation related to remaining questions also. So definitely I will give you that explanation relating to all the remaining questions, ma'am. But just one time, please read the questions on your own. Okay, on your own. Sir, I want to do only one question. The remaining questions will be the easy only. So first, please try to solve the question number 6. Then remaining all the questions are similar questions only. Just verify. Right now itself, please verify, ma. Yes, ma. In the next, definitely I will give you that explanation relating to these are all the questions within 5 to 10 minutes itself. because the remaining all the questions are similar except one minor changes will be there. So that means a small points adjustments will be added or removed only. So that is only the adjustments, ma. So please refer the question number 6 and remaining questions. It will be very easy. Please refer the question number 6, ma. Yes, ma. Yes, ma. Tomorrow we will meet it tomorrow at the same time, ma. So tomorrow agenda is nothing but we will start the concept of slum sale related problems. Then after amalgamation demerger, we can complete in the next session, ma. So I want to take a break. That's why. So please try to solve the problems relating to slum sale on your own. So tomorrow I will give you the solutions for that all the problems for no issue. First, please try. Okay. And in this chapter, we have one more question, ma. Yes, ma'am. If you are observing the MTP, we have one more question from this chapter only. That is an demerger, ma'am. So if you are observing, this is only our question number in our workbook. We have an question number 2. The same question mark copied and pasted. So instead of Donna, they are replaced the name as an Roma for 7 marks. So this is a study material question mark. That's right. Okay. Please be prepared the slum sale problems. Tomorrow we will meet at the same time. Thank you. Six here, ma'am. So just listen carefully. Question number 6 here. So question number 6 also related to slum sale, but examination problem and very important. Similar models only repeatedly they are given in the examination mark. Okay. Question number 6. Lakshmi Limited transfers one of its unit. Lakshmi Limited transferred one of its unit X to Amin Limited. X Limited. Sorry. Lakshmi Limited is transfers one of its units to what, ma? Amin Limited. Okay. By way of slum sale on December 31st, 2023. Okay. Summarized balance sheet of Lakshmi Limited as on the given date below. As on the date given below. Yes, ma'am. So share capital, how much amount, ma'am? Share capital, resource on surplus, and liabilities of the all 3 units given. But here, what is the transferred unit, ma? Unit X. What is the transferred unit? Unit X. And fixed assets also given for the 3 units, and other assets also given for the 3 units. So what is the balance sheet total? 5,000. So please compute the capital gain they are asking. Can you tell me here what is the section is applicable for computing the capital gain? Section 50B. Okay. So they are given the cost inflation indexation factors, ma. So by way of looking these cost inflation indexation factors, we need to make an observe, yes, ma, that maybe that unit X established in the year 2007-8. So that is sold during the 23-24. We don't want to use the indexation factors in the computation of capital gain related to slum sale. But what is the purpose of this given, ma? By way of this information, we can identify that is a long-term capital asset. So because 2007 and 8 that started and sold during the 23-24, because we are holding that more than 36 months. So that's why this is a long-term capital asset. Okay. Next, The slum sale consideration received. The lump sum consideration is 1100 lakh. Okay. Next. So please look these information properly. Fixed assets of unit X include. Can you tell me fixed assets of unit X include? Okay. Fixed assets of unit X include vacant land that is purchased in 2007 and 8 for 50 lakh. That is revalued for that what 100 lakh. Okay. So if you are observing, this is in 700. In the 700, yes ma, 100 is nothing but what ma, land after revaluation. Remaining how much ma, 600 is other. Okay. This 100 is an exact figure. No, no, no. This 100 is not an exact figure. This is a revalued figure. This is a revalued figure. Yes ma. Can you tell me what is the original thing ma? This is a revaluation figure. What is the original amount ma? 50 lakh only. What is that ma? 50 lakh only. So can you tell me we need to consider the revalued amounts or original amounts ma? Original amounts only we have to consider. Yes. So that is only the point we have to make an observation here. Fixed assets of 700 includes land is 100 lakh and remaining is 600 lakh. That land isn't revalued for that 100 lakh instead of what ma 50 lakh. So that's why what is the thing we have to consider for the computation of slum sale ma 50 lakh only we have to consider. Next. Other fixed assets. Can you tell me other fixed assets means what ma? After minus after deducting the land, how much other fixed assets ma? Balance sheet 700 minus value of land that is in 600. These are the WDV of assets as per the books of accounts. So 600 is in WDV. Can you tell me what is the WDV we have to consider ma? As per Income Tax Act 1961. I think you know for the purpose of computation of net worth, we have to calculate the total value of total asset. Can you tell me what do you mean by the total value of total asset ma? Yes ma. Here, if any depreciable values are depreciable assets are there, we have to take the yes ma, for the depreciable assets we have to take the what ma? WDV. What is the WDV given in the problem? What is the WDV ma? 200 lakh. Next, so we have to compute this slum sale capital gain ma first. So please make an observation. Computation of capital gain. Can you tell me what is sale consideration we have to take ma? Already they are given the 1100 lakh. Yes ma. Already they are given the 1100 lakh. Slum sale minus. Is there any transfer expenses given in the problem? No. So that's why minus net worth we have to take. Can you tell me net worth means we have to follow the what ma? One prescribed format. Total value of total assets minus outside liabilities. Can you tell me unit X? Assets only we have to consider ma. Unit X fixed assets, land what is that value we have to take ma 50. Land value we have to take what ma 50. Revalued amount should be ignored. After land we have a depreciable assets 600. What is the value we have to take ma 200. Yes ma. Depreciable assets that is only what ma 200. Can you tell me other fixed other assets ma 650. Other assets how much ma 650. So total assets, if you are considering, that is, we will get the what 900. So please make an observation for the depreciable assets, WDV we need to take. Other assets, we have to take what book value. If any revaluation amounts are there, that should be ignored. Next, outside liabilities means how much 400. Unit X only we have to consider. So 400, if you are reducing, how much it will be 500. So can you tell me after reducing the net worth from the ESMA sale consideration, you will get the long-term capital gain since this SR unit X is established in the 2007. So the long-term capital gain you will get. Sir, this is an examination question for 7 marks in the June 2023 month. Yes, June 2023. Are you okay with this problem? Please let me know, all of you. Are you understood ma what they are given in the problem and how to solve this problem also you should know ma. Clear? Next. So problem number 3 done, problem number 6 also done. Just we will look the problem number 7 ma. So problem number this is nothing but theory based question ma. So we need to write the slum sale and what are the income tax provision related to slum sale. Write the definition and write the what ma provision. Write the provision. Yes. Next, please open the question number 11 ma. Please open the question number 11, all of you. Question number 11. Just I will explain the question ma. You have to do this question on your own without seeing the answer. The slum sale problems are fixed problem in our every examination, ma. So at least you have to try yourself to solve the question. So the Royal Limited having the two units. What is in product X? So one is an engaged in the product X, another one is an engaged in the product Y. So nothing but one factory or one unit is in production only doing the production for product X, another one is product Y. As a restructuring drive, company decided to sell off. Can you tell me? The company is selling off unit Y, the product unit Y to, can you tell me what my going concern basis? Product Y to going concern basis by way of slum sale to a new company. Can you tell me 385 lakh? Yes, ma'am. In this situation, which holds a 74% of equity shares. Okay, that means that for the related companies only, we are selling that what my product Y manufacturing unit for 385 lakh. So here itself, you can identify this question isn't from slum sale concept. So they are given the Royal Limited balance sheet on 31st March 2024. Ma'am. So if you are observed that, yes, ma'am. What is a fixed assets? And what are the debtors, and what are the inventories also we have. And next we have in current liabilities also. We have in current liabilities, there is an outside liabilities, ma'am. So nothing but we are selling the both the units are only one unit, ma'am. Only one unit, that is also product Y unit. So that is an established in May 2017. Can you tell me for which purpose they are given this information? For which purpose they are given this information? Anyone? So whether it is a long-term capital asset or short-term capital asset, knowing purpose only they are given, ma. More than 36 months is there. There is a long-term capital asset. On that we can get the what, ma, long-term capital gain. Yes. Common point taken from the last adjustment, ma. Common point taken from the last adjustment only. Fixed assets of unit Y includes the land is purchased as ma. Normally, if you are observing that we have an 170 is there. Out of that land value, can you tell me? Out of that land value is nothing but what ma 60 lakh. But ESMA, that 60 lakh is a revaluation figure, ma. That is a revaluation figure. But what is the original cost, ma? 40 only. ESMA, can you tell me? This is only thing we have to consider for the what, ma? Slum sale. Ignore the what, ma? Revaluation. Remaining fixed assets. Can you tell me? Mm, sorry, product Y 200, ma. Sorry for this. Sorry. Product Y 200 lakh, I think. Yes. Yes, ma. Can you tell me balance assets, ma? These are the what, ma? Depreciable assets. These are the what, ma? Depreciable assets. Can you tell me depreciable assets remaining how much amount is there, ma? 140 is there. So 200 minus 60, that is what, ma? 140 is there. That clearly given 140. Yes, but these are the depreciable. For the depreciable, we have to take what, ma? Opening WDV as per Income Tax Act 1961. Opening WDV as per Income Tax Act 1961. Can you tell me how much it will be, ma? 90 lakh. So if you are observing that what is the values we have to consider for the purpose of doing the slum sale, ma, here we have to consider 40, here we have to consider 90, the remaining 110, the remaining what, ma, 35, minus what, ma, 90 we have to take. If you want to calculate the net worth of unit Y, yes, ma, for land revaluation figure ignored, depreciable value, opening WDV, debtors book value, inventories book value, current liabilities, we have to reduce it, ma. So if you are observing that, yes, ma, if you are following the total calculation, yes, please do that, ma. I don't have any calci, please compare and do the problem. I think we don't have any, yes, ma, answer for this. We don't have any answer for this. Please try to calculate the net worth first. 40 plus 90, 110, 35. Can you tell me? Hint only I am given, ma. 40 plus 90 plus 110 plus 35. 275 minus what, ma? 90. 185 net worth you will get, ma. Can you tell me net worth? Yes, ma. What is that sale consideration, ma? Lump sum 385. 385 minus, yes, ma, 185. Yes, you will get the 200, ma. What is that, ma? 200 lakh is an long-term capital gain. But here they are asking the tax liability, not a capital gain. Yes, you have to know that every question there is a one new point is there. Here, what is a new point? We have to ascertain that what, ma? Tax liability. So I think you know long-term capital gain. If this is a slum sale, taxable at the rate of what, ma? 20%. Can you tell me if you are applying it at the rate of 20%? Plus after that, if you are adding the education says, then you will get the tax liability nearly 44 lakh. Yes, ma, 51,200 you will get, ma. All of you clear? Yes, ma'am. Please let me know. Are you understood the how to solve the sum sale problems? Yes, ma'am. So question number 13 also slum sale, ma'am. Just I want to close the section. Question number 13 also. What is that, ma'am? Mm. So please make an observation. The kite co firm sold all assets and liabilities to the ABC and Co for lump sum consideration of what, ma? 500 lakh. So for lump sum consideration of what, ma? 500 lakh. Yes, surcharge also we have to add, ma. Why we have to add the surcharge means, please think, ma. This is a nothing but what, ma, company. 1 crore is an exceeded. Now we have to apply what, ma, surcharge. Okay, I forgot to mention, but okay, for company 1 crore exceeded, we have to apply the surcharge. So if 10 crores exceeded, we have to apply that what, ma'am? If 10 crores exceeded, we have to apply the surcharge of 12%. Capital gain amount is an exceeded the 1 crore. That's why we have to apply the what, ma'am? Surcharge to. Yes. I forgot to mention at the time of explaining. Sorry for that. Next. So balance sheet they are the given, ma'am. They are the given the balance sheet. Yes. And fixed assets. Okay. And current assets. Okay. Yes, this is an easy question. So land was acquired in March 2006. So March 2006 means definitely this is what my long-term capital asset. Entire undertaking is what my long-term capital asset. So revalued means nothing but, yes, ma'am. Can you tell me what is the land value at revalued figure is 1200? Can you consider the revalue? No. We have to consider what, ma'am? 200 only. We have to consider how much more, only 200. Next, WDV of the plant and machinery. Yes, ma, this is also we not at all consider. Only we can consider what, ma, 250. For the purpose of network, we have to consider what, ma, that only. Cost inflation indexation factors are given. No need to use that, ma, because there is no indexation with respect to this. Can you tell me stock is an overvalued, ma? So normally the stock is overvalued means, yes, ma, closing stock is in 110. This is a normally what, ma, 110%. Yes, ma, overvalued means increasing that value. We have to reduce that. So here, can you tell me how we have to identify, ma? So 110%, if this is only 110%, yes, ma, 110. Can you tell me what is that 100%, ma? 100. So that is only we have to consider, ma. Next, I think you know the revaluation is there. We have to exclude that what, ma, revaluation related things. Next one, ma, loan and advances includes, this point we should know. The loan and advances includes, yes, this is only, ma, loan and advances includes 150 lakhs isn't due from the ABC and Co Limited only. So nothing but what, ma, we are already given the loan to, yes, ma, Kite and Co is already given the loan to whom, ma? ABC and Co. Can you tell me how much amount, ma? 150 lakh. So can you tell me ABC and Co already how much amount needs to give, ma? 150 lakh. And in addition to that, they have to give that how much amount, ma? Lump sum consideration of 500 lakh. So just they have given the information, ma. So if you are observing that, sale consideration is how much amount, ma? 500. Sale consideration lump sum is what, ma? 500. So from that we have to reduce the net worth. Please try to calculate the net worth, ma. What is the value, ma? 250, 200. Yes, you can observe, ma. So that is on 250, 200. Next one, ma. Sundry debtors is 500. Cash balance 50. Yes, ma. Sundry debtors 500. Cash balance 50. Next, loan and advances 340. Loan and advances how much, ma? 340. Closing stock after the revaluation figures are ignored 100. These are the assets, ma. Total value of what, ma? Total assets is in 1440. Liabilities, if you are observing the unsecured loans, bank borrowing, sundry creditors, how much, ma? So 1000. That is on 440 is a net worth. Sir, there is no adjustment is required for the fifth point. Why? In balance sheet, my loans and advances, out of that, some amount that needs to that needs to be repaid by the whom, ABC. So can you tell me how much they have to repay, ma? 150 lakh. Along with that 150 lakh, they need to give this 500 lakhs lump sum consideration also, because we are selling the all assets. Can you tell me how much amount is an expected by the Kite Limited from the ABC and Coma? So loan amount 150 lakh, and in addition to that consideration, how much ma? 500. So next, so if you are reducing the 440 lakh, so can you tell me how much ma? 60. So then long term capital gain and surcharge is nil, and we have to apply the education says total tax liability ma. Total tax liability. Are you understood the question number 13 ma? There is nothing new. There is same format. They will give you that always. You have to think about it ma. Question number 13 over. Shall we start the last question related to slum sale? That is on question number 14. So what is the reason for solving this question ma? Just there is one new point in this question. So that's why I want to solve this question ma. So please make an observation. This question is related to slum sale. This question related to what ma? Slum sale. Yes, please make an observation. So Lakshmi Limited transfers one of its units X to Amin Limited by way of slum sale. So fixed assets information given, other assets also given, liabilities also given. So in 2007 and 8 that is a transfer. That's why this is what ma? Long-term capital asset. Yes, next. Please make an observation. What is the lump sum consideration we are received ma? 1100 lakh. How much lump sum consideration we are received ma? 1100 lakh. Yes. Unit X owes. That means what ma? Unit X owes. Yes ma. That is an 100 lakhs to buyer. That means already we have to make a repayment of how much amount of the loan to Amin Limited ma? 100 lakh. So I need to give how much amounts to you ma? 100 lakh. But for the lump sum consideration, how much you have to give to me ma? 100 lakh. So nothing but, yes ma, previously I took a loan from the Amin Limited. What is that loan ma? 100 lakh. I have to repay that 100 lakh. Right now, yes ma, unit X is sold to that Amin Limited. In this situation, Amin Limited needs to pay the lump sum consideration how much ma? 1100 lakh. Okay. So in this situation, yes ma, in other words, sale consideration after set off of 100 lakh. Sale consideration they are given after set off of what ma? 100 lakh. So nothing but, yes ma, initially, yes ma, you are purchasing the raw material from the Amin Limited. You means nothing but what ma? Mr. X. On that situation, unit X needs to pay how much amount to that Amin ma? 100 lakh. After considering this 100 lakh, after set off of that 100 lakh, so what is the final consideration fixed ma? After set off of 100 lakh, what is the final consideration fixed ma? 1100 lakh. Can you tell me what is the sale consideration we have to take ma? 1100 lakh only. Yes. So these 2 points are same ma. Last points only same. Here, what is the value we have to consider ma? Sale consideration we have to consider 1100 only. Why? Normal consideration is 1200 ma. But after set off of, can you tell me, yes ma, Amin Limited needs to needs to pay how much consideration? 1200 lakh. But out of that, can you tell me how much you have to give with respect to that loan, with respect to the raw material purchasing 100? If I am reducing that set off, finally 1100 only they have to given as a consideration. So that is only we have to do, and we need to do that problem. So if you are observing, this is the same as in question number 6. Only this point is an added now. Only this new point is an added. If you are observing that, what is the new point added now? Unit X. Yes, ma'am. This is a point is an added here. Same amount, same capital gain, same things, ma'am. But only one thing is an added is in point number 2, they have given that what ma? Inter borrowings. That means how much amount X needs to pay? 100 lakhs. How much amount Amin needs to pay? Can you tell me how much ma? 1100. So this 1100 amount is an after setting up of what ma? Loan of 100 lakh. So this is only the point you have to remember for long time ma. This is a definitely important adjustment. Yes. Yes. If you are observing that we are done with the sum sale concept exclusively ma. We are done with the sum sale concept exclusively. Shall we move on towards the few new concepts ma? Shall we move on towards the few new concepts? Yes. I want to cover. Yes ma. That is these 3 things I want to complete first of all. Sole proprietorship concern converted into company, firm converted into company, private company or unlisted public company converted into LLP. The three concepts I have to cover in this session. Ma. Just listen carefully. What is the important thing in this entire discussion? Yes, ma. If any business is restructured, we have to know about the tax consequences. What is the thing we have to know, ma? Tax consequences. Question number 14, the liabilities are 2,300. Yes, we have to take 300 only, ma. Because, because why we are taking the 300 here? Simple. So, out of the ESMA unit X only 300, 100. Can you tell me 100 I have to pay to that what, ma? I mean limited. So, they are already set off and they are taken only consideration as 1100. That's why we have to consider only 300. Because they are already doing the work now. So in this situation, sir, you have to give that how much amount to me? So if you are observing unit X and I mean limited, sir, you need to give that 100 lakhs to me. Okay. Right now I am purchasing your entity. For that, normally I have to pay 1200. I have to pay how much amount? 1200. In this situation, so I will pay only 1100 after set off of this amount. No need to pay 100 lakhs to me. So that set off of that what my liability. So normally 1200 needs to pay. After set off of this 100, we have to consider how much amount my 1100 only. So that's why in liabilities point of view. So can you tell me this 100 lakh needs to pay once again? No. So that's why we are doing the what cancelling of that 100. So can you tell me how much amount we have to take? 300. So this is only the adjustment that we have in this question. Next. Okay. Just listen carefully, ma. Easy concepts. Easy concepts. Just listen carefully. Conversion of sole proprietorship concern into company. Okay. So right now, Anil is doing the business by using the what was sole proprietorship registrations, etc. But during the previous year, on one day, that is the 31st 1 2024, he wants to convert that into company. That is a what private limited company. That is in previous year 23-24. In the previous year 23-24, he wants to convert the private limited, sorry, sole proprietorship into what company. Yes. What happened in this situation? Predecessor. That means what, ma? That entity loses its existence. That isn't called as a predecessor. The entity who continues the what, ma? Businesses. That isn't called as successor here. Yes. Okay. What will happen at the time of conversion, ma? Anil needs to transfer all its assets to sole proprietorship from transfer all assets and liabilities to what, ma? Private limited. So here, Anil sole proprietorship form having many capital assets. If the capital assets are transferred, automatically we have to calculate capital gain. But what is the relaxation they are given? If you are given the relaxation, all the sole proprietorships can be converted into company, and many regulations are there, and we can track the transactions of the companies also easily. So that's why they are encouraging the what this reconstruction. If you are in sole proprietorship form, please convert into company. Then I am giving you a tax benefit. If you are transferring any capital assets at the time of conversion, I will not regard this as a transfer since no capital gain will arise. So this should not be treated as transfer. On this, we don't want to calculate what capital gain. Can you tell me transfer, yes ma'am, excludes this is only, but directly they can exclude it. No, if the following conditions are satisfied, then only this can be excluded from the transfer. Can you tell me what are the conditions, ma'am? First one, you should remember all the conditions, ma'am. First condition, all the assets and liabilities of sole proprietorship concern shall become the assets and liabilities of the company. All means 100%. All means nothing but what, ma'am? 100%. Second condition, sole proprietorship form As ma, sole proprietorship form in that who is a sole proprietor Anil holds at least 50% of the total voting power of the company. For that, how many years, ma? 5 years from the date of succession. 5 years from the date of succession. Can you tell me from the date 5 years, Anil needs to continue the how much amount of shareholding, ma? 50% of shareholding. Next one. Proprietor, that means Anil is transfers all his assets to the company, no? Yes, but he should not receive any amount other than by allotment of shares. Are you clear, Maptono? So if all these three conditions are satisfied, the transaction, whatever happened, that is not recorded as a transfer. That is only section number 47, subsection 14. So transfer excludes contained section number is in 47. Yes, ma, in this situation, 47 subsection 14 is in point. 47 subsection 14 is in point. Are you clear? Yes, give me 1 minute, Majesty. Yes, ma'am. Sorry, just next one, ma'am. So what is the thing we have to make an observe here? So if anything is an excluded from the transfer, that having that section 47 only, and that is on 47 subsection 14. 47 subsection 14. So in this situation, sir, they are giving the exclusions to the transfer. So that's why Anil sole proprietorship form, no need to calculate what mark capital gain. That means capital asset is transferred, no need to calculate capital gain. But if any stock in trade is transferred, then what happened? Any idea? If capital asset is transferred, no need to calculate capital gain because that is not treated as transfer. But what if any stock in trade is transferred? Yes. If any stock in trade is transferred, yet profits. Yet profits. It will be taxed as business income. If stock is transferred at a profits, if stock is transferred at a profits, yes, it will be treated as what ma? Business income. Are you clear, ma, up to now? So all the persons are thinking as an all assets means stock in trade also. No, capital asset is transfer, no need to calculate capital gain. If business related stock in trade is transferred at a profits to the successor, yes ma, so I have 100 as ma units of stock in trade is there. I am selling that all the things, I am transferring all the things to the Anil Private Limited successor at a profit. Here there is no Yes, my exemption with regarding the stock calculation, sorry, stock related feasibility calculation, that will be taxed as a business income only. So first thing in this section, you have to remember the conditions. That is only the beauty. In an examination also, you have to identify whether all these three conditions are satisfied by the sole proprietor or not. We have to check. If this is an okay, then I will go to the next point. If this is an okay, then I will go to the next point. Yes, next. Sir, here partnership with me is converted into company. If partnership form is converted into what mark company? If partnership form is converted into what mark company? So please make an observation here. So Anil and Co is in partnership form. Right now, that existence in the partnership form only. So during the previous year on one day, that wants to convert it into company. Yes, at the time of conversion, yes, ma, all the capital assets transferred to what ma, Anil Limited. If any capital asset is a transfer, yes, that's okay, but that is not treated as transfer. Consequently, no need to calculate what ma, capital gain. Consequently, no need to calculate what ma, capital gain. So, if the following conditions are satisfied only, so can you tell me if all the following conditions are satisfied, no need to calculate the capital gain. Can you tell me what are the conditions? The first condition is same. All the assets and liabilities of partnership firm shall become the assets and liabilities of the company. Second, all partners of the firm. So maybe we have an A, B, C are the partners in the partnership firm. All the partners of firm shall become the shareholders of the company. So in the last case, only one sole proprietor is there. The sole proprietor needs to be shareholder of the company. Here, four partners are there. That four partners also shall become the shareholder of the company. In partnership form, we have an equal capital ratio. In that shareholding pattern also, we have to maintain the equal proportion. Yes, ma'am. You have to make an observation. We have to do that what, ma'am? Same proportion in which the capital accounts of the partnership form on the date of what, ma'am? Succession. So in these okay, on this date, so they have an equal capital ratio, the same ratio, that is an equal shareholding pattern we have to maintain. Four partners are there. The four partners also needs to continue as a shareholder. They have to maintain the same proportion in which their capital account SRE as on the what date of succession. Okay. So aggregate value of a shareholding of partners at least 50% of the total voting power. What is it, ma'am? So suppose others also can enter into the company. But in this situation, all the partners aggregating shareholding should exceed at least what, ma'am? 50%. So can you tell me how many years we have to do lock, ma'am? 5 years. From the date of succession, how many years, ma'am? 5 years, you have to hold these shareholding only. Next. Partners of the partnership firm do not receive any consideration other than what, ma'am? Shares. Other than what, ma'am? Shares. Are you clear up to now? If all the four conditions are satisfied, can you identify what is an additional condition, ma'am, here? So what is that additional condition here? Second point only. Yes, ma'am. There is only additional condition compared to last one. Okay. Right now we need to make an observation. What is that observation point? Yes. So transfer excludes section number is what, ma? 47 subsection what, ma? 13. 47 subsection 13. So 47 subsection 13 is a transfer excludes when the partnership firm converted into company. So next, sole proprietorship form, if that is converted into company, that is in 47 subsection 14. Okay. So this is a very important discussion. Just listen. Sir, if you are observing that in which year that is converted, ma? In which year that is converted, ma? All of you? 23, 24. What happened, ma? Yes, ma? Sole proprietorship firm wants to convert it into company, or partnership firm wants to convert into company. Yes, conversion happened. Yes, ma? So can you tell me for these how many conditions needs to satisfy in order to take the exemption of the capital gain? So in 47 subsection 14, Yes, ma. If sole proprietorship form converted into company, if sole proprietorship form converted into company, how many conditions, ma? 3 conditions. If the arm converted into company, how many conditions, ma? 4 conditions. At the time of conversion, you are satisfied with all the conditions, then capital gain, no need to calculate the what, ma? Capital gain. No need to calculate what, ma? Capital gain. No need to calculate what, ma? Capital gain. Yes. Here we have to make an observation. Here you have to make an observation about it. Yes. What is the thing we have to consider? But at the time of conversion, you are satisfied. But you need to continually satisfy that condition for the future period also, because you have to bind over for that shareholding pattern for how many years, ma? 5 years. Here also, can you tell me how many years, ma? 5 years. So that means at the time of conversion, if you are satisfied, okay. But if any one of the conditions are violated, what is that, ma? If any one of the conditions are violated in the next years, so that means, yes, I'm taking the 24-25, ma. 24-25. Yes, 24-25. What happens? 24-25. We are sold the total shares in a company, ma. As a sole proprietor or as a firm. Okay, as a partner in the firm. Okay, you are selling. What happened? Earlier, whatever that exemption you are taken, earlier, whatever that exemption you are taken, that is right now taxable in the hands of predecessor. Sorry, earlier exemption in the hands of predecessor. Can you tell me in the hands of predecessor means whom? Sole proprietorship firm, partnership firm. Sole proprietorship firm, partnership firm. We are enjoyed the capital gain exemption. That is now taxable in the hands of successor. Why? Because predecessors are already closed, the registrations and accounts also closed, that is not in existence. So that's why earlier exemption now taxable in the hands of successor. Earlier exemption whatever given in the hands of the predecessor, right now that is taxable in the hands of successor. Are you understood this concept? This is only I want to give you as an heading: withdrawal of exemption. Withdrawal of exemption under section 47 subsection 14, under 47 subsection 13. Yes, you can take the exemption upon giving the one promise. Yes, I will fulfill all the conditions. Okay, I will give you that exemption. In future, if you are not satisfied any one of the condition, yes, you have to pay the yes, sir. Are you clear up to now? Next one. Next one. Yes, ma'am. Can you tell me who is a predecessor here? Sole proprietorship form or form. So company is nothing but whom a successor. Okay. If sole proprietorship form or partnership form converted into company, what will happen, ma'am? All the capital assets transfer. That's okay. But we have in business losses also and unabsorbed depreciation also. Yes, ma. If anything is in the hands of predecessor, that can be carried forward and set up in the hands of successor. But if only if 47 subsection 14, 47 subsection 13 conditions are satisfied. So already we have discussed the 3 conditions. As the case may be, that may be 4 conditions also. If all the conditions are satisfied, what we can do? Yes, we can carry forward that losses and we can set up in the hands of company. We can do the setup in the hands of company. But here one twist is there. Okay. I think business losses can be carried forward and set up for that how many years, ma? 8 years. Okay. So already we have a business loss in the hands of sole proprietary. 5 years already exhausted. The balance of period 3 years only there. So 5 years already expired. You're already doing the carry forward for the how many years, ma? 5 years. Right now, can you tell me how many years is and balance is there, ma? How many years balance is there? Please let me know. 3 years. But. In case of conversion of the sole proprietary to company, firm to company, in the hands of successor, can be carried forward further period of 8 years. That is a fresh period. Even though 5 years here expired also, okay. But yes, ma'am, conversion happened here treated as an first. For that 8 years, you can do the carry forward and set up. Are you clear? Fresh period of 8 years is a point. You have to make an observation here. Yes, ma. Next one. Okay. In this situation, you are making a promise. Yes, I will satisfy that all the conditions. All the conditions. Yes, you are given a promise. You are taken that what carry forward of the business losses benefit. But in future, if any non-compliance happen, what will happen? So whatever that business loss you are claiming, whatever that unabsorbed depreciation shall be, whatever that business loss and whatever that unabsorbed depreciation claimed in the hands of successor, that is treated as a business income in the hands of successor in the year in which the conditions are violated. In the next year, if these conditions are violated, in the next year, whatever that business losses unabsorbed depreciation you are taken as a credit, that is taxable in the hands of whom successor. Because benefit also taken in the hands of successor, so that's why this is also now taxable in the hands of whom successor only, but treated as what not deemed income, not an end income, not an earning income. This is treated as what not deemed income. Are you clear, ma? All of you, please let me know. So just 2 to 3 minutes time I will give you. So please read the conditions mentioned under section 47 subsection 14. What is that now? Conversion of sole proprietorship into company, and section 47 subsection 13, that is a firm converted into company. Please read the 3 conditions as well as 4 conditions at least once. Then we will start it next month. So please read that condition at least once, ma'am. Yes, ma'am. Shall we start the next concept, ma'am? Yes. This is a new type of conversion. Private company, unlisted public ma. Listed public company cannot convert ma. Listed company cannot convert. Only private or unlisted public company can be converted into LLP. Yes. So nothing but Vinay Private Limited is there that wants to convert into Vinay LLP as on this date ma. What is it previous year 23-24? Yes. If any assets are transferred, that is not treated as transfer. Consequently, no need to calculate what ma capital gain also. Consequently, no need to calculate what ma capital gain also, only when if the conditions are satisfied. Here, how many conditions are there, ma? 6 conditions. Normally, we have in 3, 4, here 6 conditions. So, first condition, you know very well, what is that, ma? Liabilities and assets of a company shall become the assets and liabilities of an LLP. Yes, ma. Assets and the liabilities of a company shall become the assets and liabilities of what, ma? LLP. Clear? Clear, ma? Yes, ma. All the shareholders in a company must become the partners in LLP. Same condition, I think. There is no new point here up to now. Yes, next one. Does not receive any benefit other than what ma. So nothing but partnership in what ma LLP. So other than do not receive what ma any other benefit other than what ma share in LLP. Next. Yes, ma. Yes, you have to make an observation. All the shareholders, all the shareholders of a company must holding the 50% in the LLP. So normally, if you are observing that 100% share in LLP, so shareholders of the company at least holds about 50%. So can you tell me what is the lock-in period? 5 years. So these 4 points are common only. But what are the new points? These 2 are the new points in case of what conversion of conversion of private or unlisted public company into LLP. Shall we start with point number 5? Yes. Yes, ma'am. Conversion happened in the previous year 23-24, ma'am. Conversion happened year preceding 3 years immediately, please check. So that is in company only. Conversion before, immediately preceding 3 years, please check. If you are observing total value of assets in the books of accounts of a company, any 3 previous years, in any one of the 3 previous years, ESMA does not exceed the 5 crores. Then only 5 crores means here 4 crores, 4.5, 4.8. In any one of the year, if exceeded also, this condition not satisfied, that isn't treated as transfer, we have to pay capital gain. But in this example, we have to make an observation. So does not exceed the 5 crores means this is a normal, the total company assets value is less. So that's why they are given the relaxation for computation of capital gain. Can you tell me what is the point, ma? Previous year, before 3 years, if any one of the year, so in the books of accounts of the company, total value of assets exceeds the 5 crores, then that is treated as transfer. Here, not exceeded any one of the year. So that's why, can you tell me what we have to think, ma? Yes, ma'am. Clear? Are you understood the condition number 5, ma? So condition number 6 also same way. Condition number 6 also in the same way. Just check it out. I think company always having the reserves and surplus, ma. Can you tell me the reserves and surplus shall be transferred to whom, ma? LLP, because all assets we have to transfer, no? So here also, like reserves and surplus also we need to transfer. From the date of conversion, please take the 3 years time. Within the 3 years, we need not to give the any amount to the partners from the reserves and surplus amount, ma. So no amount paid to any partner out of the balance accumulated profits on the date of conversion. For how many years, ma? 3 years from the date of conversion. From the date of conversion, 3 years, not from the year of conversion, ma. Date of conversion, from that 3 years, you should not give any amount from the accumulated profits to the whom partners. Are you clear? Yes, ma. The new conditions are what, ma? 5 and 6. Please refer the 5 and 6 properly. Next, yes, sir. On the conversion time, I am given the promise. On the conversion time, I am given the promise. What is the promise I gave, ma? Yes, yes, ma. Withdrawal of exemption under section 47, subsection 13B at the time of conversion. Yes, ma. In the previous year, 23-24, 6 conditions are satisfied. In future, also satisfied. Yes, ma. Based on this point, yes, ma. Based on this point, what will happen, ma? That is not treated as transfer. In future, if conditions are violated, yes sir, whatever that amount is enjoyed as an exemption in the hands of predecessor, right now that is a successor, right now that is taxable in the hands of successor. Earlier exempted capital gain, now taxable in the hands of successor in the year of violation. Are you clear? All of you? Next, ma. Carry forward and set off of losses on conversion, ma. So I think conversion is on predecessor, successor. Whatever the losses is there, that can be carried forward and set off in the hands of LLP for a fresh period of 8 years. Here also, what is that, ma? Fresh period of 8 years. Next, if the conditions are satisfied only. A right to condition satisfied. In future conditions are violated, what will be effect, ma? The effect of non-compliance in future. What is that, ma? Effect of non-compliance in future. So business loss, unabsorbed depreciation, whatever you are taken as an what, ma? Set off in this year. So that will be taxable as an deemed income. That is taxable as an deemed income in the hands of successor if the conditions are what, ma? Violated. If the conditions are what, ma? Violated. Yes. A small concept is there, ma. 3 conversions points are over. It's just a small concept is there. So I will close this concept also. Succession to business succession to a business otherwise than death. Okay. Example I will take, ma. Mr. K is a predecessor example. Mr. L is a successor. On this date, yes, ma. On this date, sir, this is a not because of death succession. That means predecessor is an unfortunately died. Yes, ma. That can be carried over by the successor. That is not anything. So succession to a business otherwise than the death means nothing but what, ma? Simple. I'm selling my business to another person. So in case of death, who can be successor, legal heirs or ESMA title deeds holding person only can do the succession. Here, otherwise than death, so succession to the business is happen. How we can proceed with this? Section 170 give that. Yes. If you are observing that, on what date the conversion will happen, ma? So that means changeover is happen 1/2/2024. So up to this, that will be taxable in the hands of predecessor only. So after this date, whatever the profit you got, that is taxable in the hands of successor. Sir, if predecessor is an escaped, is not at all found, then what happened in this case? That is a risky case. So the assessment of the income of the previous year, that means what, ma? From starting date to ending date, from starting date to ending date, yes, ma. In the year in which the succession took place, the assessable in the hands of successor only. So that's why at the time of purchasing any business or any entity, yes, sir, you have to do the background verification of the, yes, sir, seller also. So are you understood this concept? Succession to a business otherwise than by way of death. Death related succession is an easy one. But other than death, if any succession isn't happen, then how we need to make an assessment? Yes, are you clear, Maptono? Yes, this is a summary of the business losses. Not at all done, but I will tell you. Yes, please let me know. Sole proprietorship form into company. Form into company. You know. Who is a predecessor, ma? Sole proprietorship form or company. Sorry, sole proprietorship form or form. Converted into company. Yes, ma. If conditions are satisfied, business losses can be carried forward and set up for the fresh period of 8 years or remaining period of 8 years, ma. Fresh period of 8 years. So this is already done. Next one, ma. Private or unlisted public company converted into LLP. Here, unlisted public company or private company converted into LLP. Upon the satisfaction of the condition, we can do that what, ma? Carry forward and set off of all the losses, that is a business loss as well as unabsorbed depreciation. Business loss having the fresh period of how many years, ma? 8 years. Are you clear, ma? Just I am writing the summary only. So amalgamation demerger concepts are not at all over. That's why after the completion of that relevant concept, I will tell you the summary. Clear up to now? Yes, yes, yes. Okay, immediately just open the workbook. Open the workbook. Open the workbook. Open the workbook. Okay. Question number 14 is related to, yes, ma'am, firm converted into company. So shall we do this problem, ma'am? Firm converted into company. So ABC, that is an itself converted into what, ma'am? Company on this day, as on the date of balance sheet is given. So Mr. A, that means partners capital A, B, C, and what is the loan, ma? So creditors and WDB investments are acquired on this date. So WDB of machinery and inventories are acquired on this date. Stock, debtors, bank balance. Totally, if you are observing the balance sheet, total is how much amount, ma? 3 lakh. Please make an observation. 3 lakh. Okay. So following agreed upon on conversion, machinery is taken for how much amount, ma? Agreement. So nothing but what, ma? They want to take all these assets for this value only. So machinery, 1,20,000 investment, 2,50,000 stock, 190,000 debtors 60,000. So firm fulfill all the condition under section 47 subsection 13. In the year of conversion, all the conditions are satisfied. Okay. The partners' accounts are settled by way of issuing the DPD shares only. So this is also, that is also in their capital ratio. I think you are also happy. All the conditions are satisfied. Next, but on 1/4/2023, what happened in this current previous year 23-24, all partners transfer their shares to as my other person. Show the tax treatment. Show the tax treatment. So I think you know all the conditions are satisfied means, yes ma, can you tell me in which year that isn't converted ma? Previous year, please tell me. Previous year, that isn't nothing but what ma? 1890. What is the previous year in which they are converted ma? 1890. On that year, can you tell me transfer or that is a partnership form? No need to pay capital gain ma, because on the time all the conditions are satisfied. Yes ma, that is only the point. 47 all the conditions are satisfied, so that's why in this situation normally not taxable in each year 1890. But within that 5 years, yes ma, within the 5 years they are selling that what ma, their shares of the, that means lock-in period is 5 years, but here you are selling all the things ma. So that's why, can you tell me earlier exemption taken in the hands of predecessor, right now taxable in the hands of successor? That is only the point here. They are clearly written ma. One of the conditions stated in the section 47 subsection 13, ESMA cannot transfer the shares to the shares of successor company in the 5 years. In this given case, all the partners are sold the successor company within 5 years. Hence, earlier capital gain exemption shall be cancelled. Can you tell me, okay, if it is cancelled, okay, but right now that isn't taxable in the hands of successor or predecessor, successor only. In the year of what ma? In the year of what ma? Violation. What is the year of violation ma? Previous year 23-24. Assessment year 24-25. Clear? Okay. Here you have to make one simple observation ma. Can you tell me out of the what their balance sheet, what are the capital assets ma? These two only capital assets ma. The remaining things are not capital assets. For these two only, earlier they have taken the capital gain exemption. Here we have to calculate the capital gain. All of you, are you understood ma? So please give me confirmation. Can you tell me for which income that we are given that exemption ma? Capital gains only. Right now we have to tax the what ma? Capital gain only. Yes. Okay. Can you tell me investments and we have in what ma? Machinery. Investments and we have in what ma? Machinery. But please make an observation. Please make an observation. For investments related, we have to follow section 48 capital gain section 1, because that is a non-depreciable. For machinery, we have to follow section 50. So no need to worry ma. In that PCBP chapter, I will tell you section 48 and 50 related difference also. No need to think about it ma. Okay, just listen. So if that isn't depreciable, always we have to follow the section 50 only. And resulting income always may be short-term capital loss or short-term capital gain ma. Okay, just listen. Sale consideration, we need to start. Sale consideration. Can you tell me what is a sale consideration ma? Please make an observation. What is a sale consideration? So agreed upon the conversion. Machinery is taken for the what ma? 1,20,000 and investments taken for the what ma? 2,50,000. Investment taken for the what ma? 2,50,000. So that is agreed upon. That means what is the sale consideration received to that ABC and comma? Yes, upon that conversion, this is only the amount received. So that's why this is only here taken as a what ma? Sale consideration minus. Is there any expenses on transfer given ma? No. Simply we are going to calculate capital gain, because earlier that is an exempted. Right now that is an taxable in the hands of whom ma? Successor. So if the transfer expenses also reduced, then you will get what ma? Net sale consideration. From the net sale consideration, please make an observation ma. If that is in section 48, long-term capital asset ma, because earlier that is purchased in 2004, long-term. Yes, if you are observing that indexed cost of acquisition, we have to take ma 50,000 into 50,000 into. Can you tell me in the year 1819 only we have to calculate capital gain ma? So 18, 19, yes, ma, here they are not given the cost inflation indexation factor. In an examination, they will give you that, ma, no issue. Don't think about this, how you are identified that all the things, etc., etc. No need to think, ma. So 50,000 into, yes, ma, cost inflation index in the year of transfer. What is that, ma? 18, 19 only the transfer year. 18, 19 only that what ma transferred here. So sole proprietorship partnership firm converted into company divided by in the year in which you are acquiring that what ma investments, that is in 2004 CII, yes ma 2000, that is in what ma 2004 5 CII we have to take. Then you will get what ma, then you will get what ma 1,23,893. Next one, ma. There is no improvement also. If you are removing this 1,23,893, then you will get long-term capital gain, ma. Then you will get the what, ma? Long-term capital gain. Next, next, next. So in case of depreciable, cost of acquisition is nothing but what, ma? Your opening WDV plus cost of addition. Section 50. What is the cost of acquisition we have to take, ma? Opening WDV plus, yes, ma. Opening WDV plus cost of addition. Opening WDV plus cost of additions here. Can you tell me what is the opening WDV, ma? On the year, what is the opening WDV? 1 lakh. Please reduce that 1 lakh. Yes, ma. How much amount is the 20,000? Always the resultant amount is in short-term capital gain or short-term capital loss. I think you know, yes, ma. Stock is the value is 70,000, but stock isn't transferred for the 90,000. If any stock is transferred at a profit, that isn't taxable under the head what, ma? Taxable under the head what ma PCBP in the year only. Yes, ma, that is in the hands of firm only. Capital gain only, we have to take that exemption in the previous year, 1890, but PCBP amount already taxed in which year, ma? Previous year, 1819, assessment year 1920. So that is only the points you have to know. Sir, if you are the given that only capital asset treatment, and if you have forget to write that what, ma? Stock related adjustment, then you will lose 1 or 2 marks, ma. So definitely you can do the problem in very carefully. So what is the thing, ma? So in the 2018-19, that isn't converted. On that conversion, capital as capital gain related, these two things we are taken as what, ma? Exemption. Okay. But all the conditions are not satisfied later on. That's why we have to calculate the capital gain on these two assets, ma. So whatever the capital gain exemption in the hands of, predecessors is there, that is right now we are calculated and taxable. But stock is also selling at what, ma? Profit. So that's why that is an already taxed in the hands of partnership firm. Are you clear, ma? Up to now? So at least you have to do at least once month, and you have to know about the what ma depreciable capital asset capital gain. We have to follow section 50. In this situation, cost of acquisition is an opening WD plus cost of addition, and investments capital gain we have to calculate under section 48. And what is the cost under on that indexation? How we need to apply? Also, you need to know more. Clear? Next one. So question number 12 is a theory question, my direct theory question. So if any LLP, that means what, ma? Company converted into LLP. So then what is that carry forward and set off of losses related provision? If all the conditions are satisfied, a fresh period of 8 years will continue that what ma carry forward. If conditions are not satisfied in the year of violation, that should be taxable in the hands of successor. That is only the point, ma. Next one. Yes, I want to give you that one more question, ma. Yes. Question number 20. So this is a June 23 examination question for 7 marks, I think. 7 marks or 5 marks, I don't know exactly. I think 7 marks only. Just listen. So please read the question properly. Yes, ma'am. Simple question only. After the reading only, you can know about that question, ma'am. So private limited company that isn't converted into LLP. on the first day of the 1/4/2022. At the time of conversion, all the conditions under section 47, subsection 13B. Here, what is that one? 13B, satisfied. Okay. So, if that all the conditions are satisfied, what we can do, ma? All the conditions are satisfied. So, business losses, yes, ma, unabsorbed business losses, as well as depreciation of the company can be carried forward and set off in the hands of whom, ma'am? LLP. That means we can carry forward all the losses and we can do the work set off against the LLP. How much business loss we have unabsorbed? 48 lakh. What is our unabsorbed business loss is 48 lakh. Unabsorbed depreciation is what more 25 lakh is there. Okay. But on that year, LLP profits also they are the given. Can you tell me what more 28 lakh, 85 lakh? So business profits of that year, yes, mark 20, sorry, business profits of the year, yes, mark totally we have what mark 85 lakh. Can you tell me from that 85 lakh, first we have to give the preference to the business loss of what mark 48. Can you tell me how much amount is in balance mark after set off of the business losses of what mark private company? 85 minus, please give me answer mark. So we can do the set off that is an 85 minus 48. So we have an 37 mark. From this is a business loss mark. So from this we can do the set off of what mark? From this we can do set off of what mark? Unabsorbed depreciation of 25. If I am removing the 25, can you tell me how much mark? 12. This is what mark? Unabsorbed depreciation. Yes, this is something you can do. Okay, but. So in the present year happy mark, next year, that is in what month next year? 23, 24. So this procedure totally affected in previous year 20 to 23. In the next year 23, 24, two partners having that aggregate of 50.75, they are resigned. Can you tell me? Already you are taken the carry forward and set off in the earlier years. Okay, but next year what happened, ma? Whatever the things are there, that should be what, ma? Violated. Here, I think in the year of violation, whatever the amount you are taken as a benefit, that is in 48 lakh and that 25 lakh, that should be treated as what, ma? Deemed income. That should be treated as what, ma? Deemed income. Clear? Yes, ma. This is a simple question they are given. So they are asking the tax consequences. So they are asking the tax consequences on the conversion and the subsequent resignation. That means what, ma? So first, initially, what is the treatment? After that resignation, what is the treatment they are asking? So please read the suggested answer, whatever it may be. Yes, ma. Please read the suggested answers at least once, ma. Yes, ma. Next thing. Yes, ma. Question number 9. You can get the direct like these three questions also. What is the tax concessions are available? Can you tell me what are the tax concessions are available when the firm is converted into private company? Can you tell me what is the concession available, ma? If that all the conditions are satisfied, capital gain shall be exempt. So you have to write that all the conditions that related answers. Next. Yes. 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 from this business restructuring reconstruction. So I think already you know. Yes, ma. One direct question. That is only our second question in that. Yes, ma. That the given. That the given. But wait, wait. Yes, ma. Whatever that second question we have, that isn't given as an MTP also. But right now, mm, this is on question number one, two, three. Yes. Yes. Question number five is related to already completed discussion, ma. What is that question number five? Company converts into LLP. Company converted into LLP. Company converted into LLP. Yes. So please read at least this question once more. So important. And important means nothing but we have a limited questions only. Out of that limited question, one question is tested in examination. So yes, in the next session I will solve this question, but you have to read at least once more. So definitely I will give you the message in the group also for a reminder about the reading of the question. So then only you can. So simple. If you are observing that suggested answer of this question, we haven't so much content. Sir, but this is only they are directly copied and pasted in that examination also. That means how much percentage of the perfection you need to maintain, just you can imagine. So procedure wise easy only, but if you know the procedure also, the practice also important, and every point analysis also important. So this is a question, one thing, yes ma'am. And next thing, after the completion of the question number 5, so all the concepts is on over, except the 2 concepts in this chapter. So slum sale is an already over, I think. Yes, ma'am. If you are observing that, if you are observing that, I think already these last 4 concepts are over. But we have to do only one problem related to this one. That is, I think, question number 5. Yes. The remaining concepts, question number 5, we have to do, as we will do. The remaining amalgamation and demerger is there. That also we will discuss in the next session. But please read the question number 5 at least once, then only you can solve the answer. Yes. Next thing, next thing, next thing. Okay, just I want to show you that some question papers. Okay, the many of the persons are may not be believed. Still, these questions are the hot favorite questions in an examination. Maybe if you saw the question paper at least once, then yes, you can realize yes, okay, these are the questions only continuously given in the examination. Yes. Yes, ma. Just listen. Yes, ma. I think right now it will be visible for all of you. So this is an last attempt question. So I think this is a question paper December 2022. So this is a slum sale question. Yes, ma. For 8 marks. Nothing new, ma. All the things are same. Nothing new adjustment. All the things are same. So for how many marks, ma? 8 marks. In December 22. Okay, in June 23. So this is a demerger question mark from this chapter. And the next we have an One more question that we are already discussed. One image question. Next question paper. So slum cell direct question. I think we are already inserted this question in our notes also. So that means business restructuring reconstruction means this is a 10 marks weighted chapter. Slum sale question is also given, and next one ma. So right now we are discussing this question for 6 marks. So slum sale is nothing but for 8 marks. Yes ma. Slum sale question is given for the 8 marks. Slum sale question given for the how many marks ma? 8 marks. And in the same question paper we have one more question. 14 mark questions from this chapter only. That's why normally assessment of companies we have in the following concept ma. We have to cover the first one. Yes ma. MAT. We have to cover the following concepts. First one MAT. Second one optional tax rate for the companies. I think in introduction chapter itself we know some tax rates for that optional tax rate. So next one, in CMA inter we have in this concept ma. In set off and carry forward of losses we have this concept 79 and 79A. And next buyback ma. These 4 concepts are assessment of companies only. Maybe we can get the 1 or 2 questions from this assessment of companies only. Very important concept ma. Just listen carefully. Straight away I want to start with the MAT concept ma. What is the full form of MAT ma? Minimum alternative tax. What is the section ma? 115 JB. So please type the section name ma. 115 JB. Please type the section number 115 JB. So that is a minimum alternative tax. Sir, what is that 115 JC ma? Alternative minimum tax. That already done. AMT concept already done ma. In last session we are done, and I think we are done with the problems also. Right now we are discussing the what ma? MAT concept. So what is the section number for the MAT ma? 115 JB. 115 JB. Okay. 115 JB is talking only about the how to calculate the tax liability of a company. Ganesh, if you are observing that, company P&L account as per the schedule 3 if you are preparing, so if any net profit is there, that is not at all accepted the net profit as per Income Tax Act 1961 ma, because this P&L account is prepared as per Companies Act 2013. So this net profit, on the net profit if you want to pay the tax, we can't accept it ma. We can't accept it. Definitely in examination they will give you the P&L account only, but as that P&L account is prepared as per which act ma? Companies Act 2013. But this is not at all accepted. We have to calculate the PCBP. How to calculate the PCBP ma? So for the net profit we have to do that what ma? Some adjustment. In PCBP chapter we know already. So what are the disallowed expenses? What are the allowed expenses? What are the disallowed incomes? What are the allowed incomes? All the things you know. After doing that adjustment you will get the what ma? You will get what ma? PCBP. If you are adding the other incomes, then you will get what ma? Total income. So for this total income, we have to yes ma, apply the tax rate. Then you will get what ma? Tax liability. Then you will get what ma? Tax liability. Please let me know.
We need to calculate total income as per Income Tax Act. It will be given under Companies Act. From that we have to review this.
అరే నిన్ను పుట్టినా తప్పులేదు జఫ్ఫా విను నేను ఎందుకు జఫ్ఫా అంటున్నాను కూడా చెప్తున్నాను. Yes sir. Already in PCBP introduction this is only I told. In PCBP introduction clearly I told this one. PCBP introduction always they will give you the P&L account as per Companies Act 2013. So the net profit on that if you want to pay the tax they will not allow you, because that is a net profit as per the Companies Act 2013. We have to calculate the PCBP as per Income Tax Act 1961. Then you will get the PCBP. For what do you mean by the total income? PCBP alone will be the total income? No. All other incomes also we have to add. Then you will get what ma? Total income. On the total income we have to calculate the what ma? Tax liability. PCBP first page you can open concept book. This is only the first discussion we have. But I will tell you. Sir, for companies many exemptions and many deductions are there. For companies many exemptions and many deductions are there. So that's why maybe yes ma, this total income or PCBP will become 0. So that's why this is not at all acceptable ma. So that's why Companies Act based related thing Yes, ma. Converted as in PCBP also. After making that all the adjustment as per Income Tax Act 1961, yes, ma. Your total income will be low. If you are applying the tax rate on that also, tax liability is low. So that's why minimum alternatively we have to collect the tax. That's why they are introducing that one thing, ma. For the same net profit only, we have to make the adjustments here. But what are the adjustments, ma? In explanation 1 to section 115 JB, they are given the certain adjustment. That adjustments only we have to do. After the doing that adjustment, you will get what, ma? Book profit. Once again, I am telling to you, ma. What is the main thing, ma? Always, 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 always. Yes, ma. Always we have to do that adjustments, we have to do that adjustment as per the explanation 1 to section 115 JB. For the net profit you will get what, ma? Book profit. On that book profit please apply the MAT rate, ma. What is that MAT rate, ma? 15%. Then you will get the tax liability, then you will get the tax liability. Whichever is higher only you have to select as a tax liability of the company. For that you have to add the education cess as well as what, ma? Surcharge if any applicable. Sorry, first you have to add the surcharge, then after health and education cess. Once again I am telling to you, ma, like in AMT also we are doing the same thing. Right? In AMT we are calculated the adjusted total income. On that we are applying that what, ma? 18.5% as an AMT rate. But here we have to calculate the book profit. On that book profit, what is the rate we have to apply, ma? MAT rate, that is in 15%. Sir, how they will give you that question in an examination? If they are asking the tax liability for a company, what is that, ma? If they are asking the tax liability for a company, so once again I am telling to you how they will ask you that question in that exam, ma? Simply they will ask you, so please compute the tax liability. So what do you need to do, ma? They will give you simple net profit as per the P&L account, ma. They will give you that P&L account, net profit, other adjustments or data also they will give you. You have to calculate first what, ma? Normal provisions tax liability. Can you tell me normal provisions tax liability means what, ma? PCBP as well as other income you have to add back. Then you have to calculate the normal provisions tax liability. Then you have to calculate what, ma? Book profit. How to calculate book profit, ma? For the same net profit you have to make that adjustment under section 115 JB explanation, ma. On the book profit, what is the rate of the tax we have to apply, ma? Ma? So whichever is higher select. For that education says surcharge you have to add. If they are asking that what, ma? Tax liability. If they are asking the PCBP, then you need to do that what, ma? PCBP problem only. Sometimes they will give you that only compute that MAT. That means what, ma? First you have to calculate what, ma? Book profit. On that book profit you have to apply that what, ma? MAT means 15%. Sometimes they can give you that question as an what, ma? Another way also. Sir, please compute the tax liability. Please compute the tax liability. Ignore MAT. They will give you what, ma? Ignore MAT. That means what we need to do here, ma? Only PCBP. So many ways they can test you in that examination, ma. Many ways they can test you in an examination. If they are asking only tax liability, if they are maintaining the silence, you have to do these two things, and whichever is higher, for that you have to add. If they are asking PCBP, yes, please do PCBP. If they are asking the MAT, only MAT. If they are asking the tax liability, they are giving that instruction like an ignore the MAT. Then ignore the MAT, only we have to do that what, ma? PCBP. Okay, in our last examinations, we have some questions. So I will show you the questions. Based on that, you have to make a decision. That problem is how they are asking. So this is nothing but what, my last exam question, ma. Always 2B they will give you. So 2A, ma, they will give you. So please calculate, ma, what they are asking, ma. What they are asking question. Yes, ma. They are asking about the what, ma? Compute the business income as per normal provision. That means what, ma? PCBP. Second, ma, book profit under section 115 JB. So that means what, ma? You have to calculate only book profit. No need to calculate the tax liability also here. Okay. So many questions. Just I want to show you the questions how they are to give you in the examination. Yes, ma. In MTP, how they are to give you, ma? Please take it out. They are asking the what, ma? Finally, tax liability. That means what you need to do, ma? First you have to calculate PCBP. On that you have to calculate tax. Next you have to calculate what ma? MAT, whichever is higher. For that you have to what ma? Surcharge and health and education cess. They are asking the tax liability means nothing but both the things you have to calculate. Whichever is higher only you have to pay as a what ma? Tax. But for calculating the PCBP also base is net profit. For calculating the book profit into 15%. For calculating the book profit also what is the base ma? Net profit only. I think that net profit is this. So in an examination, I will show you, ma. So how they are asking the questions, sir. First, so how we are getting the questions, that is only important, sir. So without knowing that how they are asking the questions, definitely that will be, yes, ma, difficult only. So I think in this, how they are given the question. Question number 3, ma. Question number 3, company only. So assessment of company means nothing but what, ma, company. Here they are not given the P&L, just the statement is given. So after the net profit, what are the items are after? They are given the net profit after debiting and crediting of the following items. Finally, what is the requirement of the question? Please check it out. What is the requirement of the question, ma? They are asking the total income. Total income means nothing but you do, yes, ma, simply normal provisions related total income you have to calculate. Within the bracket, they are given ignoring that math. That means what we have, what they are asking, ma, PCBP. Then after other incomes, please do. And only calculation of total income. Tax is also not required. So simply you have to think how they are asking the questions. So you have to think, yes, ma. Next, in this 2A, how they are asking the question, ma, please check. Final, final, final. So directly they are asking that what, ma? PCB. Ignore the provisions of 115BA. That means they are not after the optional tax rate also. So they are only asking the PCBP. Do you need to calculate here? Yes, ma. Do you need to calculate here, MAT, ma? No, not required. So all of you, 9, so I think 9 students are there in classroom. So are you understood what is that answer we have to write in that exam? So this is a very, very important, ma. Many students are doing the wrong things only. Yes, ma. If they are asking the tax liability, what you have to do, ma? If both and whichever is higher select, and on that we have to calculate the tax liability. So PCBP alone, if they are asking PCBP, MAT they are asking only MAT. Sometimes we can get the questions only book profit also. Please compute the book profit. That enough also they are asking. That only book profit computation also they can ask. So they are asking the tax liability, ignore MAT. That means what, ma? We need to do that what, ma? PCBP. So all of you please understood the question. How they are asking the question, that is an important thing. Okay. Yes, ma. Fortunately or unfortunately, yes, ma. Fortunately or unfortunately, we know how to calculate the PCBP and what are the adjustments we can done in the PCBP also. You know in the PCBP chapter. But right now, what is our concentration in this entire exclusive discussion, ma? MAT. What is that, ma? MAT. So MAT, in order to calculate the minimum alternative tax, what is the base, ma? Book profit. Without book profit, you can't calculate. How to calculate book profit, ma? Simply for net profit, please do adjustment as per section 115 JB. Please do adjustment as per section 115 JB. Are you clear? Main part of the chapter is nothing but what, ma? How to calculate the book profit. Explanation 1 to section 115 JB is talking about the what, ma? What are the adjustment we have to do in order to compute the book profit for the net profit. Okay. Yes, sir. So I think maybe we can take the nearly 30 to 40 minutes for these adjustments related discussions. And if you want to understand, these are all the things, and if you want to remember these adjustments, you have to type that in the shortcuts also. So 2 or 3 times I will repeat these all the things, ma. But you have to type the shortcuts also in the chat box. Then only you can remember for the long time. Okay, because without knowing these adjustments, you can't do the calculation of book profit. Without calculating the book profit, MAT also not possible. So that's why always, yes ma, 115 JB explanation 1, whatever that adjustment exclusively they are given, that adjustments only you have to make. Other than this, no requirement to make that what ma adjustment. Only in this section, what are the adjustments are there? That adjustments alone we have to do. The remaining adjustments are not at all required. Okay. What is the base we have to take ma all of you? What is the base you have to take ma? Net profit or loss? Maybe sometimes you can get profit, sometimes you may get what ma loss. Whatever there is that you have to take. Whatever there that is you have to take. Next. Yes ma. P&L account, net profit we are taken. That means okay. If any item isn't debited to P&L account, so below items, ma, how many items are there, ma, nearly? 13 items, not 14, ma, 13 items. These 13 items, if any item is debited to P&L account, because of the debit, net profit is what, ma, reduced. Please do add back. So what is that, ma? First adjustments are, so if any item debited to P&L account, because of the debit, what is that happen, ma? Net profit is decreased. So that's why please add back the, what is that, ma? Please add back the, what, ma? Amount. So there is no shortcut, and many class faculties or many things are they are creating the shortcuts like cheat codes, mnemonic codes, etc., etc. So I don't know, sir. That may not be worked out in an examination. How you can create the D, sir? So if you are remember the D, so what do you mean by the D? So that is also difficult, but just please remember the all the things cumulatively revision. Then you can remember. Okay. If anything, income tax, please remember income tax paid or provision. If anything that isn't debited to P&L account, because of that net profit is reduced, please add back that. Please remember, while you are doing the math problem or while you are calculating the book profit, I think you know that adjustments in PCBP, all the things, please kept at a side. So don't mix up the PCBP adjustments as well as MAT adjustments. Here we are not discussing the PCBP chapter related adjustment, that all the sections are over. Right now we are discussing the section 115 JB explanation 1 adjustments only. Don't mix these two things. PCBP is a different, MAT isn't different. If both the things are one, we don't want to calculate the MAT also. Are you clear, ma? Okay. Income tax paid or provision. What do you mean by the income tax, ma? Including interest on income tax, including surcharge, including cess. If anything was debited to P&L account, please do add back. Please do add back. But one more thing, ma. So many students are thinking like, sir, they are thinking as a direct tax. No direct tax here, income tax only. If any wealth tax is debited, no need to give the treatment for the wealth tax. If any income tax was debited to P&L account, for that only we have to do what, ma? Add back treatment. If any wealth tax is there, do nothing. Do nothing. Because whatever that adjustments are there in these explanation 1 2 section 115 JB, then that only we have to do. If wealth tax is there, do nothing. Are you clear? First point, ma. What is that point, ma? Please type income tax paid or provisions also, including interest, including cess, including education cess, including surcharge. All the income tax related liabilities, you have to do what, ma? Add back. If debited to P&L account, if that isn't debited to P&L account only, then we have to do what, ma? Add. Ganesh, are you understood first point? Yes. Yes, ma. Deferred tax. So deferred tax asset or deferred tax liability or deferred tax reversal of asset, deferred tax reversal of liability. You don't know about this, ma. If any deferred tax related debited to P&L account, then you have to do what, ma? Add. Then we have to do what, ma? Add. Second one, ma, if any deferred tax item was debited to P&L account, that we should add. Next one, ma, Dividend paid or proposed. Sir, once again I am telling to this, once again I am telling to you, ma, please remember, while doing that book profit, these are adjustments we have to make. While doing the PCBP adjustments only we need to do. So both the things are nothing but you have to do in one problem itself. On that time, many students are thinking we should mix up these two things. No. So 115 JB means 115 JB explanation, one adjustment we have to do for the purpose of obtaining the book profit. PCBP adjustment means section 28 to 44, that provision we should apply for calculating that what ma PCBP. So these two sections related adjustments are different, and these two are different only. Next. Dividend paid or proposed, if anything also there, that was debited to P&L account, because of the debit, net profit is what ma reduced. Please do add. Please do add.
Sir, like this, how you provided mat table.
Sorry?
Like how you provided mat table.
No, I don't want to give you that PCBP table. If I am giving the PCBP table, so that will be 3 or 4 pages are there. We can't. So the PCBP entire sections you should know, because I think in the classroom that person is asking, sir, you are giving the what are the items are add, what are the items you have to list for that mat. For book profit you are giving the one table. So like this, so that person is expected from the what ma PCBP also. You can't do that PCBP related, because the PCBP adjustments are voluminous unlimited. Because 115 JB given only this. So if you are open your study material also, they are given the 13 points add, the remaining points less, like 20 points only they are given. So that's why I am created the table. Yes, ma. That's why I am creating that what ma table. Okay. So please listen carefully. Okay. Fourth one. So third one also okay. Dividend paid also add back. Dividend proposed also add back. Next one, ma. Any amount transferred to reserve. So please, array, pass the entry. So from the P&L account, we are passing journal entry transfer to reserve. What is the journal entry, ma? P&L balance is reduced and we are transferring some amount to CRR. So we are transferring the some amount from the P&L to any reserve. So capital redemption reserve example I took. Okay. So here what is that entry, ma? Okay, what is the general ledger posting, ma? To CRR. That means in P&L debit we have an what, ma? One CRR. P&L debit side we have an what, ma? CRR. We are transferring the P&L amount from that P&L account to whom, ma? Sorry, P&L account to which account, ma? CRR account. Because of that debit, net profit is reduced or not, ma? Yes, that's why you have to do what, ma? Add back. That means from P&L account, if we are transferring that P&L balance to any reserve, that may be CRR, security reserve, general reserve, yes, ma, any reserve, that always we have to do what, ma? Add back. Next, sir, our losses also add back. Here we are creating the provision for subsidiary or losses of subsidiaries related provisions always debited to P&L account. Please do add back. Please do add back. I will give you that simple challenge to you. Simple challenge. After reading these all the things for 30 to 40 minutes, you can open any problem in your workbook or in your past examinations also. You can do 100%. So maybe in PCBP part, I am giving you, sir, may not be, you can't solve all the adjustment, but in math you can do 100% adjustments, man. Because PCBP adjustments, if you are before the total provisions only you can do. Maybe one time you can think about the allowed and one time maybe you can think as a what disallowed. Answer may not be accurate in PCBP. But in math, always the answer will be accurate only. So definitely you will get full marks if they are given the question related to math. If they means, I am not talking about, they will give you that question in that exam mandatorily and you should write that question also mandatorily. Next thing. Provisions always add back. If any provision for unascertained liability and contingent. So please remember here we are talking about unascertained, not ascertained. If any unascertained liability related provision and contingent liabilities are there, if any provision is debited to P&L account, provision always debited to P&L account, ma. So that's why because of that provision, net profit is reduced. We have to do what, ma? Add back. How many points are over, ma? Up to now 6 points. Seventh point also I will tell you, the provision for diminishing the value of asset. Example, what is that, ma? Bad debts is there, debtor balance is reduced. For that we are created the provision for depreciation. So because one asset value is diminished, that's why we are created the provision. If any provisions are there, always we have to add back. Because that provision balances are debited to P&L account, so that's why we have to do what, ma? Add back. So please repeat the 7 points, ma, for me. Income tax paid or provision, deferred tax, dividend paid or proposed, any amount transferred to reserve from the P&L account, loss for the subsidiary, provision for subsidiary, provision for unascertained liabilities, provision for contingent liabilities, provision for diminishing the value of any asset. Example, provision for bad debts, provision for depreciation, etc., etc. Yes, shall we start that eighth one, ma? Eighth one. Yes. Yes. Notional loss relating to business trust units. You know one thing? Please check it out. Just a month. Unit holders are investing in where, ma? BT. BT is investing in SPV. SPV means company, you know. SPV means company, you know. So we are creating the ESMA notional loss for the business trust. That is like we are creating the provision. We are creating the provision in the company P&L account. In the provision we are in the company P&L account we are creating like provision. Maybe notional loss. They may get the loss. So that's why we are created the provision. Because unit holders are expecting the minimum amount from the business trust, you know. So that's why we are creating that notional loss. So that is not at all correct, ma. If any notional loss regarding the business trust units are there, if that amount debited to P&L account of SPV, if that is a company, so that is not debited, ma. Sorry, if that is debited, okay. But while calculating the book profit, we should do what, ma? Add back. We should do what, ma? Add back. Next. I think many students are asking about, sir, we should remember all these things. No, just read. Please check the problem. You can remember all the things. Reading means not a time pass reading, ma. 100% effective reading. If you are done, then all the adjustments you can do. We can open any problem. Okay, you can tell me any exam paper also. I will open that and we can do. Yes, ma. Next. Ninth one. Important. You should apply your mind from the 9th to 13th, ma. Clearly. Yes. Ganesh, I will ask you one question, ma. What is the section 10? In Income Tax Act, what is the section 10? What is the section 10? Any one of you, what is the section 10 in income tax? Any one of you in class, what is the section 10 in income tax? Exemptions. Okay. So, okay, exemption. Ganesh, suppose, just example, you have an agricultural income, exempt or taxable? Huh? Exempt or taxable, ma? Exempt. Okay. So if agricultural income is there, that is an exempt. That's why you can't that amount credit. You can't give a treatment like in what, ma? Credit to P&L account. That means that is an exempt. No need to add that amount in that what, ma? P&L credit side. Then that expenses relating to earning that exempted income. If anything debited to P&L account, what we have to do, ma? Less. Because while calculating that what, ma? Book profit also, exempted incomes are always exempt only. While you are calculating the book profit also, yes, ma, if any income is exempt, no need to give that what, ma? Addition. Then expenses relating to earning that exempted income also, if debited to the P&L account, if anything is there, then we have to cancel that, we have to add. And 11 and 12 are exemptions related to trust chapter, ma. Okay, trust. So if any exempted income is there, that we have to do what ma? No need to credit to P&L account. But that exemptions related expenses, if any debited to P&L account, we have to do what ma? Add. Are you clear ma up to now? Expenses relating to earning the income of section 11, section 12, section 13. Sorry, section 10, section 11, section 12. If any items are, yes ma'am, expenses relating to these are debited, means net profit is reduced. That's why we have to add. Next, 10th one. 10th one. I think in the initial chapter, I gave one point, ma. In AOP, any person can become a member. So in this AOP, please remember, ma, in this AOP, one company, one individual, one firm, one LLP is a member. In association of person, any person can become a member. Who is that, ma? Any person can become a member. Okay. Okay. ఒక్క నిమిషం. Next one, ma. Sir, if any AOP gets the profits, who needs to pay the tax on the profits, ma? AOP only. If AOP gets the profits, who needs to pay the tax on the profits, ma? AOP. So that profits needs to be shared by whom, ma? AOP to all the members. Here one of the member is nothing but what, ma? Company. Intentionally, I am taking the one member as a company. The share of profit received from the AOP in the hands of company, that is in what, ma? Exempt. Yes, ma? That is in what, ma? Exempt. Yes, ma'am. If any share of profit received by the company, if any share of profit received by the company, yes, ma'am, from the members. Sorry. If any share of profit received by the company from AOP, that is what, ma'am, exempt. Because on already company AOP paid the tax. So because AOP already paid the tax, that profits only distributed by the AOP to that company in the hands of company, that is an exempt. Exempt means that is not included in the P&L account. But whatever that amount you are incurred for earning that income. Example, for investing in the AOP, I am investing how much amount? 1 lakh. For that 1 lakh, I am paying that interest 10,000 to the banker. I am taking the loan, and that loan amount is only invested in where, ma? AOP. So can you tell me what is that investment amount, ma? 1 lakh. With respect to that investment income, what is that interest expenses, ma? Yes, ma. What is that interest expenses, ma? 10,000. That interest expense, if anything is debited to P&L account is there, that we have to do what, ma? Add back. Because share of income of AOP is exempt, that exempted income expenses if debited to P&L account, please do add that. So are you understood this point, ma? 11 and 9 and 10 are interlinked, ma. The same points. Because income is exempt, you are not paying any tax on that income. Why that expenses should be debited to P&L account? But in your Companies Act 2013, all the things are debited, all the things are credited. They are not thinking about the exemptions as well as what ma, all the things. So all amounts are debited. Yes, ma, that's why we have to do what ma, add back. Are you clear with the 9 and the 10 points, ma? All of you, please repeat the 9 and total points, ma. Income tax paid or provision. Yes, ma. Not wealth tax, income tax only. Deferred tax, dividend paid or proposed. Any amount transferred to reserve. Loss or provision for subsidiary. Provision for unascertained liability, contingent liability. Provision for diminishing the value of asset. Notional loss relating to business trust unit. Expenses relating to earning that income under section 10, 11, 12. If any expenses relating to earning, expenses relating to share of income of what ma? AOP. Yes, ma. Next. These 3 points I will tell you, and I will take the 5 minutes break, ma. So these 3 points I will tell you. After the explanation of these 3 points, I will take in 5 minutes break, ma. So 5 to 10 minutes also okay. Just remember, just listen carefully. Ma, in this chapter, I will tell you, if any royalty income under section 115 BBF is there, that is taxable at the rate of what, ma, 10% at a special tax rate, not normal tax rate. This is an important, I will tell you in the assessment of various entities chapter itself. If any royalty income is there, that royalty income is taxable at what, ma, special tax rate under section 115 BBF. Okay. Please listen. In your P&L credit side, if any royalty income is there, that is not taxable at normal tax rate. Okay, if any items are credited, ma, okay. Can you tell me what is the minimum amount of tax we are expecting on this, ma? 15% MAT. On the book profit, we are expecting that what, ma? 15%. But here, out of this royalty amount, if anything is there, on that we are paying the tax only at the rate of what, ma? 10%. Are you understood, ma? We are paying how much amount, ma? 10. So that means you are paying the less than MAT rate or not? Yes, less than MAT rate only. If any expenses are, yes, ma, incurred for earning that royalty income debited to P&L account, please do add, because you are paying the less than MAT rate only. If you are earning that income is taxable at what, ma? Less than MAT rate. Then the expenses should be, sorry, expenses are already debited to P&L account. That is not at all correct treatment. If income is there, you are paying the less than MAT, then expenses you should not debit it to P&L account. That's why we have to do what, ma? Add back. So for department, these are all the things are what, ma? Unfavorable. You are, okay, I am expecting the minimum what, ma? 15%. You are paying on this income only 10. Yes, ma. And you are taking the debit from the what, ma? 15% taxable items. Yes, sir. Simply, logic is nothing but if you are debited the, yes, ma, expenses relating to earning the royalty income, that is reduced the which percent taxable income, ma? 15% taxable income is reduced. So that's why this is a department unfavorable things. That's why if anything is debited to P&L account, please do what, ma? Add back. Next, same point. Expenses relating to income of a foreign company. Sir, please remember MAT concept is applicable for the domestic company as well as for foreign company also. Foreign company also comply the MAT provisions. But the optional tax rate concepts are there 115 BA, BAA, BAB, ESMA. That all the things are for only domestic companies. But MAT concept is applicable for foreign company also. By way of understanding this point itself, you have to know about the what MAT is applicable for the foreign company also. Yes, ma'am. Yes, ma'am. MAT is applicable for the what, ma'am? Foreign company also. Please remember, if any foreign company having that income from the capital gain and interest, royalty, dividend, fees from technical service, ma. Fees from technical service. These two things are what, ma? Incomes. For which company, ma? Foreign company. Okay. The same explanation I want to give you, ma. Please listen. So same explanation. Sir, okay, capital gain income is there, ma. Next one, ma. Interest or royalty or fees from technical services, whatever it may be, incomes are there. So the remaining incomes are there. What is it we are expecting, ma? 15% minimum tax we are expecting. But if the tax rate on these two incomes are less than 15%, we are paying just 5%, my example. Special tax rate is there for the foreign companies with respect to these two incomes. What is it, ma? 5%. Expenses relating to these two incomes, we can't debit to P&L account. If anything is debited to P&L, that needs to be what, ma? Add back. Because you are paying only 5% tax. That expenses reduce it from the 15% taxable income that is not paid for the WUMA department. So that's why they are giving the treatment of what, ma? If any items are debited to P&L account, what are the items, ma? If any expenses relating to earning the what, ma? Income from the capital gain, income from the interest and dividend on royalty for which companies, for foreign companies. If the tax rate on that above incomes is less than 50, some cases, if the tax rate is nothing but 20, example, you can took 20, they are happy only. They are happy. If debited also, they are happy. Why? Because that income is taxable at what, more than MAT rate. So that's why you can debit, no issue. If that income is nothing but taxable at less than MAT rate, like 5%, if that isn't set off from the what, 15% taxable incomes, that is not correct in accordance their feeling. But if that is tax rate is what, more than, yes, MAT. So please remember less than what, 15%. Next. Whatever the depreciation is debited to P&L account, please do add back. Whatever the depreciation, that depreciation may be on any asset, that is a revalued asset, a old asset, new asset, whatever the depreciation as per the Companies Act 2013 is debited to P&L account, please do add that all the things, ma. I think you have these notes in your hands, ma. I think at 12:35 I will start the class again. At 12:35 I will start the class again, ma. So please read the additions from the additions for the what, MAT calculations. Please remember these additions are only needs to do if debited to P&L. If not debited to P&L, we can't do, ma. If any items of these 13 items, if debited to P&L, please do add. So at 12:35 I will start the session, ma. Then I will continue till 1:30 also. So after this, we will do some problems also. Please refer the additions related points. Okay. Shall we do, ma? Next one. Next adjustments. Sir, other edition also there, but I will tell you after some time, ma. So that means in end, I will tell you other edition, ma. So normally up to 13 point, if items are debited to P&L account, we have to do what, ma? Add back. So the first of all, please confirm whether audio and all the things are clear or not, ma. First 13 points, if any item was debited to P&L account, if any item was debited to P&L account, we have to do what, ma? Add back for computing the book profit under section 115 JB. So the 14th point is there. This is also what, ma? Addition only, but I will tell you after some time. Are you clear up to now? Okay. Okay. Next. What is the main intention? I will tell you. Often calculation of book profit. Sir, after debiting and crediting of debiting the many items, net profit will become drastically reduced. So that's why we want to increase these things. So that is only main AO intention. Assessing officer intention is nothing but what we want to do these adjustments and we want to increase the book profit. So that is only the main agenda. But you are added these items consequently. Yes, ma'am. You have to do the reverse adjustments also. But one way adjustments are not possible. So always you can't think from the point of view of department. Sometimes you have to think from the SSC's point of view also. Because you are, yes, ma'am, added these things for calculation of book profit. Consequently, exactly reverse adjustments are there. So that's why we are thinking about the less also. So to be frank, they are concentrating always on add items, 115 JB explanation 1, they are always concentrating on the add points. But consequently, whatever is there for that exactly reverse opposite points, we have to do what, less also. Example, I will tell you. If any deferred tax is debited to P&L account, what you have done, add back. Same way, sometimes the deferred tax is also credited to P&L account, so that you have to reduce less. If any one of these following items, so here I am talking about the what if any one of the following items are credited to P&L account, net profit is what increased here, so that's why what we need to do less. Sir, these are the not separate points, consequently reverse to the simply the reverse to the add items. Yes, no need to remember all the things. Simply whatever that add item is there, consequently the reverse item is there, that is we have to less. Okay, next. Sir, if any amount, please remember, yes, if any amount transferred from P&L to general reserve or P&L to any reserve, what is the thing, debited, so that we are already added, here, yes, withdrawn from the reserve. Can you tell me withdrawn from the reserve means nothing but what, So suppose CRR2, what is that, P&L account? We are withdrawing the amount from the CRR. What is that item, in P&L account, what is that credited, CRR amount is credited. Definitely we have to do what, less. Because of this credit, profit is increases. That's why we have to do what, less. So same, sir, there is no obligation for these two because we haven't deferred tax asset, deferred tax debit, that's why, yes, any amount transferred to reserve. These two reverse points only, these are. Are you understood, Any amount withdrawn from the reserve means that reserve balance is reduced. That's why debited. So any amount transferred from the withdrawn from the reserve and credited to which account, P&L account. P&L account balance will be increased. Next. Profit of sick industrial company. Profit of what, sick industrial company. What do you mean by the profit of sick industrial company? Example, I will tell you. Sir, suppose I have many units in my organization. That is nothing but, so while preparing the consolidated P&L account or consolidated balance sheet, I am adding that what, all the holding subsidiary, my units related incomes also. In P&L, yes, this is a profit from the sick industrial, So definitely, while preparing the consolidated P&L account, yes, consolidated balance sheet also, I will add all the entities related assets also, liabilities also, profits also. This already this fellow industry is created as a what, sick industry, because many times we are getting the losses. For just 1 year, they are getting the profits. So that's why, even though if that isn't credited to P&L account, please do what, less. This is a separate point, not a reverse point of the additions, This is a separate point. What is that, If any sick industrial company is there in your organization, so while you are preparing that consolidated things, all the things always what, credited only. But all the years they are getting the losses only. If any year they are getting the profit, that may not be considered for the what, that should not be considered for the what, book profit computation. That's why Yes, ma, because of this net profit is increases. So that's why please reduce it. Please reduce it. Next one, ma. Notional loss relating to business trust is there. We are doing that what, ma? Addition. If any notional gain created for the business trust related units, that if any notional gain is there, so that may be credited to the P&L account. Please do what, ma? Less. If income is there under section 10, 11, 12, that if that is credited to P&L account, that may not be taxable, that should not be taxable. That's why please what, ma? Less. Share of income from AOP is there, that taxable or exempt, ma? Exempt. If anything isn't credited to that what, ma? P&L account, please do what, ma? Less. Sir, are you understood, ma? Because these are already explained in the editions. That's why I'm going with the speed, ma. So because these 3 points, so if you are observing that, yes, ma, this is a nothing but if I am placing here, these are all are the P&L debit reverse items, ma. Am I correct or not? Next. Can you tell me royalty income is taxable at special tax rates, you know? What is the tax rate, Ganesh? Royalty income under section 115 BBF, what is the special tax rate? So that's why you need to read from the word, handwritten notes. So you should not write overaction malli. So you should, okay, maybe you will not believe, okay, maybe sir told you nonsense points, etc., etc. Okay, I will show you how much that point is an important. I will show you. Okay. Yes, ma'am. So the carbon credits point, ma, this is also 115 BBF related only, 10% tax liability. On 15 lakh, 10% and education says if you are added, this is only. So in the same point, 115 BBF and as well as this is also taxable at the rate of what, ma, 10%. 15 lakhs into 10% plus 4% education says if you are added, this is only answer. Carbon credits as well as royalty income under section 115 BBF, the same. I don't know when you will realize also. After exam, sir.
No, sir.
Yes, ma. Can you tell me this isn't taxable at what, ma? 10%. This isn't taxable at what rate, ma? 10%. So that's why if anything isn't credited, that we have to do what, ma? Less. If any expenditure relating to royalty income under section 115 BBF debited, what we need to do, ma? Add back. If anything is a royalty income credited to P&L account, we have to do what, ma? Reduce. The same, ma? Income from foreign company, sorry, income relating to foreign company from these two, yes, ma? If tax rate on these two are what, ma? Less than 15%. If anything isn't credited, we have to do what, ma? Less. If any expenses relating to these two incomes are debited, we have to do what, ma? Add. Are you understood, ma? These are all are reverse to the previous points only. If I am placing this minus indication, reversal only. Only one new point is there. Profit of what, ma? Sick industrial. I think you know, yes, ma. What is that amount of depreciation? We are added, ma, total depreciation, whatever the debited to P&L account, we are doing that what, ma? Addition. But, ninth point, yes. Depreciation as per books. You are already added. Please do minus also. But except revaluation assets related depreciation. Except what, ma? Revaluation. So can I tell you one thing, ma, simply? Okay. In your P&L account, depreciation is there, ma. So what is that P&L account depreciation they are given? 10 lakh depreciation is on normal assets, ma. Some assets are revalued. The revalued asset related depreciation is 12 lakh, 2 lakh. Total how much? So normal assets related depreciation, please reply, ma. Normal asset related depreciation is how much, ma? 10 lakh. Revaluation asset related depreciation 2 lakh is there in P&L account. Can you tell me how much amount debited, ma? 12 lakh. How much amount you have to add here? 12 lakh also. The total depreciation whatever is there debited to P&L account, that we are doing that what, ma? Addition. While you are doing that minus, what is that, ma? While you are doing that what, ma? Minus, yes, ma? Less. Can you tell me depreciation as per books except revaluation? That means how much amount you have to less, ma? except revaluation means what ma? 10 lakhs. What is that amount you have to reduce ma? Only 10 lakhs. Sir, this is a favorite adjustments ma. This is a favorite adjustment for the yes ma question paper setter. So what is that ma? Total depreciation you have to add, but while you are reducing except revaluation asset related depreciation, please reduce. Are you understood the point number 9? Okay. 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 Next one, ma. Next one. I'm erasing these data. I'm erasing the data. Okay. I'm erasing the data. I'm going with the next point. I'm going with the next point. I'm going with the next point. Sir, I will spend you nearly 1 hour or 2 hours also for this point. Yes, ma. Just listen carefully. Just listen carefully. Sir, if the problem is silent, then you can't do the next adjustment, ma. If any asset isn't disposed or retired, then only we have to do the 10th point as an adjustment. Yes, ma. Ganesh, okay. One example I will take, ma. All the students, please listen carefully with respect to 10th one. We have an assets, ma. Out of that assets, just 100 rupees are the normal assets, ma. So 300 or nothing but value of what ma? Revalued asset. The original value of the revalued asset is 250. We have created the revaluation of assets of how much ma? 50 rupees. Original that asset value is 250. Right now that revaluation asset how much ma? 300 rupees. Okay. Depreciation on that normal asset 10 rupees ma. Depreciation on normal asset 10 rupees. Just I am given. Okay. And the revaluation asset related depreciation how much ma? 30. So depreciation adjustment, can you tell me how much amount of the depreciation totally debited to P&L account ma? Total depreciation 40 debited. So that's why 40 you have to do what ma? Add. Am I correct? Yes. What is the depreciation you have to less ma? Except the revaluation. That means what ma? Normal only. You have to do what ma? Less. Am I clear ma up to now? Okay. But at the time of disposal, if that question giving the asset is in disposal, I think in our material also, in any books also, we may not having these adjustments, ma, but conceptually you have to know. What is that, ma? At the time of disposal. Okay. What is that amount of revaluation reserve is created at the time of revaluation, ma? Okay, revaluation 250 original value is revalued with the what ma? 300. What is the revaluation reserve is created here? Please let me know. 50 rupees. Okay, so nothing but what ma? From P&L, we are transferring the 50 rupees to that what ma? So normally, already how much amount of revaluation created previously ma? 50. That asset is disposed means we have to close that what ma? Revaluation balance. The revaluation balance closed means that should be transferred to which account ma? P&L account. So normally how much revaluation reserve created earlier ma? 50. Here that asset is disposed. That means the revaluation balance should be transferred to which account ma? P&L account. Okay. Can you tell me P&L amount is increased by using how much amount ma? 50 rupees, because that amount is transferred from the revaluation to P&L because that asset is disposed. That asset is not in use. That asset is nothing but what ma? Totally same. Okay. Here what is the adjustment we have to do? Can you tell me always we have to do, or at the time of disposal of asset only we have to do? This adjustment needs to be done only if the asset is what ma? Disposed. Okay. Okay. In this situation, please remember, yes ma, P&L balance is increased or not ma? Increased by using how much amount ma? 50. If that 50 credited to P&L account, please listen. If 50 credited to P&L account, do nothing. If not credited, then we have to do what ma? Add. Then we have to do what ma? Add. That is only 14th point. Yes ma? Yes ma? What is that point ma? If revaluation reserve is closed, that amount should be transferred to which account ma? P&L. That's why P&L account should be increased with the what ma? Revaluation reserve transferred amount. If that credited, okay. If not credited, we have to do what, ma? Add. So up to 1 to 13 coins are, if debited, we have to do what, ma? Add. 14th point is a different. Always this should not come up. Only when the disposal of the revalued asset is there, then we have to do this adjustment. Disposal means on the time revaluation balance should be transferred to P&L. If P&L amount is an already credited, do nothing. If not credited, we have to do what, ma? Add. Are you clear this point first? All of you? All of you? All of you? Next. One more adjustment, ma. One more adjustment. At the time of disposal, if not credited, then we have to do add. Next. Sir, we are added the total depreciation, ma, and we are reduced to only what, ma? Normal assets related depreciation. At the time of disposal, what we can do, ma? Yes, ma, we can do the depreciation also. Which asset related depreciation? Revaluation asset related depreciation. How much amount you can reduce, ma? To that extent of depreciation you can reduce. What is that point, ma? So transfer of revaluation reserve. At which time this can be this will be transferred, ma? Revaluation reserve transferred means at the time of disposal only revaluation reserve is transferred to P&L. On that situation, what is that amount you can reduce, ma? Only to that extent of depreciation on revaluation asset. So always you can reduce the normal assets related depreciation, but revaluation asset related depreciation can be reduced only when asset disposal is happened. Can you tell me? Revaluation asset is disposed. What is that amount you can add as a depreciation? Total depreciation you have to add. Total depreciation also you can reduce. Why? Because the revaluation reserve is nothing but transfer to P&L. So once again I am telling this point to you, ma. Please remember. So what is the normal procedure, ma? So total depreciation you have to do what, ma? Add. And what is the depreciation you have to reduce, ma? Once again I am telling this point to you. All of you please listen. May not be important, but I want to tell you, ma. I want to tell you simple. So can you tell me what is the assets are there, ma? Here you have two types of assets, ma. First one, normal asset value is 100. Yes, ma. Original asset value is 250, but that asset is revalued, ma. Can you tell me revalued with how much amount, ma? 300. Can you tell me what is the revaluation reserve is created here? 50. Okay. Yes, ma. Normal asset related depreciation 10 is there, ma. And revaluation asset related depreciation 30 is there. Can you tell me what is the amount of depreciation is debited to P&L account? 40. So I think as per your add point, if any depreciation is debited, what we have to do, ma? Add. But while you are reducing that, except revaluation assets only you have to do. Except revaluation means nothing but what, ma? Normal asset related depreciation only we have to do what, ma? Reduce. So that's happened. In the question, if they are mentioned, sir, revaluation done for one asset is there, I think 250 to 300 revaluation done. If that asset is disposed, if that asset is in what, ma? Disposed. If the asset is in what, ma? Disposed. On that situation, what will happen, ma? If disposal of that asset isn't happen, always, yes, ma, revaluation balance should be transferred to P&L. So because of this transfer, P&L balance will increase. If that is an already credited, do nothing. If not credited, we have to do what, ma? Add. Are you understood, ma? Yes. Then, yes, ma, we are doing this only. If that is not credited to P&L account of 50 rupees, then we have to do what, ma? Add. Then what about the, yes, ma? Less adjustment, ma? Less is nothing but to that extent of depreciation on revaluation assets, normally you can't reduce, but that asset is disposed. On that time, we can reduce the, yes, ma, we can reduce the extent of depreciation. That means this 30 also can be reduced only when that asset isn't disposed. Only when that asset isn't disposed. Clear? So please read this point up to now. Are you understood these points first? At the time of disposal only we have to do these two adjustments That is nothing but Yes if not credited we have to add, as well as revaluation asset related depreciation also we can take it as on less. Next adjustment In problem definitely they will give you brought forward losses also. Brought forward loss means previous. So brought forward loss means previous year losses also they will give you. And unabsorbed depreciation also they will give you. But you need to consider as per books only. You need to consider as per books only. You need to consider as per books only. You need to consider as per books. They will give you in that question as per Income Tax Act. They will give you as per books also. They will give you. But what we should consider You need to consider books related only. So please take that whichever is lower only you can reduce Suppose as per books, brought forward loss 12 lakh, unabsorbed depreciation 8 lakh. Can you reduce the both the No. Lower of these two is nothing but 8 lakh. That only we can do less. But in these two cases, in these two cases, wait, yes, ma'am. In these two cases, you can take that both the things as in deduction. Yes, ma'am. You can take that both the things as in deduction. So when that IBC code related corporate insolvency resolution procedure is initiated, or compromises and arrangement related these two sections are implemented, then you can take that both the things. That means in these two cases you can take that 20 lakh as in 20 lakh as in less. Yes, ma'am. Both the things can be reduced. So finally, after that adjustments, you will get book profit. After adjustment, you will get book profit. So please consider these note points also, very easy note points After that, we can get that After that we can get the some questions also, but all the adjustments we have to do for the net profit. The net profit must be computed as per the Companies Act 2013 Schedule 3 only. Next, for insurance, banking and electricity companies, respective act related schedules net profit please take. So provision for gratuity and leave salary, warranty based actuarial valuation, or what ma ascertained liabilities ma. If any unascertained liability debited to P&L account, we have to do add. But these three are what ma ascertained only. Please remember, in examination students are doing this mistake ma. Provision for gratuity, provision for leave salary, provision for warranty based actuarial valuation are ascertained only. Exact amounts you can know ma. So that's why that you should pay at the time of retiring that employee, at the time of what ma, that the warranty is claimed by the customer. So in these cases you should not do what ma, add back. Next, if unit is what is that MAT rate ma? 15. If unit is located in IFSC, then rate is what ma? 9%. Even though that SSE is going with the what ma? MAT. So normal tax related tax as well as MAT, whichever is higher, that means we are going with the MAT. But in this situation, to the D4A, to the D4B, to the D4C are applicable. To the D4A, to the D4, to the D4A, to the D4B, to the D4C are not applicable only. That means even though you are following the normal also, even though you are following that MAT related also, to the D4A interest, to the D4B interest, to the D4C interest, same applicable ma. But non-applicability of what ma? MAT. Non-applicability of MAT means what ma? For listed for life insurance company. Sir, here I am giving that insurance companies also MAT is unapplicable because we are taking the profit as per. Life insurance companies not applicable. Marine insurance, fire insurance, for that companies MAT is unapplicable. If any life insurance company is there, MAT is not applicable for that. So next, company opted the 115 BAB. If the companies opted the BAB, then also MAT is not applicable. Next one, ma. MAT credit, ma. Please check it out, the MAT credit point. So like AMT credit only, it is also. Like AMT credit only. In which year you are paying that what, ma? MAT. Then excess over the normal tax rate, whatever it may be there, that is created as on what, ma? MAT credit. How much is there, ma? MAT credit here? 2 lakh. MAT credit can be carried forward and set up for that. How many assessment years, ma? 15 assessment years. How many assessment years, ma? 15 assessment years. Next, it can be set off against the what, ma? It can be set off against the tax payable whenever the what, ma? Normal income tax is more. Can you tell me, in this situation we have a normal income tax is 15 lakh, we have to pay. But we can adjust the how much amount, ma? Can 2 lakh entirely? No. To the extent of difference between that what, ma? To the extent of difference between that what, ma? Normal provisions of income tax as well as MAT in that year. So that's why we are set up the 1 lakh only. The remaining amount, yes ma, you have to pay in. Yes ma, you have to pay. Next, MAT credit, how much amount is in carry forward to next year's ma? 1 lakh only. Next, I think you know, yes ma, in business restructuring and reconstruction, so conversion of company into what ma? LLP. Company means private company or unlisted public company may be converted into LLP. Can you tell me what is the point here we have to observe, ma? So if any MAT credit is available in company, that can be carried forward to LLP, ma? No. So that would not be allowed, ma, because for the company only we have to give that what, ma? MAT credit. For LLP, that is cannot be carried forward, ma. Are you clear, ma? Predecessor, if any having that what, ma? MAT credit, that cannot be given to that what, ma? LLP. Here the successor is unable to calculate that what, ma? MAT liability, ma. Because LLP, for the companies only the MAT calculations will be applicable. For LLP, MAT calculations are not there. So that's why you can't do, ma. Next one point is there, ma. Just listen. Just listen, that one point is there for an MCQ purpose only. Not at all important, but for an MCQ purpose, I want to tell you this point, ma. Just example, please check, ma, all of you. Particulars are there. Tax as per normal provisions. MAT as per 115 JB. So just you are calculated the what, ma? Tax amount. So 1,50,000 is there as per the normal provisions, ma. 1,75,000 is there as per MAT. Whichever is higher, ma. MAT. That means you have to pay that MAT only. Okay. But FTC is there, ma. FTC means nothing but what, ma? Foreign tax credit. In foreign, you are already paid some amount of tax, ma, that you can take that credit against the what, ma? Indian tax payable. That means while you are paying the tax in India, if any amount isn't paid as a tax in foreign, that is only foreign tax credit. Can you tell me foreign tax credit against these only? Yes, ma. These are also 1,60,000. You can take it as an what, ma? Credit. Okay. Can you tell me how much deduction of FTC you can get, ma? Deduction of FTC only how much, ma? 1,50,000, because you have an only tax liability of 1,50,000. So that's why even though you haven't credit of 1,60,000, but you can take the deduction of how much FTC, ma? Foreign tax credit, how much you can reduce from the tax amount, ma? 1,50,000 only. But here you can take that what, ma? Full 1,60,000 also you can take. But finally, what is that MAT credit you have? That is only the point, ma. What is that MAT credit, ma? FTC allowed against the MAT. How much, ma? 1,60,000. FTC allowed against the MAT is how much, ma? 1,60,000. Minus FTC allowed against the normal income tax. How much, ma? 1,50,000. So that means what is that MAT credit you have, ma? 25,000, because MAT in excess of how much amount is there, ma? Normal income tax 25. That MAT credit should be reduced by. MAT credit should be reduced by. What is that, ma? FTC allowed against the MAT. FTC allowed against the MAT minus FTC allowed against the what, ma? Normal income tax. The difference is to be reduced from, yes, ma? MAT credit. So finally, what is that MAT credit you can utilize, ma? 15,000 only you can utilize. So normally, if any FTC was there, that is only the point, ma. Always MAT credit should be reduced by. What is that amount you can reduce, ma? Foreign tax credit allowed against the MAT minus foreign tax credit allowed against the what, ma? Normal tax. So the difference amount only what we have to reduce, ma. So here the difference between these two things, 10,000 is came. The 10,000 always should be reduced from the what, ma? MAT credit. So just this is related to international taxation, ma. So foreign tax credit means if any amount of the tax you are already paid in foreign countries, then no need to pay in India. So that's why while you are paying the tax in India, you can take that amount as an what, mark credit. So but here normal income tax, you can't take the full amount as an credit, but against the MAT you can take it as an what, mark credit. How much amount of the credit you can take, ma? 1,60,000. So foreign tax credit against the MAT you can take 1,60,000, but against the normal tax only you can take what, ma? 1,50,000. Whatever that excess amount of the credit is an allowable against the MAT, that should be reduced from the what, ma? MAT credit. Finally, that MAT credit amount can be reduced because of what, ma? FTC. So that is only you should know. So because of the foreign tax credit, MAT credit will be reduced or increased, ma? Reduced only. So that example you should know, ma? Otherwise not required. Difference between these two only created as a MAT credit. Jaffa. Because MAT is how much amount? 12 lakh. Normal tax is how much amount? Which one you should pay? Which one you should pay? That is how much? 12 lakh. In excess of that MAT, how much amount is there? 12 lakh. 2 lakh is there. Here also same concept you should apply. First of all, you only told that point of what is that amount you have to pay, means you are only told 1,75,000 you should pay, because whichever is higher 1,75,000. But next, what is the extent of difference between these two? That is only the MAT credit we have, but that is we can't totally take as a MAT credit. That should be reduced by FTC. But what is that FTC? FTC allowed against the MAT minus FTC allowed against the normal income tax. What is the difference between these two, ma? 10,000. The 10,000 reduced from the what, ma? MAT credit. Final MAT credit, how much you can take, ma? 15 only. Just remember as an MCQ, not required for the doing the problems, etc., etc. So if you are okay with this, MAT is an entirely over, ma. Okay, if you are okay with this, I want to do that exclusive study material problems. I want to do that what, ma? Exclusive study material problems. Ganesh, you want a time or shall we do the problems? Time means for the referring these, you have it, you want to get a time or shall we do the problems? Okay, problems, okay.
I want to revise.
You have to revise. No, not required. In lunch break, you can revise. We can solve the question number 3, ma, that is related to MAT. So I can't say MAT, that is assessment of company. So what is the requirement of the question we will discuss, Ganesh. First of all, they are given the company, that means what ma, this is an assessment of company related question. Assessment of companies related question. So please take it out. Finally, they are asking about my book profit. No need to calculate PCBP also. No need to calculate MAT also. Only you have to calculate book profit. What is the base for taking the book? What is the base for calculating book profit, my net profit? So they are already given. Net profit is 120 lakh after crediting and debiting of the what my following items. Please do adjustment. Proposed dividend debited already. What we need to do? All of you, please tell me.
Minus. Add.
Array, don't come to the class. What we need to do, ma? Add. I am expecting the answer from all of you. Yes, ma. Next. Profit from the unit established in SEZ run. That is only trap for you. So maybe students are thinking this is in section 10 AASR. Section 10 related incomes are credited to P&L account. We have to less. Many students are thinking that so section 10 AA is there. That is in section 10 income. So income means what? My profit means credited. So if any section 10 income credited means we have to do what? My less. But they are not giving any point related to section 10 AA. They are giving section 10 only. 10 AA is nothing but what? My deduction, not exemption. So this is a deduction, ma. I think if you refer in earlier while doing that math AMD problems also, we are treated this as a deduction, not an exemption. Okay, do nothing for this. Do nothing. Yes, ma. Do nothing. Are you clear, ma? So many students are doing that mistake, ma. The same mistake only. What is that, ma? Section 10. This is not create. This cannot be called as a what, ma? Section 10. This is a deduction, not an exemption. Okay. Provision for income tax debited means what we need to do, ma? Add. Provision for deferred tax also add. Provision for diminishing the value of asset also add. Next one, ma, depreciation debited to profit and loss account 10 lakh. So what is the amount of depreciation debited, ma? 10 lakh isn't debited. That's why we have to add. Yes, ma. Revaluation asset related depreciation is 1 lakh is there. Yes, ma. Revaluation related is there. While doing that less, excluding the revaluation, we have to less. That means what, ma? 9 lakh we have to do what, ma? Less. Are you understood, ma? Excluding the revaluation. But revaluation asset related depreciation you can reduce only at the time of retirement of that asset. While you are reducing the depreciation, what is that amount of depreciation, ma? Excluding the revaluation asset. Excluding the revaluation, how much? 9 lakh only. But sir, 1 lakh can be reduced. Yes, reduced only at the time of what, ma? Disposal. In the problem, they are mentioned anything about the disposal? No. So please do add and less. No. One more thing is there. So they are given that what, ma? As per books. As per books. As per books. As per books. They are given that what, ma? Last year's depreciation and last year's losses also. Depreciation 12. Sorry. Business loss 12 lakh. Depreciation 10 lakh. Whichever is lower or both the things, ma? Whichever is lower. Can you tell me whichever is lower? 10 lakh. 10 lakh we have to do what, ma? Less or add, ma? Less. So you can do that adjustment, ma. Please take that calci. 120 plus 30. 120 plus what, ma? 30. 120 plus 18. Sorry. 120 plus 30 plus 18 plus 10 plus 3 plus 10 minus 9 minus 10. You will get the 172. For 8 marks, this question is given, ma. But one thing, so always you have to write that what my reason as per section 115 JB explanation 1, this item should be added to the net profit while computing the book profit. This item should be reduced for computing the book profit. Always you have to write the what my explanation. So shall we do that question number 4 also? Ma, you understood how to solve the question number 4? Sorry, question number 3. If you understood the concept and if you are listening the class, then you can easily do problem. Then you can do easily problem. Next. So this is the same question ma. Book profit is nothing but what ma, they are directly given the book profit, and the normal income tax also they are given. Normal income tax related total income also given. So please do ma. So what is the rate we have to apply ma? Company means nothing but what ma, 15% please apply. Here what we have to apply ma, that is in 30% you have to apply. So please ma, tax on above, that is nothing but what ma, 30%, and here tax on what ma, 15%, whichever is higher ma. 3,60,000 is higher or 9 lakh is higher? 9 lakh. For the 9 lakh, please add the health and education cess. Finally, you will get what ma? 9,36,000. That means what ma? Normal provisions income tax, normal provisions income tax, normal provisions income tax, or MAT, whichever is what ma higher you have to consider. Whichever is higher ma, 9 lakh. For that you have to add the education cess. So they are given this question for 4 marks. Can you believe? Can you believe ma? No, you can't believe. If I am showing the question paper, then only you can believe, sir. No issue, I will show you. Old syllabus question paper last attempt, ma. 3 marks question, ma. December 23 last attempt. Ma. So please check it out. So company they are given. This is a manufacturing company covered by 115 BA. So please check it out the first chapter 115 BA. What is the tax rate for 115 BA? So 115 BA, what is the tax rate, ma? 22%, I think. 115 BA, 22% tax rate, ma. 22% tax rate, and depends upon the total income. We have to apply what ma, surcharge. But here total income is 60 lakh. There is no surcharge ma. But we have to add that health and education says 4%. Yes, many students are thinking ma. So please remember, we haven't 3 optional tax rates ma of a company: 115 BA, 115 BAA, next one ma 115 BAB. What is that ma? 115 BAB. Okay. If these two are opted, MAT is not applicable ma. So that already we are written. Yes ma. If these two optional tax rates are opted, MAT concept is not applicable. So company who exercises that what ma 115 BAA, BAB, MAT is not applicable. Clear? But what we have to do ma, here they are opted the 115 BA. That means what ma, MAT applicable only. So please calculate ma, 60 lakh related 22%. Please calculate and tell me ma. All of you, 60 lakh into 22% ma, please calculate, and as well as 12 lakh into book profit into 15%. Please calculate ma.
13 lakh 20,000.
13 lakh 20,000. Here ma.
1 lakh 80,000.
1 lakh
80,000.
whichever is higher ma.
13 lakh 20,000.
So surcharge is unapplicable, no, not applicable. So that's why please add the 4% health and education cess.
52,800.
52,800. So please add the total ma.
72,800.
Okay. So that is a tax payable is finally what ma? Tax payable is finally 13,72,500. Sorry, 13,72,800. But is there any credit is there ma? Can you tell me credit can be created when ma? If that if that MAT is high, if you are paying that MAT higher than the what ma normal, then tax credit will be created. But here no credit ma. Are you understood ma? No, I will not tell you. When you can create the MAT credit ma, if your MAT amount is more than the normal income tax, while you are paying that what ma MAT amount, but you are not paying here MAT amount. What is that amount we are paying? Normal income tax amount you are paying. That's why there is no credit. They are asking MAT credit, if any created, please mention the MAT credit amount. MAT credit amount section number ma 115 JAA. So that is only the given 115 JAA. 115? I know. In this chapter, I will give you. Company assessment means nothing but in this I will give you. Here, company assessment rates I will give you. Okay, if you want to know, yes, I think I am given that all the things there. After the buyback, yes, we go. 115 BA. So I think 25 we are wrongly taken. That is in 25. Sorry. Even though the 25 also okay not 22 So that is in 25. 22 for the BAA. 22 for the BAA and 15 for that what BAB. So this is in 25 So sorry for this We have to apply 25. That entire answer is wrong Sorry for this. 25. Please let me know what is that amount Huh? 15 lakh. For the 15 lakh, please add that Sorry sorry. 15 lakh. How much? 60 exactly. Clear Yes And the similar question we have, and I think you have to do this question on your own So I don't want to do this question. This is a completely homework So that is nothing but question number 6. This is an homework. So there is no new adjustment is there in this question. You have to do this question So please do that question. Homework only. Question number 6 already done So that is on homework. Nothing but there is no new So they are asking that what requirement of the question. Please check tax liability under section 115 JB. That means they are asking only what math. So please compute book profit. After book profit, you have to apply that what rate 15%. After that, you have to add that health and education cess. Then only you can get what liability. Next. Yes, ma. In next session we can do, ma. Sir, you can try on your own that math problems also. Any problem also you can do, ma. Any problem also you can do. I think are you understood the. So I am taking that what ma an assumption. Are you understood that all the math adjustment and you are able to do that what ma all the math problems. So I will tell you that optional tax rate ma no need to think about it. But please remember one point. If you are chooses the 115 BAA, BAB, math concept is not applicable. If you are chooses the BA, MAT is applicable. What is the BA rate ma 25%, BAA rate ma 22, BAB rate ma 15%. Okay. So we will meet in the next session for doing the remaining problems on the MAT, and mostly in next 2 sessions we can complete the assessment of various entities also, and we are moving towards the transfer pricing chapter. We are going to that international taxation directly transfer pricing chapter we can do Okay. Thank you. So, hi, good morning to all of you. Yes, ma'am. Yes, we have to discuss about the last point in the trust chapter, ma. Important for this MCQ purpose. In the last 3 attempts also, we having this MCQ in our examination. So, first, so the trust maybe they can receive the donation in 3 ways, ma. The first donation type, you know already, corpus donations. Can you tell me what do you mean by the corpus donations, ma? So, specific purpose related donations. What is that, ma? Specific purpose related donations. Okay. Next donation is called as what, ma? General donations. And third type of donations also you can receive, that is a name as an what, ma? Anonymous donations. What is that, ma? Anonymous donations. What do you mean by the anonymous donations, ma? Simply, if you are receiving any donation, you are not maintaining the record of donor. So that means the recipient of the donation is not maintaining that what, ma? Name and the details about the what, ma? Donor. So that means we can say there is no address for these donations. So means where the donations receiving such person is not maintaining the records of the Vatma donor. The type of the donations is called as Vatma anonymous donations. Ganesh, I think you know what is the tax treatment for the corpus donations is Vatma exempt. General donations, you know, general donation coming with the all other incomes, 15% standard exempt, and if you are applying for that Vatma charitable or religious purpose, that is also exempt. Next, anonymous donation tax treatment we have to give separately because this is a danger. Yes, ma'am. Who are giving this donation also, we are not maintaining the record. So that's why there is an what ma misapplication of funds can be, yes, ma'am, routed through that what ma anonymous donations. That's why we want to give the tax treatment separately for the anonymous donations. So shall we start the tax treatment of anonymous donations, ma? We have a separate tax, separate section, ma. 115 BBC. What is it? 115 BBC. Taxability of what ma anonymous donations. So what is that, ma? Taxability of what, ma? Anonymous donation under section 115 BBC. Okay. Sir, we can get an MCQ from this, ma. Please remember. Please remember. Okay. So what is the actual amount of anonymous donations? Please maintain it as in what, ma? Separate. Suppose we are receiving that how much amount of anonymous donations, ma? 5 lakh. Next, please reduce the some amount from it, ma. Please reduce the what, ma? Some amount from it. What is that amount you have to reduce it, ma? What is that amount we have to reduce it, ma? 5% of total donations. 5% of what, ma? Total donations. Yes. So can you tell me 5% of total donations means what is the total donations you have received, ma, up to now? Yes. 5 lakh. Yes, ma. Anonymous donations. 2 lakh corpus donation and 1 lakh general donations. What is the total donations you have received up to now? 8 lakh. What is that, ma? 8 lakh. Yes, ma'am. So please remember up to now, ma, what is the total amount of donations you have received up to now, ma? 8 lakh. So out of the total donation, please calculate 5%. Out of the total donation, please calculate the what, ma? 5%. Can you tell me what is that 5% of that, ma? Please calculate 5% of that, ma. 8 lakh into 5%, that is what, ma? 40,000. 8 lakh into 5%, that is an what, ma? 40,000. Under section 115 BBC, there is an ESMA amount, statutory amount, that is an what, ma? 1 lakh. Statutory amount is nothing but what, ma? 1 lakh. Okay. Can you tell me whichever is higher of these two things, ma? Ganesh? 40,000, 1 lakh. Whichever is higher? 1 lakh. That 1 lakh you have to reduce it from the anonymous donations, Ganesh. 1 lakh you have to reduce it from the what, ma? Anonymous donation. Can you tell me? 4 lakh is there. This 4 lakh is taxable at 30% because anonymous donations are what ma definitely difficult to identify, and tracking is also easy to identify, difficult to identify, That's why yes ma, anonymous donations minus whichever is higher of the following things, that is taxable at what ma 30%. So this is only the what ma trap for the students. Yes, please remember, whatever that anonymous donations are there, out of that anonymous donation, this 4 lakh is taxable at what ma 30%. Then what about this 1 lakh? 1 lakh is an exempt from the tax? No. This 1 lakh is taxable at normal tax rate. That is only the twist. Out of that 5 lakh if you are receiving, yes ma, out of that 5 lakh if you are receiving, can you tell me what is that ma? 1 lakh. 1 lakh is an, yes ma, 4 lakh is nothing but what ma, first of all taxable under section 115 BBC at the rate of what ma 30%. Taxable at the rate of what ma 30% under section what ma 115 BBC. Next one ma, can you tell me what is that 1 lakh ma? This is an amount is an added to. This is an amount added to. Can you tell me what ma other income and taxable at what ma normal tax rate? So can you tell me what ma? This is an amount is an what ma added to what ma other income and taxable at what ma normal tax rate. Are you clear up to now? Yes, please remember. So many of you are thinking, yes, out of that 5 lakh, this is 1 lakh is an exam. No, no, no. So out of that, please reduce 1 lakh. The remaining amount taxable at what ma 30%. That 1 lakh is taxable at what ma normal tax rate. So can you tell me, all of you, any one of you, what is the tax rates applicable for trust? What is the tax rates applicable for trust? So what is the tax rates applicable for trust? Same as an individual. Yes, correct only, because trust is categorized as an artificial judicial person. 2,50,000 exempt, 2,50,000 to 5 lakh, 5 lakh to 10 lakh, then 10 lakh above. So same as an individual. Okay. Next, this is only the total income format for the trust. Ganesh, please first we have to add. So we have to take gross receipts of the trust, but other than we have to take gross receipts means all donations, business receipts, capital gains, etc. All the things. Other than what corpus donations. Why we are excluding the corpus donations here? That is an exempt from the tax. That's why no need to include in the total income. Next, anonymous donation taxable under section 115 BBC means nothing but what Anonymous donation taxable under section 115 BBC means nothing but what These are also taxable. These are also taxable under section 115 BEC means taxable at 30%. That's why we have to consider separately. We have to consider what must separately. Corpus donation reason exempt, and we have to consider separately anonymous donation. That's why please remove it. And next we have in capital gain income. Please add that total income of the trust. This is an yes, ma. For that we have in what ma standard exemption. Yes, ma. For that we have in what ma standard exemption. So corpus donation is directly exempt, and anonymous donations also. Some amounts are taxable at what ma normal tax rate. Please consider that only within the gross receipts. If anything is taxable at what ma special tax rate, so please ignore it. And totally we have in what ma gross. Yes, ma total income. Out of that 15% standard exemption. Ganesh, you know already. If you are applying for the charitable purpose is also exempt. Deemed to be applied or what ma deemed to be treated as an application in case of outstanding donation as well as bumper donations, and accumulated for specific purpose also, that is treated as what ma exemption. And I think you know, if net consideration fully invested or partly invested also, this capital gain amount is what ma exempt. I think you know, if fully invested, full capital gain is exempt. Partly invested, that is an ESMA outgoing asset and incoming asset. We have to check that. ESMA excess proceeds over that what ma outgoing asset, that is called as what ma exemption. Next, if you are removing the exemption, this is an only what ma taxable at what ma normal tax rate. This is only taxable at what ma normal tax rate. This is only the taxable at what ma normal tax rate. Are you clear, ma, up to now? Clear, ma? Yes. Next, but these are that what ma incomes are taxable at what ma normal tax rate. These are that incomes are taxable at what ma normal tax rate. But Anonymous donations, I think if you are observing the tax rate what ma 30%. So this is a special tax rate taxable income ma. So nothing but, okay, in our example 5 lakh is there. Out of that 5 lakh, can you tell me 4 lakh is taxable at what ma special tax rate? So I am not talking about the tax liability here, incomes only, total income I am finding out. Here up to now we haven't what ma. So taxable incomes at an what ma normal tax rate we have. So next special tax rate taxable income, how much is there ma 4 lakh. And I think you know 115 BBI. Last year you are already claimed that exemption. If I want to reverse the exemption, so then I can treat that as an income under section 115 BBI. There is a tax rate what ma 30%. So this is also what ma special tax rate taxable income. So if I am adding the special tax rate taxable incomes to the normal income, then this is only what ma total income of the trust. This is only what ma total income of the trust. Are you understood the total income of the trust ma? Sir, this is a format, please kept in your mind, you can solve any problem also. Sir, basic problems they will give you, ma. Don't think about the what ma, all, etc., etc. So just I want to show you one basic problem with regarding the trust, ma. Basic problem I want to show you with regarding the trust, shall I? Basic problems only they will give you within the trust chapter. Question number 13. Question number 13. Shall we, ma? So an institution operating the what ma? Promotion of an education. So claiming that exemption under section 11. So trust also, institution also, same provisions we have, ma. So no need to get the tension about it. Yes, ma. Can you tell me the fees collected from the students? Can you tell me fees collected from the student? That is in what ma? Income. Yes, ma. Construction of new computer science laboratory. Yes, ma'am. For the student purpose only, we are constructed one thing. And land acquired to be used as an what cricket field for the student. That means we are constructed that what one stadium by way of purchasing the land, etc. And amount earmarked asset aside for the construction of what art block within the next 4 years. So nothing but if you are observing that what is the income of the trust ma 14. From that 14, what is the standard exemption ma 15%. From that, if you are applied also exempt. Yes, ma. Asset aside and in future if you are applied also exempt. So that is only they are asking ma total income of the institutions or institution and trust having that what ma same provision. If you are registered under section 10 subsection 23, that is an institution. If you are registered under section 12A, 12AA, 12AB, that is an what ma trust. So the first fees received 14 ma. Out of that standard exemption 15% if you are removed, that is an 11.9. And can you tell me already applied amount ma 0.5 lakh. Sorry, 0.5 crore and 2 crores it is an already applied ma. After applied, if that is what ma 2.5 balance is there. 2.5 balance is there. Sorry. So after removing that balance is what ma 9.4 is there. Can you tell me? I think 11 subsection 2. If you are asset aside for the specific purpose, I think you know. Yes, ma period also maximum should not exceed what ma 5 years. Here 4 years only. So that should be treated as what ma the exemption. Finally, what ma 5.4. This is only. Are you understood, ma? So this is an 11 subsection 1 related. This is also 11 subsection 1 related. This is an 11 subsection 2 related, ma. So for this they will give you 8 marks, sir, but you have to write that note points also for this each and everything, ma. You have to write it down what ma note point also for each and everything. Clear, ma, all of you? Next, some basic questions we will discuss, ma. Yes. A public charitable trust registered under 12AB. So they're having these following incomes, ma. Income from the property, income from the business, that is an incidental or main ma, incidental to the main objectives, voluntary contribution. So that means total income you can identify, that is in 10 lakh, 4 lakh, what ma 7 lakh. Yes, my total income is nothing but what ma 21 lakh. Sir, out of this voluntary contribution, if any corpus is there, we should exclude. So, but voluntary contribution just. Trust applied, can you tell me how much amount ma 11.6 lakhs towards the charitable purpose during the year? Which includes the what ma repayment of loan taken for the construction of orphanage. So anyhow, no issue. Yes, ma'am. Nothing but what, ma'am? We are taking a loan and we are constructed at what, ma'am? One orphanage home of, by using that amount of what, ma'am? 3.6 lakh. We are repaying that loan out of that what, ma'am? This. Totally 11.6 lakhs is nothing but what, ma'am? So the first of all, standard exemption is there. Out of the standard exemption, out of the standard exemption. So please check it out. Sir, here, what is our objective of the trust, ma'am? Wait. So, the entire expenditure incurred on construction of orphanage allowed as application of that income in that last year itself. Sir, these 3.6 lakhs were already taken as an exemption in the which year, ma? Previous year 2021. Can I give you once again this is an applied mark? No. So that's why how much amount we can take it as an application mark? 11.6 minus 3.6. So can you tell me how much mark? I think 8. How much ma? 8. So if I am treated as an applied, this is only income. Sir, note point if you are observing why we are not taking the repayment of loan. Yes, definitely we can take it as an applied ma. If it was not taken as an applied in that what ma? Earlier years. But earlier years are already taken as an applied. So that's why in this year we can't take. Sir, this type of questions only they are giving in examination for 8 marks ma. Sir, why, if I am telling that all the concepts in that manner, that means a detailed manner, so applied and yes, ma, these are the incomes, then only you are able to solve these are all the problems. Yes, ma. 32 question, ma. Definitely this is an MCQ for next attempt, ma. Remember. Yes, capital gain shall be deemed to have been applied for charitable or religious purpose arising out of the sale of capital asset. Yes, ma'am. Please check it out. Cost of transferred asset. This is an what, ma'am? Cost of acquisition. And sale consideration is nothing but what, ma'am? 3,60,000. Can you tell me what is a capital gain, ma'am? Ganesh, can you tell me what is a capital gain?
1,20,000.
Ma'am? 1 lakh?
20,000.
Okay. So you have a net consideration is nothing but what ma 3,60,000. But here you are utilized to the trust. That means what ma that capital asset utilized only to the extent of what ma 60%, not fully. So that means that capital asset is utilized for the trust purpose is nothing but 60%, 40% for what ma personal purpose or any other purpose we don't want to know here. Okay, cost of new asset purchase, we are utilizing the fully net consideration, proportionate net consideration, proportionate. So nothing but what ma net consideration we have a 3,60,000, but we are not invested that entire net consideration, proportionate only we are used. That means here how we can calculate the exemption ma, outgoing asset cost is 2,40,000, incoming asset cost is nothing but what ma, yes ma, nothing but what ma 3 lakh. Can you tell me excess over the outgoing asset how we are invested ma? 60,000 only, that is an exempt. But in this situation we are utilized only for the trust purpose how much ma? 60%. That's why what is that exempt ma? 36,000 is exempt. This 36,000 should be treated as what ma? Deemed to be treated as an applied for that what ma? Charitable or religious purpose. Yes, ma. 36,000 is to be treated as what ma? Deemed to be applied for the what ma? Objectives of the what ma? Trust. Clear in the work? Are you clear ma? To know this is an already we are taken what ma? Example also. Sir, here we are not utilizing the full net consideration ma. We are utilizing only what ma? Proportionate part of the net consideration. Clear ma all of you? Next, I want to start the one concept that is in what ma exit tax. So I want to start the one concept that is in what ma exit tax. 115 JD. Tax on accredited income. Tax on what ma accredited income. So tax on what ma accredited income. Tax on what ma accredited income. Yes, please check it out. So first of all, the trust isn't registered and they are accumulated the funds from the all the persons and all of the sudden the trust is closed now and the trust wants to exit from that type of an entity. So that means as of now that isn't registered under section 12AA, 12AB, 12EAA, ESMA and or 10 subsection 23C form. They are enjoyed that what my trust exemptions and benefits also. All of the sudden they want to close that registration and they want to convert it into what my non-trust form. Yes, they can do, no issue. But you have to pay the what ma exit tax at the time of exit from the trust form. You have to pay that what ma exit tax. So otherwise, definitely we will create the trust. We will accumulate the funds and we will get the exemptions and we will close the entity. So definitely, if you want to close the trust registrations as well as the trust an entity, yes, definitely you have to pay the what ma taxes in the form of what ma 115 JD. That is in what ma exit tax. Sir, in all the cases they are required to pay? No. In the following cases, they are required to pay. In the following cases, they are required to pay. The first one ma conversion of trust into non-eligible form. Conversion of trust into what ma non-eligible form. So that means what ma I will tell you. So we are already registered as a trust, but that isn't converted into non-eligible form because of the two reasons. First, the registration cancelled ma. I think you know in which reasons. So we are cancelling the registration also. You are performing that activities that is not in your objectives and you are non-compliant with the law and you are not maintained that all the amounts in a safe investment modes. Because of the reason the registration may be what mark cancelled. And second reason, you want to change the objectives modification. So as of now we are in the orphanage home. All of the sudden you want to convert that orphanage into what mark educational. Yes, you can change, no issue. Yes, but not applied for the fresh registration. Yes ma, if you are changing from the what ma orphanage home to educational objectives, you have to apply for the what ma fresh registration. You are not applied for the fresh registration, automatically that is called as a what ma non-eligible form. Second, you are applied for the registration only, but ESMA application is rejected. In these cases, can you continue the form of an organization as a trust? No. So can you tell me because of what reasons? For first reason, in the following cases means the trust is converted as a what non-eligible form. So non-eligible means nothing but there is no registration for you with regarding the trust. What is the reasons? Because the registration is cancelled by the Commissioner of Income Tax. Second reason, you are changing the objectives but you are not applied for the fresh registration in case A, and case B you are applied but rejected. You are applied but that is what rejected. Second one, merger into the entity. What is that ma? Merger into an entity not having the similar objectives. So that means nothing but what ma right now we are in a charitable entity, that is a charitable trust or religious trust. But as of now you haven't registration but you are merging with the what ma any other entity that is not having that what ma similar objectives. So right now I am doing that educational. If you want to merge with that what ma, you have to merge with the educational institutions under 12AA, 12AB only. But you are merging with the what ma any other not having the similar and not registered also. So this is not at all correct. If you want to match as having the similar objectives, having the registration only, you have to match. Third one, if any trust is closed, yes ma, within the 12 months from the end of the month of dissolution, you have to distribute that all the assets to the what any trust having that what registration under section 12AA, 12AB, 10 subsection 23C. If you are not distributing that within the 12 months also, then we have to pay what exit tax. In these three cases only, we have to pay that what exit tax. Can you tell me what is the first reason, ma? Trust is converted into non-eligible form. Second, merger of that entity. That means merger of the trust with the what any other entity not having the registration and not having that what similar objectives also. And definitely after the dissolution, within the 12 months from the end of the month of the dissolution, we have to distribute the what assets. We have to distribute that what assets. So if you are not distributing, can you tell me what is that ma? If you are not distributing, can you tell me 12AA, 12AB, 10 subsection 23C? Yes, but definitely you have to distribute within the 12 months to what any other trust. But if you are non-distributing also, you have to pay that what exit tax. Can you tell me accredited income? I will tell you how to calculate that accredited income also. On that we have to pay the tax at using the what MMR, maximum marginal tax rate. So accredited income into what tax we have to pay at the rate of what MMR. Can you tell me MMR 30% tax? 12% surcharge and 4% what health and education says. Totally we will get what 34.944 34.944 totally we have to pay. Yes ma, please remember this tax rate also, that is 34.944. So how to calculate the accredited income, that is only important ma. So simple ma, aggregate fair market value of the total asset minus total liabilities of the trust. Aggregate fair market value of the total assets minus liabilities of the trust. You can call this as a what accredited income. You have to calculate the accredited income. On the accredited income, what is the rate we have to pay? 34.944. We have to pay it as a what tax. So can you tell me at the time of valuation? I think you know fair market value of all assets we have to include. So in this what fair market value of the what all assets you have to what include. The fair market value of that all asset you need to include means nothing but what here we have to exclude that some asset on that ESMA valuation. So aggregate fair market value of all assets in the balance sheet date on valuation date. I will tell you valuation date in the last month. What do you mean by the valuation date? I will tell you in the last. So valuation date on that, what are the assets are there in the balance sheet, that fair market value you have to consider. Can you tell me on which date fair market value we have to consider? Valuation date fair market value we have to consider for all the assets in the balance sheet. So nothing but you have to calculate that assets which are involved in the balance sheet on which date valuation date, that FMV. But following that asset should not include. Following that asset should not include. So MCQ purpose, assets acquired out of agricultural income not included in that what valuation, and asset acquired from the date of creation of trust to the date of registration will become effective. Example you are created the trust on the what 1/1/2012 but registration you are taken on 31st/8/2012. That means nothing but what registration become effective after what 31st/8/2012. But in between this period, if you are purchasing any asset, that asset also not included in that what valuation. Because on that asset you are not claiming any exemption. If you are purchasing any asset before the registration, means nothing but what on that we are not claiming any exemption. That's why that is not included in that what valuation of the what any asset for the purpose of calculating that what accredited income. Next, any asset distributed within the 12 months. So I think you know if any dissolution is happened, if any dissolution is happened within the 12 months from the end of month in which the dissolution, you have to distribute with the what any other trust registered under section 12AA, 12AB, 12A or 10 subsection 23. If you are distributed, okay. If you are not distributed, that assets only we have to find out the FMV. Asset distributed on the dissolution from the month end of the dissolution within how many months? 12 months we are transferred. So for that asset not included in the what assets related valuation. And if you are paid that any TDS, TCS advance tax, because that is an also assets only, so that is not included. Deferred revenue expenses, if any are asset side balance sheet are there, so an asset side balance sheet there. So on that, if you are finding the TDS, TCS advance tax, deferred revenue expenditure, these are the 5 assets not included in the assets for the purpose of computing that what accredited income. for the purpose of calculating that what ma accredited income. So please remember this point. Once again I am repeating, assets acquired out of what ma agricultural income, assets purchased from the date of creation of the trust till that what ma date of registration is an effective. Next one ma asset distributed on the dissolution within 12 months from the what ma end of the month in which the dissolution is made to that any other registered trust. Next TDS, TCS, advance tax. Next one ma deferred revenue expenditure. So then remaining assets are there. On that remaining assets, we have to calculate what ma fair market value. What is the fair market value you have to take? On which date ma valuation date related fair market value only we have to consider. What is that ma? Valuation date fair market value only we have to consider. Next. So please check it out. Ganesh, you have an assets of an listed shares or securities in your balance sheet. So that means in your balance sheet means trust balance sheet having that what ma quoted shares and securities. That means what ma listed. How you can obtain that fair market value on valuation date? I think you know valuation date related. If any trading is there, so we have to calculate the lowest and the highest average we have to take ma. Lowest and highest average we have to take. If there is no trading, if trading happens, this is only. If there is no trading, if there is no trading, then what ma? Preceding date to the valuation date. So don't think about the valuation date ma. A valuation date related details I will tell you. So in class, but please check it out. At what date FMV we have to take ma? Valuation date. For the quoted securities, what is the fair market value? RSC trading value only. On that valuation date, if any trading is there, lowest and highest average you need to take. So if there is no trading on no trading happen on that valuation date, then immediately preceding date related average you have to take. So next, unquoted. So this is the biggest twist. Okay. So example, this is a charitable trust balance sheet, Ganesh. Charitable trust balance sheet. In investment side, you have in what ma? A limited. In you are invested in where ma? A limited securities. So in your investment side, so I will write it as big. Okay. So in balance sheet of what ma? Trust. You have in what ma? In investment side, you have in what ma? A limited. You are invested equity shares. Sir, how you know about this value? So if that is nothing but what ma recognized related, we can take the values from the recognized stock exchanges, but this is an unlisted. How you can identify the value? For this value of this A limited equity shares, A limited equity share, that means unlisted equity shares value, we have to get the details about the what ma A limited details you should get. If you haven't what ma A limited details, then only you can get the what ma valuation. Sir, in trust we have an A limited equity shares in our asset side. On that valuation date fair market value you have to find out. For the purpose of valuing the unquoted shares and securities. So securities keep aside for the sometime unlisted equity shares. How you can value ma? For this, so for this we have to obtain the details about the what ma company, that is an A limited, not trust values ma. These are the what ma book value of all asset. So if you are observing the A limited balance sheet, please take the book value of all asset other than B. Bima, immobile properties, securities, shares, bullion, jewelry, asma. For that you have to take what ma fair market value. So in the balance sheet side they have an assets ma. In that shares, securities and the immobile properties, bullion, jewelry is there. For that you have to take what ma FMV. So remaining all asset we have to take what ma book value. You have to take what ma book value. And in liabilities side you have to take what ma book value only, but not including these following liabilities. So liabilities also here we have to consider what ma A limited liabilities only. So nothing but what ma A plus B, that means what ma assets value are identified minus liabilities. So please make an observation, ma. Inside liabilities we are not considering. We are considering only what, ma, outside liabilities. That means debentures, creditors, bank loans, trade payables, etc. That only we are considering. That means this is only called as what, ma, net assets. Total assets minus what, ma, outside liabilities. We are not including the what, ma, inside liabilities. That means outside net assets divided by PE. Can you tell me PE means nothing but what, ma, paid up equity share capital of the company. So paid up equity share capital of the company. Company means nothing but what, ma, A limited only. So here we are applying this formula for that what, ma, A limited, in which we are invested. That is an unlisted equity shares related valuation. So whatever that amount into what, ma, PV. What do you mean by the PV, ma? Paid up equity share capital of an trust. So what is that amount we haven't? So that means what, ma? Net asset divided by what, ma? Equity share capital. Suppose net asset 10 lakh, ma. You have an equity share capital 1 lakh into, yes, ma, we have an what, ma? 100 shares. That is only the total value you have. So many students are confusing about this, ma. So we have to make an application. We have to make an application. We have to make an application of this formula. For that what, ma, company details only. Unlisted shares securities value, unlisted equity shares value, it is difficult to identify. That's why definitely we have to take that what, ma, company in which you are invested. The trust is invested in A limited equity shares. That's why if you want to calculate that value on that valuation date, you have to consider the what, ma, that balance sheet. In that assets you have to consider the what, ma, some assets FMV, other assets what, ma, book value, minus outside liabilities if you are reduced, but divided by what, ma, paid up equity share capital of the company, and multiplied with the what, ma, how many equity shares you have. That means you have means nothing but here what, ma, trust. Then finally you will get what, ma, unquoted equity shares value. What is that, ma? Unquoted equity shares value. Are you understood the unquoted equity shares related, ma? So if you want to identify, sir, in examination they will give you. So they don't want to give you that what, ma, trust data as well as company data. If they are given, the question paper will be in 100 pages data. So definitely they will give you that all the values you have to apply, maybe formula. They will give you the what, ma, total value of the assets of the company, total value of the liabilities of the company, excluding the what, ma, inside liabilities. They will give you the total amount. You have to apply the formula. Yes, ma'am. Next. Then we are done only up to now what, ma, equity shares. Then what about the other than equity shares, ma'am? So yes, ma'am, open market value as per the valuation report. That means if you are invested in the equity shares of any unlisted company, then you have to apply formula. Sir, if you are invested in debentures of the company, may be possible. So for the debentures, there is no need to calculate this much, ma. So please take the open market value as per the valuation report. Next, if you have an immovable property, you have to take that higher of what, ma, SDV and open market value. Any other asset, open market value. So please consider, this is only, definitely we have two questions. I am taken from the what, ma, previous examination as well as other institute books, ma. These two are very, very important for this attempt. Next, valuation of liabilities, ma. Can you tell me? So here up to now we are valuing that only assets related data. So liabilities, please exclude that all the liabilities, ma. So while calculating the liabilities means nothing but what, ma, not including this. That means what, ma, inside liabilities of the trust we are not calculated. Only we are calculated the outside. Accumulated fund, reserves and surplus, provisions, all the things are excluded, ma. That means only outside liabilities if you have, that only we have to consider the value. Can you tell me on which date, ma? Valuation date. So we have to consider that what value, ma? Book value, not fair market value. So next, valuation date means what? So because of how many reasons we have to pay that exit tax, ma? 3 reasons. What are the 3 reasons, ma? Conversion of trust into non-eligible form, merger of that entity, with the what, ma, not similar objectives, and not registered with the what, ma, 12AA, 12AB, and non-distribution of what, ma, assets. Yes. Because of the 3 reasons only, yes, please make an observation, ma, here. Conversion of trust into non-eligible form. So what is the valuation date in this case? Registration is cancelled now. Then valuation date is what, my date of order of cancel of registration. So if any modifies or objectives, my date of modification of objectives only that what, my valuation date. Next, if any entity are merged with the what, my not having the similar objectives, that is nothing but what, my date of merger. What is that, my date of merger? Are you clear, ma? Date of merger. Next one, ma. Non-distribution of assets within how many months, ma? 12 months. That is only what, ma? Date of dissolution. So nothing but as case decides about my valuation date. So if this is a case, then valuation date is a date of order of cancellation of registration, date of modification. This is what my date of merger. This is what my date of dissolution. On that date, we have to consider that what my valuation of the assets as well as what my valuation of the liabilities minus we have to take. Then you will get the accredited income. On that we have to apply that what my 34.944. Sir, assets related valuation is in easy. Assets related valuation is a difficult one. If they are given that what ma unlisted equity shares as well as what ma unlisted securities, and liabilities valuation is very easy. Ma. Yes, shall we do some problems, ma? Shall we do some problems? Sir, if you are observing that problems are very easy if you are understood the concept. We have two problems, ma. I will discuss these two problems. Oh, no. One problem I will give you it as a homework, ma. Yes, sir. 34 you have to do on your own, ma. Yes, ma. Same, but yes, ma. You have to apply same means as it is not, ma. So please do 34 as an homework. And this I will tell you in the class itself, ma. 33. Ganesh, okay? Or you can choose. Okay, you can choose. Sir, please tell me another problem. Yes, I will tell you that another problem, ma. Yes, you have to choose that any one also. But I want to tell you that 33. Help Aces and Charitable Trust, ma. Set up on 1/10/2020 and nothing but what ma 1/10/2020 that is a charitable trust is set up ma. Later on in April 2012 it's changed its objectives for that what ma medical relief. So up to now that is in what ma providing the relief to the poor. After one date that is in what ma changed its objectives as in what ma medical relief. Okay. It's applied for the new basis of new object and on that 1/9/2020 1/9/2012 it was granted what ma registration, but it is with effect from the what ma 1/2/2023. Sir, initially we have what ma one registration for the charitable trust relief of what ma poor. On one date we want to change our objectives. Yes, can you tell me on which date we are changing that objective ma? 2012 April. So immediately that means what ma September we are applying for the what ma registration of a new objectives. Yes, they are given the registration, but that is effectively operated from the which date ma? Effectively operated from which date ma? 1/2/2023. That is an effective registration date is 1/2/2013. So from this date only, yes ma, medical relief related activities related exemptions can be taken by the trust. 1/4/2023. That is a help age is matched with the poor aid, not eligible for the registration under section 12 AB approval. That means what ma? Here what happened ma? Merger is happened. So merger with the eligible form or non-eligible form ma? Non-eligible form. So can you tell me what is the date of merger ma? 1/4/2023. This is only what ma? Valuation date. If any merger is happened, what is the valuation date ma? Date of merger. Are you clear, Ganesh? Yes. All the assets and liabilities, yes, ma, they are given that what ma, given to that what ma poor aid. The trust appointed the registered valuation and calculate the tax liability. Can you tell me here we have to calculate the tax liability means exit tax or normal tax ma? Exit tax. So here we have to calculate the total assets value. So total fair market value of the assets minus what ma liabilities. So Ganesh, please let me know. Yes, ma. We haven't two assets are there. Land, ma. Yes, ma. Land, ma. So please consider what is that land. We haven't two lands, ma. Noida and Gurgaon. Sir, immobile property. What is that valuation you have to take, ma? Please, Ganesh. What is that, ma? Open market value or SDB, whichever is what, ma? Higher or lower? Higher. So okay. But valuation date is nothing but what, ma? 1/4/2023. 1/4/2023. But here you have to consider, Ganesh, valuation related some assets we have to exclude. We have to exclude. What is that, ma? Date of registration becomes effective before the date if you are purchased the asset, that is not included in the valuation. So we have to check it out. Registration becomes effective on which date, ma? 1/2/2013. Before that, if any asset is purchased, yes, this asset is purchased before the date of effective of registration. Registration is an effectively on 1/2/2013. Before the date we are purchased this asset is not considered the for what valuation. So this 1/9/2023, this is an after registration only we are purchased. So what is that value we have to consider? Open market value as well as what stamp duty value, whichever is higher, that is only we have to consider. That is what 120 lakh. Ganesh, are you clear? So definitely you have to consider this point, some assets values we don't want to include in that what all assets. So that negative list of the assets is how many 5. So please remember this 5 definitely. Ganesh, are you clear, Next, what are the things we have next, shares. Ganesh, we have in what, shares. Please observe. Yes. Quoted or unquoted, quoted shares. Can you tell me trust having the quoted shares, that means listed shares, on valuation date? Yes, what we have to take, lower and higher we have to take. What is that valuation date? 1/4/2023 is no. So can you tell me the average of the highest and the lowest? 310. So next, sir, B limited is there, that is an unquoted, but preference shares or equity shares? Preference shares. For preference shares, that means equity shares, we have to do such hangama. What is that, B limited data we have. If that isn't given as an equity, we haven't got B limited data, but they are given as a what preference. That means other than equity, anything is there. What is that, open market value as on that valuation date, as per that what valuation report or merchant banker or accountant. So can you tell me open market value? So open market value, there is a star mark. This is an as per that what merchant banker. This is only we have to consider. Next, liabilities we have. Can you tell me liabilities? 120 is there, but we don't want to include the corpus. We don't want to include the provision. We don't want to include the what? Resource and surplus. Can you tell me total liabilities? Ganesh, total liabilities, 82. So if you are observing that, first we have to calculate what assets related value. So one asset we are not considered, another asset we have to consider at what value, 120 lakh. So please check it out, 120 lakh is there or not? Yes. So next one more asset is there, what is that, we have 5,000 equity shares. Each one we have to consider at what, 310. So 500 into 310. Can you tell me 5,000 into 310? Can you tell me how much, So this is also 15 lakh 50,000. Next we have in what, 2,000 preferences. 2,000 into what, 180. 2,000 into 180 how much, 3,60,000. That means total fair market value of assets in the balance sheet of the trust how much, 1,39,10,000. 1,39,10,000. Liabilities, I think you know, we can get that what, 82 lakh. If you are removing the what, 82 lakh from the assets, then you will get what, accredited income. On that we have to apply the what, 34.944. Such a easy question, Yes, sir. Yes, sir. Please check it out this question, Sir, very easy question. Maybe you can expect this type of questions, So in our study material also, in ICMA study material, we haven't what, question of this concept in what, just a small points there they given. Maybe you can expect this concept as an direct question for 8 marks, I think in assessment of various entities, you know, always we have a question of math. All the students are prepared for that math. If they are giving the trust, that is also exit tax. So that is also what my exit tax. Definitely all the students will leave this question as a choice only. So please try to prepare. This is a very easy concept. So that means you are already enjoyed that many years tax benefits of an exemption under section 11, 12 and 13. If you are converted into non-eligible form, if you are merging with any other non-registered entity, and next if you are yes, ma'am. If you are non-distributing the assets to the what, non-convertible, that means what, if you are distributing the assets within 12 months also, okay, from the month end of the dissolution. So This is a dissolution date from this month, and within 12 months if you are given also okay, but if you are not given to that what any other registered trust, yes, you have to pay that what exit tax, and you have to take that what exit tax, and you need to know about that what valuation date. On that valuation date, fair market value of the assets you have to take, but some assets has to be excluded from this valuation. And next we have to know about that what liabilities. For liabilities valuation also you have to exclude the some assets, sorry, some liabilities. So please take the question number 34, and please take the question number 34, and please make an observation. What is that valuation date? That's enough for me. What is the reason for calculating, and what is that valuation date? Please let me know. That's enough. Remaining things you can calculate all the things easily. Yeah. So that means nothing but what here also merger is happened. The merger date only called as what valuation date. Okay, Ganesh. The merger hasn't happened. That is only what valuation date. Okay. So the first one, yes, first one. Can you tell me what is the value of the land we have to take for the valuation? Ray, why you are checking answer?
Not checking.
What is the value of the land we have to calculate? What is the value of the land we have to take for valuation? Ganesh. Immovable property, what is that stamp duty value? That is a 15 lakh, or next one open market value, whichever is higher, that is a 17 lakh we have to consider. Next, recognized stock exchange related 75,000 equity shares are there. Can you tell me what is the value we have to take on valuation date? Open trading is happened or not Yes. 75 plus 85 divided by 2. Can you tell me how much 80. That is 80. So 80 into what 75,000. That is only what value. So preference shares, they are not giving equity, they are giving the preference. Can you tell me what preference shares in unlimited? Can you tell me what is the value we have to take open market value? What is that Totally they are given that what 44 lakh is nothing but what total open market value. So next corpus fund they are given. Yes, outside liabilities. From that outside liabilities we have to reduce the what corpus and provision for tax, and provision for tax, that is in what 5, and utility 6. Can you tell me how much
64.
So no, that is not like that So nothing but what outside liabilities they will give you as a 90 lakh So for that utility bills we have to add. So that means that is not at all included in the outside liabilities. That means corpus fund provision. Separately they are given. Excluding these we have a 90, and various utility bills means that is on our expenses only. That means electricity bills, etc., etc. So totally outside liabilities is 96 lakhs. So we don't want to include. If they are given the total liabilities, from that we have to reduce that what provisions, corpus, etc. After reducing that all the things, only outside liabilities itself 90, and we have an outside liabilities etc. 6 lakh, total what 96 lakhs, and you can calculate easily. So this is definitely given for the nearly 10 marks. This is definitely we can get for that what 10 marks. Yes and in trust chapter I will give you the 2 questions only do the 2 questions. Don't do that all the questions because these are all are given as an what suggest my own interest only. I am given these questions. If you have time, read, otherwise no need to read but you have to read that. Yes you have to do that what question number. Yes these are the 3 questions you should do, basic questions in our study material we have these questions. So that's why please do these questions. There is a question number 13, question number 14, question number 15. These 3 you need to do, and along with the what exit tax. So exit tax I think we have 2 questions, and in classroom I think in generally we have I already discussed 5 or 6 questions practical also. That means after the discussion of the total income format of the trust, I discussed that what ma 3 or 4 questions that also. So these are enough. Ma. And most important question number 15. 15 is the most important question and you can do easily, ma. Yes, ma.
These 3 questions plus exit tax.
Yes, enough. Sir, I think in the starting of the session, I discussed 3 or 4 questions, Ganesh. That 3 or 4 questions and these 3 questions and exit tax, enough. Okay. Yes, ma, we will discuss the transfer pricing chapter in the tomorrow session, ma. So that means up to 11 only today we have in class, ma. So after tomorrow we will start that what ma directly exit tax. Sorry, transfer pricing we will discuss, ma. Thank you. Shall we start the equalization levy concept, all of you? Equalization levy? Yes. First, sir, first of all, if any SSE, listen carefully, ma, you can solve any question also easily. If you learn the concept, automatically if they are given the new concept also, you can solve, ma. So, okay, if any person is there, Mr. X, Mr. X here is a resident and he is doing that what ma business or profession. He is nothing but what ma resident or nothing but what ma doing that business or profession in India. Next, or Mr. X is a non-resident who having the permanent establishment in India. So non-resident can be taxable in India only if you having that what ma fixed place of business through the permanent establishment. Okay, these two persons are making the some payment to the ESMA non-resident. Please remember who are making the payment to whom? Here the Mr. X. He is a resident who are doing the business or profession. Non-resident also doing the business or profession by using the permanent establishment. They are making the some payment to the ESMA, some payment to the non-resident. Just example, Facebook here. Why we are paying some amount to that Facebook here, ma? Because we are taking the some services relating to advertisement from the Facebook. That advertisement services we are termed as and what specified services here. We are taking some specified services with respect to the specified services. We have to pay consideration. That is only what 2 lakh. That is only what 2 lakh. That is in cross consideration. We have to pay 2 lakh. But here you have to make that observation. Can you tell me? For these non-resident, it is in what Indian income or not? Definitely. Because that amount is received by these non-resident from India or not, ma? Yes. Definitely this amount. Indian income is taxable in whose hands, ma? Indian income is taxable in whose hands, ma? Indian income is an always taxable in the hands of whom, ma? All SCs, including non-resident also. So that's why on these 2 lakhs, who needs to pay the tax in India, ma? Facebook. Because it is a non-resident. And please remember, ma, sir, they don't have any PE, permanent establishment. If you are observing that non-resident, if having the PE in India, that is an automatically will be taxed in India, because in this situation that the non-resident is not having the PE, so that 2 lakhs is an Indian income, yes ma, but you are required to pay the tax. But there is no PE for that non-resident, that's why that is not taxed in India. So that's why automatically here, who is in payer, ma? Payer is nothing but Mr. X. Who is in payee, ma? Facebook. Payer is required to deduct the equalization levy. I think you know TDS chapter, the same. Yes, ma. Here the payer will deduct the what, ma? TDS. Payer will deduct the what, ma? TDS. Please make an observation. What is the rate of equalization levy, ma? Fixed rate, ma. So from the gross consideration, we have to deduct the 6%. From the gross consideration, we have to deduct the what, ma? 6%. Can you tell me what is the 6%, ma? 12,000. We are deducting that 12,000 from the payment of 2 lakhs, and that should be remitted to whom? Government, on behalf of whom? Facebook. Because Facebook is a non-resident and that is not having the PA. That's why that is not taxable in India. So normally, yes, definitely needs to pay the tax because it is a purely what ma Indian income. But that is not having that PE means nothing but what ma right now we are unable to tax that thing. So that's why we are creating the tax by using the which concept ma equalization levy. Yes, Ganesh, can you tell me gross amount is nothing but what ma 2 lakh from the 12,000 please reduce 1 lakh 88,000 1 lakh 88,000 that should be given to what ma Facebook. Can you tell me what is that equalization levy percentage ma here? 6%. Equalization levy percentage ma 6%. Who needs to deduct the equalization levy ma? If any person is a resident and carrying the business or profession, if any non-resident having the permanent establishment, while they are making that any payment to the non-resident who are having the PE or who are not having the PE, who are not having the PE. PE means what ma? Permanent establishment. So that's why I covered the DTAA first, sir. Then after I kept this chapter as an end because you need to know about something about the PE. Okay, sir, you are already doing that business in India by using that one PE. Directly that isn't taxed. There is no scope for that what escapement or avoidance because you don't have any permanent establishment. Maybe that is an Indian income, but you are not interested to pay the tax in that India. So that's why we are first of all deducting that amount. After the deduction only, we are paying the net amount. Ganesh, suppose you are deducting the 12th March 2024, 12,000. Can you tell me what is the date for the depositing that amount with the government ma? Next month 7th only. I think if you remember, these are same TDS due dates. On or before that what ma? Next month. On or before the what ma? Next month. Are you clear, Ganesh? But here there is an important point. Threshold limit 1 lakh ma. If that gross consideration. No. If it is exceeds 1 lakh, an entire amount we have to deduct the what ma equalization levy. Here that is more than 1 lakh. Simple like TDS. This is more than 1 lakh. That's why we are deducted the TDS and entire what ma 2 lakh. Ganesh, one more thing. If you are in resident, if you are taking the services for the what ma business or profession, then only you are an payer. I am taking the advertisement services for my personal purpose. Can I take the deduction? No. The resident person, nothing but who engaged in the business or profession. Non-resident having the PE means he is also what ma engaged in the business. PE means nothing but what ma a fixed place of business. That means a business person, while during the promotion of the business, if they are taken that any specified services from the non-resident who are not having the PE, on that we can deduct the TDS. We can deduct the equalization levy if that amount is more than what ma 1 lakh. Clear? Yes. Next one, ma. So whatever the section I discussed till now, that is only 165, ma. Section 165. What is it? 165, Ganesh? Equalization levy on specified services. What do you mean by the specified services? Advertisement services, online advertisement services. Whatever that amount you are deducted by using the section 165, that you have to deposit on monthly mode or quarterly mode ma? Monthly mode. So that monthly mode deposit related section we will discuss under section 166. Okay. Shall we start the reading of concept book first of all, ma? In equalization levy, we have in two sections only, ma. One is on 165, that over already, but we will discuss, ma. Shall we start? Ganesh, I want to show you some MCQs also. You should give the reply to that MCQs. Okay. First, I will clear it down the total things, ma. Yeah. Sir, 5 marks, sir. If you have spent 2 hours with this class, 5 marks. Sir, there is no need to refer that any other thing, ma. Directly you will get 5 marks. Directly you will get 5 marks, sir. Okay. So first we will target the equalization levy only, ma. Then after we will discuss the remaining concepts also. No need to refer, write it now. So just we will go to that what, ma? Equalization levy. First 165 over, I think. So please refer, ma. Equalization levy under which section, ma? 165. Equalization levy under 165. Equalization levy under section 165. So please check it out, ma. Equalization levy under section 165 and what, ma? Specified services. Please check it out the screen, ma. No need to refer anything. 165, ma. What is the rate, ma? 6%. Can you tell me, yes, ma? Received or receivable by a person. That means, can you tell me who is an payee, ma? Non-resident. Who is an payee, ma? Non-resident. From, can you tell me from which persons, ma? Payer. Payer is nothing but non-resident who is carrying that, sorry, resident who are carrying that what, ma? Business or profession, and non-resident who having that what, ma? Permanent establishment in India. That person liable to deduct the what, ma? Equalization levy. And deduction, after deduction, next month on or before 7th, he has to deposit with the what, ma? Central government. So that means specified services, meaning they are the given, ma. Just refer it. So specified service means advertising services, any online advertisement, that means telecommunication advertisement, that is nothing but what, my TV related, internet, anything, or any other form of digital advertisement. These are all the things are covered under the what, ma? Specified services only. Next. So this is only that example I taken for an explaining, ma. So can you tell me threshold limit in this example they are given as an what, ma? So 2 lakh. If that exceeds the 1 lakh, that's why we are deducting the TDS at the rate of what? Sorry, TDS or equalization levy, ma. But the right word is an equalization levy. What is that, ma? 12,000. That is on 2 lakh into at the rate of what, ma? 6%. Next, can you tell me here Ashok is making the payment how much amount, ma? 20,000 only. Since does not exceed that what, ma? 1 lakh. Yes, ma. That's why there is no need to deduct the what, ma? Equalization levy. No need to deduct the what, ma? Equalization levy. That okay. In that example, they are given that what, ma? Threshold limit, but explanation. So whatever that amount you are deducted in 165, that amount you have to pay in once in section, which section, ma? 166. Whatever the equalization levy you are collected and recovery on the specified services under section 166, ma. So who is liable to deduct the equalization levy, ma? Who is liable to deduct the equalization levy, ma? 2 persons. Resident who is doing the business or profession, non-resident who having that what, ma? Permanent establishment. Non-resident who having that what, ma? Permanent establishment. Yes, correct, ma? Yes. Hereafter, I will call that as an what, ma? SSC. I don't want to call all the things, ma. So I will call it as an SSC who is responsible for deducting the equalization levy. These 2 persons are termed as an what, ma? SSC hereafter. Ganesh. So whoever deduct the equalization levy under section 165, yes, ma, then that means who is responsible for making the equalization levy? At the what rate, ma? 6%. What is the threshold limit, ma? 1 lakh. What is the threshold limit, ma? 1 lakh. What is the time limit, ma? What is the time limit for making of the payment, ma? Next month on or before the 7th. Sir, unfortunately, I'm not deducting the equalization levy in this example, ma. Without deducting the equalization levy, I paid the 2 lakhs, sir, to the non-resident. Then what is that consequence, ma? Then what is that consequence, ma? Whatever that amount you are failed to deduct, no issue. From your own pocket, you have to pay to the central government, sir. If you are not deducted, no issue. That is your headache only. So that's why you have to pay it from the what, ma? Your own pocket. That is in 12,000. Clear, ma? So the many always, okay. In my point of view, many times we are getting that question from this concept only, but students are unable to write that question. I will tell you, sir, how the students are fall into the trap also, I will show you. So I'm not criticizing that any student knowledge, sir. Just in equalization levy, we have in 2 sections. On specified services, we have to deduct under section 165. Whatever the amount you are deducted under section 165, you have to pay with the central government under section 166. So based on this only, they are given the questions, but they continuously fail to write the answers, sir. I will show you the question also. I will show you the questions also, ma. I'm not criticizing anyone, sir. Just I am showing. So how they are created the trap for the students, I will show you. So please check it out, ma. Question number 7, and tell me that answer. Sir, please have some patience while learning that new concept, sir. That is only hint for this question. All of you, please try to participate, ma'am.
No equalization levy, sir.
Sorry?
No equalization levy will be deducted.
Okay, what is your answer?
D.
D. Okay, in face-to-face batch, they are into one agreement, ma. They are saying that answer as an D. So all of you, your answer, ma. Ayyo, all of you are saying D. What is the reason, ma? Parvati, that is not reason, ma. That is not reason. Example. Website also, yes. Here, but who is an payer under this section, ma? Resident plus doing the business or profession, or non-resident having that what, ma? P. Can you tell me this is an okay? They are paying that amount to that, yes, ma? Owned by the non-resident company. That is a non-resident company. So they are not giving any PE, ma. The non-resident is not having the PE. So we are taking the services related to what, ma? Personal, not for business. Sale of house property related advertisement we have placed. That's why we are making the payment. So we are consumed for the business or profession, then only we can. We are taking that services not for the business or profession. That's why there is no equalization levy. Sir, if you are observing that directly, if you are not aware about this point, you can apply the 6%, ma. 2,20,000 into what, ma? 6%. How much it will be? 13,000. Sir, don't add the health and education says this is TDS, ma. So you are not calculating the tax liability. Just deduct the 6%. We are reading any point related to equalization levy related says here? No. So that's why just apply that what, ma? 6%. That's enough. No need to apply anything beyond this one. Are you clear, ma? That is only I am saying if you are taken that any services for the business or profession. Yes, ma. Then only we have to deduct the equalization levy. So you are not in this example nothing but he is not in doing the business or profession also. How you can deduct the equalization levy, ma? Ganesh, okay. Shall we take that one more question, ma? This is a nothing but what, ma? New syllabus question paper 1. This is a last attempt new syllabus question paper, ma. So please check it out and what is that amount also. 4th question. Sir, try, ma. You are thinking like, okay, the paper always difficult. No, no, no. Paper always easy only. We are only treated it as a difficult. Yes, ma. Please check it out the question, ma. Ramesh paid. Ramesh and Co paid 15 lakhs to the Wave is a foreign company not having the PE. So can you tell me pay or ma? So any resident who is doing the business or profession. And next one, ma. Non-resident having the PE. Yes, okay. But here, this is only the point. They are making the payment to that what ma non-resident who is not having the PE. That is also required for us. No, ma. Here the pay are related only. Pay are related. Yes, ma. You have to deduct. Yes, ma. If you are doing the business or profession non-resident, and sorry, if you are doing the business or profession in case of non-resident and non-resident having the permanent establishment, you are eligible to deduct. While you are making the payment to whom non-resident who is not having the PE, that is correct only, na. Non-resident not having the P. If these non-resident also having the P, automatically that will be taxed in India. Then why you are deducting? So automatically, definitely that in the permanent establishment in India means automatically that will be taxed. Why you are deducting that early? It's so. That's why here definitely we will deduct the TDS equalization levy at the rate of 6%. 5 lakh into how much, ma?
6%.
How much, ma?
30,000.
30,000, sir. If you are added the education cess also, you will get an answer 31,200. In an exam, many times you will have this doubt, ma. Answer is 30. No need to add the health and education cess. No need to add that what, ma? Health and education cess. Are you clear? Yes, ma. Yes, ma. So shall we open the MTP? Shall we open that MTP? Okay. So please check it out. Definitely there is one equalization levy question, sir. You have to verify. Yes, this is only. I think this is only our example 2. Directly they are given that question. Our example 2 they are given it as an what my MCQ. So please tell me that answer, ma. Ganesh, please tell me that answer.
1200.
Huh?
1200. A, option A.
Array. Jaffa payment itself 20,000. No one can fail you, Ra. No one can create your failure. You only created, definitely. So you will give that only 20 to 30 minutes in an exam for that MCQs. So difficult ones you can put easily. Easy ones you can create the difficulty. Okay. Answer is nil. Shall we start the one more equalization levy question, ma? So learn the concept, then automatically you can write it down. One more equalization levy concept, ma. Just listen. Equalization levy on e-commerce supply of services. Okay. So first I will open the running notes, ma. E-commerce levy, equalization levies are first at the time of introducing the equalization levy, they are only given that one provision, ma. I think in my CA find I have services. Can you tell me any e-commerce operator, ma? Example, Amazon, Flipkart. Yes, sir. Now, numerous e-commerce operators are there. They are generating any income from India, ma? Definitely. They are non-resident. They are generating that income. Alibaba, Flipkart, I think Indian only. So maybe some companies like Amazon, etc. That all the things are what non-resident. So they're still generating that income from the India. So that's why we want to create the tax on that also. So that's why we are created the equalization levy on e-commerce supply of services. That means from the e-commerce operators, we are collecting that one equalization levy. Here we are directly collecting. So that means every e-commerce operator has to pay this amount. There is no deduction here. But in previous section, deduction and deposit with the central government is there. But here equalization levy is nothing but directly paid to the central government. Of how much percentage of all the things I will tell you. So whatever that amount you are, that means you have to pay, that all the things you have to pay in accordance with the section 166A. Section 166A, but you have to pay monthly or quarterly monthly. You have to pay that quarterly you have to pay this 165A, whatever the equalization levy is there, that you have to pay under section 166A. Clear? Yes, ma'am. Next one, ma'am. So please open the 165A. Ganesh, equalization levy under section 165A is directly 2% on consideration received or receivable by the e-commerce operator. Example, take the Amazon. Take the Amazon. So they are supplying e-commerce goods or services. Whatever that consideration received or receivable, on that they have to pay that 2%. So directly we are collecting the tax. Okay. They are providing or facilitating the services too. So nothing but e-commerce operator, that is an Amazon, is providing the services to a person resident in India. That means who are consuming the services from the Amazon resident in India. So that is an Indian income to that Amazon or not Yes. On that we are collecting that 2%. Who has to pay that amount to the government Amazon only needs to pay, because the service consumed in India. Next, last one, middle one I will tell you after some time. Last one, a person who buys the goods, services as well as both by using that IP address in India. Sir, nothing but I think I'm always situated in India, so I purchased many items. Yes, I purchased many items in that Amazon, sir, for purpose of the recording or whatever it may be. So, like me, how many persons are purchasing So crores or billions of the persons in India are purchasing the goods or services from the. Can you tell me what do you mean by the services? If I'm purchasing the TV, they are giving the service of installation. For that also they will charge some amount. They are providing the goods as well as services also. Yes, ma'am. So if you are taking the just tell that all the things are services only. If you are observing, just dial is nothing but services. You can contact the plumber. That all the things are service. So on that consideration, whatever that amount you are received from that India, that means the persons are located in India, they are purchasing the goods or services, they are paid some amount. On that amount, they have to pay that what is the amount of the e-commerce equalization levy 2%. Next, okay, Ganesh is there Ganesh is normally using that laptop or mobile phone. That IP address is in India only, but he going to that Pakistan for playing cricket, sir. So nothing but he bought on one iPhone, or he bought on nothing but one mobile or any laptop from India only. So that is a personal gadget of that Ganesh. So can you tell me, Ganesh right now traveling to which country, Pakistan, for playing cricket? So in this situation, Ganesh purchasing the some things from his personal gadget, but personal gadget IP address is located in where, in India. So that's why that is also India related generated income. On that also they are required to pay that 2%. Are you understood, first of all of you? If you are understood these examples, definitely you can write any question, sir. Okay, ma. So that means, because if you are located in India and purchasing from that India only, here you are located maybe outside India, but you are purchasing from the ESMA devices that is in use in the IP address in India. So that's why Amazon is generating in these two cases from that India income only. Yes, ma. Then on that you have to pay the tax at the rate of what, ma? 2% in the form of equalization levy. Who has to pay the tax, ma? Amazon has to pay. Clear, ma? Next, Ganesh. This is very, very important. Here, the services taken is nothing but whom, ma? Non-resident. Here, who are taking the services, ma? Non-resident. That means Amazon providing the services to non-resident. There is no connection, no. So nothing but Amazon is also non-resident only. So they are giving the services to that what ma England one citizen. He is a non-resident for India. Sir, that person's outside located outside India. That means Amazon also as well as what ma non-resident also. Then why that Amazon needs to pay the equalization levy here? Yes, that is only magic. Please check it out. Yes. Example, the non-resident located in which country, ma? England, he having the cricket bat, sir. Example, he having that cricket bat business. Can you tell me? So, he wants to target the, yes, ma, he wants to target the Indian customers. He's given the one advertisement in Amazon. I think if you are open that Amazon website, automatically you will get that what pop-up messages. If you are searching something, definitely total mobile is pop-up with the what that advertisements only. So like that, the non-resident is giving the what advertisement, sale of advertisement. Yes, ma'am. But non-resident is giving that advertisement by using that Amazon. But the targets which customers, ma, who is a resident in India. That means they are targeting that what ma this person. They are targeting this person. Nothing but what ma they are targeting this person only. Yes, ma, who is located that what ma in India and whose IP address is located in India. For that customer only they are giving the advertisement. So non-resident isn't giving the yes, ma, targeting the two countries, ma, Pakistan as well as what ma India. Can you tell me on which consideration the Amazon has to pay that amount, ma? Indian targeted customers, whatever that consideration you are paid to that Amazon. Here, definitely we want to pay the some amount to that Amazon. On that we have to collect the tax at the rate of what, ma? Please tell me what is that collect the tax at the rate of what, ma? 2%. Are you understood, Ganesh? Why this is an why on these also we are collecting? Because we are targeting the Indian customers. Definitely business income will be generated through that. For whom that will be the business income will be generated, ma? Non-resident. So that's why we are created the equalization. Next, one more thing. So this is an sale of data, ma. Previously, sale of advertisement. Here, sale of data. So they are not selling the price sensitive information, ma. They will sell you to only what, ma? Price not insensitive. Example, they will not sell you any personal information or any other. So if you are observing, can you tell me how much amount of the data? Example, I will tell you. If any new updated mobile is released in an e-commerce website, the many persons are always added to that cart. Without buying also, we are always added to cart. What is the reason? Okay, unfortunately tomorrow if lottery is there, so in that lottery if won that money, definitely we want to make purchase. And if you are observing that like in Mantra as well as what ma ASIO, like in groceries, like any other e-commerce also, we haven't what ma many items are always added in that cart only. So that means since for the 10 years back also we are always adding, that is an habituation. So that means you are interested with respect to that product. That is only called as here data. The data can be sold to the what companies. But here, the selling of the data by the Amazon to whom? Non-resident. So this Amazon is selling that what data to them. So non-resident. Can you tell me non-resident needs to pay that what amount of 10 lakh? Can you tell me on this 10 lakh they are required to pay that what 2%? Can you tell me if any sale of data? So previously we are selling that what sale of advertisement. Here sale of data. The data is collected from the what resident in India, or who having that IP address also located in India. Who having that what IP address also located in India. So please make an observation, because these are all the things are connected within India. So that's why always we have to pay that what tax. Can you tell me who is required to pay the tax for 2%? So next, these, if you are laying only this table, that is not at all useful, sir. If you are laying along with that exception, then only you will get the full marks. Shall we read the exceptions, ma'am? Shall we read the exceptions, ma'am? Yes. So first, equalization levy is leviable under section 165, that is on supra. Sir, what they are the given, ma'am? In the following cases, equalization levy shall not be charged. In the following cases, equalization levy shall not be charged. That means equalization levy under which section will not be charged, ma? 165A. I will tell you examples, sir. Both the provisions are once applicable. Yes, applicable, ma. I will tell you one simple example. I will tell you one simple example. Ganesh, please check it out. 165 is what, ma? Specified services. Advertisement only, I think you know. Okay. Example. You are a resident doing that business or profession, or non-resident who having that what, ma? Permanent establishment. You are taking the service from the Amazon only. What is that, ma? Advertisement services you are directly taken. And that you are making that what, ma? Payment of 2,50,000. Can you tell me here? Definitely we have to make a decision here that equalization levy under which section will apply, ma? 165. 165. Are you clear, ma? Yes. Next, same way I will ask you that one more thing, ma. Section 165A. Who is that person, ma? Just a resident who is doing the business or profession, non-resident who having that what, ma? Permanent establishment. Yes, ma? Non-resident who having that what, ma? Permanent establishment. Amazon. Yes, ma? Amazon. So for your better understanding, I want to close this, sir. Okay. I want to close this also for better understanding purpose only. Yes. Here we are doing that what, ma? Sale of advertisement. I think you know. Sale of advertisement to e-commerce operator. Here selling that advertisement to whom, ma? Non-resident. This is only point. Yes, ma? E-commerce operator, sale of advertisement to what, ma? Non-resident. But what is that, ma? They are targeted at which customers, ma? Indian customers. Targeting which customers, ma? Indian customers. Okay. Here, nothing but for this we have to pay that amount, you know. Okay. Same 2.5 lakh we paid. Sir, here the equalization levy under section 165A is applicable? No, because if both the provisions are applicable, which one will prevail, ma? 165 only is superior. So that is supra means what, ma? This is only applicable. Can you tell me what, ma? 2.5 lakh into what, ma? 6%. That is only equalization levy. How much?
15,000.
What is that, ma? 15,000. Clear, ma? If both the provisions are applicable, which one will prevail, ma? 165 only will prevail. Just I am showing that one example. Yes, in many cases, both the things will applicable, ma. Next, this is also important, ma. Sales or turnover or gross receipts of the e-commerce operator, if exceeds the what, ma? 2 crores, then only, yes, ma. During the previous year, if exceeds the 2 crores, then only they can liable to pay the equalization levy. So the total turnover or total sales or total things during the previous year exceeds the how much, ma? 2 crores. Then only they can do. Amazon, sir. One day they will achieve the 2 crores, sir. In one day they will achieve that, not profit, ma. Please check it out. Turnover, sales or gross receipts only we have to check. Ganesh, next thing. This is also very, very important. Where the e-commerce operator operating the services, the Amazon or etc. e-commerce operator, they are providing the services from the permanent establishment in India, and the services are effectively connected with the permanent establishment in India. No need to pay anything, because directly we can give the tax. Because, sir, what they are given, whoever that e-commerce operator is there, that must be non-resident. So if non-resident not having that PE, if they're having that PE and the e-commerce operator, they're directly given the services from the PE only. Automatically, we have to apply that what concept here, Automatically, we have to apply that which one,
E-commerce operator.
Okay, 165A will applicable. But here, 165A is not applicable. What is the reason? If the service provider, that means e-commerce operator itself, they have in the PA, so that directly we can give the tax treatment in the next year also, in the assessment year also. Why you are getting the tension and why you are pay the tax? In the form of equalization levy, no need to pay. So that means nothing but anyway e-commerce operator has to pay the 2%. But here, that person is a non-resident, not having the PE. That person only required to pay. If you are having the PE in India, that means you have a fixed place of business in India. So no need to pay the tax through the equalization levy. Directly you can pay the tax. So if there is any risky with regarding the tax, definitely here there is a risky. Why? Non-resident, there is no fixed place of business also. Tax payment is always uncertain. So that's why safe side we are collecting the 2% on the consideration. But here you have a permanent establishment in India. That means you can pay the tax in the assessment year also. That's why equalization levy is not applicable. Next one, A point. So always 165A also, 165A also, and 165 also is an applicable. Yes, ma? That means in this situation, who is a non-resident is not having that PE. Here also that non-resident not having that PE, then only we can deduct here, then only we can pay here. Under 165A, we have to pay. That means Amazon only needs to pay what, 2%. In 165, they have to deduct. Always that opposite party is nothing but what, non-resident, not having the PE. If PE is there, no need to deduct the TDS and no need to pay these 2% also, not required. Because in assessment year, they will pay. If that permanent establishment is there in India, automatically non-resident is required to pay the tax in India in assessment year. No need to pay the tax by using that equalization levy mechanism. Here we don't have any pay. Definitely there is an uncertain in that assessment year while they are paying the tax. That's why we are deducting the tax. That means this person is deducting the tax. So in assessment year, we haven't doubt about that thing because there is no PE. So that's why 2%. So in these exceptional cases, they are clearly given as a permanent establishment is there. Why you have to pay that 2% on that consideration? Directly in assessment year, you can pay that tax. So that's why these are all my exceptions. Are you clear, Ganesh?
So here in the 265A, Amazon doesn't have residence. He is non-resident and not PE. So India doesn't have control over that business. Why will Amazon pay to us?
Because that amount is generated from India, a Jaffa, that is an Indian income. These are all my Indian incomes. So I think that is only the point. In the DTAA chapter 1 point, I told you, Indian income is taxable in the hands of all the persons. Yes, Amazon is a non-resident only. So they don't have any PE also. But why they are required to pay, Because you are selling the goods to Indian persons. You are selling the goods to the person who are using that Indian IP address. Here they are providing the service to non-resident. That is correct only. But here they are targeted the Indian customer and they are selling that data collected from these persons that is located in India. So that's why this is a purely Indian income. On this Indian income, everyone needs to pay the tax.
Not be applicable to 165.
Yes, applicable only same. That is only the point. In 165 also.
So why don't Facebook pay equalization?
Facebook is a non-resident. Here they are getting the services from that India only. That means that amount is generated from India. That is an Indian income to the Facebook. Can you tell me they're residents in India, they're doing the business or profession, non-resident who having the permanent establishment, that means these are the treated as what my Indian entities, from that Indian entities you have generated that income. So that's why you have to pay the tax. So you don't have any PE, that's why there is an uncertainty about the tax payment in the next years, that's why please deduct that. Are you understood? In online ma? So is there any doubts? That is only this MCQ Ganesh. So here, non-resident not having the PE. So that's why uncertainty is there. That's why only we are deducting that what 6% here. So from that payer point of view side, you have to check whether this is a payee. That's why this is only treated as an Indian income. Payer point of view, non-resident having the PE. Because you are paying that amount means that is an Indian entity. When you are considered as not an Indian entity, that is located in Indian entity. Yes, ma. Paying to the non-resident, yes, not having the PE. If having that PE means automatically that will be paid the tax in the form of what ma assessment here or in the any other form also. We haven't doubt over that. Okay, we are paying that 5 lakh amount to them. Definitely, if they are paid the tax, okay. So definitely, these are all the things are what not in tax purview. That's why they are introduced this section. So please deduct the 6%. Are you clear, ma? Up to know these two sections? If you know, then we can go with the what ma next one.
Threshold limit is 2 crores.
2 crores. They turnover totally you have to check. Not from the Indian concerns. So they turnover, please check it out. Here per transaction they are given as 1 lakh. Here the total turnover means Amazon turnover during the previous year totally you have to check. No need to pay the 2% of the consideration as an equalization levy. Clear? Yes, ma. These are 3 examples, ma. I will give you that 1 or 2 minutes time, ma. Just read these 3 examples. Maybe these only your next MCQs. I will place a bet also. These 3 will be your next MCQs, ma. These 3 under section 165A. So please read, ma. Just give me 1 or 2 minutes break, ma. 1 or 2 minutes break is needed for. నువ్వు కట్ చేస్తావు బట్ నువ్వు కట్ చేయడానికి నువ్వు ఆలోచించు సరే ఇప్పుడు ప్రాక్టికల్ ఆలోచన మరి ఆ పాయింట్ ఆఫ్ వ్యూ ఫ్లిప్కార్ట్ లో ప్రొడక్ట్స్ కొన్నప్పుడు కానీ అమెజాన్ కొన్నప్పుడు కానీ కట్ చేసి కడుతున్నావా ట్యాక్స్ కడుతున్నావా వాడి 2% ఎక్కువ ఉంటుంది అమెజాన్ ఉంది కదా మరి ఇప్పుడు మనం ఏం చేస్తున్నాం కట్ చేయలేదు అందుకే వాడు కడుతున్నాను ఒక్కొక్కరు కట్ చేసి కడతారు ఇంపాసిబుల్ కదా సో when you are an individual how you can deduct the amount నీకు అసలు తెలుసా అసలు చిన్న పిల్లలు కూడా పెట్టేస్తారు ఏంటి వాడు కట్ చేసి వాడు కడతారు గవర్నమెంట్కి యూస్ దాట్ అర్థమైంది లాజిక్ నీకు Next provisions, ma. Ganesh, shall we start, ma? Are you clear with these examples, ma? First. Yes, sir. Next, collection and recovery of equalization levy on e-commerce supply. I think you know. Yes, ma. I think you know. What is the thing, ma? 165A is there. Whatever that 165A is there. You have to pay the 2% under which section, ma? 166A. Here 165, 166, 165A, 166A. So whatever that amount you have to pay the 2% on that consideration that you have to pay under section 166A. So quarterly or monthly, ma? Quarterly. So the quarter ended with the 30th June, 30th September, 31st December, 31st March. You have to pay on this month, ma. So can you tell me? Quarter ended with the 30th June. Next month, ma? 7th July. Yes, ma? September, October 7. Next month only December 7th January. Next 31st March, ma? So there is no extension for the last month, ma. You have to pay within that year only. Within that year only, you should remember. Remaining all the things, nothing but what, ma? Next month on or before 7th. But here we have to follow that all the things, what, ma? Quarterly. Ganesh, who is required to pay, ma? Every e-commerce operator has to pay that amount. So then we are going to the assessment procedures part, ma, in this. Yes, furnishing of a statement. Every person under section 165. Under section 165A. So under 165, can you tell me, Ganesh, who are deducted the equalization levy, ma? Who are deducted the equalization levy?
Who is resident and having business or profession?
So nothing but what, ma? SSC. We are calling as an what, ma? SSC. Resident or who having the business or profession, or non-resident who having the what, ma? Who are non-resident who having the PE. Under e-commerce operator under which section, ma? 165A. So they are going to pay with the what, ma? Central government. They are going to pay that amount with the central government. SSC is directly paid or deducted and paid, ma? Deducted and paid. E-commerce operator directly has to pay. Okay. Within 30th June of next year. So that means suppose right now we are in the previous year 23-24. Right now previous year 23-24. Can you tell me? Previous year 23-24. What is that point, ma? Next month, next year 30th June means what, ma? 30th June of and which, ma? 2024. Before this date, he has to file the one statement in the form number 1 with respect to that what, ma? What the specified services we are taken. That means from the SSC side, we are taken the specified services only. And next, e-commerce supply of services. That means from the e-commerce operator side is provided these services as well as what, ma? Goods. Whatever the things we are provided, all the things we will file in one statement. That statement only called as 167, ma. What is the date, ma? On or before 30th June of a next financial year. That means during this year, whatever the services you are provided, all the things you should finalize on or before this date in form number 1. Clear? Sir, if any mistakes was there, then you have a chance to do that what, ma? Revision of the statement also. Yes, ma. What is that, ma? Revision of the statement also. Or if you are not filed also within the date, then you have a chance to file belatedly also. That is only, ma. So that means every person who has not furnished the statement within the deposit time and having that furnished the statements and notices of omission, that means who can do the revision, ma? So within the time, if you have filed also, you can do revision. Belatedly, that means what, ma? Belatedly, if you have furnished also, you can do that what, ma? Revision. I think like return of income, normal return also you can revise, belated return also you can revise. Here also the same thing. If you have filed within the date, yes, you can revise. After the date, if you have filed the statement, yes, you can revise. Yes, ma? If in which cases you can do the revision, ma? If any omission or wrong statement is there in that, yes, you can do that what, ma? Revision. So can you tell me what is the time limit for the revision, ma? Expiry of the 2 years. Yes, ma? Any time before that expiry of what, ma? 2 years. Yes, ma? At any time before expiry of what? How many years, ma? 2 years from the end of the financial year. Yes, ma. So that is only that, ma. So that means you can do the revision of a statement before that end of the. That means what is the last date for the doing the revision, ma? 31st March 2024. 2 years means 31st March 2026. So nothing but notice by the assessing officer, ma. Yes, sir. If any SSC under section 165, e-commerce operator under which section, 165A, if you fails to furnish the statement within this date, then definitely we can send that what, ma? Notice. If you are not furnished the return of income, they can send the notice. Here also, if you are not furnished the statement, they can send that what, ma? Notice. Yes, ma? Yes, definitely. After receiving the notice, within how many days, ma? 30 days, you have to file that what, ma? Statement. You have to file that what, ma? Statement. Sir, if you are not furnished the return of income, they will send you that 142(1) notice requiring him to file the return of income. Here also, if you are not filed the statement, they are sending that what, ma? Notice. Within 30 days, you have to give the response by way of filing that what, ma? Statement. So can you tell me that only original statement is revised or belated statement also revised? Any statements also can be revised within the 2 years from the end of the financial year. Clear? Yes, ma. So whatever the statement you are filed, you means what, ma? SSC or e-commerce operator, that has to be do that what, ma? Processing. Sir, here the same section 143(1), ma. In the statement, if you find that any arithmetical errors and if anything also, that all the things will be corrected. Same section 143(1) processing, what you are reading, the same thing we have to read here also. The processing of a written, processing of a statement just. Next one, ma. So can you tell me what is that, ma? If any statement is filed, suppose the statement is filed on this date, ma, after the completion of the processing, we should send that what, ma? Intimation, final intimation. So this is one tax you have to pay, or you are already paid that correct tax. The type of intimation you have to receive, ma. That intimation received, that means what, ma? After that end of the what, ma? After the end of the what, ma? Relevant financial year. Can you tell me statement filed relevant relevant year ending, ma? Statement filed in the previous year 24-25 end, ma? 31st March 2024, that within 1 year at any time you can receive that what, ma? Intimation. After that there is no chance to receive that what, ma? Intimation. So that means every officer who is doing this process, that process must be completed. That process must be completed. The process must be completed. Can you tell me within that what, ma? 1 year from the end of the what, ma? Financial year in which the revised statement or statement is filed. Sir, in this statement, if any mistake was there, yes, you can do the rectification also. So that rectification means, I think, if in order, if any mistake was there, yes, ma, directly SSC can ask the what, ma? Rectification, or sumotoli also they can do what, ma? Rectification. So just penalties and interest on that what, ma? Delayed payment on equalization levy. Important, ma? Just remember. What is that, ma? Sir, fails to deduct the equalization levy. I think if you are failed to deduct, that means what, ma? SSC is required to pay that amount of the equalization levy to the central government from that own pocket. This is a penalty, not interest. Interest is nothing but what, 1% per month or part of the month, every month delay. Next, 165A fails to pay the equalization levy. E-commerce operator is not paid the 2% on that what, their services. We have to pay the equalization levy at the rate of what, 2% have to pay. But if you are not paid, that amount is imposed as a penalty. Next one, fails to pay the levy, fails to pay levy after deduction. So these two things are different, ma. So these two things are different. First one is what, ma? Ganesh, what is the first one? You are not deducted, but here you are deducted and you are not paid. Then penalty is nothing but what, 1,000 per every day. Subject to that maximum amount of that payment, you are failed to pay. Next one, 172. Failure to furnish the statement. 172. Failure to furnish the what, statement. Failure to furnish that what, statement. So what is the statement, 167? You have to submit that what, statement within that what, 30th June of what, financial year. So if you are failed, then what is the penalty, 100 per every day. So next, you have to remember these things, sir. If you are not agreeing with the what, orders of the testing officer, then you have a chance to make an appeal with the ITA, Commissioner of Income Tax, within 30 days, So if any person order is not accepted by the SSC, or SSC means nothing but here e-commerce operator or any SSC. So fees how much, 1,000. If you are not like that also, within next 60 days you can make an appeal with the ITAT. What is the fees, 1,000 rupees. Last one, punishment for the false statement, MCQ related, penalty related, important. Sir, knowingly you are the giving the wrong statement, sir. Intentionally you are the giving the wrong statements, so that's why that imprisonment will be extended to 3 years along with the fine. Knowingly you are the filing that what, wrong things on the statements, then you have to pay that fine along with the what, penalty also. Can you tell me what is that point, That amount of consideration, amount of equalization levy and penalty payable always should be rounded off to nearest multiples of what, 10. This is also MCQ related, important. This is also MCQ related, important. Clear? That should be rounded off to nearest multiples of what, 10. Clear? In our study material, we haven't what, name as an only tax planning, but intentionally I am extended the name as an tax avoidance, tax evasion, tax management, So the first of all, okay, I will take this session in it. That means total this chapter in 2 sessions, sir. That is nothing but before that 5. That means whatever it may be, half of the chapter I will complete in this session. The remaining of contains a problematic that will covered in the after the break. So today our agenda, we have to complete this chapter. Easy chapter. So not easy. That is nothing but what, very easy chapter. What is the reason? If you know the meanings of these terms, then it will be very, very easy. So in an exam oriented batch conducted in Hyderabad, many students are asking about this chapter from the starting day itself. That means if I am studying the return of income basic concepts, they are asking continuously tax planning, tax planning, tax planning, because they said this is an important and a difficult chapter in their view. No, that is an easy only. Yes, ma. How we will discuss this chapter in 2 parts. The first part we will discuss right it now, ma. First one, what do you mean by the tax planning? I will tell you the tax planning meaning, ma. Yes, example, first I will take it down. Yes, ma, example. So, gross total income if you are taken, from that gross total income, we can reduce that what, ma, chapter 6A deduction. Example, that is an 80C, 80D, 80TTB, etc. If you are reducing, then you will get what, ma, net total income. Then you will get what, ma, net total income. So can you tell me here, you are reducing your total income and you are reducing your tax liability also. How you can reduce the tax liability as in zero, ma? Because after claiming the rebate, your tax liability will become what, ma? Zero. So that means you are doing that here what, ma? Tax planning by way of taking legal deductions. That means what, whatever that in that act they are providing that legitimate concessions and legitimate exemptions and legitimate deductions provided in Income Tax Act 1961, that I am taken and I am reducing my tax liability. This is only called as what, tax planning. So this is a not an unfair things ma. This is a totally fair things. You are provided that what ma some deductions. That deductions only I am claiming in order to reduce my tax liability. Can you tell me examples ma? ADC deduction and 54 exemptions. I think if I am selling one capital asset, I will get the capital gain. In order to exempt the capital gain, if I am investing in any asset, any other asset, I think you know if you are purchasing one residential house property after sale of another residential house property, that is what ma 54 series exemptions. If you remember in your capital gain chapter, yes ma. If one asset if you are sold, definitely you have to pay that capital gain. If you are invested in same assets a point of view, then you will get what ma that capital gain exemption. These are all are what ma tax planning only. So if you hear any word related to tax planning, you need to remember that is a moral in nature ma. That is what ma moral in nature. That means moral. That means yes, you are doing all the things as per law only. You are not deceiving any person. You are not deceiving any person in this ma. So that's why this is a moral. Can you tell me what do you mean by the tax planning ma? So legitimate concession, legitimate deductions, legitimate exemption you are taking, and in order to reduce the taxable income as well as what ma tax liability, whatever the things you are doing, that is only called as what ma tax planning. This is what ma moral in nature. Ganesh, next one ma, tax avoidance. Example, I will take that what ma sale and lease back. Ganesh, normally you are an owner of one asset ma. Can you tell me if you are an owner of asset, you can claim what ma only if you are using that asset in the business or profession, you can take the depreciation. The depreciation amount, if you are calculated, that is a low amount ma. But I want to claim that more amount as a deduction in my P&L account. What I can do ma? First, I will sell this asset to that Mr. B, and I will take that what ma asset lease back. So if you are observing, asset remains with me only. The ownership title only transferred from the Mr. A to Mr. B. Right now, I am not an owner of the asset. That's why I can claim what my lease rentals. The depreciation is nothing but small amount. If you are taken the depreciation in the debit to the P&L account also, your net profit may not be reduced greatly. So here, if you are selling that asset to any other person, if you are taken on what my lease basis, definitely you are paying the lease rental to that owner. In this situation, the lease rental amount is compared to the depreciation, it isn't very high. Yes, ma. Compared to that, that isn't what ma very high. So please make an observation here, ma. Please make an observation here. So can you tell me, yes, ma? If this is a nothing but what ma? Taking that advantage of what ma? Taking that what ma? Advantage of what ma? Loopholes and drafting mistakes in the tax laws, whatever. So this is not at all prevented because as per AS 19 also this is an approved. So by way of taking that advantages involving in that act, by way of taking that what ma? Loop advantage of the loopholes and the drafting mistakes involving in the tax laws, we are trying to reduce the what ma tax liability. We are trying to reduce the what ma tax liability. Can you tell me both the tax planning and tax avoidance, in both the cases we want to reduce the what ma tax liability only, but one is legal, second one is nothing but what ma immoral. So here you are killing the spirit of what ma lawmaker. You are killing the spirit of what ma lawmaker, and lawmaker intention you are killing here, and this is a moral or immoral ma immoral. So this is also called as what ma tax hedging. That means ESMA purely this is an ESMA intelligence of the taxpayer only. Intelligence only. So you can't give you any penalties to me in this case, ma. That is purely law drafting mistakes only. I am taking that advantage of what ma drafting mistakes. I am taking that advantage of the what ma drafting mistakes only. Clear ma? Yes. So next, sir, you can't avoid the tax by using these ESMA loopholes, etc., etc. That's why, in order to prevent the tax avoidance only, we have in what ma general anti-avoidance rules. This is only our next chapter, GOR. What is that ma? General anti-avoidance rule. Sir, nothing but GOR is totally related to tax avoidance ma. So many ways, intentionally, intelligent way, you can avoid the tax ma. In order to prevent the tax avoidance cases, we have in what ma? General anti-avoidance rules. General anti-avoidance rules. Next one ma. Example 2. Example 2. Yes ma. So nothing but one more example ma. Section 54 EC, if you are observing, if you are selling any long-term capital asset of what ma, if you are selling that any long-term capital asset of what ma, land and building, if you are getting any gross capital gain, if you are invested the gross capital gain in the section 54 EC, that is an NHAI bonds or RECL bonds, then you will get the what ma exemption. On that situation, the maximum exemption is nothing but what ma 50 lakh only. At the time, that is there is a drafting mistake in this section ma, that is nothing but what ma 50 lakh per financial year. So that means in this financial year they are taking the 50 lakh, another financial year they are taking the 50 lakh ma. So that is nothing but what ma drafting mistake advantages. They are taking that what ma drafting mistake related advantage. They are taking that what ma exemption of 1 crore instead of 50 lakh, because in that act they are mentioned that exemption 50 lakh per financial year. So nothing but from the date of transfer within 6 months, if you are invested, this is within 6 months only. Yes, ma. That means in this year they are taking the 50 lakh, another year they are taking the 50 lakh, 1 crore. That intention, you are killing the what ma intention of what ma lawmaker. That is not at all correct intention of the lawmaker. So nothing but only drafting mistakes or loopholes is there by way of taking the advantage of these things. If you are reducing the tax liability, that is only called as what ma tax avoidance. What is it moral in nature ma? Tax plan. What is it immoral in nature? Tax avoidance. Who in which case we are killing the spirit of lawmaker ma? Tax avoidance. Can you tell me what is it called as a tax hedging ma? Tax avoidance only called as what ma? Tax hedging. So that means we are, yes ma, we are in an innovative way, we are reducing our tax liability. That is only called as what ma? Hedging. Next one. Are you clear ma up to now? Tax evasion. What is that ma? Tax evasion. So simply ma, simply tax evasion means suppression of facts. Suppression of what ma? Facts. Suppression of facts means nothing but what ma? If any income is there, you are hiding that what ma income and falsifying that what ma records. That means recording the bogus expenses, etc. And by way of fraud and collusion, we are evasion of the what ma tax. So can you tell me if any tax evasion is there, that isn't treated as what ma illegal or unfair? That isn't treated as what ma illegal or unfair. Example ma record of bogus expenditure as well as what ma fake expenses. That means simply we can say we are paying the salary actually once a year only, but we are recorded as in 10 year. Actually we have an income of 100 crores, but we are recorded that income as in what ma 25 crores only. So this is not only called as what ma tax evasion. But if any tax evasion is there, that leads to what ma punishment by way of penalty, fine, as well as what ma prosecution also. But there is no penalties, there is no prosecution, there is no what ma yes ma fine for that what ma tax avoidance. In order to prevent the tax avoidance, we have a what ma general anti-avoidance rules. Tax evasion is nothing but what ma if you are observing the tax evasion is nothing but it is an illegal ma, unfair also. But don't use that illegal in case of tax avoidance. Tax avoidance isn't just immoral. But here this isn't what ma illegal. You can't do like this. Yes ma, clear? What do you mean by the tax management? I will tell you what do you mean by the tax management ma. Tax management means nothing but what ma. In previous year, you have to pay that advance tax, and previous year you have to pay that what ma TDS and TCS. And in assessment year, you have to file the return of income, and you have to pay that what ma self-assessment tax. Whatever that your obligations relating to tax payment, if you are executed properly, that is only called as what ma tax management. What is that ma? Tax management. Clear ma? The first of all, example, advance tax payment in that 4 equal annual installment. I think you know advance tax has to pay in how many installment ma? 4 installment during the previous year. If you are paid that properly, that is a tax management only. And return of income is filed within the due date in order to avoid that what ma interest as well as the fees also. That is also called as what ma tax management only. If anything is done as ma properly, if anything as ma all the things are done in proper manner, that is only called as what ma tax management. So there is an important concepts ma. So definitely we can get these questions in an every examination based on that meanings ma. Shall we discuss the workbook? One question related to ESMA, these things ma. Please open the tax planning chapter.
tax avoidance, sir.
Sorry?
We can practice tax avoidance.
Yes, you can practice the tax avoidance. In order to prevent the tax avoidance only, we haven't got. Automatically, if GAR is unapplicable, you can't do the tax avoidance also. Okay. Ganesh, please take the question number 5. Ganesh, take the question number 5. So I think this is only the last examination new syllabus question, ma'am. That means like these only they have given that question. And the following acts you have to check it out. That means what the following things you have to check it out. So whether it is in tax management, tax planning, and tax evasion, you have to check it out. So whether it is in following things or what ma, tax management, tax planning, yes ma, tax evasion, we have to check it out. The first, please read it out and tell me what is that ma, whether it is in tax planning, tax evasion, and tax management ma. So please read and tell me all of you. So this is only that exercise time ma. Please repeat and please tell me the answer. We are paid that what ma life insurance premium, then you can get that what ma ATC deduction in order to reduce that what ma total income by way of what ma legitimate deductions and legitimate concessions only. Yes ma, we are reducing our tax liability. This isn't called as what ma tax planning. Please refer second one and tell me the answer ma. So tax evasion ma, we are install that air conditioner in our residence. If you are installed that any air conditioner in our residence, you can't claim the depreciation. But you are showing it as an what ma fitted in a factory. That means what ma falsifying the records. So in order to claim that what ma depreciation, that's why this is called as an what ma TE. That is what ma tax evasion. Ray, please check it out. In the above, they are not giving the tax avoidance. That may be answer within these three only you will get. So they are asking whether it is a tax management, tax planning, tax evasion, means out of these three only you will get the answer. Okay. Next one ma. Why Limited maintains the register of tax deductions ma? Yes ma. In order to enable the what ma timely compliances. Can you tell me what ma? Tax management TM. Next one ma. D question ma. We are issued that credit note payable to the 36,000 brokerage payable to A ma, who is a son of G, managing director ma. So in order to reduce that what ma, JED limited income, increase the A income from the 18,000 to 54,000. Nothing but we don't want to pay that amount to that person, but we want to reduce that company total income. That's why we are creating that what ma fake expenses. So that's why this isn't called as what ma tax evasion. Next one ma. Sir, if any person as a partner receives any amount from the partnership firm, that is a taxable under which head of income ma? PCBP. But right now that isn't treated as an what ma salary. Can you tell me what is that ma? This isn't nothing but treated as what ma tax evasion only. Sir, if any partnership firm giving the amount of that salary to that partner, that is a taxable under the head what ma PCBP. Instead of the PCBP, he is taxed that amount in the form of what ma salary. So can you tell me what is that ma? This is called as what ma? Tax evasion. Agree, sir? వస్తాను ఏం కదా ఓ 15 minutes అంతే 15 కూడా ఉండదు 10 minutes. ఓకే నెక్స్ట్ వన్ మా. A using that what ma motor car for the personal purpose, but he charges that that as a business expenses ma, falsifying the records. This isn't treated as what ma tax avoidance. AX always sorry tax evasion. Sorry ma. Next, X always the pays that advance tax on time. This is an what ma tax planning.
Management.
Yes, management. Next, Y sells a residential house and he purchases another residential house in order to claim that exemption ma. This is what ma tax planning.
Avoidance.
Jaffaga tax planning.
Sir, sale and leaseback, like sale and leaseback.
Jaffa, we are selling one residential house property. We want to pay that capital gain. If you are purchasing if any other residential house property, you will get the section 54 exemption. So if you are open the notes, if you haven't eyes, then you can get this point ma. 54 exemption, that is on what ma tax planning. Next one ma. X had a fixed deposit. X had a fixed deposit 15,000, but he didn't disclose that amount in the what ma income tax return. This is an what ma tax evasion. Y had a savings bank account related interest 5,000. He disclosed and he taken that what ma one chapter 6A deduction, that is an 80 DTAA, that is an what ma tax planning. We are taking that one chapter 6A reduction on that income ma, that is an definitely tax planning. Okay, clear up to now? Shall we open the last examination question paper ma? Shall we open the last examination question paper? Sir, don't think about it ma, this is the last examination old syllabus. Maybe you can get the same question in our next exam also in new syllabus ma. So this is a definitely important and trendy question, sir. Shall we? Yes, please let me know ma. So whether tax planning, management as well as what ma, these things. Aditya Limited had to pay the 60 lakh by way of income tax ma, consequent to the scrutiny assessment completed in the May 2023. It paid the amount of tax demand immediately and filed the appeal ESMA before that what ma, that means AO demanded how much amount ma, 60 lakh. You are paid the demanded amount immediately. After that, you are making that what ma appeal before the Commissioner of Income Tax appeal. This is called as what ma tax management. So in order to avoid that what ma interest under section 220, normally if you are not paid that amount as per the demand notice, you have to pay that interest under section what ma 220. In order to avoid that interest, we are paid that amount of that amount involved in the demand notice. After that, in order to claim the relief, you are making an appeal with the what ma Commissioner of Income Tax. AO given the order. Okay, I will pay that amount. After that, that is not at all agreed with that order. That's why I can make an appeal with the what ma Commissioner of Income Tax appeal. Can you tell me second one ma? Julian Limited contemplating to that what ma incorporate 100% subsidiary for treating that biodegradable waste for that what ma generation of what ma power. That is on what ma tax planning. Yes ma, normally I think if you are installed that any biodegradable wastage related what ma, then you will get what ma 80 ESMA double J ma 100% of your profits will be exempt or deduction. You can take the 100% of your profits will be deduction under 80 double J double A for the starting 5 years ma. That's why this is a tax planning. Next one ma. Yes, ma. Tora having that own funds he deposited in what ma senior citizen savings scheme ma, and for the purpose of what ma purchase of for the purchase of what ma electrical vehicle borrowed that money from the what ma bank. This is an what ma you can get the 80C deduction here, and here you can get the 80 EEB ma. So that is an OT what ma tax planning. Next ma.
It is tax management, sir. How planning it is,
There, Jaffa Indra. Next, last one. Selling the goods to the Warner Limited subsidiary in order to 90% of its cost to enable the Warner Limited to earn the profit. Can you tell me this is what tax evasion? We are selling ESMA goods with a have 90% of cost. You have to selling it for arm's length price only, normal price only, but you are selling it for that less than sale price. That means 90% of, if you are selling for the 100% of cost also okay, but here you are selling for the 90% of cost.
If anyone having that answers, please verify that answers, ma. I don't have, I think. If you have, yes, just verify, no issue. Yes, you can verify that answer also, ma. Please verify. What is that examination, ma? December 2023, I think. Okay. So we have an direct taxation. Okay. Before you, I am only opening the suggested answers, sir. Okay. Can you tell me question number, ma? I think this is an 2B. So the first one, what is that, ma? Tax management, that is incorrect, ma. Next, that is in tax planning, correct, ma. Next also tax planning, correct, ma. Next is in tax evasion is also correct, ma. Nay, I don't want to explain once again, ra. Sir, simple, ra. You are deposited whatever that amount you have in your own money, you are deposited in a senior citizen savings scheme. If you are deposited any amount in the senior citizen savings scheme, you will get 80C deduction. From that bank, you are taken a loan again, and for the purchase of what, ma? Motor vehicle, that is an electrical vehicle. If you are paying that interest on that electrical vehicle loan, you will get 80 EEB. So that means for what purpose you are doing these are all the transactions in order to reduce that what, ma? Taxable income. But by way of legitimate concession or illegal way you are doing, by way of legitimate deductions only, we are reducing our total income. That's why this is a tax planning. So not ADC also here indirectly, if you are observing that, so senior citizen, nothing but he can get that interest on these funds, deposits, he can get that 80 TTB, ma. So 50,000 or actual interest, whichever is lower, he can get normally. So electrical vehicle, if you are purchasing on that 80 EEB, you can get, ma, up to that what, ma, interest paid and 50,000, 1,50,000, you can get it as a deduction. So this is an what, ma? 50,000 or actual interest, whichever is lower, ma. Actual interest, whichever is lower here, as per up to 1,50,000 interest paid on that loan, you will get it as a deduction. So this is nothing but what, ma? Tax planning only. So you can verify in every examination, ma, we are getting that one question related to this chapter. Yes, ma, that is only this question. A simple question. How many marks you will get, ma? 8 marks. If you are losing this question, definitely how you can get that 40 or how you can get that 80 also. Are you clear, ma, up to now, all of you? Yes, you need to mention the reason also. Because they are asking the reason also, ma. What you need to write it down? Yes, here we have to write what is the answer, ma. So I will tell you the reasons also, each and everything. Simply don't write that all the things in a deep manner, ma. Just okay. Here, if you are not paid that demand notice amount within 30 days from the issue of the order, you have to pay that interest under section 220. In order to avoid that interest payment, we are deposit the 60 lakhs immediately. And after that, this is nothing but what, ma? This is this is not a final order. But we have a chance to make an appeal. Okay, after making that payment only, we are going for that what, ma? Appeal. So that's why this is purely called as an what, ma? Tax management. So nothing but if I am not paid that amount, and if I am not paying that amount, and if I am going for the appeals, that's okay, no issue. But in the after that, Commissioner of Income Tax also given that unfavorable judgment to you. So that means Commissioner of Income Tax also given the judgment in favor of what, ma? Opposite person. Automatically here you have to pay. On that time they will ask you what, ma? Interest. Definitely that interest amount is very high at the time of order disposed by the Commissioner of Income Tax. That's why we are paying that what, ma? The amount before that itself. That's why this is a tax management. And here also you have to mention the section number, ma. Yes, ma. Here also you want to mention the section number. That is only if you are refer the chapter 6A reduction. This is only the advantage, ma. I am covered that 80 double J also. If you are engaged in the biodegradable waste, if you are referred the 2 hours chapter, definitely your question paper view will be changed. If any question given from these every corners of the chapter 6A reduction also, you can write the question easily. So that's why I will upload the chapter in an evening time. I think night time. Please refer the chapter 6A reduction. Like, okay, you are already listened the chapter 6A reduction in inter level in simple form only. I don't want to explain the problems, etc., etc. I will already open that handwritten notes like quick revision. So that is a quick revision only. You can use that one. Next here also you have to mention that 80 DTA deduction, 80 DTB and 80 EAB. Sir, how you are writing these are all the things, because in chapter 6A reduction these are the main sections. So that's why just listen the chapter 6A reduction. No need to remember and reproduction, rewriting, all the things are not required. Just so here you have to know about that what this is a tax avoidance only. So nothing but what these two are associated enterprises. If you are subsidiary only, subsidiary means what associated enterprises. For an associated enterprises, if you are transferring that what less than the what arm's length price, definitely this is called as what tax evasion only. Clear? Yes, the remaining chapter I will discuss after the break, the remaining chapter also theory. Right now I am done with the only this part, What do you mean by the tax planning? What do you mean by the tax avoidance? What do you mean by the tax evasion? What do you mean by the tax management? Only done. Based on this, you will get one question, The remaining questions also I will tell you after the break. Yes, Are you clear, up to now? If they are asking the reason, then only you can mention, If they are asking the reason, then only you can mention. I will show you one more question paper, On the time they are not asking the reason. Okay. Shall we? I will show you one more question paper. On that time, they are not asking the reason. Okay. I think I don't have that question paper, No issue. Yes, no issue. I don't have that question paper. No issue, I will show you after some time. Okay. So just now we know that meanings about the tax planning, meanings of tax avoidance, tax evasion, and tax management only. Yes, 3 questions. What are the 2 basic approaches of tax planning? How you can do the tax planning, So nothing but, sir, some persons are following the reducing the taxable income approach, Some persons will follow that what, deferring the payments of the tax to that extent what, possible. Sir, many students are knowing that answers as well as the questions, but they are writing the answers for the different questions in a different manner. Nothing but what, if they are asking that approaches, they are writing that what, types. If they are asking the types, we are writing that what, approaches. That is totally incorrect, So the first we are discussing about that what, approaches. What are the 2 approaches we have, First one, yes, simple, by way of taking that what, chapter 6A reduction, exemptions and deductions, all the things if you are taken, automatically your taxable income is reduced. That is only what, one approach for doing that what, tax planning. So please remember the side headings. By way of looking the side headings, you can write easily, The first one what, if you have a higher income or higher profit, the higher tax liability you have to pay. But, yes, but next, if you are taking that what, some deductions or allowances. So if you are allowing that what, some deductions or allowances, then taxable income automatically will be what, reduced. Sir, like me, okay, if I want to do the tax planning, so from my salary income, I want to take that all the deductions, etc., etc. By way of that only, I can reduce the total income. This isn't one approach, So like Ganesh, like rich persons, how he can do the tax planning, I will tell you simply. Yes, this is an underestimated dimension of tax planning. That is not all, majority of the persons will follow the what, reducing the taxable income approach only. But some persons only will follow this. I will tell you one example for understanding this, Okay. Ganesh, if you are observing that, many persons are taking that what ma, a life insurance policy. Many persons are taking that what ma, life insurance policy. So nothing but if you are observing that, they are taking that what ma, 10-year policy. Every year they are paying the premium of how much amount ma? 25,000. On that premium, they will get the chapter 6A deduction ma. So, but you can't take the total amount of that premium. That premium will be ESMA restricted with the 20% of sum assured value, 10% of sum assured value. Maybe that isn't what 15% of sum assured value. Please check it out the chapter 6A deduction for understanding this ma. So whatever that amount you are paid as a premium, you can't get it out ma. So there is an always one limit for that claiming the section 80C chapter 6A deduction ma. But at the end of the 10th year, you will get to what ma, maturity value. So that means we are investing that amount. Yes, ma, finally you can get that what ma maturity value at the end of that what ma 10th year. Along with that bonus, you will get what ma 4.5 lakh. On the time, if that some conditions are satisfied, that amount also what ma exempt. That amount also what ma exempt. You are making that investment in a such a way that, so if that isn't taxable also, can you tell me the taxability will came right now or in near future? Near future. So that means what ma, that is only called as what ma, the timing investments and nothing but what ma, financial transactions we are doing by way of the tax liability of that transaction arises at what ma, fastest possible time. That means after 10th year, if any maturity amount is realizes, on that we can pay the tax. If that is not exempt, if that is an exempt, okay. So that means some persons are following that what ma, deferring the payment of taxes to that extent maximum possible. So we don't want to pay the tax ma. We are planning of the investments or we are doing the some financial transaction in such a way that we will pay the tax on that incomes in future only, not present. So these are the what ma, two basic approaches. What are the basic approaches for reducing the taxable income? Majority of people are following that only ma. And on underestimated dimension, this is also we can do ma. So what is that ma? Deferring the payment of the taxes to that extent maximum possible. Clear? Next one. So these are all are very important theory questions ma. If you are open the past examination questions, you will get one question from this tax planning direct theory question. Next one, what are the basic objectives ma? You have to write it down ma. The first basic object, why you can do the tax planning, simple. Sir, if you are observing that tax planning objective is nothing but what ma? Reduction of tax liability. That is only, what is the main objective ma? Reduction of what ma? Tax liability. By way of what ma? Taking the legitimate concession as well as deductions involving in the Income Tax Act 1961. What is that main objective of the tax avoidance? Tax avoidance also same objective, reduction of tax liability only. Reduction of what? Tax liability only. But how you are doing these two things are very important ma. Here this is a moral. Because in law that isn't, yes ma, you can do the tax planning, that is an encouraging thing ma. But if you are doing the tax avoidance, that is a moral or immoral, you can't do the tax avoidance. That's why in order to prevent the tax avoidance, we have in what ma called general anti-avoidance rule. But transfer pricing chapter is what ma? Specific anti-avoidance rules. That means if any associated enterprises ESMA are entering into a transaction in order to avoid the tax with respect to the transaction, we have a specific anti-avoidance rules. That means with respect to that specifically we are inserted that anti-avoidance rules. But generally if you are talking, that is on what ma got. Next thing. So here, what is the main objective? First one, reduction of tax liability. Sir, minimization of litigation. Sir, if you are doing the tax planning, there is no litigation here. Where when we can do that, when we can face the litigation in tax avoidance, definitely we can face the litigation. So there is no litigation. If you are doing the tax planning, all the persons will accept it. That means assessing officer also will accept the chapter 6A reduction, all the things. There is no litigation here. And productive investments, I think you know one example. So right now we are already discussed. This is called as productive investment only. By way of doing the productive investments only, you are getting that deductions. Next one healthy growth of economy, nothing but I will tell you. Sir, if you are given the donations, you will get one chapter 6A reduction 80C. If persons are receiving the donation, they are also doing their activities in a smooth manner. So if you are giving the donation, you will get 80G deduction, ma. So who are receiving the donation, ma? Trust or any educational institution, they are receiving the donations, and many persons are benefited from the what, ma? Trust. That's why healthy growth of economy. And economic stability also will be possible. Example, I will tell you. If you are given the donation, you will get what, my ATG. Automatically that economy also, that means money circulation will be also possible. If you are taking the life insurance policy, health insurance policy, preventive health checkup, if you are purchasing that electrical vehicle, can you tell me what do you mean by the electrical vehicle, ma? The pollution control. So all the deductions, or yes, ma, you can take within the Income Tax Act 1961, yes, ma, these points you have to write it down, ma. Basic objectives means these are the 5 objectives, ma. Can you tell me first one? Reduction of tax liability with the minimum litigation. Productive investment. If you are doing that any productive investment based on that, what, ma, healthy growth of economy will be possible, and economic stability also will be possible. Next one, ma, essentials of tax planning. Can you tell me what are the importance of the tax planning? Sir, can I do the tax planning on my own? Yes, I can do, ma. Yes, ma, I can do on own, ma. I can do on my own also, ma. Just listen, ma. If you want to do the tax planning, that is not an easy task, ma. You have to up-to-date knowledge about the tax laws. So tax laws means Income Tax Act 1961 is enough for the doing the tax planning? No. Along with the circulars, along with the notification, along with the clarification and administrative instructions, whatever that given by the CBDT, all the things if you want, you know, then only you can do what, my tax planning. So importance of the tax planning. Okay, tax planning is not an easy task, ma. If you know that proper information, then only you can do. Next one, ma, you need to disclose the what, ma, true and material information also. You need to disclose the what, ma, true and material information also. You have to disclose the what, ma, true and material information also. Next one, ma. Avoid the what, ma, bogus transactions, etc. Avoid the what, ma, bogus transactions, etc. So nothing but what, ma, always the planning will be flexible. So please remember, ma, tax planning always what, ma, flexible, not fixed. At the time of starting of this organization, I haven't what, ma, some investment strategies as well as what, ma, tax benefits, etc. So nothing but what, ma, if anything is changed, automatically my tax planning is also what, ma, flexible only, not fixed. Are you clear, ma? So please remember, essentials of tax planning may not be important, ma, but approaches is very, very important. Objectives of the tax planning also important, ma. Next one, ma, types of tax planning. So we can do the tax planning in 3 types, ma, short range and long range. First base is nothing but what, ma, short range and long range. Short range refers to what, ma, if you are taken the benefit, or yes, ma, if you are doing the planning for the particular fiscal years, that means what, ma, for that one financial year, if you are doing the planning, that is only called as what, ma, short range. Example, if you are invested in the public provident fund, national savings certificate, can you tell me here you are getting a benefit for that what, ma, particular year only. So during the previous year, I am invested in public provident fund, ma. For this year, you are getting that ATC. That means for that 1 year, you are doing that planning. That is only called as what, ma, short range. Can you tell me long range means nothing but what, ma? We are entering into the transaction, but which not paying off immediately. Example, I will tell you. Yes, ma. Parent is giving the what, ma, one asset to that minor. So minor having that what, ma, 15 years, ma. Minor having that how many years of age, ma, here? 15 years. Sir, I think many of you know. So the minor's income clubbed in the hands of the parents only. Yes, we are the given that one asset, ma. So that means asset means nothing but what, ma, 10 crores related house we are giving. No issue. But right now, on the 10 crore house, whatever that income is generated, that is in clubbed in the hands of whom, a parent. That is taxable in the hands of parent only, no issue. But why we are planning this, ma? After the 18th year, what is the tax treatment, ma? After that 18th year, that means minor right now having that 15 years, ma. After 18th year, what will be the tax treatment? That is taxable in his own hands only. So that's why we are entering into that activities, but which not paying up immediately, but after the some years, it will be what, ma, effectively. That is only what, ma. So example, ma, clubbing is seized when that person is attains that what, ma, majority. So that means short range means for the particular 1 year we are taking the tax planning, that is only short range. Long range, we are entered into one transaction, but the benefits will come after that what ma few years, that is only what ma long range. Our target is not for this year ma, after the few years we will get the tax planning. Clear? Next, permissive tax planning ma. Permissive means nothing but what ma, under expressive provisions of the act, if you are getting that any deductions, that is only permissive. In that act, if they are the given, yes ma, example chapter 60 deduction, if you are invested in ADC or ADC investments, if you are giving the donation, if you are invested in some yes ma banks, and that interest also will be allowed as a deduction. That means within that law, if there is an express, that means what ma, clearly we have a deduction for that any amounts, that is only called as what ma, permissive tax planning. So our tax laws of our country offer many exemptions as well as what ma, many deductions. Next, purposive. What is that ma? Purposive. Purposive means there is no express sanction ma. Permissive means they are given clear express sanction of the provision. So basis of circumvention of the what ma law only we can do that what ma this planning. Example, yes ma, example, sir, if an assessee manages his affairs in such a way that his income is taxable in the hands of other person without attracting the what ma clubbing provision. So nothing but what ma, if you are observing that, if I am given the if I am giving the any asset to that wife, definitely the clubbing provision will attract. Yes ma, without the clubbing provision, yes ma, without attracting the clubbing provision, I am transferring that one asset to other person ma. So this is also tax planning. But so this is not at all suggestible ma, but law does not carry that sanction. That means this is not at all allowed under the act. But you are finding out the loophole, and by using that loophole only you are doing the tax planning. So this is an yes ma, similar to the tax avoidance only, we can say easily. But you can't say it as an what ma tax avoidance, because there is no loophole. So there is no loophole here. There is no drafting mistake also. But yes ma, in act they are not giving the exemption or deduction. But by using your mind only, yes ma, the permissive is nothing but express sanction. Yes ma, purposive is not carrying that what ma express sanction. Example, if I am giving the gift to what ma, my wife, clubbing provision it will attract it. If I am giving the gift to my grandchildren, there is no clubbing provision. Like that, if you are doing, that is a permissive. Sorry, that is what ma purposive. So very very important ma, types of tax planning. Can you repeat that what ma, types of tax planning? Please let me know. First ma,
Short range.
what is that ma? First type, first thing ma, short range and long range. Second one ma, permissive. Next one ma, purposive. Sir, if they are asking that any question, please observe ma. If they are asking that approaches of the tax planning, how you can do the tax planning? Some persons can do the tax planning by way of reducing their total income. Some persons are what ma, deferring the tax payment to that extent the maximum possible. Objectives of how many objectives ma file? Reduction of tax liability, minimization of litigation, productive investment, yes ma, economic stability, as well as what ma, healthy growth of economy. Essentials are may not be important. That means nothing but importance of the tax planning ma. If you want to do the tax planning, definitely you have to know about that what ma, all the tax related stuff. And next one ma, you have to disclose that full and material information. Example, I am taking that 80D deduction ma. You have to submit that what ma, all the medical certificates also to that what ma, assessing officer. Next, yes ma, if you are doing the tax planning, there is no need to do that what ma, any fraudulent transaction or suppression of tax or nothing but what ma, fake transactions you can avoid. Next one ma, tax planning is an always flexible. Types means, can you tell me how many types ma? 3 types. So short range, long range, permissive, purposive. Can you tell me express sanction means what ma? Express sanction means what ma? Permissive. Okay, if there is no express sanction, by way of circumvention, if you are doing that what ma, purposive. Yes. Next one ma, areas of tax planning. Our chapter is totally this is only ma. Areas of tax planning, totally our chapter is related to this only. Okay, so yes ma, so please open the yes ma, please open the yes ma, please open the workbook ma. Please open the workbook ma. Please open the workbook. I think we haven't many problems in this chapter. So this is a practical chapter. So, but in our workbook we have in theory only. Sorry, in our concept book we have in theory, but in our workbook we have in what ma many problems. Don't think about it, ma. I will show you. Just listen, ma. Just listen. Just listen. Ganesh, what are the areas of tax planning means nothing but what ma? In the following areas you can do what ma? Tax planning. The first one ma, form of an organization or ownership pattern. Sir, if any one person is an approaches to me, he wants to do the business ma. So in which form he can do that business? So in sole proprietorship form, what is the tax rate? Company, what is the tax rate? LLP. So like form of organization and what ma? Ownership pattern. So that means company means nothing but what ma shareholders are the owners. Partnership forms, two or more partners. So like this, in these also you can do the tax plan. Example. So I want to do the business at a large ma. I want to do the business in the what ma multiple states. Can I go with the sole proprietorship? No. If you are the going with the what ma company, then you have many benefits as well as what ma exemptions also. Second one ma locational aspects. Yes, if you want to start the business, yes, if you have started the business in SEZ area, you can get that what ma exemptions as well as what ma deductions also. So that's why in the area of location also we can do what ma tax plan. Next, nature of business ma. Sir, you don't have any agenda for doing that business ma. That's why if you are approached me, definitely I will suggest the what ma section 35 AD business. What is the reason behind the suggesting the section 35 AD business ma? Because if you are invested that whatever that capital expenditure, for that capital expenditure you will get that what ma 100% of that amount it as a deduction. Okay, in our syllabus we have in section 35 AD ma, not in PCBP chapter. In this chapter we have in section 35 AD. Are you understood ma? Why we haven't questions from this section 35 AD, not in PCBP? We don't have any PCBP chapter in our discussion ma. But because in tax planning area of tax planning in the nature of business. Sir, if you are going with the service oriented, yes, you can go the service oriented, the profit is very high. If you are going for the production oriented, the profit is very less. So that all the things we have to do what ma tax planning in the area of what ma nature of business. But unfortunately, we covered that some problems related to 35 AD in our PCBP chapter. Whatever the study material questions in these chapter we have that already we are covered in which chapter ma PCBP chapter. Next one ma. Tax planning in the area of corporate restructuring. Nothing but if you are observing that in business restructuring and the reconstruction chapter, we are covered the what amalgamation, demerger, sole proprietary to the company, partnership form to that company. Yes ma. Nothing but what ma unlisted public company or private company into LLP. So how you can do the tax planning by way of amalgamation, by way of demerger, that all the things also we can do the tax planning. Nothing but one loss making company is there ma. So that nothing but instead of the dissolution of that, instead of liquidation of that company, if that company is an amalgamated with a profit making company, so that profit making company can set up the what loss making company related losses also. I think you know that points already. So that is also what corporate restructuring related tax planning. Next, in the area of financial management also you can do the tax planning. Ganesh, you want to acquire the some funds for your business. So company only example, you can acquire the funds through the equity, debentures or bank loan also. So what option you will choose ma? When in which source of income? Sorry, in which source you are incurring the what low cost, you will choose that only. That is nothing but what if your return of investment on that which source is an higher, that only you will select. So this is also in our syllabus only ma. So that is next. Tax planning in the area of employees remuneration. Tax planning in the area of what ma? Employees remuneration. That means nothing but what ma? If you are recruited one employee, you are given the two options to that employee ma. Package 1, package 2. Which one you can select? That is also tax planning only. So if I am giving that option to you, sir, I want to give you that HRA or I want to give you that what ma? House rent-free accommodation. Which one you will choose ma? That is also tax planning only in the hands of employee. Next one ma. Tax planning with respect to the specific managerial decisions ma. That is nothing but what ma? Make or buy decisions. Sorry, lease or buy decisions. Sir, you want to yes ma use one machinery in our organization ma, whether I need to purchase that or I need to what ma lease. Leasing decisions question ma. And tax planning in respect of the what ma non-resident. Sir, every area of tax planning we have in question ma. I will show you that questions ma. So workbook question number 1. Please open that one. Workbook question number 1. This is an tax planning in the area of employee remuneration, ma. Sir, this is a purely salaries related knowledge. So nothing but they will give you that how many packages here, ma. Please check it out. 2 packages they are given. So nothing but what, ma, that Naresh is an employee. So here we have how many packages, ma? 2 packages. So out of that you have to calculate what, ma, which package is better. So purely salaries related discussion, ma. But finally you have to decide whether option 2 is better, because what, ma, in option 2 we have what, ma, low taxable salary. From employee side, which one is better, ma? Whichever having that what, ma, low taxable income, that is only better. So he's choosing that what, ma, package 2. Sir, many persons having the doubt, sir, we haven't questions from the salaries chapter also, not from salaries chapter, ma, tax planning in the area of what, ma, employees remuneration. In this area, I will give you the 2 options, ma, whichever is beneficial for you, you will choose that one only. So that's why. And so many expert faculties also using their knowledge towards their CMA final students, sir. So I will share you one thing. So they don't know what is that exact CMA final syllabus, sir. Example. So please check it out, this question, ma, MTP question. MTP question for that 7 marks they are the given, ma. What is this question, ma? Simply, so nothing but what, ma? Employee is Mr. Saha. Often which company, ma? Vimal and Co. So they are the given that what, ma? First rent-free accommodation, house rent allowance, both the things they are the given. You have to select what, ma? Whichever is beneficial for you. So many students or many faculties are thinking like that. So this is a salaries chapter. So that's why we want to revise that entire salaries chapter. No need, ma. This is a tax planning in the area of employees remuneration. You are an employee, you have to choose that what, ma, either rent-free accommodation or house rent allowance. Please calculate that what, ma. Please calculate that what, ma. Tax liability, whichever the taxable income. Okay, whichever is lower, that is only what, ma, you will opt. That is only employees remuneration related tax planning. You don't have any questions from the salaries chapter. Here, this is a tax planning question, ma. So they are asking, ma, analyze whether he has made that wise choice from the tax advantage view. That means what, ma? Tax planning view. So please open your eyes, still now itself, ma. So just you have to revise that what, ma? What is a rent-free accommodation related provision? That means nothing but net house rent allowance. What is that exempt? What is that taxable? Whenever in which option we have a low taxable income, that is only you will opt it on. So, but this isn't definitely mandatory. You have to do it, ma. So I don't want to discuss these things, ma, because you know already in your inter level. So what is a rent-free accommodation taxability treatment as well as what, ma, house rent allowance, ma. But this is a mandatory. You have to do, ma. So no need to do this question number 1, ma. This is an containing the entire salaries chapter, etc., etc. Okay, this is not required. Check it out the answer, ma. So that is an employee's remuneration. I think you have an answers for this, I think. So please check it out the answer for that, definitely. So you have to calculate that what is a taxable rent-free accommodation, what is a taxable HRA, and other salaries terms also they are the given, ma. Other salary terms means nothing but what, ma? Yes, ma, dearness allowance also they are the given, medical allowance also they are the given, bonus also they are the given. Finally, you have to calculate the TAP, ma. Then they are the given that what, ma? Finally, option they are the given. First, you can take that what, ma? Rent-free accommodation. Another option what, ma? You can take that what, ma? House rent allowance. That means any one of these 2 things take. So please compute the tax option 1, option 2, the taxable salary. Whichever is lower only you can select it, ma. Whichever is lower only what, ma? You can select it. Clear, ma? Yes, next one, ma. Yes, ma. Don't think about it. If any questions is from this salaries chapter also, that is in our syllabus only. So don't think too much about it, ma. Just to do this MTP problem. If there is a chance, print question will come in examination, ma. What is the reason? If you are observing that MTP 1, MTP 2, I think they are releasing the 2 MTP, ma. So every attempt, I think after few days also you can get one more MTP. Every attempt, some questions are copied from the MTP in final examination. Maybe you are observing or not observing also, I don't know. So definitely we can get this type of questions in exam. Next one. Second question, ma. This is an already we know in PCBP chapter, ma. Section 36, subsection 1, ma. So if you are taken that any loan for the purchase of what, ma, asset, up to the first put to use, you have to do what, ma, capitalize. After that put to use date, we have to do what, ma, revenue nature. That is in section 36, subsection 1 related, ma. So this is in chapter 6 reduction. Yes, you can ignore them also, no issue, ma. Third question you can ignore, ma, no issue. Next one, ma. This is only what, ma. Fourth question is an example of purposive tax planning. What do you mean by the purposive, ma? Ganesh, what do you mean by the purposive? There is no express sanction. Based on the circumvention only you can do, ma. So that is only, ma. Yes. Here how you can do, ma? Example. What is this question? I will tell you. I will tell you this question, ma. Important maybe. Sir, if you are observing, many persons are thinking it as an what, ma? Sir, this is an house property related question, sir. We want to revise that entire house property. No need, ma. No need to revise that entire house property. This is an purposive tax planning related example. Example. So A owned 2 residential houses, ma, for residential purpose. Okay. Next one, ma, what is the gross annual value and municipal taxes and interest on loan taken for the construction of house also? They are given with respect of the 2 houses. On 1/4/2023, Mr. A gifted the ESMA 25 lakh to her wife, ma. How much amount is given to the wife, ma? 25 lakh. Out of such money, she acquired the ESMA a house property for own residential purpose. What is that, ma? Own residential purpose. Okay. The new house gross municipal value is 2,50,000, ma. Nothing but husband having how many houses, ma? Right now, 2 houses. I am giving the gift to wife with the help of that gift. She purchased that house, ma. Okay. Can you tell me municipal taxes how much she paid, ma? 2,000. Compute that income from house property of an husband as well as wife, ma. So I think you know one point. How many houses you can occupy as a self-occupied, ma? 2. That means these 2 houses I can occupy as an what, ma? Self-occupation. So that's why, yes, ma. Can you tell me? Can you tell me that answer, ma? What happened?
Sir, I capture the sir.
టీవీలో బాగా వస్తుందా? పొద్దున్న పడుతుంటే ఏముంటుందిరా? So just wait a minute, ma. I think a tab and all the things are struck. That's why. Tab issue, ra? Yes, ma. Can you tell me how many houses he can occupy, ma? So he can occupy the how many houses, ma? 2 houses he can occupy as a self-occupied basis. So can you tell me net annual value will be taken as a 0 for the self-occupied houses, ma? Next you can take that what, ma? Interest on borrowed capital. Can you tell me 20,000 plus 25,000 as a deduction? You can't get the standard deduction also for the self-occupied properties, ma. So that's why you can take that what, ma? Income from house property as on what, ma? 45,000. Yes, you are the given that gift to your wife. That means nothing but what ma? If husband given the gift to your wife, yes ma. If any income earned on that gifted asset, that needs to be what ma clubbed, because husband only treated as what ma deemed owner under section 27 ma. If any gift isn't given by the husband to wife, out of that she purchases that what one house property. If any income earned on that house property, definitely that income should be taxable under house property head in the hands of the husband only, because the transferor will be treated as what not deemed owner. But he isn't planned in a way that, can you tell me, wife also can occupy how many houses as a self-occupied mark too? So that's why whatever that income is there in that wife hands mark zero. If you are taxable that amount in the hands of husband also okay, because if any income is and arises in the hands of wife, that should be taxable in the hands of my husband. Here, what will be happen ma? Wife also can occupy that how many houses ma? Two. So nothing but here we are giving the gift ma. So that's why normally we are giving the gift. If you are the given that any gift, automatically here apply section 64 subsection 1 class 4 gift to wife provision will applicable ma. So can you tell me, income is arises on that gifted asset, out of that gift she purchases that house ma, and house whatever that income is generated zero, that zero is clubbed in the hands of husband ma. So this is only the purpose. There is no expressive sanction of what my tax planning, but intentionally you are doing this tax planning. I'm giving that gift to that wife, 25 lakh cash I'm given ma. If she deposited in a bank, automatically that is a taxable in my hands only. If 25 lakhs she deposited in a bank ma, automatically that interest amount is taxable in husband hands only. Intentionally she purchased a house. How many self-occupied houses per SSC ma? 2. Out of that she earned that how much income ma? 0. That 0 is taxable also. This is only tax planning, purpose of tax planning example. Next question ma. Question number 5 already done ma. If you know that question number 5 already done. Question number 7. This is a tax planning in the area of what ma financial management. So I think in your FM, I think you are doing this type of problems ma. So example I will tell you ma. So here company wants to acquire how much amount from that ma? Company requires the 50 lakh amount for that expansion of their business. How much ma? 50. You have an option 1 ma. You can generate from these 3 things. Option 2 also there. Option 3 also there. That is a combination of what ma? Equity, debt as well as what ma? Loan. Which one isn't better for you? You will choose it down. Which one isn't better for you? You will choose it down. Please calculate that what ma? Return of income. Please calculate what ma? Return of income. That is nothing but return on investment. Sorry, return of income. No, return of investment. So that is nothing but what my formula, profit after tax divided by equity share capital into 100. So whenever which option you are getting that more, that is only what ma better. Sir, this is a very important model. So if students are having this question in that examination, they are thinking, so in tax they are asking that financial management also. No. This is a tax syllabus only. Similar question we have ma. Similar question we have. That is only I think question number 16 ma. So here also simple ma. You have to calculate what ma profit after the cost. So if you are believe, I think many students or may not be believe sir, in your workbook you are included the nonsense questions also. Shall we do that all the questions ma? No need sir. I will show you one examination question paper that is in December 2022 sir. Yes ma. Okay. Right now maybe you can believe ma. This is only the same question for 8 marks. Sir, no need to get in tax knowledge with respect to this. If you having the knowledge of that how to calculate the return on investment, that's enough ma. So they are given that what ma earning before the tax. That means tax rate they will give you, and all the things they will give you ma. You have to calculate the what ma return on investment from the each option, like purely financial management question. So please be practice with respect to these questions. Yes ma, definitely in our exam these only the questions ma, because if you are doing the CA final, if you are taking the coaching along with that what ma CA final, this will not cover in our in their syllabus. Exclusively in CMA final material, we have these questions, ma. Definitely you will get. Okay. So I think right now you will believe that words, ma. because I show that what ma some proofs also. So these are only the practical questions. No need to do that tax. Okay, if there is PCBP, we haven't separate questions from the PCBP. MAT, we haven't MAT questions, but in tax planning, so we have to do that what ma salaries chapter related some questions and financial management related question. Yes ma. Next what ma? If you are observing that what ma purpose of tax planning concept also. Yes, Ganesh, please take it on the screen. Ganesh, please take it on the screen. Next, one more thing I want to show it to you. If you are open your study material ma, I am not included this question. That is in what ma? Tax planning in the area of lease or by decision ma. Okay, tax planning in the area of what ma? Lease or by decision. Intentionally, I ignored that concept in this workbook ma, because in SFM we have in same question ma. That also we can get, because we want to calculate what ma present value of the cash inflows. If you are taking the leasing decision, what is that outflows? If you are the purchasing, what is that outflows? You have to calculate by using the TVI of factors. So that is also in our syllabus. I will show you. What is that ma? CMA final, it is study material. Group 3 only. So don't think about the Vatma whether we are able to write it down or not. First you have to know about that Vatma applicability, then automatically you can write ma. So can you tell me, anyone, can you help me whether it is a tax planning chapter in which page ma? 293. So there is no such option, that's why. Yes ma. So this is only what ma, I'm already covered in this our question ma. Unsolved case also given in our exam. So in our workbook this is also covered. And I want to show you. Yes, question number 6 ma. I think this will be covered in our SFM ma. That's why I am not included here. So please check it out the question. This is also you should prepare before going to the tax exam ma. Because this is not an SFM problem. Because okay, in managerial decisions you have to apply your tax planning. That is only. So please check it out the question ma first. So whether you are able to solve this or not, I want to know. Yes ma, can you solve this question ma? Cost of ownerships and cost of lease you have to calculate. Whichever is lower, that is only beneficial for you. Yes ma, all of you in that class, please let me know, are you able to solve this question ma? Sir, in tax planning, no need to get an action. First, you should know the meanings of the tax planning, tax avoidance, tax evasion, tax management ma. Then base theory questions, approaches of tax planning, objectives of tax planning, types of tax planning. Then in areas of tax planning, we will get a question ma. 35 AD section you should know. 35 AD specified business section you should know. Then employees remuneration, this MTP question you should do. Mandatorily you need to do this question ma. What is that ma? What is that MTP question ma? Whichever, whether HRAs are beneficial or rent-free accommodation beneficial. Next, financial management ma. That is nothing but what ma? While you are acquiring that funds, whichever is an option is a beneficial. That also you should do. Next, third type ma, lease or buy decisions. That's enough. Lease or buy. Yeah. In study material, you have to do this question also. Because why I'm not included, maybe I'm not an expert in the field of what ma, calculating the PVAF factors, etc., etc. I don't know. That's why I don't want to include this in that. Yes, ma, because the DT as well as SFM in the same group only. So that's why student can able to write that all the things in easy manner. So, but we practice that what ma financial management related question. So which option is an given that what ma best return on investment, that is only the better for you. And the last theory question we have ma, very important theory question we have, that we will discuss. So tax planning is not a difficult chapter, sir. Students are felt it as a difficult because it involves the various concepts. If they are asking the question directly, yes, you can write it down. But from where they are asking the question, many students, they don't know from which chapter this question is belongs to. Also, they don't know, sir. Yes, still, if they are giving this question, they are allocating this question for that what ma? Maybe this is a basic knowledge question. No, tax planning question, ma. Yes. So last theory question, ma. Tax planning cells. So tax planning cells. Okay, they will give you that question as an what ma? Write a short notes on tax planning. Sir, will it be easy to manage the tax planning in your organization, ma? No. So definitely various organization having that what ma separate tax planning departments, ma. Example, if you are taken that TCS, ma. Sir, TCS tax planning can be done by the one department separately, that is only called as a tax planning department or cell. Why we need to incorporate in every organization one tax planning cell, ma? You have to give the justification. Why we want to recruit the separate tax planning department? Cell means nothing but what ma department in our organization because of the what ma complexity and the volume of the work. So the tax planning cannot be done by the one person, ma. It can be done by the what ma team of persons. That's why there is a large work and the complexity involving that work. So that's why there is a large work you have to involve. And next what ma highly complex works also involved. That's why we want to appoint the special tax expert along with his team. So if you are appointed one special tax expert like CA or CMA, if you are appointed, that's enough to consider as an what ma better tax planning cell. If you are recruiting the staff also, then only that isn't called as what ma tax planning cell. Sir, you have to maintain the separate documentation. I will tell you a simple example, ma. So they are planning that one organization in SEZ, ma. In order to take that SEZ deduction, they have to maintain the full and each and every document, ma. If you want to take that what ma tax management, can you tell me what do you mean by the management, ma? In order to pay that advance tax, in order to pay the TDS and TCS in timely manner, if you want to pay the self-assessment tax, all the things we need to manage that in proper manner. So that's why definitely we want to appoint that what ma one separate tax planning cell. Example, in TCS, how many employees are there, ma? Every employee, from that we have to deduct the TDS amount. The TDS needs to be deposited within the next month, the due dates only. And next, every employee who is working in the TCS, we want to give that what ma form 16 in every year. So we want to take that what ma all the allowances as well as deductions are submitted by the employee. So these are all the things will be calculated by one person. No, that's why we haven't what ma separate tax planning cell in our organization. So please remember the settings. That's enough. Complexity and volume of the work, separate documentation we have to maintain, and data collection. So this is only my form 16 related point. Sir, staff is nothing but what ma needs to collect the what ma various details, and based on that what ma latest circulars, latest case laws, etc. things. Sir, nothing but right now. Last year we haven't what ma 5 lakh below, there is no tax liability. Right now the rebate amount is what ma, in order to claim the report, even though if you haven't sorry, total income less than what ma 7 lakh, you can take that what ma rebate. Like this, yes ma, every staff is concerned within that what ma tax planning department. They are one ma keep on collecting that what ma information with regarding the circulars, case laws, and income tax amendments, etc., etc. And always, if you are observing about, if you are doing the purchase, always the tax is linked. If you are doing the selling, always the tax will be linked. If you are procuring the funds, tax also will be important factor. If you want to purchase any asset, tax also important. So for everything that will be integrated with the what ma tax planning cell only. If you want to do anything in your organization, always you have to think about the what ma tax planning cell. Next, constant monitoring if you want to do ma, and developing that what ma tax alternatives. That means what ma, okay, if you want to start a business, yes, you can start the business in what ma locality A or locality B. If the locality B is an SEZ ma, definitely we can do the business in where ma SEZ only. So that is only what ma developing that what ma tax effective alternatives. And if you haven't that what ma tax planning cell in our organization, automatically you can take the advantages of what ma various allowances as well as various deductions. So nothing but, sir, if you are filing the return of income on your own, definitely, if software engineer filing the return of income on his own, ma, he can take that 80U, ma. Can you tell me 80U can be taken by whom, ma? Disabled SC. So So many persons are declaring that what my deductions based on that what my amount of deduction we can claim which in which sections has an higher, that only they are selecting ma. They don't know what is the intention behind the what ma giving the allowances as well as deductions also. But if you are an expert tax manager, automatically you can do that all the things in a what ma proper planned manner. Clear? This is only the what ma tax planning cell. But many students are not reading these theory questions ma. If you know the theory question, that is a concept. What is a concept? Yes, you can write on your own also. In every organization, we are incorporated the separate tax planning department. What is the need of that? Simply, the tax planning is not an easy task. That's why we have to appoint that what from an expert person along with the staff. Separate documentation we have to maintain, data collection, integration, continuous. We have to monitor that what are the changes are made. Planning is an always what flexible only, and develop the what effective tax alternatives. Next one must take the advantages of what various allowances as well as what deductions. So differences between the tax planning and ESMA avoidance and management, no need to read. Just I am giving the summary of on what we have discussed earlier. So can you tell me approaches? Tax planning, how many approaches are there, ma? Approaches. Tax planning, how many approaches? I am asking the tax planning approaches for all of you. Two approaches only, ma. Reducing the taxable income. Nagarajan, I am asking that approaches, ra. Two only. Approaches are two only. What are the two approaches, ma? Reducing the taxable income, deferring the tax payment to the extent maximum possible. What are the types of tax planning, ma? Three. You don't believe kada? Okay. Whether these questions are came in an examinations or not. You don't believe in kada? Yes. Okay. So please check it out this question paper, ma. We haven't what, ma? 4 marks. Basic approaches. 4 marks. In this exam, we have a tax planning chapter 12 marks, ma. This is a 4 mark question. This is an 8 mark question. So that's why I am giving you instruction like as a don't ignore any chapter as a choice. If you are given the choice for any chapter, that will be 16 mark question. So in your examination, that will be 16 mark question only. So that's why if I am starting the small chapters, many students are thinking, no, please tell me that important chapter. How you can treat that as an important? In every attempt, ma. In every attempt, this is only the trend. Yes, ma. Okay. Final thinking, ma. Final thing. What are the things we have to learn from this chapter? Summary. First, ma. Meanings of the Ganesh, please listen. Meanings first you need to know, ma. Okay. Meanings of what, ma? TP, TA, TE, TM. What are that, ma? Second thing, approaches. Can you tell me how many approaches you have, ma? Objectives. Objectives, nothing but what, ma? 5 objectives you have. Next one, ma? Types of tax planning. Types of tax planning. Next, problems, ma? Problems. Yes. So, if you are knowing that meanings, I think you can write that what, ma? One problem also. Yes, sir. I think if you are knowing that meaning, yes, you can do some problems also on that. Next, please do that what, ma? Financial management related. That means what, ma? Source of incomes, alternatives. Which one is the best? Next one, you have to do that what, ma? So MTP problem. That is nothing but what, ma? Employee remuneration related. Employee remuneration related. Employee remuneration related. Next one, ma? Next, you have to do that what, ma? So that means lease or by decision, ma. Lease or by decision. I think from study material. Yes, my illustration 6, ma. That is. So that is nothing but what, ma? Illustration 6. Next, the last and final one, ma. So Purposive tax planning example question is there. Purposive tax planning one example question. I think in our workbook that is in question number 4, man. That is in question number 4. These things are enough, ma. If you are observing that, yes, ma, if you are observing that in this chapter, always we have in questions from these 3 areas, ma. So please make an observation. Always we have in concepts or questions from these 3 areas only you will get, ma. So what are the 3 areas, sir? First area, associated enterprises related question, ma. What is that? Associated enterprise related question. What do you mean by the associated enterprise, ma? Here that means deemed to be treated as an associated enterprise. On that also you can get a question. Yes, ma, that is a very, very important, ma. In every attempt you will get one question from that, ma. Next thing, EALP. So I think you know if any international transaction as well as specified domestic transaction is there, we have to record that ESMA transaction with about arm's length price. I think you know that provision very well. You have to record that a transaction with an arm's length price, how we can compute the arm's length price. What are the different methods are available for computing the arm's length price? That all the things we will get a second question, ma. Sir, in one attempt, they are given all the 3 types of questions also in exam, ma. So that's why very, very important. Second one, how to compute the ALP. What are the different methods we have for computation of ALP? That is in second point, Ganesh. Third questions, procedural related, ma, the remaining chapter. Yes, ma, that is a remaining chapter. On the remaining chapter also you can get one question. So this is on how we are preparing for an examination. What are the important areas? These 3 are important. That means the first AE, if you are revising, you will get 8 marks, sir. Next, arm's length price related methods, if you are discussing, 8 marks. The remaining chapter will alone, yes, ma, procedural, nothing but theoretical part. So nothing but they will give you the theory. Based on the theory, you have to write that answer for that question. So that alone will give you that what, ma, the remaining 8 marks. The totally you will get around 20 to 24 marks from this chapter only. Ganesh, okay? So just we will discuss the what are the sections involving in this chapter, ma. So the first section, section 92, already you know, computation of income from that international transaction. Ganesh, can you tell me, while you are entering into that international transaction, you have to calculate that income, ESMA, from the transaction based on arm's length price or actual transaction price, arm's length price. That is only ESMA section 92 content, ma. If any transaction said to be as an international transaction, that has to be recorded with the what, ma, arm's length price. Next, 92A is a nothing but the meaning of associated enterprise. It includes the what, ma, deemed to be treated as an associated enterprise. The discussion is contained in the 92A. And 92B we have, and what do you mean by the international transaction, Ganesh? What do you mean by the international transaction? Can you revise the what do you mean by the international transaction? Yes, ma. If any transaction happened between the 2 associated enterprises, out of that one associated enterprise is a non-resident, the transaction said to be what, ma, international transaction. And we haven't deemed to be treated as an international transaction also. That is also covered on 92B. Next. To be frank, we have to discuss this concept only right now, but we will discuss this concept at the end, ma. So that is a determination of arm's length price under section 92C. So how we can compute the arm's length price from the international transaction? So that is a 92C. I think you know determination of ALP only the second area we have to learn in this chapter, ma. We have to learn in this chapter, but I will keep this point as an what, ma, pending. So, but just overall I will give you, sir, in order to find out the arm's length price, we have an different methods, ma, that all the different methods can be classified into 2 parts. One is a transaction based methods and second one profit based methods. So if you are coming to the transaction based methods are very, very important in examination point of view, ma. What are the transaction based methods you have for the computation of the ALP, ma? One is a cup method, another one is a resale method, third one is a cost plus method. Third one is nothing but what ma? Cost plus method. Please revise what are that ma? CUP method. Comparable uncontrollable price method, resale price method, cost plus. In every attempt we are getting these questions only repeatedly in our examination ma. Profit based method we have in 3. Profit split method, transactional net margin method, and any other method. But in last attempt old syllabus we got a question from the transaction net margin method ma. So that's why we don't want to ignore that also. So that we will discuss one example and how it operates also. So how many methods we have to discuss? To 4 methods only ma. One is on what ma? CUP method we will discuss. Ganesh, CUP method we will discuss. Resale price we will discuss. Cost plus we will discuss. And transactional net margin method we will discuss. Sir, in our institute material, what are the methods related questions we have? To be frank, we have only these 3 methods related questions only in our study material. But they are asking beyond also. That's why we will discuss transactional net margin method also. So my guess is nothing but you will get question from the CUP itself. So don't think about, okay, if you are thinking out of that box also, yes, we will learn these 3 ma. Next, Ganesh. So the remaining concepts we will discuss one by one. At the end of the chapter, we will discuss the what methods for computing ALP. Methods for computing ALP. And Parvati, Nagarajan, and Madhumita, and Graneshwari, Ganesh, and etc. All the persons. So I don't want to skip any concept. This is a regular session only. I will take the more number of hours, but I will give you the many problems as a homework. Many means nothing, but if that isn't difficult for you, I will solve in the classroom itself. If that is an easy, then there is no value addition. I will give you that problems as an what ma homework. Okay, just. So this is an important point ma. Please listen carefully. Just I will ask you one question first of all. Sir, normally, yes ma. One person entered into that international transaction, that is in sale of computers or purchase of computers or any item. So nothing but who needs to enter, that means at the time of filing of return of income by that SSC itself, he has to file the return of income with the arm's length price, or arm's length price needs to be computed by the assessing officer. So just a simple question. I already entered into one international transaction. Okay. So at the time of filing of return of income by the SSC, he has to, that means whether he has to enter that or filed with the filed the return of income with the arm's length price, or arm's length price finding out is a responsibility of assessing officer. That means arm's length price needs to be identified or finded by the SSC or assessing officer. That is only my simple question. So please give me your answer. That means yes, definitely we have to compute that what arm's length price by using these methods. So whether this has to be computed by the SSC, ESMA, for the purpose of filing of return of income, or these are all the things needs to be computed by the AO. What's your answer? Please participate ma. Just anything also okay. AO. Well done, Ra. Remaining ma. Yes, Madhumita, that is incorrect, ma. Needs to be computed by the SSC only. That is one of the mistake conducted by the students, ma. So that's why I'm given the one total point. Okay, you have to remember this point for the entire chapter, ma. Remember. Sir, here SSC entered into international transaction or specified domestic transaction. For that SSC, which provisions will applicable? Ma? Transfer pricing provisions will be applicable. Ganesh, are you clear? Yes, transfer pricing provisions is applicable for that SSC without any doubt. Okay. So normally he entered into the transaction with the actual transaction price. That is not correct, because if you are entered into the transfer pricing provisions, the transaction has to be recorded with the what ma? Arm's length price. That is not correct. That's why we are cancelled that all the things. At the time of filing of return of income, at the time of filing of return of income, I think you know, if any SSC entered into the international transaction or the specified domestic transaction, yes ma, he has to, yes ma, he has to, yes ma, file the return of income on or before 30th 11 of what ma? Assessment year. So at the time of filing of return of income, he has to find the ALP. Based on that arm's length price, he needs to file the return of income. That means arm's length price finding over the responsibility within the hands of whom SSE only. So within the hands of whom SSE only. Okay. After that filing of return of income, assessing officer, he needs to verify whether that arm's length price is correct or incorrect. Whether the arm's length price is correct or incorrect, that needs to be identified by the whom assessing officer. Sir, assessing officer is not an expert in the field of computation of arm's length prices, so that's why he will refer the all the things to the transfer pricing officer. So that is nothing but who have an obligation to complete that assessment AO. At the time of doing that assessment, they have doubts over the whether that SSE computed the correct arm's length price or incorrect arm's length price. That's why he has to verify that with the reference given to whom a transfer pricing officer. If you want to give the reference to the transfer pricing officer, you have to obtain the prior approval from the Commissioner of Income Tax. You have to obtain the prior approval from the whom Commissioner of Income Tax. Okay. After that, giving the reference, transfer pricing officer will give you that ALP report. That means arm's length price report needs to be given by the TPO to whom AO, because the reference given by the AO. So that's why the report also will be given to whom AO only. So, but very, very important point. Assessing officer needs to bind it over on the TPO order. The TPO given the TPO means whom transfer pricing officer given the order as an transfer pricing officer given the order as an yes why how they are giving the order one arm's length price they are given. For that arm's length price you have to bind it over. Yes, next. Based on this arm's length price given by the transfer pricing officer, assessing officer will pass the assessment order. So what is that assessment order? Ganesh, I want to tell you one simple example Okay, simple example. You have filed the return of income with the you have filed the return of income with the total income just 1 CR you are filed That means, okay, you are also find it over the one arm's length price. Based on the arm's length price only, you are filed the return of income. The total income is 1 crore Ganesh. But based on the TPO order, so that arm's length price may be increased or decreased, whatever it may be. So based on the ESMA, your total income increased your total income is nothing but 2 crores based on the arm's length price finded over by the TPO. So that means you have filed the correct type of return of income or incorrect incorrect only. Because you have filed the return of income with the arm's length price only, but you are unable to find it over the correct arm's length price. So that correct arm's length price is given by the TPO. Based on the TPO order, what is the total income 2 crore? Can you tell me what is an enhanced income? 1 crore. Okay. I think you have some chapter 6A deductions, that is also income based chapter 6A deduction, Ganesh. So that means if you are earning that income, on that income you will get the chapter 6A deduction. And you have in section 10AA also, that means first 5 years you will get the 100% of export profit exempt. Next 5 to 10 years you will get 50% of export profit will be exempt. 10 to 15 years 50% of export profit or amount invested in SEZ reinvestment allowance reserve amount, whichever is lower, is exempt. So that means previously I am taken on that 1 crore these exemptions as well as deductions. So that means 1 crore is an income. On that income we are taken the chapter 6A deduction only. So can I take right now on 2 crores? No. If any income is increased by the assessing officer order and that enhanced income, you can't claim the chapter 6A deductions under section 10AA. If you want to claim, Yes, truly you can declare in your return of income, you can claim all the things easily. Secondly, I am only increasing that income right now, and that you can't take that what ma section 10 AA as well as what ma SEZ related deduction. So this is definitely helpful for your total chapter understanding ma. So are you clear ma up to now? Who have a responsibility to calculate the ALP, SSC, that needs to be verified by the whom? Assessing officer. So assessing officer can verify the ALP on his own? No, he has to refer to whom? TPO. TPO giving the order that should be binded over on whom? Assessing officer. Assessing officer based on the TPO order, assessing officer given the AO order, on that AO order who has to bind, who cannot take the deductions, ma? The SSC cannot take these two deductions. Clear? Yes. Yes. So the right now we will forward to the discussions, ma. So 92 over 92A over 92B also over, Ganesh. Yes, 92 CA. Shall we start the discussion related to 92 CA, Ganesh? So what is that, ma? The reference to transfer pricing officer. So please open the chat box and who can give the reference to the TPO? Who can give the reference to the TPO, ma? AO. AO can give the reference to the TPO. Yes, ma. So just I will give you that all the things in that material itself, ma. So I will give you that all the things in the material itself. Please open the material relating to transfer pricing, ma. Yes, ma. That is a theory based questions. On these also you will get questions, ma. On these also you will get questions. Don't, yes, ma. Don't, yes, sir, neglect these type of questions. Definitely these are all also very, 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 very important. So, sir, if you are learn the transfer pricing methods, maybe you will get the some marks only. You can't get the full marks, ma. That's fine. Shall we start, ma? Ganesh, shall we start these questions? Yes. So, first, just I will give you that overview of the chapter also from the material itself, ma. Overview of the chapter also. Can you tell me the transfer pricing? So, heading is nothing but what, ma? Transfer pricing. So that is 92. Can you tell me if you are entered into that international transaction, that all the international transaction needs to be recorded at what ma arm's length price? Because of that arm's length price, always what will be done, ma? Yes, ma. So total income will be what, ma? Increase. Please let me know. Total income will be what, ma? Increase, and your loss will be what, ma? Decrease. Then transfer pricing provisions will applicable. So, but here, if that income work out the figure lower than the income shown in the books of account, that means what, ma? Your total income here what, ma? Decreased. Your total income is what, ma? Decreased. If your total income is decreased, transfer pricing provisions will not apply. So what do you mean by the transaction? Transaction may be goods, services, intangibles, loans, guarantees, anything also. All the things should be recorded at what, ma? Arm's length price. The recorded with the what, ma? Arm's length price. Please observe, Ganesh, here. Associated enterprises and the taxpayer. That means what, ma? SSE. So here that SSE entered into the transaction with that associated. That is an actual transaction price. That is a transfer price only. But we have to find out the what, ma? Arm's length price. How you can identify the arm's length price, ma? If any independent entity and SSE. That means what, ma? If you are entered into that what, ma? Unrelated party. If you are entered into the transaction with the what, ma? Unrelated party. Yes, ma. Then that only, yes, ma, called as on what, ma? Arm's length price. So this is definitely the compromised price, ma. That is not called as an arm's length price. If you are entered into the transaction with the any independent entity, that is only called as what, ma? Arm's length price. Next, we have a 92 over 92A associated enterprise, Ganesh, and we have an what, ma? Deemed to be treated as an associated enterprise. These points only I gave it as a notes in an earlier session, ma. Next, what do you mean by the international transaction? 92B is an international transaction. In that itself, we are done with the what do you mean by the deemed to be treated as an international transaction. So 92C is nothing but what ma arm's length price. So that only we are kept it as an pending in this chapter. Last we will discuss the methods and problems ma. Ganesh, next 92C is nothing but what ma arm's length price. Yes. So we will go to that what ma determination of ALP by the EAO. Yes ma, sixth concept ma, just start that concept. Determination of ALP by the EAO in 248 pages. First of all, who have an obligation to compute the ALP ma? SSC. Ganesh, 248 page, please open ma. Who have a responsibility to compute that ALP ma? EAO, just EAO. First SSC, after that who ma? EAO. Okay, first SSC has to compute. Please listen. Yes ma. In the following reasons, yes ma, sorry, in the following reasons or in the following cases, who has to compute the ALP ma SSC? Because yes ma, SSC failed to compute ALP as per that most appropriate method. I think you know some transaction based methods are there, some profit based, but you are not choosing the correct method ma. So you are not computed the ALP as per the most appropriate method, and data used in the ALP is also not correct or not reliable. The relevant documents are not maintained by the SSC and fail you to furnish that information and documents required to maintain under section 92D. Sir, nothing but in this chapter we have to maintain all the documents relating to the international transaction, ESMA, under section 92D. In the following four cases, you are unable to compute that ALP. So that's why who have a responsibility to compute ma? AO. So that is only the heading, determination of ALP by the AO. If you are computed as it is what I am expecting, that's over. You are not computed as per the correct method of, yes ma, you are not taking that in, you are not taking that what ma correct data, and you are not furnished that information also, and you are not maintain the relevant documents also. So that's why I'm not believing in you. Yes, that is an incorrect ALP you are computed. That's why I will compute that what ma ALP on my own by way of giving the reference to TPO. That is only ma. Yes, in this situation, suppose Ganesh, you are computed that ALP as an ESMA 125 rupees per unit you are computed. So, but I'm not satisfied with the way of your computation. That's why I will give you one opportunity of being heard, Ganesh. So, because I'm going to compute the arm's length price once again, that's why I will give you an opportunity of being heard. Yes, I will compute the ALP. After that computing the ALP, what is that effect? Please remember, you can't claim the Watma chapter 6A deduction and as well as 10 AA allowed against such increased income. That point I already completed. So normally if your income is nothing but Ganesh 1 crore only, but based on the arm's length price computed by the AO that increased to 2 crores, can you claim that can you claim on enhanced income these two deductions? No. Next, one more effect, Ganesh. That income of other enterprise shall not be recomputed. So that means if you are observing that whatever that computations you have to done, that all the things can be done in the hands of that B Limited only. That means what is that Indian company? That income only you have to increase, that loss only you have to decrease. You should not do any adjustment in any other companies ma. That means this is an international transaction. So that's why you have to do on your own country related entity only, and it should not be on what ma other entities related. Are you clear up to now? Yes. Next thing. The reference given to whom ma transfer pricing officer. Yes ma, whatever the points I told you, please underline that points. That points alone are very, very important. The remaining points you can ignore on your own also, no issue. So 92 CA, can you tell me? Yes, here ALP can compute it by the AO directly, ma? No, he has to take the help of who? Transfer pricing officer. Ganesh, okay. AO is an of an opinion. AO is an of an opinion. Yes, ma, it is a necessary and it is an important. He shall refer the case to TPO with the prior approval of whom CIT.
That itself we are covered in this diagram itself, ma. With the prior approval of CAT, we can refer the case to whom, ma? Transfer pricing officer. With the prior approval of the Commissioner of Income Tax, we can refer this case to transfer pricing officer. On such a reference, transfer pricing officer can call upon the SSC to produce the evidence or computation in support with the ALP. So that means this transfer pricing officer have a right to call the SSC and provide the information for computation of what, ma? ALP. So this is one point you have to remember. So how you can compute? Yes, simply I will call the SSC and I will call the SSC and I will ask the what, my important information. Okay. Already I started the what, ma? Proceedings of the computation of ALP. If any other transactions are identified during that course, I will consider the what, ma? That all other transactions also. While computing that what, ma? ALP, if any other transactions are there, that other transactions also will be considered for computing. TPO shall pass an order for the determining after considering the evidences, after considering the what, ma? Evidences and the material gathered from the SSC. Yes, ma, can you tell me that order shall be binding on whom, ma? AO. That all the points we are already recorded in this diagram itself, ma. If any order passed by the TPO on that, who needs to create that binded over, ma? AO needs to create the binded over. Next. Yes. Ganesh, please listen these things, ma, without writing anything. Please listen. Yes, ma, all of you. Sir, I have a certain time limits for passing the assessment order. I think you know. So I haven't certain time limits for passing the assessment order. But here, much time is wasted with the whom, TPO itself. If I am referring the what, ma? Transfer pricing officer, so definitely much time is wasted with these proceedings only. But how can I pass the assessment order within the time, ma? So that's why there is an extension. So how many days extension, ma? 60 days extension will be there. Yes, ma? 60 days extension will be there. Just remember this point. That's enough. No need to remember. Yes, ma. So nothing but what, ma? Assessment is pending by the, yes, ma, court or reference has been given under 1998. Time available to TPO is less than 60 days. That means simply, yes, ma, TPO haven't certain time less than 60 days to pass the order. So for TPO order, he can give that what, ma? Extension of 60 days. Please remember, not for that AO, ma. Here, so in order to pass the TPO order to whom, AO. So if the time limit is unavailable within the less than 60 days, the time limit can be extended to the how many days, ma? 60 days. So this extension is given to TPO, ma. Based on the TPO order, who needs to pass that order, ma? AO. For that AO, they are given that extension is 12 months, ma. So are you remember? The many students are mixing these two, ma. So normally for that passing the transfer pricing officer order, if the time limit is unavailable less than 60 days, that extension will be given to 60 days. So based on the TPO order, who needs to pass that AO order, ma? Assessing officer needs to pass the AO order. For that, the time limit can be extended by how many months, ma? 12 months. Are you clear that, ma? 92 CA, Ganesh? Online students also, are you understood that flow of discussion, ma? Nivedita, I think, yes, ma, all of you. So please remember the discussion. What are the things we are done, ma? So as of now, we are done with the 92 CA. So the most important concept, 92 CC. That is an advanced pricing agreement. Okay. Just we will discuss something, ma. Just we will discuss something. Ganesh, we entered into one international transaction, Parvati, and just we are entered into some international transaction. Okay.
we have a responsibility to compute that ALP. Based on that ALP, I have to file the return of income. Okay. Anyhow, so different methods are there. By using that one of the method, I computed that ALP and I filed the return of income also. Ma. But always assessing officer, yes ma'am, pointed our calculation and he has to revise that what ma ALP by using the TPO. Every year that only happened. So if I am saying 125, he said 150. And next year if I am said 150, he said 175. So the always there is a differences among the SSE as well as assessing officer with regarding that what transfer pricing related provisions applicability. Yes, that means ALP computation related differences are there. So how we can overcome these all the difficulties among the arm's length price computations? That is only advance pricing agreement. So if the department and SSE is entered into one agreement, so that means if I am asking with the one agreement, so within that agreement itself, they will give you that exact arm's length price as well as how you can go for the computation of arm's length price if they are giving the procedure. With the help of that price only, I will file the return of income. So then automatically that easily accepted by whom? Department in the assessment also. The many matters will be closed. So if I am filing the return of income with the arm's length price mentioned in that advance pricing agreement. In advance, that means what? So today I am entered into the pricing agreement. That means advance pricing agreement. It is for the future. So that means, okay, we will mention some terms and conditions also. Example, okay, example. Sir, I am purchasing the last 10 years from the England, in England. That is one associated enterprise in England. So we are purchasing the goods from that England only last 10 years, this much of quantity of goods. If you are giving the previous year's data, based on the previous year's data, yes ma'am, central government and CBDT, yes ma'am, with the approval of central government, the CBDT entered into the advance pricing agreement with the SSEs. So that SSEs can easily file the return of income, that easily verified by the AO also, whatever the price mentioned in that advance pricing agreement. Sir, if you are entered into the advance pricing agreement, here one logic you have to perform. These two sections having the no applicability. Why? Sir, in ESMA, why these two sections having the no applicability? I will tell you. ESMA, I will tell you. Because in that advance pricing agreement, ALP is in 125, they are mentioned. If I am filing the return of income with the 125, ESMA, no need to calculate ALP by using this method. And if I am filing that with that ALP, there is no reference made by the by AO to whom TPO, and AO also can complete that assessment easily. So are you understood? Yes, that is only we will discuss advance pricing agreement. Yes. Please listen, Ganesh. For this session, it is very, very important. 92 CC advance pricing agreement. Ganesh, what is that company? X Limited is there for the previous year 23-24, assessment year 24-25. Yes, we are asking for the advance pricing agreement. Anyhow, they are given advance pricing agreement. Please remember, advance pricing agreement is applicable for the future 5 years, including the present year. So this is an 1, 2, 3, 4, 5 years. Sir, but if you are entered into that advance pricing agreement, within that advance pricing agreement, they will give you the time period also, the maximum period for the future years. Can you tell me how many? 4 years, excluding the present year. That means totally if you have computed 5 years. Okay. Yes, example. Next thing. Sir, normally, advance pricing agreement entered in this year. The date is nothing but irrelevant. Okay. Suppose in December month you are entered into that advance pricing agreement, but during the first day of the previous year, please take. What is the first day of the previous year, 1/4/2023. From 1/4/2023, yes, the rollback provision. Rollback means nothing but I will tell you simply. Sir,
Nothing but advance pricing for the future years. But based on this advance pricing agreement, within that you can mention some rollback provisions also. That means what last year's related ALP also you can recalculate. So if mentioned in the advance pricing agreement only, then rollback provisions will be applicable. The rollback provisions is applicable for that 4 years, So that means what, whether you are entered into that APA at any time also during the previous year, okay, we will take the first day of that previous year till that how many past years, 4 years. 1, 2, 3, 4. Immediately preceding 4 years you have to take, but please remember, if you want to take the advance pricing agreement within the rollback provisions for the last 4 years, you have to file the return of income on or before the due date for that years. So last 4 years, if you have filed that every year return of income within that due date under section 139(1), then only for that 4 years you have to take the rollback provision. Okay, so in 1 year you are not filed the return of income within the year, yes, you can't file the return of you can't take that rollback provisions. So rollback provisions, if they are mentioned in that advance pricing agreement, yes, we can apply for that for the last years also. Like both the parties, that means department and SSC entered into the rollback provisions related also, then only the rollback provisions will be applicable, So whatever that APA is given, that is binded over on the CIT, EAO, SSC, Ganesh, all the persons needs to bind it over on that APA, that advance pricing agreement, always should be binded over on all the parties, unless there is a changes in law or facts. Example, today we are entered into that arm's length advance pricing agreement, so next year there isn't huge changes in law, our facts also changed drastically. So in this situation, that is not effective, the remaining cases it will be creating that binded over on all the SSCs till the how many years, 5 years. So if there is any changes in law, automatically it is not applicable. Next thing, just open the 92CC, yes. Ganesh, the first you have to pre-filing consultation you have to take, then after you have to make an application for that advance pricing, then they will do that preliminary processing, then amendment to the application. If any changes are there, they will amend. Finalization, that means finally they are giving you that an advance pricing agreement. These are the stages, just I am mentioning that stages. So directly you can't get that advance pricing agreement, first you have to take the prime consultation. That means you have to send that last year's data. So last year's data, so what are that associated enterprises, continuously I'm entered into that associated enterprises only for the transactions. Next you have to find that application, that they will do that preliminary process, nothing but verification. In that verification, if anything are observed, for that we have to make that amendments, changes made to that application. And the last one is nothing but finalization of the advance pricing agreement. After that, both the parties will signing together, no issue. Here, who can enter, with the approval of central government, the CPDT is entered into the advance pricing agreement with the any person to determine the ALP. Yes, to determine the ALP, or determined in manner which the ALP determine. So that means directly they can mention that arm's length price, or they will give you that method for computing the arm's length price. Example, your arm's length price is 125. Directly they can give you. Or your arm's length price needs to be computed in Cupper. So that method related direction also they can give you. ALP is valid for maximum how many years, not exceeding 5 consecutive years as specified in APA, and may apply the period of how many years rollback, maximum period of how many years, 4 years preceding the first day of the previous year. Yes, if there is any provision for the rollback mentioned in that advance pricing, can you tell me who needs to bind it over, all the persons needs to bind it over, Commissioner of Income Tax, EAO and SSC. ALP is not binding if there is changes in law or facts. Sir, at the time of getting into that advance pricing agreement, you are submitted the fraudulent data. So in the pre-filing consultation, you are given that fraudulent data.
So that means last year's information they have to verify. But last year information you are given that what ma all the things as a what ma in reverse way. So that's why what will happen ma? If any ESMA advance pricing agreement, ESMA, if you are obtained by way of fraud or misrepresentation, CBDT may declare that advance pricing agreement as an what ma void ab initio. They will declare it as an what ma void ab initio. Are you clear? Yes, sir. Here, so please check it out. It may be forced as an MCQ. Please remember, sir. Amount not exceeding 100 crores. Amount not exceeding 200 crores. What is that? Yes, ma. What is that? The amount of an international transaction entered amount are proposed to be undertaken in respect of which agreement is proposed during the period of agreement. That means what ma, I want to take an advance pricing agreement. So I already entered into the international transaction are proposed to be undertaken. That means already happened or proposed to be happen. That price is not exceeding 100 crores. That means what ma? Less than 100. So then you have to pay that fees, 10 lakh fees you have to pay for getting that advance pricing agreement. These are not for the small fishes, sir. It is always for the what ma? Big fishes only. Next, amount not exceeding 200 crores. Yes, ma, 15 lakh you have to pay. Amount exceeding 200, that means what ma, if international transaction price is more than what ma 200, then 20 lakh you have to pay. So that means what is that minimum fees ma? 10 lakh, maximum fees ma 20 lakh. Ganesh, next. Sir, okay, I already make an application ma. So the international transaction price is 300 crores. How much fees I have to pay? 300 crores. 20 lakh I already paid ma, but I changed my mind. So there is no need for the advance pricing agreement. We can compute easily. So that's why we are what ma? Withdrawing the application made before the CBDT for entering into the APA. So, okay, you can withdraw anytime before the finalization. That means what my last step, if you are verifying before the finalization stage, you can withdraw at any time. But what is the twist here? Okay, that application for the withdrawal is form 3CE. This is only important thing, sir. If you are withdrawing, okay, you can withdraw, but we will not give you any fees already paid as a refund. There is no refund of an fees on withdrawal of application. Clear? Ganesh, are you understood, ma? Yes, next point, ma. The effect of advance pricing agreement, maybe we can expect these questions, ma. The effect, that means, okay, we are already entered into that advance pricing agreement, ma. Future 5 years, roll back 4 years, we are entered, that's okay. Then what is that effect? Shall we discuss along with that examples, ma? Please check it out, ma. Previous year 23-24, assessment year 24-25, we filed the return of income exactly on the due date, ma. What is the due date, ma? 30th 11-2024 we filed. But what happened, ma? X Limited already filed the return of income before that APA. That means what, ma? What is the due date? This is only the due date. Before the due date or on or before the due date, I filed the return of income. But advance pricing agreement isn't given by the CBDT on 17/12/2024. Yes, I already make an application, ma. I think there is in some stages also. Yes, ma, because of the stages processing. So finally, advance pricing agreement given by the department on 17/12/2024. So can you tell me, based on this only, you have to file the return of income? I think, right, that is only. But you are already filed the return of income. What is the reason behind the filing of return of income, ma? What is the reason? Because the due date. If the due date isn't over, automatically we have to pay that what ma fees and interest, etc., etc. That's why you are filed that what ma return of income before APA. Already filed the return of income before that what ma APA. Then can you tell me this return of income is correct or incorrect, ma? Incorrect only, because you have to file the return of income with the what, ma? What is that arm's length price mentioned in the advance pricing agreement? Yes. Then you have to file here what, ma? Modified return, Ganesh. You have to file here what, ma? Modified return. Yes, ma. From month end, can you tell me what is that month end, ma? Month end. Yes, ma. Can you tell me advance pricing agreement entered month end, that is the 31st 12 2024. Within the 3 months, you have to file that what, ma? Modified return. If any return of income filed earlier before entering into that advance pricing agreement. So advance pricing agreement is came on 17/12/2024. Before that, you are already filed that what, ma? Return of income. You have to file that modified return from that month ending within how many months, ma? 3 months. Exactly. We are filed the 14/2/2025 modified return. That is within the time limit or out of time limit, ma? Within time limits only we file. That is only the first point. Effect of advance pricing agreement, ma? Effect of advance pricing agreement 92 CC. That is nothing but what, ma? APA related only effect here. If any person entered into APA, okay, we are already entered into that APA, ma? Prior to that, ITR has been filed. We are already filed that return of income. So in this situation, we have to file that what, ma? Modified return as per that advance pricing agreement within the 3 months from the end of the month in which that advance pricing agreement was entered into. Are you understood this point with the example, ma? Already we have taken one example. Prior to that advance pricing agreement came into force, we are already filed the return of income. That return of income needs to be modified as per that advance pricing agreement ALP from that month ending within how many months, ma? 3 months. Yes, we filed. Second, sir, assessment is pending. That means what, ma? Assessment is not at all started, ma. Yes, ma. Can you tell me on which file we have to start the assessment, Ganesh? This is a totally incorrect, ma. On this, no need to conduct the what, ma? Assessment. On which return we have to conduct the assessment? 14/2/2025. Whatever that modified return file, on that only we have to start that what, ma? Assessment. That is only the thing. Yes, ma. That is only the thing. Yes, ma. If any assessment is pending on what, ma? 14/2/2025. What is that 14/2/2025, Ganesh? Date of filing of modified return. So up to that time there is no completion of assessment. Still assessment is pending only. In this situation, assessment needs to be conducted on which return, ma? Modified return. But in this time, yes, ma, what is the time limit can be extended, ma? 12 months. So for that assessing officer here, the time limit can be extended by how many months, ma? 12 months. Previously also 12 months only. The reference given by the TPO. TPO related order 60 days extension. Assessing officer order 12 months extension there will be there. Here also 12 months extension, because actually I have to pass the assessment order on these only. But here delay will be happen. So in order to file that modified return, you have taken the much time. So that's why for me also, please give me extension of time limit of how many months, ma? 12 months. Next. Sir, our assessing officer is nothing but what, ma? Very quick person. So where an assessment earlier return of income completed before this date itself, we are trying to file a modified return. Before filing that modified return itself, AO completed that assessment on what, ma? Earlier return. He has no work at home also, no work at office also. So that's why he already completed that what, ma? Assessment on this file before this date itself. That means he already passed that assessment order. Sorry, sir. This is not at all correct. Please cancel this assessment. Please restart that assessment again on that what, ma? Modified return. That is only we will do, ma. Reassessment needs to be conducted on what, ma? Modified return. Reassessment needs to be conducted on what, ma? Modified return. So simply, yes, ma, simply, what is the time limit for an extension, ma? Modified return time is nothing but what, ma? 14/12/2025. 14 to 2025, that is the date of filing of what modified return from month ending, from the financially ending. Till how many months extension they will give you? 12 months extension they will give you for the completion of what reassessment. Here just they will give you the time limit for completion of assessment 12 months. Already assessment is done. So that means what already assessment is done on the earlier return, that is cancelled, and we have to restart that assessment again on what modified return. For the time limit for completion of that modified return will be from the end of the financial year, within how many months 12 months. That is only the point assessment is pending. We have to do that assessment on that what modified ITR. Modified ITR time limit is nothing but how many months 12 months. Next, Ganesh, this is nothing but what no return of income is filed on that date. This is nothing but what the assessment is pending. Where that assessment is already completed, then what we will do we have to do that what modified return related reassessment. Can you tell me the time reassessment must be completed within that what time from the end of the financial year in which that modified return file from the end of the financial year to how many months 12 months. Sir, are you understood the dates calculation also? These are the three cases, very, very important. If you are not filed the return, how to file the return? If an assessment is pending, on which file we have to do that assessment? Already assessment done, what we need to do? This is only, and this provision already we know. So if that advance pricing agreement are entered, no need to apply the 92C. That is what 92C. So ALP methods related all the things are what not applicable, and 92 CA, that is a reference to transfer pricing officer. These provisions have no applicability. These provisions have no applicability. Yes are you understood? First of all, yes please reply. If you understood, then I will go with the same speed, otherwise I will decrease the speed also. So these points related examples I mentioned in the Dwartman notes. All of you, are you understood the advance pricing agreement concept? Okay. Next these sections only. Sir, if any SSE entered into the international transaction or specified domestic transaction, it has to maintain certain records. That is the records maintenance section. Shall we start? Yes, there is one amendment also in this. Just we will discuss. Any person entered into Ganesh, any person entered into international transaction or specified domestic transaction, he has to maintain the prescribed documents by the CBDT. Whatever the documents are prescribed by the CBDT, the documents you have to maintain. It is an obligatory if the international transaction aggregate value exceeding that what 1 crore. So if you are entered into that all the international transaction during the previous year aggregately, if exceeds the 1 crore, then you have to apply this provision mandatorily. Sir, but I want to maintain the records even though this is not a mandatory. Can I maintain? Yes. Example, if the aggregate value is not exceeding that word 1 crore, less than 1 crore only, but SSC wants to maintain that adequate records, yes, you can maintain, because some cases if any assessment is there, definitely you have to show that what all the records to the assessing officer in order to prove yourself as a good. That's why you have to maintain these all the things. So I think transfer pricing officer, in one case he will call the word records related. So he can call that word please show the records how you are computing the ALP. So on the situation, maybe we have to submit. That's why even though that is not mandatory also, we will submit that word all the things. And next, can you tell me how many years we have to maintain 8 years from the end of the relevant assessment year. Please remember, not previous year. From the end of the relevant assessment year, we have to maintain these records for that how many years? How many years 8 years. Next, what is that important thing What is that amendment? Assessing officer or commissioner of income tax appeals or joint commissioner or any proceedings under the act So if any information they are asking, yes sir, you have to submit within a period of 10 days from the date of receipt of such a notice, ma. Sir, if they are asking, Ganesh, if any assessing officer or commissioner of income tax send the notice relating to information they want to acquire from you that is related to 92D records, you have to submit the response within how many days, ma? 10 days. So very quick response you have to give because you are already maintained the records. That's why out of that only you have to submit. Second thing, so they will give you that extension of time limit also for this, ma. That extension period of 10 days. 10 days by further period, but not exceeding what, ma? 30 days. They will give you that extension of 10 days, 10 days, 10 days, but not exceeding that how many days, ma? 30 days. Are you clear with this, ma? If any information isn't inquired or required by the AO or commission with regarding the 92D, with regarding that what, ma? 92D, that information has to be submitted by the SSC within how many days, ma? 10 days from the receipt of notice. Further extension also 10 days they will give you, and one more time also 10 days, but maximum not exceeding that extension how many days, ma? 30 days. Ganesh, are you clear up to now? Yes, all of you, ma. Yes. So before going to the further concept, ma, before going to the further concept, I want to give you some questions related to these concepts, Ganesh. I want to give you some questions related to this concept. So if you are observing, I mentioned that all the questions in an, so types of questions related, ma. Types of questions related. So that means just a chart of the questions. Question number 17 in our workbook for the TPO question. Please open the question number 17 in our workbook, ma. Yes, ma. These are all the questions are very very easy, ma. Repeated questions I extracted, ma. Question number 17. Please open. Yes. Past examination question, Ganesh. So Duke Mumbai engaged into an international transaction by way of supplying of goods or services to the related parties or unrelated party. For the assessment year, ESMA 24-25, they have filed the return of income on October 2024. They are filed within time or out of time, within time only. Assessing officer issued the notice under section 143(2) in ESMA April 2025 and in June 2020, and in June 2025 he had made a reference to the TPO for the determination of what, ma? ALP. So that's why in that section 143(2) is required for which assessment, ma? 143(3) scrutiny assessment. In order to pass the scrutiny assessment, so definitely we have to refer this case to whom, ma? Transfer pricing officer. So he is unable to calculate that what, ma? Arm's length price. Yes, ma. So Duke Limited already claimed the Chapter 6A deductions, ma. So this is an 6A deduction under Chapter 6A only. Yes, ma. How much, ma? Under 10 AA 40 lakh they are already claimed. 40 lakh they are already claimed. Assessing officer can invoke the power to determine the ALP of the transaction himself. They are asking theory question, ma. So that means assessing officer can invoke the power and he can compute the ALP on his own, or can he refers to the TPO? Can you tell me your answer, ma? Can he calculate that ALP on his own, or he can refer, ma? He can refer to the TPO. In which cases, ma? I think you know 4 cases we are already readed, ma. 4 cases we are already readed. In which 4 cases, ma? If you are failure to compute the DLP within the most appropriate manner, the data is incorrect, the relevant documents you are not maintained, and 92 documents you are not maintained, then in these cases, please check it out. In these cases, yes, ma, we can give the reference to that what, ma? Arm's length, reference to that whom, ma? Transfer pricing officer. And next, can you tell me what happened, ma? When that ALP is leading to increasing income, what are the defects, ma? First, we can't claim the Chapter 6A deductions against that. And next one, ma, that is only the point. And next, what would be happen to the deduction claimed under section 10A because of increased income? On that increased income, you can't take it as an what, ma? On that increased income, you can't take the chapter 6A deductions as well as that all the things. Next, they will ask the one more question, ma. What are the powers of the TPO and time limit for passing the order? Can you tell me? So powers of the transfer pricing officer and what is the time limit, ma? I think you know, if the time limit is available is less than 60 days, we can give that extension for how many days, ma? 60 days. That is only. So they are given the question, but you have to know that what my theory overall. Definitely you can write it down. If you don't know that what is that concept, okay. The first of all, we are the AO is giving the reference to TPO with the prior approval of Commissioner of Income Tax. After that, he can give the what my order to AO. AO will pass the order to SSC. So like picture, if you have in your mind, definitely you can write any theory question as an answer. Ma. There is no doubt in that. So next question, ma. Yeah, I will open there some theory questions for you. Yes, this is only this is only general theory question number 24, ma. Yes, question number 24. This is the last question. No need to think about it, ma. So enumerate the consequences if assessing officer adjustment the arm's length price in international transaction, because of this, what is that, my total income of the SC increases. That means what they are given. Sir, normally AO computed that ALP, sir. Based on that ALP, our total income increased. Our total income is what, ma? Increased. So what are the remedies within the hands of SSC? Simple. I think if you remember in assessment procedures chapter, you know, if any transfer pricing SSC or nothing but what non-resident can file an objections with the AO order with the dispute resolution panel. So this is a fast track resolution process, ma. So that's why you have an remedies. That means you can make an appeal directly with the dispute resolution committee or panel, ma. Panel. Or you can directly, that means what, ma? I think you know, in dispute resolution panel we have a Commissioner of Income Tax related persons only. Yes, ma. Next, or you can make a directly appeal with the CIT. Sir, you can go for the DRP, or you can appeal with the what, ma? Commissioner of Income Tax. Next, you can go for that what, ma? Revision order also. Revisionary order under section 264. Sir, any one of these options you can choose. All the options are not available. I think if you are going for the what, ma? Appeal, revision will not applicable. If you are going for the revision, appeal will not applicable. So I think you know, on the chapter we are discussing appeals and what, ma? Revision under section 264 are mutually exclusive. That means doctrine of what, ma? Total measure. So that's why either you can go for that appeal or you can go for that what, ma? Revision. That only they are asking. And one more thing, whatever that income is increased, on that income we can't claim the chapter 6A deductions as well as what, ma? 10AA, and there is no adjustment is required in any other entity. So in our entity, definitely we will increase our total income or loss also to be decreased. But we can't claim that what, ma? Chapter 6A deductions as well as what, ma? 10AA. Are you understood this concept, ma? Yes, in this session we are discussed up to now. In this session we are discussed just up to now. What are the things, ma? What are the things, ma? Yes. So how you can give the reference to the TPO and advance pricing agreement done, and effect of advance pricing agreement also done. Effect of advance pricing agreement also done. 92D. What are the records we have to maintain also done. Shall we discuss that? Yes, ma. Listen the concept carefully. Yes, the first I will take one example. That is an EA Limited, ma. Nagarajan, EA Limited is a foreign company and B Limited is an Indian company. So these two are having the subsidiary and associate relations, subsidiary and holding company relationship, ma. So that's why can we call these two companies as an ESMA associated enterprises. Yes, we can call these enterprises as an what, ma? Associated enterprises. Can we call these enterprises as an what ma? Associated enterprises easily? Okay. So there isn't one transaction between these two enterprises, that is a purchase type of transaction ma. So that's why we cannot enter into that actual transaction price. Always we want to find out the arm's length price. Based on that arm's length price, we want to find that what ma? Return of income. I think you know already very well. Okay. Yes. Sir, whatever the total income is increased or loss is decreased because of the transfer pricing provisions. Can you tell me? Earlier we are filed the earlier. So that means example simply. If you are filing the return of income with that actual transaction price, your income will be too low. If we are file the return of income based on the transfer pricing provisions, nothing but based on the what ma arm's length price, your total income is increased ma. How much amount is an increased ma? 5 crores. Just I'm taking example as an crores ma. There is a logic behind this also. 5 crores. Can you tell me? Can you tell me here whatever that adjustment you are made to the total income based on the transfer pricing provision, that adjustment only will known as an primary adjustment ma. So always the primary adjustment will give you the profit or income to the department. So definitely, if your loss will be decreased or income will be increased, it will be favorable to whom? Department only. So can you tell me in our initial example, what is the primary adjustment made per unit ma? Primary adjustment is nothing but total income increased every unit. How much amount ma? 6,000. Based on the transfer pricing provisions, if your income increases, loss decreases, that is only called as what ma? Primary adjustment. Definitely we are adjusting our total income, we are adjusting our loss, that is only called as what ma? Primary adjustment. Are you understood ma? Whenever there is a primary adjustment, whenever there is a primary adjustment, automatically based on the primary adjustment, we have to do secondary adjustment. Ganesh, can you tell me what is the total income is increases in your books of accounts? 5 crores. Yes, 5 crores income we are increased. That means in your books of account, but cash balance is increased. No, because the cash balance needs to be given by the A limited to B limited. We are paid that excess amount earlier. Yes, if you are observing this example also, actually we want to pay how much amount ma? 12,000 only, but we are paid excessively how much amount ma? 6,000. How much amount you have to pay? Only 12,000. Actually, intentionally you are paying that 18,000 ma. Based on it, okay, primary adjustment, your income will be increased. Then what about the cash balance ma? You have to repatriate that amount of how much amount ma? 6,000 per unit from the ESMA, your associated enterprises to India. Then only the cash balance will be balanced with your total income. We want to remove the imbalances of an income as well as cash ma. We want to remove the imbalances between the cash as well as actual profit. We are increased the actual profit 5 crore. Definitely in our cash account also we have how much amount ma? 5 crore. How you can do this adjustment ma? Secondary adjustment will always done by way of cash adjustment. So definitely this Japanese company A limited needs to give how much amount to us ma? 5 crore. Initially we are paid more amount to them, that needs to be repatriated here. That needs that needs to be repatriated here. Yes ma'am. In the books of accounts of SSC and its associated enterprises, we will make the secondary adjustment. We will make the what ma? Secondary adjustment. Ganesh, this is very, very important. Yes. Primary adjustment, it is very, very easy, sir. Based on the transfer pricing provisions, if your income increases, loss decreases, that is only primary adjustment. If any primary adjustment happen, automatically your profit will be increased. Then what about the cash balance? These are these two having that imbalances, that means we want to create the balance, so that's why we will do the secondary adjustment. We will repatriate that amount from the your associated enterprises to an India. That is only called as what ma? Secondary adjustment 92C. Shall we discuss it from material ma? Yes. 92C is secondary adjustment. Sir, there is no primary adjustment. Shall we do secondary adjustment? No. If any primary adjustment is there, then only based on that we can do what ma? Secondary adjustment. Are you clear ma? Yes, please refer it ma. Primary adjustment means nothing but what ma? Yes ma, determination of transfer pricing in accordance with the arm's length price. Because of this, total income may be increased or loss will be reduced. So simply transfer pricing provisions, if anything is applied, based on that your income will be increased or loss will be decreased. That is only called as primary adjustment. Then what about the secondary adjustment? Can you tell me? This will be done in the books of accounts of SSC and its associated enterprises in order to ESMA reflect the actual allocation of profits between the SSC and its AE. Can you tell me? This will be based on the what ma? Primary adjustment. This will be based on what ma? Primary adjustment. Okay. So why it will be done ma? In order to remove the imbalances between the cash as well as what ma? Profit. If you are increasing that income based on the primary adjustment, automatically we can do that secondary adjustment to that what ma? Cash account. Ganesh, clear? Yes, all of you ma? Okay. Then we have certain points here ma. Just remember this. We have certain points here, just remember this clearly. Okay. Sir, in our example, we want to repatriate how much amount from the foreign entity ma? 5 crores. Sir, we are following the transfer pricing provisions based on the Income Tax Act implemented in India. So we are asking that money. Will they give you money ma? Yes, because here we are following the international practices ma. That is an OECD. Organization for Economic Development, Organization for Economic Cooperation Development. That means OECD, yes ma, OECD. So that is nothing but what ma? Internationally recorded ma. Secondary adjustment, how we will record it ma? Constructive dividends way or constructive equity way or constructive loans. That means nothing but yes ma. They want to give some amount to me. That means what ma? We can pass the debtor and the creditor form. So mostly we can form in the what ma? Constructive loans. That means nothing but they have a liability to pay 5 crores to us. Like that entry you can pass ma. Or constructive dividend also, constructive equity contribution also. So they have to pay the dividend. So they have to pay that. They have to pay that what ma? Loan. So in this type of entries you can pass ma. So provisions of the secondary adjustments are what ma? Provisions of secondary adjustments are internationally recognized. So that means what ma? These are internationally recognized ma. No need to bother about whether the foreign company, that is a Japanese company, will be repaid that money or not. Don't think about it ma. This is an internationally recognized. Definitely they will repay that amount of that money to that our associated enterprise that is located in India, that is in B Limited. Next, one more thing ma. One more thing. Just remember, in order to align the transfer pricing provisions in line with the OECD transfer pricing guidelines, yes ma'am, one section 92 CE inserted. What is a 92 CE ma? Secondary adjustment only. Yes ma'am. Always, whenever 92 CE inserted, what is that ma'am? The SSC shall require to carry out the secondary adjustment where the primary adjustment is there. Automatically what the 92 CE said ma? If any primary adjustment happen, automatically you have to do what ma? Secondary adjustment. There is no need to think about any other thing ma. You can do the secondary adjustment automatically. Yes. Remember. This is a very, very important 8 marks question also I will show you ma. Remember. First one, summarily by the SSC is made that all the things in the return of income. Can you tell me here who are computed the ALP ma? SSC himself. If an SSC computed that ALP, based on ALP, if he filed the return of income, that is only the primary adjustment. Yes, primary adjustment is done by whom here ma? SSC only. So that's why automatically we can do what ma? Secondary adjustment. In second case, that made by AO and accepted by the SSC. That means what ma? Here the primary adjustment done by the AO with the help of whom ma? TPO. We are not objecting. That means we are not going with that appeals related etc. We are accepted that what ma? Arm's length price. Here also AO. Yes, next one ma. That primary adjustment is done as per that advance pricing agreement ma. I think you know 92 CC. We can get that what ma? One price in an agreement, that is an advance pricing agreement ma. So based on that advance pricing agreement, if any primary adjustment done, then automatically we can do that what ma? Secondary adjustment. Next one ma? Safe harbor rules. So determination of arm's length price in accordance with the safe harbor rules ma. Remember the name only. We don't have that rules in our syllabus, even in CA final also. We don't have, but okay, we can find out the arm's length price by using that what ma? Safe harbor rules. Next one ma. Sir, this is an our DTAA chapter related ma. So nothing but what ma? The primary adjustment is done by way of section 1990 AA ma. So that means if that both the governments of an Indian government or foreign government are associated together, they are forming that one agreement based on the double tax avoidance arrangement agreement. If any primary adjustment is done also, we have to do what ma? Secondary adjustment. That means primary adjustment can be done by the SSC or assessing officer based on advance pricing, based on what ma? Safe harbor rules, based on what ma? 90A as per the DTAA. If any primary adjustment doesn't happen, automatically we can do what ma? Secondary adjustment. Secondary adjustment means nothing but what ma? So we can pass on journal entry like, and definitely that foreign entity needs to pay some amount of rupees to us. That means constructive dividends only, sorry, constructive loans only we will follow my in India normally, mostly. Next. Sir, that means whatever that excess money is there, can you tell me here how much excess money we want to repatriate to India ma? 5 crores. In our earlier example, how much excess money ma? Per unit, how much amount ma? 6,000 we want to repatriate. That means whatever that amount we want to repatriate, yes ma, that is only called as what ma? Excess money. So here how much amount per unit ma? 6,000. Whatever that amount you want to repatriate, that is only treated as what ma? Excess money. The excess money shall be deemed to be treated as an advance made by the SSC to AE. I am given as an advance only as an 5 crores. Right now they have to repay that amount. So that is only what ma? Constructive loans. Where they giving the loan only, they have to repay that amount. That type of treatment only you have to given in your books of account. Yes ma. Can you tell me that excess money, yes ma, needs to repatriate within the 90 days ma? Can you tell me what is that ma? That excess money needs to repatriate within how many days ma? 90 days. Sir, 90 days from which date? That is a very, very important ma. 90 days from which date ma? So please remember, if the primary adjustment made by the sumoto, can you tell me that means what ma? By AO. Yes ma, can you tell me in this by assessing officer? Yes ma. Third one ma? APA. Fourth one ma? Primary adjustment made as per the safe harbor rules. Primary adjustment made under double tax avoidance agreement. So these are the primary adjustment already we are discussed in earlier things ma. So that means primary adjustment can be done by these 5 ways only. Based on this primary adjustment, we have to do the secondary adjustment. That amount needs to repatriate to India within how many days ma? 90 days. 90 days will start from which date ma? Always 90 days period is start from the due date only. But in one case only we have in what ma? From the date of AO order. That is on what ma? If any primary adjustment done by the, whom AO, then the 90 days time period will be started from the what ma? Date of order of AO. Yes ma, date of order of AO. The remaining all cases, the 90 days will start from the which date ma? 90 days will start from the which date ma? Yes ma, due date of return of income. Yes, here I want to give you that one extension, just one small point I want to give it to you ma. Yes, please check it out. Yes, ma. I want to extend some point here. Here, this point also you have to add to your notes, ma. That means we can write it down, no issue. Sir, I will send you the total notes also. Don't think about it, ma. So I want to note it down these also. This is an extra point. Oy. So normally we can get these things in an exam, ma. Just remember. Very, very easy, ma. Okay, after this we will solve one question also. Directly we can solve the past examination question, ma. So normally, if primary adjustment done by the SSC, can you tell me from which date we have to start, ma? From the due date. If that is done by the AO, from the date of, but advance pricing agreement related, we have to refer one note point, ma. Advance pricing agreement related, we have to refer in one note point. Yes, ma. That is only, ma. Okay, that point, please refer. If the primary adjustment is done with respect to the what ma advance pricing agreement, then please check it out the first point, ma. If that advance pricing agreement entered into on or before the return of income under section 139(1). So that means you are entered into that advance pricing agreement before the return of income due date. Yes, ma. Then your 90 days time period will start from the what ma due date of return of income only. That is only mentioned in our concept book, ma. But then if that advance pricing agreement entered into after the due date, advance pricing agreement itself entered after the due date, ma, then 90 days from the end of the month in which that what ma APA entered. You should remember this, ma. This is not covered in our concept book. What is that point, ma? As my 90 days time period is started from which date means nothing but we haven't 3 dates only, ma. So for the maximum cases due date, yes, ma, only one case the date of order of AO. If that is related to advance pricing agreement, if that advance pricing agreement before the due date, then 90 days from the due date. If that advance pricing agreement entered after the due date, the 90 days will start from the what, ma? From that end of the month in which that APA was entered. So are you clear, ma? 90 days period started from which date? That is only that very, very important, ma. Sir, that advance money or whatever maybe you are written it as an, you have to repatriate that amount within how many days, Ganesh? 90 days from the different dates we know. But if you are not repatriate that excess money within that said above mentioned date, then you have to calculate that interest, ma. What is that interest rate we have to follow? If that international transaction is recorded in Indian rupees, we have to calculate that interest by using the 1 year lending rate of SBI plus what, ma? 3.25. So 1 year lending rate may be 6%. Just suppose as an example. For that we have to add the 3.25. At what rate you have to calculate that interest, ma? At 9.25 we have to calculate what, ma? Interest. If the international transactions are denominated in the Indian currency, 1 year lending rate of SBI, can you tell me 1 year means nothing but what, ma? 1st April of an assessment year. Yes, ma. For that you have to add that what, ma? 3.25. Suppose if that international transaction is denominated in which currency, Ganesh? Foreign currency. Yes, ma. Foreign currency. We have to follow the 6 months LIBOR rate. 6 months LIBOR rate. Can you tell me the London interbank borrowing rate, ma? Yes, that is 6 months means 30th September of relevant previous year. For that we have to add what, ma? 3%. Suppose if that is an 7%, we have to add the 3%. Total interest we have to calculate at the rate of what, ma? 10%. So definitely they will give you in an examination, ma. So that means 1 year lending rate of 1 year lending rate of SBI plus what, ma? 3.25, and 6 months LIBOR rate plus what, ma? 3%. If that is depends upon the international transaction is denominated in Indian currency, SBI rate, foreign currency, LIBOR rate we have to use. So that means within 90 days if you are repatriated, okay, after that 90 days we have to pay that interest, Ganesh. Next. So earlier I used that one word, whenever there is a primary adjustment, we have to do secondary adjustment, right? But secondary adjustment is not required in the following cases. Secondary adjustment is not required to do in the following cases, ma. What are the secondary adjustment related things? Primary adjustment in case of SSC previous year does not exceed 1 crore. Ganesh, in our example, what is that primary adjustment we made, ma? 5 crore. So that's why automatically we can do secondary adjustment. What is that point they are given, ma? If the primary adjustment amount does not exceed 1 crore, there is no need for secondary adjustment. So, and the next one, primary adjustment is made in respect of assessment year 16, 17 or earlier years. So that means if any primary adjustment is done for that assessment year 16, 17, earlier means what, ma? 15, 16, etc. If any primary adjustment is happened for that years, there is no need for that what, ma? Secondary adjustment. So that means primary adjustment cannot be, then there is no secondary adjustment also. If any primary adjustment is done below the what, ma? 1 crore, there is no need of what, ma? Secondary adjustment here. That means what is the meaning they are giving, ma? So for the primary adjustment more than 1 CR is there, then you can do the secondary adjustment. And primary adjustment for that assessment year 16, 17 or earlier years related primary adjustment, there is no need of the what, ma? Secondary adjustment. Okay, sir. So I'm not interested to pay that interest, ma, because I don't know whether the SC is repaying that amount to me or not. So that means that associated enterprises is repaying or not also, I don't know. So that's why, is there any option to shift out of from the interest payment, ma? Yes. If you are paying the what, ma? 20.9644. In every attempt we can get one MCQ from, ma. So 20.9644. I think you know what is it, buyback related tax rate, ma? Buyback related, I think if you remember, additional income tax we need to pay at the rate of what, ma? 20 plus 12% plus 4%. 23.392, I think. 20 plus 12 plus 4%. Okay. But here we have to pay that what, ma? Additional income tax, ma? Yes, ma. That is an 18% tax, 12% surcharge and 4% what, ma? Cess. Please remember, yes, ma. So I don't want to pay that interest, sir. I want to pay that additional income tax. Yes, you can pay that additional income tax. Then interest is no need to pay. So they are giving the option to pay what, ma? They are giving the option to pay the additional income tax. If you have paid the additional income tax, then no need to calculate the what, ma? Interest. Are you clear, ma, up to now? So as of now, are you done, ma? Yes. Next one, ma. This will be covered in the penalties chapter, ma. Don't think about it. Underreporting and misreporting. And we will discuss the penalties relating to transfer pricing chapter. Very, very important, ma. Penalties. Out of that penalties, some penalties we will discuss in this chapter itself. All the penalties we will discuss penalties and prosecution related. Yes, ma. Ganesh. Penalties and prosecution chapter we will discuss all penalties, but some penalties exclusively related to transfer pricing chapter that we will discuss, ma. If you have failure to keep and records are maintained under section 92D, and if you have failure to report the transaction, and if you have failure to what, ma? Maintain and correct documents as per the 92D, you have to pay that what is the percentage of the, yes, ma, amount as a penalty, ma? 2% of the value of international transactions as well as what ma specified domestic transactions. Suppose 100 crores is there, on that 100 crores you have to pay what ma 2%. Next one ma, failure to report some transactions, sorry, failure to yes ma furnish CA report ma. So if any person entered into the specified domestic transaction, that is only the next section ma, specified domestic transaction as well as international transaction, he has to obtain the CA report. If you have failure to submit the CA report, then you have to pay the penalty of how much amount ma, 1 lakh. Next, sir, this is a not failure to keep and maintain ma. Failure to keep and maintain, that means you need to record that all the documents prescribed by the CBDT. But next one ma 271G is a different ma. What is that ma? In any proceedings, if they are asking that information, if you have failures to furnish that information, so definitely I think 90 to do. Within how many days we have to submit ma? Within 10 days you have to submit that information. So further period also extended by the 10 days, but it should not exceed what ma 30 days. In any proceedings, if you want to submit that, if you have an obligation to submit that information, if you have failed also, then 2% of the value of the transactions needs to be paid as an what ma penalty. Yes ma. This country by country reporting, this will be covered in penalties chapter ma. Don't think about it. Yes ma. This will be covered in non-resident chapter. This will be covered in non-resident chapter ma, country by country reporting, etc. So country by country reporting, simple, I will tell you just now ma. Sorry, you have to file that what ma, country by country reporting. Example, multinational companies are there. Yes ma, multinational companies. In India we have one yes ma branch or one entity. So one entity is an operating in Verma, India. So this Indian branch or Indian entity has to furnish the details about that all that multinational company ma. That is only called as what ma, country by country report, etc. So simply please remember, yes ma, that report has to be submitted within the time mentioned under 286. So if the delay up to 30 days ma, 5,000. Beyond 30 days, 15,000 ma. What is that ma? 15,000. Yes ma, I will give you that order for the furnishing the return. So country by country report you have to file like that order if I am giving. So that order after that date, what is that amount ma? Per day, what is that amount ma? 50,000. Yes ma. Next, next one ma. 5,000 per day from the furnishing that information before the prescribed authority expired. That is what ma 5,000. Yes sir. If you are submitting that what ma inaccurate information, that is on what ma 5 lakh. So this is an penalty details ma. Normally after the date 30 days 5,000 only. Beyond that what ma 30 days 15,000. So that normally that authorities will give you that order for filing that what ma country by country report. After that date also, if you are not filed, that is in 50,000 per day. Next, so 5,000, so 5,000 per day from the for the period furnishing that information prescribed authority. Normally, if any prescribed authority is calling that what ma country by country reporting information, if you are not submitted, then 5,000 per day. If you are submitting any wrong information, what is that ma 50,000? Sorry, wrong information related 5 lakh. This is a fixed amount of 5 lakh ma, not per day. Remaining all the things are what ma per day. Just remember, not at all important ma. But these three are very important. Can I show one example for you? Can I show why these are very important? Yes. Please answer the question number 11 ma. Failure to furnish the information. That means what ma? Not maintenance ma. In any proceedings are happen, if any officer asking that information, if you are failures to furnish, what is that ma? 2%. Are you clear ma? Next one ma, 92E audit report. 92E audit report ma. When any person entered into that international transaction is required to obtain the report from the chartered accountant in form 3 CEB ma. What is that form number ma? 3 CEB. What is the due date ma? So normally due date for filing of return of income is 30th November ma. Exactly 1 month before the due date we have to obtain the report from the what ma? CA. That is only if you are not acquired this report within the time, then we have to pay the penalty of how much amount ma? 1 lakh. So in about table we are already read that what is that ma? 1 lakh. Yes ma. As of now we are discussing the provisions relating to international transactions ma. Whatever the provisions are applicable for that international transaction, same as it is that all the provisions are applicable for the specified domestic transactions also. What do you mean by the specific domestic transactions ma? Example, yes ma, in international transaction what will happen? Yes ma, by using that what ma entities located outside India, we are doing the transaction in order to reduce our total income. So that is only the thing we are doing. Okay, if any payment, if any purchases are there, we are paying excess amount. If any sales are there, we are taking that what ma less amount. In order to pay the low amount of tax in India, we are doing that what ma such international transaction. But here, specified domestic transaction means nothing but what ma in India only we are entering into this transaction. But in order to reduce our total income, example ma, sir, one SEZ unit is there ma, and non-SEZ unit is there. What we will do, I will tell you. Total production will be done here only, but we will show it as an what ma, the total production is done in where ma, SEZ only. Why? If any unit is produced in SEZ, on that 100% of the profits will be exempt in first 5 years. So that's why what we are doing ma. So we are transferring the products from the non-SEZ to SEZ with a low price, and we are selling for that what ma, high price to the customers. So while selling from the SEZ, that is we are selling at what ma, high price. Can you tell me this transaction is recorded at an arm's length price ma? No. This transaction is recorded with the actual transaction price. Here also we want to apply the transfer pricing provisions. Yes ma. That means in specified domestic, that means within that our domestic region only this transaction is happened. Because of this transaction, we are intentionally avoiding the tax. The type of transactions are recorded as an what ma? Specified domestic transaction. Example ma? Example. Yes ma? EIT IEA series ma. So income based chapter 6A reduction ma. So 100% of your profits will be exempt for the first 10 years or first 15 assessment years. Next section 10 AA related. Yes, ma. These transactions altogether during the previous year, if exceeding that how much amount, ma? 20 crores, then only that is called as what, ma? Specified domestic transaction. So what is that amount, ma? If any transactions in the nature of what, ma? 10 AA, chapter 6A deduction, IA series, etc. Aggregate value if exceeding during the previous year amount of how much, ma? 20 crores, then we can call it as what, ma? Specified domestic transactions. What is the main reason behind the creation of specific domestic transactions ma? In India also we are entered into some transaction between the entities in order to reduce the total income intentionally. So that's why we are classifying that all the type of transactions into as and what ma? Specified domestic transaction. If that aggregate value is an exceeding that how much amount ma? 20 crores, the transactions are said to be specified. Sir, calculation of arm's length price. Yes ma. Then advance pricing agreement. And next, whatever the provisions we are read it for that international transaction, the same provisions is applicable for that what ma? Specified domestic transaction also. So you can read this question and tell me the answer ma. Question number 4. If section 92, that means what ma? Arm's length price determination will apply for that specified domestic transaction if that aggregate value exceeds how much amount ma? So that's why we should read perfectly, Ganesh. So we need to kept in our mind, in our head only. Not in Hyderabad, not in movie theaters, not in IPL matches. That is what ma 20 crores. Then only for this ESMA. Normally specified domestic transaction means all are specified domestic only. When we have to compute the DLP and all the provisions of transfer pricing provisions will applicable ma. If that amount of that aggregate value of the transaction exceeds how much amount ma? 20 crores. Option D. Next one. Yes, this is also important for an MCQ. If this is question is came in our examination, many students are thinking whether this is an out of syllabus or in syllabus also. So that's why please just we will check it out the concept number 14, that is 94A. Shall we? Yes. Next one. Sir, nothing but India and a country EA is there. Yes, example. So there is no effective information exchange mechanism between these two countries. Ma. So that means if any our resident, so suppose yes, ma, Nagarajan is there. Nagarajan is located in Verma, in country A. He want to do the some business transactions or nothing, but he wants to do some transaction with the what ma country A. India encouraging or discouraging ma? Discouraging only because we don't have any information exchange mechanism. That means our SSC. So our SSC. That means our resident person. How much amount is an earning in that country A? Also we don't have any information because always that India will discourage the SSEs entered into the transactions with the persons located in or smart territories which do not have what ma information exchange mechanism. Suppose if the Nagarajan is there, he wants to enter into the some transaction with a person located in where ma country. India will encouraging or discouraging ma? Discouraging because we don't have what ma yes ma there is no information exchange mechanism. Okay, sir, who can classify these notified jurisdictional areas ma? We don't have any right ma. So central government only can classify what are the countries notified as and what ma jurisdictional area. That means yes ma, for that countries or any persons located in that countries, we don't want to enter into any transactions ma. Yes, but Nagarajan having the dare mindset ma. So yes ma, why I need to restrict this in global environment. So old like in global village only I can enter into the transaction with any person. So I think in our strategic management you learn that many concept. So Nagarajan applied that concept. He entered into the transaction. So central government, I don't want to care about the central government. So I want to enter into the transaction with the person. Yes, you can enter, no issue. Yes, ma'am. All the parties will be treated as an associated enterprise. Sir, there is no relationship between the Nagaras and that person located in the country A, but we are treated as an what ma deemed associated enterprises. This transaction is deemed to be treated as what ma international transaction. For this transfer pricing provisions will be applied. You have to maintain the records under section 92D also, and nothing but what ma. If you are making any payment to this person, definitely this person is nothing but whom are non-resident. So Nagarajan is a resident and ordinary resident ma. So while making that any payment to that person located in that country outside India, so definitely we have to deduct the TDS. Here TDS will be yes ma 30% ma. TDS will deduct at the rate of what ma 30% because there is an uncertainty about that what ma yes ma tax payment made by the what ma person located in country A in India. So that means he is located in country A only. Yes ma, if any income generated from that India also there is an uncertainty relating to the tax payment. So that's why the TDS only will deduct yes ma at a higher of what ma 30% rate in force or rate specified in the ITR whichever is higher. Are you clear ma? This is a notified jurisdictional area. Who can classify the some areas as a notified jurisdictional area ma? Central government can be classified as an what ma? Some areas as an what ma? Notified jurisdictional areas. Are you clear up to now? Yes, last concept very very important. In every attempt we have an 8 marks question from this ESMA 92B. So the 94B ma. So this is also concept called as an what ma? Thin capitalization. So they can give you that what ma? Limitation of interest deduction, or they can give you in that examination as an what ma thin capitalization also. Shall we discuss the thin capitalization ma? Yes. We will discuss some problems also on the thin capitalization ma. Ganesh, please let me know. Who is a borrower here ma? Indian company and nothing but what ma? PE of foreign company. Indian company is borrowing that amount ma, or PE of foreign company. For example, permanent establishment is there for the non-resident in India. They have to pay the tax in India. Please remember that point. Foreign company having that permanent establishment, nothing but fixed place of business ma. Permanent establishment means what ma? Fixed place of business. If they having that fixed place of business in India, they have to pay the tax in India. That means who is a borrower ma? Indian company. Or one permanent establishment of foreign company in India, they are borrowing that money from the that associated enterprises ma. They are borrowing that amount from their associated enterprise. Yes, there is no offense ma. We can borrow that amount from the associated enterprise. We are paying that interest definitely. If that interest payment is more than 1 CR, if the interest payment is more than 1 CR, then only 94B will apply ma. If that interest amount is 2 lakhs, 3 lakhs, then 94B thin capitalization will not apply. What is that ma? 94B is an applicable if that amount is more than what ma? 1 crore. Amount of interest is more than 1 crore. Sir, here there is a chance to make that payment highly in the form of interest to that associated enterprises. Definitely, Indian company can make the payment what ma? More to that what ma? Their associated enterprises or permanent establishment of foreign company also. They are tempted to make that what ma? High payment of interest also. When we are making that high payment of interest, automatically our net profit will be what ma? Reduced. So that's why 94B giving the what ma? Limitation on that interest deduction. 94B is nothing but what ma? Limitation of what ma? Interest deduction. You can't take that interest as a deduction as much you want. So we will limit that what ma? Interest deduction under which section ma? 94B. Shall we discuss one example how they are discouraging the disallowing that interest ma? Yes. Sorry, this is your study material example ma. Many students are confusing this with this question. This is not a question, example. So why I am telling this also I will tell you. Just computation of interest expenses disallowed under 94B. So whatever that amount you are taken as a debit to the P&L account, that is not correct ma. We have to limit that what ma? Allowance of interest. That means some amount we have to what ma? Disallow. So that means as much you want to take it as a debit to the P&L account, our net profit will be reduced. Some amount we will disallow and some amount only we will allow. So shall we discuss only case one here ma? Ganesh, shall we discuss case one here? Okay. Okay. So please remember this list ma. Lower of the total interest minus 30% of EBI TDA. That is an A point, Ganesh. I will give you the as an A point. What is that ma? Total interest, whatever you are paid to the AE or non-AEs also. Whatever that amount of interest totally you are paid. Some cases you have to pay to AE. And if you are loan taken from the non-AEs also, you have to pay. The total interest minus 30% of earning before interest, tax, depreciation, amortization. EBITDA. Or next one ma, actual interest paid to what ma? AE. These two, whichever is lower, you should calculate. Yes, I will tell you 5 problems. I will tell you based on this provision ma. Very very important. Listen. Okay. EBITDA they are the given. Can you tell me how much EBITDA we have to consider ma? 30%. Ganesh, how much we have to consider ma? 30%. Already we are calculated. Interest payable to AE, interest payable to non-AEs. Can you tell me total ma? Here non-AEs is taken as on what ma? Nil. So finally what is that ma? 35. 35. Are you clear ma? Total interest is nothing but what ma? 35. What is that ESMA case 1 answer? Just I am calculating. What are the 2 things we have to consider ma? Yes ma. Total interest minus what ma? 35 total interest.
Yes, sir.
Total interest minus what ma? 30% of EBI TDA. What is that EBI TDA 30% ma? 30. What is that ma? 5. Next one ma? Actual interest payable to AE. Can you tell me AE related interest is how much ma? 35. Can you tell me AE related interest is how much you have to pay ma? 35. So this is an A point. This is an what ma? B point. Please remember carefully. In case 1, lower of. Yes ma. In case 1, what is the thing ma? Lower of these two things. What is the lower of the two things ma? In 94B, they are given total interest minus 30% of EBI TDA or what ma? Actual interest paid to AE. That is only what ma? Yes ma, we have to disallow. What is that amount we have to disallow here ma? 5. Whichever is lower ma? 5 only. That 5 we have to what ma? Disallow. That is only, yes ma, that is only the point. Excess interest will be disallowed. So that means whatever we are calling, this is called as what ma? Excess interest. Yes ma. So that is only I am written here ma. Excess interest should be disallowed. How we can calculate the excess interest ma? Lower of the two things. Shall we calculate second case ma? So that means you can apply your knowledge here. Case 2. Lower of the two things. Can you tell me? Lower of the means nothing but what ma? First EBA TDA 30% is nothing but 100 into 30%. The reason what ma? 30%. That means 30 lakh. And whatever that interest is paid. Can you tell me how much ma? So total interest ma 35. Total interest is nothing but 35. So can you tell me EA means nothing but how much ma? EA means nothing but what ma? Total interest, that is 35 minus EBI TDA. How much ma? 30% of EBI TDA, that is what ma? 5. What is that? Associated enterprises related paid interest is nil ma. We are not paying any interest to associated enterprises. Then indirectly we don't want to calculate these also, because what ma? If any interest was paid to AE, then only this provision is inapplicable. Here we are not paying that any amount to AE. We are not paying what ma? Any amount to AE. That's why this provision is not applicable. So there is no disallowance ma here. So shall we start the case 3 ma? Babu, case 3 shall we start ma? Can you tell me what is that ma? Lower of, yes ma, total interest is nothing but how much ma? 35. 35 minus, yes ma, what is that ma? 30. That is an 5. Yes ma, next amount paid to AE. Can you tell me what is that amount paid to AE ma? 15%. 15, sorry. Can you tell me what is that amount we have to disallow ma? 5. That is only we have to disallow as in what ma? 5. So that is only called as what ma? Excess interest. So many students are confusing with respect to what is that point, sir. Here we have to calculate total interest means, yes ma, total interest means amount paid to AE as well as non-AE. Here second B point we have to calculate that what ma? Actual interest paid to AE only. Actual interest paid to AE only. Are you clear with this ma? So please repeat what is that, whichever is lower amount we can take it as a deduction ma. Excess interest is disallowed. Excess interest means nothing but what ma? Simple total interest minus 30% of EBI TDA or actual interest paid to AE. Whichever is lower is allowed as an what ma? Deduction. So that is only that point ma. This provision is an applicable be in borrower. Can you tell me who can be borrower ma? Indian company or permanent establishment of foreign company. If you are paying that interest exceeds the what ma? 1 crore. If you are paying that interest exceeds the what ma? 1 crore. Next one ma. So we want to fix the ceiling limit. So that's why interest expenses shall not be deductible. Shall not be deductible means what ma? Disallow. What is that amount we have to disallow ma? Excess interest. How you can calculate that excess interest ma? Lower of the two things. Total interest in excess of what ma? 30% of EBI TDA or interest paid to that what ma? AE, whichever is what ma? Lower. So 94B is not applicable. Yes ma, simple. Yes ma, if any entity is engaging in the banking, say yes ma, non-banking financial corporation ma. So simple NBFC is an amendment ma. So if any entity is doing that what ma? Banking business or nothing but what ma? Yes ma, insurance business or they are engaged in that what ma? NBFC. So in the ordinary course of business itself, they want to give you the loans. They want to pay that what ma? So we want to take the loans as well as we want to pay that interest, or we want to give that loans only. On that situation, 94B provision, that means the limitation of interest provision is not applicable, ma. Okay. So very, very important, ma. You have to remember this concept in your mind while solving the problems. Okay. Okay. First of all, if you are observing the running notes, I gave some questions as in what, ma, 94B questions. Can you verify that 94B questions, ma? That is an 21st as well as what, ma, 13th question related to 94B. So I will open the 21st question, ma. I will open the what, ma? 21st question. So shall we open the 21st question, ma? All of you, Ganesh, are you understood, ra? So I want to open this 21st question, ma. So we have to read it out. Ganesh, just listen carefully. Here one twist is there. Okay, just listen. Kiwi LLC is a foreign company incorporated in Singapore. Can you tell me Kiwi LLC is nothing but what, ma? Foreign company incorporated in Singapore. So that is a Bright Star Incorporation is a foreign company incorporated in Australia. One is a Singapore company, one is an Australian company, and ESMA DPL is nothing but what, ma? Indian company. They are given that incorporation details only, ma. Indian company taken the loan from Moonshine Incorporation, foreign company, Ganesh. So that means this is the third company, that so fourth company. So that means nothing but who are taken the loan, ma? DPL. DPL is taken the loan from the 120 crores from the what, ma? Foreign company on 1st October, ma. Starting of the previous year, we don't have the loan. So 10% per annum we are taken on October 1st, ma. Guarantee is given by the BI. BI means nothing but what, ma? Bright Star Incorporation. Bright Star Incorporation. Below the point, Kiwi LLC holds the 27 voting power in the what, ma? BI as well as DPL. Ganesh, here K is in 27 voting power in BI as well as what, ma? DPL. These two are treated as what, ma? Deemed AIs, not AIs, ma. Deemed AIs. Okay. But here DPL is taken the loan from which company, ma? Moonshine. Sir, this is not an AE. You can't say. Why? Because this loan totally given the guarantee by Wama, BI. So that means this is a loan indirectly given by the whom, BI only. So that's why for this 94B will apply. That is only your thinking. So if you are thinking, sir, the loan is not given by the associated enterprise, like that, you can make it, you can give that conclusion. No, no, no. Based on this point, maybe Moonshine is an unrelated party. The loan given by the Moonshine, the loan given by the loans Moonshine to the DPL, whatever it may be there, that is an guarantee isn't given by the ESMA BI. That's why this isn't what, ma? Associated enterprise only given the loan. So that's why automatically we want to apply what, ma? 94B. Sir, I think you know what is that amount, how we can calculate, ma? I think you know one calculation related point. Excess interest means lower of the two things. Can you tell me what, ma? Total interest minus, Ganesh, please tell me now. Minus 30% of what, ma? EBITDA or next one, ma? Interest to AE. Am I correct? Okay. Ganesh, please calculate EBITDA. They are given the net profit only, Ganesh. Above interest and depreciation, I think you have to calculate interest. So can you calculate that interest for me? So if you are observing that how much it will be interest, ma? 120 CR into, yes, ma, 10% into 6 months only, ma, from October. October means nothing but what, ma? October, November, December, January, February, March. How many months, ma? 6 divided by 12. How much it will be? Huh? 6 crores. That means net profit above, after above interest. That means we are already reduced the interest. Please add the interest of 6 crores and depreciation add that. How much ma? 1.8 crore. But before that income tax, yes ma. Next one ma, income tax liability. Before that income tax, how much ma? 9.2 crores. That means here you have to obtain that what ma? EBI TDA. Can you tell me what are the things we have to add back ma? Only 6 crores plus 1.8 crores. If you are added that, you will get that what ma? EBI TDA. Because after this means, before this means, we have to do what ma? Add. We have to do what ma? Add. Sir, why we are not added the income tax ma? Before income tax only we are have. Yes ma. Before income tax only they are given this point ma. So that's why what are the things we have to add ma? 6 crores plus 1.8 crores. Please let me know how much ma? 17 only. 9.2 plus 6 plus 1.8. 17. Okay. Can you tell me, Ganesh, here total interest means how much interest we paid ma? 6 only. 6 crores only. There is no interest paid to non-AEs. Minus 30% of EBI TDA means what ma? 17. Next, what is that interest paid to AE ma? 6 crores. So please remove this. Zero point. Yes ma. 0.9 crores, 6 crores. Whichever is lower ma. That is only we have to dissolve. That is only. Are you clear ma? Here the what is the important thing? How we can calculate the EBI TDA? Sir, that means net profit we have. Net profit is nothing but what ma? Before tax only they are given. If you are added that interest and what ma? Depreciation, you will get the EBI TDA. Okay. Sir, this is the same question. This is nothing but 17 or 18 examination question ma. This is the same question given in our last attempt old syllabus ma. Same question, copied and pasted. Here also, yes ma, just example, I will read it out down ma, I will read it down. Sir, same question also, why I am giving that ma? Because that similar questions only we got. So that's why please revise the workbook questions. Sir, EXC Mumbai, an Indian company, that is an EXC is nothing but what ma? Indian company. 27% of its share capital are held by the TARFOD. That means these two are nothing but what ma? AEs. Total assets are there given 600 crores ma. They are borrowed. They are borrowed. That means our Indian company is borrowing from the middle town, but not from our AE, other party. But that isn't guaranteed by our AE. Same point. Okay. But please remember, we are taking the loan in between the year, not from the beginning. So that means July means I think 9 months. We are taking the 9 months related only. Next one, ma. Net profit. Net profit is nothing but what ma? 30 crores. After depreciation, you have to add that what ma? Depreciation. Provision for tax. Tax also we have to add. Amortization also we have to add. And in addition to that, interest also not added. So that means after that interest we have means we have to add what ma? Interest also in order to get what ma? EBI TDA. Can you tell me interest calculation ma? 400 CR into 400 CR into. Can you tell me how much ma? 400 CR into. Can you tell me what is the rate of interest ma? 9% into 9 divided by 12. How much ma?
87.
87 or 27? 27. So please add all the things ma. 10 CR is nothing but what ma? Depreciation. 8 CR is provision for taxation. 5 CR is amortization expenses. So 27 is nothing but what ma? Interest. 80 crores you will get ma. So what is that amount ma? Lower of the two things will be disallowed. Yes ma. Total interest you are paid for how much ma? 27. minus 30% of EBI TDA. Can you calculate the 30% of 80 crores, ma?
24.
24. Can you tell me what is that amount, ma?
3 crores.
3 crores. And what is that interest paid, ma? To AE? 27. Whichever is lower, ma? 3. Can you tell me how much amount is an allowed? Allowed is 24. Disallowed is nothing but what, ma? Ganesh, disallowed means what, ma? 3 crores. That is only they are given. What is that allowability or disallowability or interest? For how many marks they are given this question? 8 marks. How many marks they are given this question, ma? 8 marks, ma. Are you clear, ma? I think one more question also we have related to 94B. The first of all, I am asking to all of you. So please give me confirmation about ESMA, this understanding of the 94B, ma. What is that? 94B, excess interest we should disallow. Or thin capitalization also we can call, ma. Yes, are you understood the concept first of all? Yes, I will give you the break, ma, after this completion of this question. After completion of one more question, I will give you the break. I also need to take a break, but we are in the flow, that's why. And one more question is there, that question you can do on your own, ma. That is a 13th question. So you can do the 13th question on your own, ma. So please open the 13th question. In break time, you can solve that question, ma. Yes, ma'am. So please believe in that faculty. Definitely you will get one of these question only in an examination. Based on my experience, I can give you that what my in shortcuts also, or what are the important also I can give you. So please believe in that faculty. Definitely you can get these questions only in an examination, because we are learning our we are discussing our total syllabus. That's why. Okay, please try to solve the question number 13. That is also 94B related question, ma. Okay, we will take a break at 11:10. We will meet, ma. At 11:10 we will meet. Okay, that means 30 minutes break you can take. Within that break, I think you know what are the chapters we have to revise also. So after that break, we are continuing with what ma different concept in this chapter. Okay, I think total provisions is over. Only methods for computation of ALP only pending, ma. Methods for computation of ALP only pending, that we will discuss. But one more point. This is the last point, ma. So just they are the given. Who can make the what, ma? Safe harbor rules. That means board only can make the what, ma? Safe harbor rules. Safe harbor rules is not in our syllabus. Don't think about it, ma. So nothing but if any safe harbor rules is there, yes, ma, then we can compute that ALP also based on the safe harbor rules. Okay. So take a break. Thank you. Please do question number 13, ma. Of what, ma? Arm's length price. Okay. So normally how many methods we haven't for computation of arm's length price, ma? So transaction based methods 3, as well as what, ma? Profit based methods how many, ma? 3. Transaction based methods 3, profit based methods. So nothing but what is the most appropriate method you have to select, and based on that only you have to calculate the arm's length price. Sir, normally yes. Suppose that most appropriate methods are nothing but what, ma? Yes, sir. Any one method, if you are selected, if you are calculating that arm's length price based on the data availability, we haven't what, ma? Here we haven't here. Yes, ma. 4 arm's length prices you got. So nothing but what, ma? I will tell you what is the most appropriate method, how you can select the most appropriate method, etc. But if you have calculated the arm's length price, how many arm's length prices you have in your hand, ma? 145, 152, 157 and 160. That is on 4 arm's length prices you have, because so depends upon the data. So that means if you are calculated by using that one type of data 145, another type 152, another type 157 you have. So can you tell me how we can take that ALP, ma? In this situation you have to do that what, ma? Average. If the data set containing that what, ma? Less than 6 ALPs, then automatically that means what, ma? 5, or less than 6, less than 6. So if 5, yes, ma,
then you have to do that what ma average, that is nothing but what ma divided by 4. Here ALP is 153.5 Ganesh. So very very important, just make an observation. Case 1, yes ma, I am giving the actual transaction price as an what ma 150, and if you have founded the arm's length price by using the different methods, you got what ma 153.5. Sir, this is a negligible variance, sir. So our actual transaction price and arm's length price are nearing only. That means what ma? So there is no much difference between them. That's why. So what is that percentage they are giving as an allowable or tolerable difference ma? 3% or 1% of actual transaction price is an allowed as an what ma deviation. So 3% is normal ma, 1% in case of wholesale business. So please calculate 3% or 1% of the actual transaction price ma 4.5. If the difference between these two is an up to 4.5, so that is an allowable variance. More than 4.5, that is a not acceptable. Can you tell me here difference between these two is how much ma? 3.5 only. So 150 and 153.5 difference is what ma 3.5. Can you tell me difference is up to that amount or more than that amount ma? Up to that amount only. So 3.5 difference is up to what ma 4.5. So that's why no need to apply the ALP here. Actual transaction price only will be treated as what ma ALP. Yes ma. Because of the small deviances, if you have calculated the arm's length price, that is not at all correct ma. So even though you are not calculated also, no need to do that adjustments, etc., etc. If you are considered 150 only as an what ma arm's length price. Can you tell me what is that allowable or tolerable variance ma? 3% or 1% of what ma actual transaction price is an allowed as an what ma variance. Are you clear, Ganesh? Yes. Next one ma. Case 2 just we will take ma. Case 2 we will take. Can you tell me what is that actual transaction price? 140. Yes ma. Under ILP 153.5. Difference is what ma? 13.5. Difference between the actual transaction price and arm's length price is 13.5. What is the allowable variance ma? 3% of what ma? 140. That is an 4.2. Difference is an up to or beyond ma? Beyond. That's why ALP will be considered slightly as an what ma? 153.5. If difference is an up to that amount, no need to use this actual ALP ma. Actual transaction price only treated as what ma? ALP. So are you clear this concept ma, all of you? So because of the small variances, if you are considered the ALP, so that is definitely administrative cost of the department only will be high. So that's why they are accepting straightly they are accepting that actual transaction price only as on what ma ALP. Okay. So based on this, we will discuss one question ma. I think that is an question number last question. Please open Ganesh. Aiyah. Yes. Question number 29. Yes, shall we do ma? Yes, please open. Discuss whether adjustment is required in the context of transfer pricing provisions, whether transfer price adopted for the international transaction, so 50 lakh ma, whether arm's length price by using the most appropriate method is nothing but what ma 48 and 56. Can you tell me, we haven't two things ma? Can you tell me what we have to take ma? Average. So the reason this is an actual transaction price, Ganesh. So this is an ALP. So please do average 48 plus 56 divided by 2, 50, 52. Okay. So can you tell me here actual transaction price is nothing but how much ma? 50 lakh. Ganesh, how much? 50 lakh. And ALP is nothing but how much ma? 52 lakh. So can you tell me 3% of actual transaction price is nothing but how much? 4.5 lakh. Correct? Jay, sorry. 1.5%. 1.5 lakh.
And can you tell me the difference between these two, ma? 2 lakh.
2 lakhs.
So can you tell me the difference is beyond or up to, ma? Beyond. So beyond means nothing but what, ma? ALP is taken as in what, ma? 52 only. ALP will be taken as in what, ma? 52 only. If the difference is an up to, that means the difference is nothing but what, ma? Less than 1.5, then we can take these actual transaction price only as in what, ma? ALP. Actual transaction price only as in what, ma? ALP. If you are verified, that is only that, ma. So since the variation ESMA is nothing but what, ma? Not within the limit, that's why arm's length price will be what, ma? 52 lakh. So can you tell me here, ESMA previously we are declared by using that 50, right now we are declaring by using that what, ma? 52. ESMA definitely our income will be increased. On that enhanced income we can give that what, ma? Chapter 6A reduction as well as 10AA in respect of what, ma? Enhanced income. Yes, ma. In enhanced income. Are you clear? This is a 4-mark question in the last previous examination. Ma, I didn't remember exact year. So this is the last examination question. They are given for 5 marks. 5 marks is an easy if you know this concept. Can you tell me if the data set containing that more than how many items, ma? 1 items. Sorry, more than 1 as well as what, ma? Less than 6. Then you can do that what, ma? Average. Ganesh, please open the concept book. All of you, please open the concept book, ma. Rule 10 CA, where the more than one price is determined by the most appropriate method. So nothing but average only we can do. More than one is there, average. But please remember, more than 6 items are there. So nothing but what, ma? 6 or less than 6 is there, we can do what, ma? Average. More than 6 are there, we have to follow that what, ma? Range concept. What is the concept name? Range concept. Okay? Ganesh, please make an observation, ma. So I think in our example we haven't 10 numbers, ma. So how example number 1, how many numbers we have, ma? 10 members. So that means 10 ALPs you have because of the depends upon the data set, data availability. So please make an ascending order, ma. Can you tell me what do you mean by the ascending, ma? Low to high. So please make an observation. All are in ascending order or not, ma? Yes, second. So please find out the ESMA percentile, ma, 35th percentile as well as 65th percentile on data set, ma. So 10 into 35 percentage and 10 into, that means total number is nothing but in data we have an 10, ma. So that's why 10 into 65th percentile, 10 into 35th percentile, please compute, ma. How much you will get, ma? 3.5 and 6.5. So can you identify 3.5 in the data? No. So that's why please go to the highest next number, ma, 7. Can you identify easily 4 and 7? Yes. 4 is nothing but what, ma? 73. And 7 is nothing but what, ma? 108. Definitely. Within these only. That means what, ma? Yes, ma. Starting point of the range is nothing but what, ma? 73. And ending point is 108. Within these only we have an actual, arm's length price we can get within these amount. Yes, okay. Suppose if they are given the actual transaction price as a 90, ma. Normally we know what is the transaction entered price, that is a 90. Can you tell me that 90 is falls within the range or not, ma? Yes, within that range only. That's why, yes, ma, actual transaction price is treated as an what, ma? ALP here. So that means definitely our transaction price is 90. That is well within this range. So that's why that is only treated as what, ma? ALP. Sir, if I am given as an actual transaction price as an 110, it falls within the range, ma? No. Suppose if that, sir, this is a given data, ma. These are not calculated data, this is in given data. So actual transaction price is here 110. Can you tell me that 110 is falls within the range? No. So that's why. So please calculate the median, ma. Median means 50th percentile. How much you will get, ma? 5. So next, that is in 5. So 5 and the next higher digit you have to take. That is in 5 and 6. Can you tell me 5 and 6? That is a 92. We have an 103 divided by 2. Please calculate, ma, how much you will get. 97.5, that is only ALP. If that falls, actual transaction price is falls within that range. Ganesh, actual transaction price is 90. If that falls within that range, that is only what ma ALP. If that not falls within the range, we have to calculate the median, and next number we have to take that average, that is only called as what ma ALP. So this is not an important area for question, but so they are asking that what ma each and every corner questions from this chapter. That's why we want to know that every point ma. Are you clear the range concept ma? What are the steps ma? Step 1, please arrange the data set containing that what ma all the numbers from the ascending to what ascending order. Next we have to calculate the data set on the 35th percentile, 65th percentile. If that is not a whole number, we have to go for the what ma next digit. Next, if that actual transaction price is falls within that range, that is only ALP. If actual transaction price not falls within the range, then we have to calculate the median. Median and next number, please do that average, then you will get what ma ALP. Are you clear? All of you? This is a range concept ma. Then it's over. Then we have to discuss only one concept in this entire chapter, that is in what ma? Arm's length price computation. This is also one important. That means nearly, so 3 parts of the chapter is there ma, associated enterprise part over, procedural related part over. We have to discuss only what ma? Methods for computation of ALP. That means we can get the questions from the following 3 areas ma. The first area, in and out, left and right done, and last area also in and out and left and right done. So we have to start the ALP. So what are the methods are available for computation of ALP, and these are all the things we will discuss. Today our agenda, we have to perfect in the cup method. Perfect in which method ma? Cup method. So just I want to know that the opinion of all of you. So that means before the starting of the transfer pricing provision, you may have some expectations on this chapter. So that expectations means this may be difficult, this may be easy, whatever you have an expectations right now. That means nearly 70% of the chapter is over. 70 or 80% of the chapter is over. So then definitely I think what you have in your opinion, that means whether you are able to write that questions or whether this chapter is an entirely you can give it as a choice. So what's your opinion on this chapter right now? Easy. So the others' opinion only I want to know. So that means are you able to write the questions? And first of all, are you able to identify the questions in examination? These are the questions are from the transfer pricing, etc. If you are allocated the time, this will be very, very easy, sir. Okay. So we will do the plan for it also. So our target right now on cup method ma. So I will discuss some questions related to cup method. So I don't want to tell you the concept behind the cup method. Directly I will take some examples. Based on that examples only, we can understand the cup concept ma. Yes. And in examination, some students, if they know that perfect answer, then only they will start the question, sir. That is totally wrong. So if they know that entire answer, what are the every adjustment, like in math also, in PCBB problems also, if they know that concept of every adjustment, then only they can start the problem. Otherwise, they are in that field like we don't know anything. That is not at all correct. Even though if you know that part of the question answer also, if with that confidence, if you are writing, definitely you can able to solve that total question also. So please maintain that type of confidence only in an examination. So in direct taxation, they will cover that 100%. All chapters they want to cover in an examination. So that's why you have to maintain that attitude like, okay, definitely I can solve. Even though you haven't, only one part of the question out of the 3 or 2 parts. So please solve that part. Definitely you can get that 1/3 of the marks also. That isn't definitely useful. So anyhow, you will get that more marks in MCQs itself. So that's why. Yes, ma'am. Next one. So I want to give you the questions. I think this chart. I will share with you, ma. No issue. The first we will start with the cup method questions, ma. So one by one cup methods I want to solve it. So first I want to go with the question number 2, basic question, ma. So definitely out of this, I will give you the some questions as a straight homework, ma. You have to do. Yes, ma. Question number 2, ma. Please open the question number 2. Ganesh, please open the question number 2, ma. Basic question, ma. Our study material question. Okay. Advanced question. Basic questions to advanced questions we will go. First, I want to tell you the basic question, ma. Yes. Yes, ma. Question number 2. Sir, while reading this, you have to maintain some note points, ma. And in an exam also, you should mention the note point. I will tell you what are the note points we have to mention. Sir, in our institute material also, they are not giving any note point. But in examination, they are expecting the note points from you. So that's why I will tell you what are the note points we have to mention also, and how to identify this problem as a cup method related problem also I will tell you. Yes, ma'am. Please listen carefully. A Company Limited of Chennai and Sky Incorporation Singapore. Directly they are giving it as an A. But in this question, basic problem means they are given the details completely. Here, one resident company is there, another one non-resident entity is there. Yes, ma, they both are associated enterprises. Ma. Okay. If any transaction happened between these two enterprises, the transaction is treated as on what, ma? International transaction. For that international transactions, which provisions will applicable automatically? Transfer pricing provisions. Okay. A Company Limited imported the how many television sets, ma? 1,000 television sets. Each one for how much, ma? 16,000 without any warranty period. Yes, ma, that means we are purchasing from our associated enterprises 1,000 televisions with that 16,000 per TV set without any warranty. Can you tell me this is an ATP or ALP, ma? ATP. Next, A Company Limited also imposed the similar TV sets from the whom? Sign Incorporation, Japan. Can you tell me this is an unrelated party, ma? They are imported the 15,000 only. Warranty period of how much amount, ma?
2 years.
2 years. Yes, ma. The 2 years warranty cost is how much, ma? 2,000. So arm's length price, please compute, and what is that amount of increasing the total income of A Limited also, and as per the cup method. They are only given directly as in cup method, ma, but if they are not given, how we can identify this is a cup method related. Okay. So please take the notes, ma. I already gave this ESMA synopsis relating to this question. ESMA, after the reading only you can understood this, ma. First thing. Sky Incorporation Singapore is there, and A Limited is nothing but what, ma? In Chennai is there. A Limited is there in what, ma? Chennai. Okay. Ganesh, both the parties are associated enterprises. Here, we need to think from which company point of view, ma? Our Chennai Indian company point of view. We are purchasing the what, ma? We are purchasing the what, ma? TVs. Can you tell me 1,000 TV sets, each one how much amount, ma? 16,000 without warranty. That means in this there is no warranty. Okay. Next, similar TV sets we are purchased from some unrelated party, that is the Japan. The similar television sets, ma, we are purchasing for that how much amount, ma? 15,000 per set. They are giving the warranty for 2 years. Warranty cost for the 2 years is how much, ma? 2,000. Sir, please check it out at the time of after drawing that all the things you have to think whether it is a sale or purchase. From our company point of view, this is a what, ma? Purchase. Okay. So in P&L account, what is the amount they are debited, ma? Normally 16,000. That is not correct, ma. That is an actual transaction price. So in between these two companies, price is always what, ma? Compromised because they are related parties. Ganesh, please check it out. Yes, ma. This is what, ma? International transaction. So in order to compare that international transaction, we have what, ma? Comparable, uncontrollable transaction is there or not, ma? So in this transaction, there is no controllability. So comparable, uncontrollable transaction is there or not, ma? Yes. When there is a comparable uncontrollable transaction is there, then we have to follow that what mark cup method. So simply yes ma, what is that base we have to take ma? We have to compute that arm's length price, because whatever that you want you are debited, that is not correct. We have to debit the P&L account of that A limited with the what ma arm's length price. So please open the particulars exam in an examination you have to write it down like this ma. So price charged in comparable uncontrollable transaction, that is in what ma 15,000. For that only you have to make that adjustment ma. So that is nothing but what ma, what is that ma, price charged in comparable uncontrollable transaction 15,000. Ganesh, in these 15,000 we have a warranty. If I am removing the warranty, can I locate here? Hey Jaffa. So that means 15,000 with warranty. Sir, other parties with warranty they are given 15,000 only. Without warranty you are purchasing it for 16,000. So this is definitely controllable only. Not at all correct. So in public, unrelated party itself with the warranty feature they are giving the 15,000. But you are purchasing it for the 16,000 without warranty. That means if I am removing the warranty here, I can locate that what ma without warranty price here. That is only what ma arm's length price. So whatever the adjustment of warranty we are done here, that is only treated as functional adjustment. So we are started with the what ma 15,000. If I am removing the warranty, can you tell me warranty ma 2 years related warranty how much ma 2,000. Then ALP is nothing but what ma 13,000. 13,000. ALP is nothing but what ma 13,000. That means so already you are debited 16,000. That is not correct. 13,000 only you have to debit. So that's why can you tell me net profit is increased per unit how much ma 3,000. Per unit net profit or total income of that A limited is increased at what ma 3,000. The 3,000 into how many units ma 1,000 said 1,000 into 3,000. That is an what ma. Yes ma, that is only primary adjustment Ganesh. That is only what ma primary adjustment. Please make an observation in this question ma. So they will ask you the two things. Computation of arm's length price. How much ma? 13,000 Ganesh. You will get a what ma 13,000. What is that income increase in the hands of A limited here? Income increase. That is the second part of the question you have to compute. Yes ma. So computation of income increase in the hands of A limited. So total cost. Can you tell me how much ma? 1 crore 60 lakh. So that means total cost you are recorded as a what ma 1,000 into 16,000. But what is that arm's length price ma? 13,000 only. That means what ma 1 crore. That you have to increase the total income of how much ma 30 lakh. You have to write it out. Simply you can observe here itself. Already you are debited 16,000. Because of the debited of 16,000, how much is lost? How much amount of the net profit is reduced? Ma 3,000 is reduced. Here we have to increase the 3,000. 3,000 into what ma 1,000 computers. That is how much ma 30 lakhs. Are you clear ma? When you can use the cup method ma, when there is a comparable uncontrollable price is there, we have to use that what ma cup method. Ganesh. So question number 2 over. That means what ma? Question number 2 is over. Yes ma. Don't think about it ma. Tomorrow also the pending concept, all the things I will give you in the clear way. So don't think about so I think today we have a nearly 20 minutes over only, 20 minutes only left for our session. I will take the evening, maybe possible. So today only I have one activity, that is, and I want to go to that examination center for the some purpose, sir. CA examinations is going on, that's why I want to go to that examination center for one purpose. So tomorrow onwards I have a nearly 20 hours time. Okay, in between that also I can take the nearly 10 hours, no issue. So today, so next question in our discussion, I want to take the question number 5. Tell me.
So here we got unrelated party to related party. Unrelated party to related party తీసుకెళ్ళాలి సార్. ఒకవేళ వారంటీ unrelated party ఇవ్వకుండా వాడిస్తే అటు నుంచి ఇటు తీసుకురావాలి సార్. అంటే
No, they are given that warranty. The nothing. Okay. So normally, what is? I think your doubt is nothing but, sir, here there is a warranty. Here there is no warranty. Yes, that is only na. So nothing but what ma? Here with warranty, that means what? Okay, I don't want to write that all the scrap here. So in next question that will be covered. Don't think about it. So what is an adjustment? For that only you will think. If you are thinking about the reverse adjustments, etc., your mind will be crashed in 1 minute itself. 1 minute itself. Okay, don't think about it. In next cases that will be covered. No issue. Okay. So question number 5. Okay. Please take the question number 5. Please go, ma. Ganesh, please take the question number 5. Don't think about it, etc., ma. Just listen. Yes, after the 2 or 3, I will clarify your doubt also. Okay. Fox Solution is there, Ganesh. US company. They are selling the ESMA. They are selling the laser printer credited drums to an Indian subsidiary that is in quality printing. So they are giving itself the subsidiary. You have to identify there is a holding and subsidiary relationship and that associated enterprises. In between that associated enterprise, they are selling that one thing to that another company. That is an international transaction. For the total theory, you have to write it down. So between these two enterprises, if any transaction is happened, that all the things okay. What is a dollar ma? $20 per drum. So doc solution is taken the other takers also in India, but that is for the what ma 30. During the year, how many cartridge drums are supplied ma? 12,000. So they are asking the arm's length price and compute the taxable income. So normally after considering the above is 45 lakh ma. That means what ma? After taking this 20 as a transaction value, we have a total income of 45 lakh. So $1 is equal to what ma? 45. Also determine the income of what ma? So this is a wrong ma. This is a wrong ma. So this is an study material wrong ma. So nothing but we have to write it down what ma? Fox solution. In the study material itself, we have a wrong here. So compute the income of what ma? Fox solution. Okay. So please open our running notes ma. I already given the things to you. So associated enterprise is in Fox Limited ma. US company. And the Quality Printing Limited is there. That is in India ma. So both are associated enterprises. What is the transaction ma? We are purchasing or selling ma? Purchasing. Please remember that point. Okay. So 12,000 cartridge drums. Each drum is 20. We are debited only how much amount here ma? To know 20. But ESMA doc solution is an other taken in India. That is for unrelated party. They are charging that how much ma? 30 per drum. So they are charged what ma? 30 per drum. Can you tell me there is a comparable uncontrollable transaction is there or not ma? Yes. Comparable uncontrollable transaction is there. So that's why we have to use that what ma? Cup method. So what is the days we have to take ma? There is no functional adjustment here ma. So directly we can treat this as an ALP. There is no warranty, discount, etc. Functional adjustments are not there. So that's why directly we can treat this as an what ma? ALP. Sir, you are debited only 20. Instead of the 20, if the transfer pricing provisions are applicable, how much you can take the debit ma? 30. Because of these transfer pricing provisions, total income is what ma? Reduced. That's why transfer pricing provisions are not applicable. That only you have to write it down. So earlier your income is nothing but what ma? 45 lakh. How much amount you are debited ma? $20 per drum. 12,000 drums into what ma? $1 equal to 45 rupees. What you are debited ma? 1 lakh, sorry, 1 crore 8 lakh you are debited. If you are applying the transfer pricing provisions, you have to debit how much ma? 1 crore 62 lakh. So cost increases means income decreases. So taxable income cannot be reduced because of ALP. I think you know transfer pricing basic point. If any total income of that SSC is decreased, then transfer pricing provisions will not be applicable. So that means how much you are debited here ma? 20. So that's enough. If you are applying the arm's length price, you can debit what ma? 30. So because of this only the total income will be what ma? Reduced. So that's why transfer pricing provisions will not applicable. Total income will be constant ma. There is no change in that what ma? Total income. The same problem I will give you. The same problem I will give you. That is nothing but what ma? Question number 6 you have to do on your own right now itself. Okay, but one more question is there, ma. That's why I will tell you this question. Total income of what, ma? Fox. Total income of what, ma? Fox. So here, what are the company names, ma? I will tell you. Yes, ma. Fox and Quality. So this is a non-resident. This is a resident, ma. Yes, ma. So what is the relationship between these two companies? We have to check first. Quality Limited as well as what, ma? Fox Limited. So they are selling on principal to principal basis, ma. Principal to principal basis. That means what, ma? There is no principal and agency relationship, ma. Fox Limited is selling the goods, and automatically Quality Limited also reselling the goods to the what, ma? Their customers. There is no principal and agent relationship. They are selling these goods on that what, ma? Yes, ma. They are selling it goods at what, ma? Principal to principal. If the transaction is recorded as an ALP, then no need to pay the tax by the Fox Limited in India. Yes, ma. Because there is no agency relationship. We are selling the goods that is an already recorded at an arm's length price. No need to pay the tax, ma. Because subsidiary continued their business on their own. Next one, ma. Second one. Transactions are taxable. Then what is the case? I will tell you. Fox Limited. Yes, ma. Quality Printing. Yes, ma. Quality Printing Company is a resident. Here, this is an what, ma? Non-resident. Yes, ma. In this situation, there is a relationship, ma? What, ma? Principal and agent. Principal and what, ma? Agent. If they are selling it in the principal and agent, whether they are entered into the transaction at an ALP or whether the transactions are not entered at an ALP, that is an irrelevant, ma. So, Fox Limited always needs to pay the tax in India. Yes, ma'am. This is only the point you have to understand. So that is only ma'am. So if you aren't selling at principal and agent relationship means nothing but what, ma'am? Quality Limited is an acting on behalf of you only. So that's why you have to pay the tax in India. Whether the transaction is entered into ALP or not, that isn't totally what, ma'am? Irrelevant. So, sir, how you are writing this summary? Similar question is there. I will show you that question also. And question number 6 is a similar question, ma. There is no change also, but here they are giving the two cases, ma. So what is that, ma? Two cases they are given. One is a nothing but what, ma? If the arm's length price is a nothing but what, ma? ALP 1,30,000 euros are there. So first to do the problem. And one is an ALP is nothing but what, ma? 60,000 is there. Then you have to do the problem. Please do the problem on your own right now itself. All of you, amma, if you are not understood, please ask with me. Similar problem, same problem, ma. Yes, summary also you can get within these notes, ma.
Sir, we'll do this summer homework, no, sir. We do summer.
Yes, ma.
You continue, we'll do this session.
Yes, ma. You can get the summary. In one case, there is no applying of transfer pricing provisions, ma. In remaining cases, we have to apply the what, ma? Transfer pricing provisions. Okay. Ganesh, I think you have asked this doubt. I want to clarify this doubt for you. Okay. Yes. What is your doubt? Suppose A limited is there, ma, and B limited is there, and nothing but what, ma? C limited is there. These two are associated enterprises, Ganesh. Okay. We are charging simply 16,000 with warranty. Warranty cost just 500 rupees. Warranty cost is nothing but how much, ma? 500 only. So we are selling to the unrelated party also.
That is an unrelated party, ma. Yes, ma, unrelated party. We are selling for that only 15,000. This is what, ma, without warranty. So I think this is only your question. Yes, can you tell me what is the base we have to take for calculating the DLP? Controllable, comparable, uncontrollable price only you have to take. What is that, ma? Huh? 15,000. Can you tell me without warranty isn't 15,000? But here there is a warranty. That warranty is not at all offense. That is correct only. So can you tell me here we don't have warranty? We need to identify the price with the warranty. That's why we have to do what, ma? Add warranty 500. Can you tell me how much? 15,500 only. That what, ma? Arm's length price. So that means you are debited. That means for you this is a purchase. You are purchased previously with the 16,000. Right now that is an exact price is 15,500 only. Can you tell me how much income is increased per unit, ma? 500. That is only the adjustment. So don't think about whether we have to add or less. No. So just we have to take this as a base. But what is a functional adjustment? Warranty is there. We want to know about the price with a warranty. So here there is no warranty. Can you tell me if you want to locate here? That means we have to add that what, ma? Warranty. In previous problem, if you are observing that we haven't price with the warranty, we want to know about the price without warranty. That's why please reduce the warranty here. Please reduce the warranty here. So here what we are done, ma? So we want to go for that warranty. Without warranty we know. So please add that warranty. Then you can go that what, ma? Exact price with the functional difference also. Next problem. Question number 7. Question number 7 you can do, ma, same question, ma. Question number 7 also you can do, but warranty cost they are given per annum, ma. You have to calculate for 6 months only. That is only the difference. Okay. Can you tell me, Ganesh, what we need to do here? Here this is with the warranty. You need to obtain the what, ma? Without warranty. We have to reduce that what, ma? Warranty. That is only the adjustment. We are reducing the warranty. Question number 7 is over, ma. What is that, ma? Question number 7 also over. I think question number 7 also over. I think previously question number 6 also done. Question number 6 also done. And a few questions are copied and pasted, ma. So that questions I will tell you. So question number 7 done. Ma, question number 6 also on your own you can do. Ganesh, please refer this question, ma. Same question, copied and pasted. Question number 18. Question number 18 is copied and pasted, ma. There is no changes also. So our question number 2. Our question number 2 is question number 18, same one. Next. Yes, ma. This is on question number 19, same as in question number 5, ma. Same as in question number 5. No changes, ma. Just numbers only change. So first we have to compute the what, ma? Total income of both the companies, ma. So I think we have done the one problem related to quality printing, Fox solutions. That is only, ma. Total income of what, ma? Other company also they are given. So I think you know, yes, ma. Principal to principal. Yes, ma. Principal to principal basis is there. If that is recognized with the arm's length price, then for foreigner that is not taxable. If that is a principal and agent, if that is what, ma? Principal and agent, so whether they are recorded with the DALP or not recorded with the DALP also, yes, ma, that is an irrelevant. Always that is taxable for the what, ma? Brand incorporation. Here what, ma? Not taxable. That is only the point, ma. Same problem. So if you are observing, number of problems may be high, but the models are very, very less, ma. Start our discussion.
Yes, ma'am. I think right now we are discussing the cup method related questions, ma. So one more question we will discuss, that is on question number 8 in our workbook. Yes, ma. Before going to that question, we want to learn some concepts, ma. Yes, ma. CIF basis as well as FOB. So normally cost insurance freight. What is that, ma? CIF means cost insurance as well as what, ma? Freight. So nothing but, yes, ma'am. If any person selling the goods on CIF basis itself, he can recover the cost and insurance as well as the freight cost also. So Ganesh, I am selling the goods for on CIF basis. Can you tell me? Here I will recover the cost. I will recover the insurance charges. I will recover the freight also. From whom? Buyer. So that means if I am saying that price itself, it includes the cost, insurance, freight itself. That means who needs to bear all the things? Seller. Because I am already collecting from you. So that's why I am only that bearing these are all the things. Free on board means nothing but what? Free on board means I will collect the only cost only. Insurance and the freight cost, all the things will be responsibility of whom? Buyer only. So these 2 points are very, very important in examination point of view while doing the problems also. While doing the problems also. Shall we start, ma? Yes. Question number 8, ma. So question number 8, this is a summary. So if you are look at the question, this is only the question number 8, ma. So I'm already summarized the question number 8. Yes, just check it out, ma. Entity is a buyer, our entity is purchasing the goods, ma. Purchasing means definitely there is a cost for us. We are purchasing from the related parties. Yes, ma. Can you tell me how much amount we paid, ma? 25,000. That is on CIF basis. That means what, ma? Whatever that amount I paid, that includes the cost. Okay, sir. It includes the what, ma? Cost, insurance, freight. Totally, I paid how much amount, ma? 25,000. Next. Next. From unrelated party, I can purchase it for the 23,500 and free of board. That means what, ma? This includes the only what, ma? Cost. Insurance freight will be paid by me only. Are you clear, ma? What do you mean by the CIF basis and what do you mean by the what, ma? If we on board, I am paying only that cost to them. Okay. Next. I am purchasing that quantity 100 units, ma. So here I am purchasing that what, ma? 110. Okay. Next, if you are purchasing from the related party, you can get the credit period of 90 days. That is an interest at the rate of what, ma? 12% per annum. You can get the interest at the rate of what, ma? 12% per annum. That means related party is giving the credit period, ma. But unrelated party, you have to pay only upon the dispatch. Only upon the what, ma? Dispatch. That means at the time of delivering the goods, you have to pay that money to them. Yes. So freight cost as well as insurance cost, they are the given, because you have to pay that amount. That means for freight how much amount you are paid, for 1200. For insurance you are paid what, ma? 700. Next, ma, one important and misinformation is that there is no full information with regarding the ITC. Yes, while you are purchasing from that, you can't take that ITC, ma. While you are purchasing from the unrelated party, yes, you can take that ITC at the rate of what, ma? 2000. Okay, first of all, this is a cup method or not, ma? Yes, because there is a comparable uncontrollable transaction is there. So that's why we can follow that what, ma? Cup method. Can you tell me what is the base we have to take, ma? 23,500 we have to take, and we need to adjust the what, ma? Functional differences. Ganesh, can you observe what are the functional differences we have, ma? Yes, we have a functional difference, that is on what, ma? FOB and the CIA basis. Next, input tax credit. Third one, credit period. If these three functional adjustment if I done, then definitely I will get what, ma? Arm's length price. Ganesh, okay? Yes. First of all, okay, we are taken that what, ma? First you have to open the format, ma? Particulars and amount. So next, price charged in comparable uncontrollable transaction. How much, ma? 23,500. Okay. Please make an observation here. So here the cost insurance of freight is there, but here only cost is there. Yes, ma, I want to, yes, ma, get the including that what ma insurance and freight related cost. Can I add these? Yes, ma, 1200 plus 700 ma. Yes. Are you clear, ma, up to now? Yes, ma. Right now, in comparable uncontrollable price, this is only the cost. But we want to know about the cost plus insurance plus freight related thing. So how you can get it, ma? So please add the 1200. Please add the what, ma? 700. So that is only what, ma? So freight related as well as insurance related added. One functional adjustment is over. Okay. Ganesh, next, ESMA, credit period related functional adjustment, we will check it out. ESMA, all of you? Sir, nothing but here you are paying that amount upon the dispatch itself, that cost is too low. Because if any person giving the credit period, they will selling for that what more price. So simple. If you want to purchase the car with the what spot price, one price is there. So if you want to take that on EMI basis or credit period basis, the cost of the product will be high. So here upon the dispatch means 23,500 is there. Yes, ma'am. But if there is any 90 days credit period is there, can you tell me the credit period related things we have to add or less, ma? Add. Because the price of the product will be high. So that is only that, ma. Credit period related, please check it out, ma. Credit period related. So 23,500 into how many days, ma? 90 days. So nothing but we can say it is in what, ma? 3 months. 90 days means nothing but what, ma? 3 months. Into 12%. We can calculate like these also, ma. Sorry, 3 by 12 into, yes, ma. This is an amount we have to add because, yes, ma, there is no credit period here. That's why the price will be what, ma? Low. If there is any credit period, the price will be increased. That's why we have to add the credit period related functional adjustment. Are you clear, ma, up to now? Yes. Next one, ma. There is a misinformation involving in these ITC related adjustment, ma. Whatever that ITC input tax credit here, no. Here you can take it as an S. So there is an incomplete information involving in this problem, ma, because the price paid is an inclusive of taxes they are saying. But okay, if I am giving that explanation also from another way, there is a loophole in this, ma. So just remember that adjustment what we are done. What is the reason? Because it is an MTP problem also. Maybe you can get that copied and pasted question. Otherwise, if they are given that full information also, you can get one, no issue. So, but what are the adjustment they are given for the credit period, ma? They are reducing that credit period. They are reducing that ITC, ma. So nothing but okay. They are the simply knowing the reason. If there is an ITC, is that the cost will be reduced. They are following, but that is not acceptable, ma, because there is an information is missing in this question. So that's why please reduce the bottom credit period related. Sorry, please reduce that ITC related. Then you will get that arm's length price as an what, ma? 24,105. So if you are observing that also, yes sir, if you are observing that also, they are asking only computation of ALP. We are computed that ALP. That's enough. If you are verifying the last MTP, that is in last examination, that is nothing but December 23 MTP. You are getting this question for 8 marks, sir. So that's why maybe you can get this question also. Please remember. So what are the adjustment we have to make? Are you clear, ma, up to now? Yes, please remember that ITC related adjustment, ma, we have to reduce it. Okay. So this is then how they can frame the questions, ma. And one more question we will discuss with regarding that what, ma, cup method. I think that is we will discuss question number 3, ma. I think yes, ma, we will discuss question number 3. So please open the question number 3, ma. So this is an ultimate question, ma. So this is an ultimate question for the cup. If we are able to solve this question, we can solve any question also in exam, ma. We can solve any question also in exam. This is an ultimate question. So it covers that all the functional adjustments, ma. Shall we start, ma? Yes. Yes, ma. CD Limited, that is an Indian company, that is in seller, ma. CD Limited, that is an Indian company. We are selling. That point you should remember. So in all the last problems, we are purchasing. Right now we are selling. Yes, ma'am. We are selling some goods to the J Incorporation Korea, that is an associated enterprises, ma'am. So what is that transaction in between that associated enterprises? Yes, 25,000. Sorry, 2,50,000 units, 3,000 per unit, ma'am. So that means we are selling that how many units, ma? 2,50,000 units at the rate of what, ma? 3,000 per unit on free of board. So that means nothing but what, ma? Free on board means nothing but what, ma? We are charging the only cost from them. Yes, ma. The remaining freight and insurance have to be incurred by whom, ma? J Incorporation itself. Okay. And freight insurance amount they are revealing that, ma? 700. And the quantity discount also they are revealing that how much amount, ma? 200, because we are purchasing the 2,50,000. Or nothing but they are purchasing the 2,50,000 units from us. That's why we are giving the quantity discount per unit. How much, ma? 200. So nothing but above price includes the warranty or without warranty, ma? Without warranty we are selling it for that what, ma? 3,000 per unit. The same things we are selling for the J Incorporation Nepal, that is an unrelated party, ma. So we are selling 35,000 unit only, 5,800, but here cost insurance freight, ma. That means within these 5,800 we are charging the cost plus insurance plus freight amount. Next, Ganesh, this 5,800 is including that what, ma? Warranty for the 2 years, warranty cost is 500. So here definitely this problem we have to solve by using the comparable uncontrollable price method, because there is an what, ma? Comparable uncontrollable price method is price is available, then we have to follow that what, ma? Cup method. Ganesh, for that adjustment, what is that? Yes, ma. Base amount we have to take. All of you in online also, please let me know, ma. What is that amount we have to take it for that doing that functional adjustment, ma? Price charged in the comparable uncontrollable price. This is only we have to take that base amount. For this only we have to make adjustments. But what are the functional adjustments are there, ma? The first one is an freight and insurance, that is an free on board as well as what, ma? CAF. Second one we have an warranty. Third one, quantity discount. If I am doing these three functional adjustment, then the problem will be over. Then the problem will be over. Are you clear, ma? Yes. What is that, ma? Particulars. Don't think about the whether we have to add or less always, ma. Based on the concept only you can follow, then you can able to solve. Don't by heart that what is that additions, what is the deletions, ma. That may not be worked out in all situations. Yes, here we will discuss. The first we will discuss about the freight insurance as well as what, ma? Yes. Sir, here the cost, freight, insurance, totally we are charging the 5,800. But we want to know that, yes, ma, that means our actual transaction price includes the only what, ma? Cost. So how you can arrive at a cost, ma? If I am removing the freight amount, if I am removing the insurance amount, can I locate here? Yes, you can remove easily. 5,800 minus how much, ma? 700 only, because the freight and insurance they are given that what, ma? 700. So that means the freight and insurance charges easily you can remember. Sorry, you can remove. Why, ma? Because the cost plus insurance plus freight itself 5,800. Please remove that insurance freight related 700 rupees. Then you can locate it here. Next, yes, ma, with the warranty. Yes, ma, with the warranty. This is an what, ma? 500 rupees. So with the warranty 5,800. That means it includes the warranty also. Here without warranty. Can I remove warranty here, ma? Can you tell me warranty amount is how much amount? 500. Please remove the warranty. Next, quantity discount. Ganesh. So here, without quantity discount, we are charging 5,800. That means because we are purchasing the 35,000 units only, there is no quantity discount here. If the quantity discount is given here, that means what is the price we have to reduce, ma? 200 per unit. So because we are purchasing the bulk units, on that we can get that what, ma? Quantity discount. Because of the quantity discount, what will happen? Price will be reduced. That's why please reduce the quantity discount. Many students are thinking, yes, if this problem is there, we have to reduce all the things. No. Here, seller point of view, we are thinking. All last problems, we are thinking from the point of view of Purchaser. So if you are observing the last problems, please verify ma. All the things we are thinking from the what ma? Purchaser point of view. But here we are seller. Yes ma. Are you clear ma up to now? So that means if you are reducing that all the things, what is that ALP ma 4400? Sir, previously what is that amount you are credited to your P&L account ma 3000 only. 3000 only. Here what is that amount we have to credit ma 4400. That means every unit what is that price will be increased ma. Total income will be increased. Every unit is on what ma 1400. 1400 into 2,50,000 unit ma. 1400 into 2,50,000 unit. 35 crores total income will be increased based on what provisions ma? Transfer pricing provisions. Based on this. So if you are thinking from the purchaser point of view, you will write it as an what ma? Transfer pricing provisions are not applicable. Because if you are thinking from the cost point of view, that means the purchaser point of view, you will write that answer in a reverse memo. So don't think it at, yes, what is that Indian entity is doing, purchasing or selling? Yes, selling only they are doing. Selling means nothing but what ma? So we are credited only 3000, but want to be credited, we want to credit how much amount ma? 4400 as per the transfer pricing provisions. Every unit 1400 will be increased. How many units we are selling ma? 2,50,000 units we are selling. That means 35 crores will be total income will be increased based on what ma? Transfer pricing provisions. Clear ma? Yes ma? These are the problems are enough for the doing the things ma. But yes ma, these are the problems are enough for doing in the cup method. Sir, if you are verified, okay, any paper also, okay, randomly I will open the, yes ma, MTP bro, MTP, just random. Okay, what is it question? On which method they are asking the question also, just we will check it out. This is an asking based on the cost plus method, ma, that is only our next discussion. Anyone, can you tell me, this is a question related to which chapter? So they are given the PCBP ma. Please text out. So this is a PCBP chapter question or any other chapter question, please please identify ma. Ganesh. All of you? Huh? Yes ma, this is a thin capitalization 94B. But they are asking what is the amount of interest to be allowed under PCBP. That means, yes, ma, while you are making the payment of interest to that associated enterprises, some amount only allowed, some amount to be disallowed. I think you know what is that excess interest will be disallowed. Can you tell me what do you mean by the excess interest, ma? Total interest minus 30% of EBITDA or interest paid to AE, whichever is low, that is only what my excess interest that to be disallowed. The remaining amount to be allowed. The many students are thinking this is a PCBP problem. In the Hyderabad marathon class also, at the time of explaining this question, they are classifying this question in that PCBP chapter. So that is totally wrong. If you are thinking this is a PCBP question, how you can do ma? Yes, whatever it may be, in the P&L account only we are allowed or disallowed under the head PCBP only. But this concept is totally related to which chapter ma? Transfer pricing chapter, that is in thin capitalization under section 94B. Ma, online, are you understood this question ma? For 7 marks they are giving this question ma. You have to calculate the what ma? EBITDA. At least just I am expecting the reply. If you are busy, okay, I will not disturb you. Okay, I will quit the class also. Yes ma'am. Next this is a cost plus ma'am. So totally we are getting that how many marks ma'am? 14 mark. Direct questions only. There is no twist here. Direct questions that are given in an examination ma'am. And next no issue. Next ma'am. Yes ma'am. Next one more thing ma'am. The remaining questions you can do as an homework ma. You can do as an homework. Cup method related questions you can do on homework ma. Repeated questions only ma.
So like if any free on board CAF basis, that is new to you. That's why I'm explaining that questions to you. So I'm not giving that intentionally anything as an homework, ma. Please believe, please believe. So if anything is definitely important, definitely I will cover that also. I think these two also over, ma. Deemed associated enterprises questions also over. Deemed associated enterprises questions also over. So if anything is a definitely new to you, definitely I will explain in the class itself. Ma, the remaining things, believe in yourself first. Automatically you can get the answer. So the please think from the word mark, whether it is in purchasing or selling. From that point of view, if you are thinking enough, you can do adjustments, sir. So, okay, 3 functional adjustments are given in that examination. Ma. Out of the 3, I done the 2 functional adjustment correct, sir. What about the 1 functional adjustment? If that is wrong, no issue. You will get in proportionate marks also for that. Ma. Proportionate marks also for that. If any 2 adjustments are there, one is right, another one is wrong also, no issue. You will get the proportionate marks. But first you have to write it down. These 2 enterprises are associated enterprise. One of the associated enterprises is a non-resident. That's why if any transaction is entered in between them, that is what international transactions. So transfer pricing provisions are applicable. We have to find out the arm's length price. The theory point you have to write it down. You have to write that what, ma? The theory point. Are you clear, ma? Yes. Next, ma. Next, we will start about the what, ma? Cost plus method we will start, ma. Cost plus method we will start. So for that cost plus method, I will start with the question number 1, ma. I think this is only your MTP question, ma. Please make an observation. This is only your MTP question. Okay. Cost plus method we will start. So just we will discuss, ma, facts about the question. Brain Incorporation holds the 35% equity in Salim. Brain Incorporation, 35% equity in Salim. The company Salim engaged in the developing the software and maintenance of the software customers across the globe, which includes the Brain Incorporation also. The first of all, you have to make an observation. These 2 enterprises are associated enterprises, and if any transaction is entered in between them, that is an what, ma, international transaction. So that theory first you have to write it down. The here, can you tell me, the Salim is nothing but what, ma, service provider here. Who is a service recipient, ma? Brain Incorporation. That is also customer for them. So because the Salim is nothing but engaged in the developing the softwares across the what, ma, globe, and they have the various customers. One of the customer is nothing but what, ma, Brain Incorporation. Yes. During the 23-24, Salim spends the 2000 man hours for the developing the a software for the Brain Incorporation. So Salim Limited invested how many hours, ma? 2000 man hours. So they are billing. That means, so what is that bill they have generated and send it to the Brain Incorporation, ma? So please calculate 2000 into every hour 1000 rupees. That means how much, ma? 20 lakh bill they are sent it to the Brain Incorporation. Okay. So what is the cost incurred for this, ma? 15 lakh. What is that amount of cost incurred for this? Nothing but what, ma? 15 lakh. So nothing but 15 lakh. We are actually incurred the cost, but we are generated the bill for that how much amount, ma? 20 lakh. The similar work done for that unrelated party, we are charging that profit was what, ma? 50% only. What is that profit we are charging, ma? 50% only. Can you tell me, this is a similar work we are provided to the other customers, on that we are creating the profit margin of what, ma? 50% only. Okay. But here, what is the profit margin we are charging? We will discuss it, ma. But what are the functional differences we have, ma? So Brain Incorporation giving the technical support to the Salim, but yes, ma, there is no other functional relationship with the Tri Limited. So can you tell me the Tri Limited is unrelated party, ma? With the unrelated party, we are charging the 50% gross profit. Here the Brain Incorporation is giving the technical assistance to that what, ma? Salim. That's why, what is the value of the technical support, ma? 8% of the gross profit. Yes, ma. Next, credit period. Salim Limited given the credit period of 90 days. Yes, ma, that is an how we are valued, ma, 3% of normal billing rate is, ma, which is not given to others also. That means exclusively we are providing that credit period to whom, ma, brain incorporation. So under the cost plus method, please calculate that ALP. What is it, increasing or decreasing the total income? So just I think if you are observing already, I mentioned that what, ma, a summary for that question number 1, ma. A summary for that question number 1. Please check it out. Yes, sorry. Yes, this is only, ma. Ganesh, please verify it, ma. First of all, Salim Limited is providing that what, ma, services to them. That is nothing but what, ma, brain incorporation. Can you tell me what is that bill we have generated, ma? So 2000 man hours, 1000 per hour, that is 20 lakh we have generated. What is the cost incurred for this project, ma? 15 lakh only. 15 lakh only. Next one, ma, the Tri Limited, that unrelated party, what is that amount we are charged, ma? 50% gross profit. What is that, ma? 50% gross profit. Okay. Next, can you tell me the technical support is provided by the brain incorporation, that is valued, that is 8% of the gross profit, ma. So credit period also 90 days given, the 90 days value, how they are valued, ma? 3% of billing rate. Here, who are providing the technical support to whom, ma? Brain incorporation provide the technical support to that, yes, ma, Salim, but Tri Limited is not providing any technical support, ma. Yes. Here, what is that method we have to apply, ma? So is there any comparable uncontrollable price is there? No. There is no comparable uncontrollable price. Here we have to apply cost plus, ma. Example, I will tell you. If any entity, if an associated entity manufactured the any good, and if that isn't sold to that what, ma, associated enterprises, we have to calculate that is plus cost plus method, ma. So if there is a comparable uncontrollable price is there, we have to follow cup method. If any associated enterprises manufacture the goods or provided any services to that associated enterprises, we have to calculate that arm's length price by using that what, ma, cost plus method. So I will tell you the simple thing, ma. If there is any cost plus method, we have to do that functional adjustment for the rate, that is in gross profit. Under cost plus method, we have to take that what, ma, what is that gross profit margin for that unrelated party, ma, 50%. That is only you have to take it as a base. For this gross profit, we have to make adjustments, ma. So they are charging that cost, you know already, that is in 15 lakh. For the 15 lakh, cost plus means nothing but what, ma, what is the profit we have to add? You know already cost. This 20 lakh is not correct, ma. This 20 lakh is not correct. We are added the profit of what, ma, 5 lakh. That is not correct because we want to add the profit as per the market. So what is that, ma? Gross profit 50%. But there is a functional differences is there. Why? Because you are outsiders, you are charging how much amount, ma? 50%. For outsiders, you are charging the 50%. That correct. But there is a functional difference is there, ma. Here there is no technical support from whose side, ma? Tri side. But here you are giving the technical support. You are giving the technical support means the profit they will charge the more or less, ma? Less. So that means here there is no technical support. We are charging the 50%, ma. Here we are providing the technical support. If I am providing the technical support, the work of the Salim Limited will be reduced. So that's why they will reduce the what, ma? Gross profit. What is the reduce, ma? 8% of gross profit. Can you calculate that 8% of gross profit, ma? That is nothing but what, ma? 8% of what, ma? 50. That is nothing but 4% we have to reduce. So in cost plus method, always we are doing that functional adjustment for the what, ma? Gross profit rate. Next, Ganesh. So here there is no credit period, ma. That's why we are charging the 50%. Credit period is there. Can you tell me the price will be increased? Sorry, profit will be increased or reduced, ma? Increased. So I am selling to you at the spot price, ma. But okay, if you are asking that what, ma, 3 months or 4 months credit period, I will charge the more amount or less amount? More amount. So that's why, because of the 90 days credit period, how much it will be increasing, ma? We have to add or less, ma? Add. Can you tell me how much? 3% of normal billing rate. That is in 3% of what, ma? 50%. So can you tell me after additional, that is in what, ma? Gross profit rate is 47.5. Already you know cost plus if you are added the gross profit, then you will get that what, ma? Arm's length price. Yes, please check it out, ma. Right now, I am finding out the ALP. ALP means nothing but what ma selling price only. Ganesh, what is the cost ma? 15 lakh. On cost. So this is only formula ma. Cost is, sorry, selling price if you are observing it as an 100. Profit itself we got how much amount Ganesh? 47.5. Yes ma, this is on 47.5. Cost is how much ma? 52.5. So that nothing but here you can actually calculate the profit ma 15 lakh into, so that is a cost. On that cost, what is that ma 47.5 divided by, yes ma 47 point divided by, what is that ma 52.5. That means on cost we are calculating the profit ma. So cost plus profit totally that is a 28 lakh 57,143. That is a nothing but what ma cost plus profit. So that means you want to include in the P&L credit side how much amount ma we are charging that only 20 lakh. That is not correct. We want to charge the how much amount ma 28 lakh 57,143. That is only we have to increase. So the only important point in this entire problem, this calculation only. The many students are confusing. This is your foundation related basics. So nothing but ESMA sale price is an 100. Already we calculated that what my profit is on 47. Sir, why? Sir, can you get the 47? Because it is service oriented ma. You can get the profit also. Much amount of the profit also you can get. So 100 rupees is a sale price. Within that 47.5 is a profit. The remaining is a cost. So nothing but on cost we have to calculate the profit. That means 15 lakh into. So can you tell me for profit percentages ma 47.5 divided by 52.5. You will get that what ma profit amount. If you are added the profit plus cost, that is a sale price. Are you clear ma? This is an important question. Okay. Yes, this is an important question. Are you clear ma up to now? Yes. So don't think about it ma. Don't think about it. The same question we have in one more time also in the last. Yes, ma. This is only question number 28, ma. Same question. Ganesh 28 is the same question, ma. Copied and pasted. Yes, ma. I think 26 is also cost plus method, ma. You can do on your own, ma. No issue. Okay, that is on 26, ma. You can do on your own, ma. But if you are ignored also, there is no issue with respect to this problem. So because that adjustments and all the things are what ma not given in a clear way. So but okay, you can do on your own, no issue. So but what I want to give you that functional differences related ma. Ganesh, if there is a cup method, you have to take the comparable uncontrollable price and you have to make that what ma functional adjustment. If that is a cup method, you have to do that functional adjustment for that what ma gross profit. You should remember these two basic points. If that is a cost plus method, if that is an what ma cost plus method, can you tell me you have to do that functional adjustment for that what ma gross profit? So definitely they will give you that cost. What is that you are incurred for producing that what ma product or production of that service, and they will give you that gross profit charged in that what ma any other unrelated party cases. So plus or minus we have to make that adjustment ma. So in case of cup method, yes ma, can you tell me what is the thing ma? So price charged in comparable uncontrollable price you have to take. For that you have to make that what ma adjustments. Are you clear ma up to now? Ganesh, always you should remember these 2 points ma. So under cost plus method, we have to make that adjustment to that gross profit, and after that gross profit is there, you have to add that profit to that cost, then you will get what ma arm's length price. Next, if there is any cup method, we have to make that adjustment to that comparable uncontrollable price. Comparable uncontrollable price. So no need to write it down, ma. Just you can remember on your own also. If there is any what, ma, method, comparable uncontrollable price. After that we have to do what, ma, additions as well as the deletions, adjustments, ma. If that is a cost plus method, yes, we have to make that adjustment for that what, ma, gross profit rate. After that we have to add that profit rate to that cost, ma. Profit rate to that what, ma, cost. Clear? Yes. So next we want to discuss the, yes, this is also over. One of the important concept, ma, that is a resale price. We will discuss the question number 9 and question number 10 related to resale price, ma. Shall we start that question number 9 as well as the question number 10, ma? So please open the question number 9, ma. Resale price, ma. How you can identify that problem related to resale and all the things I will give you, ma. First question number 9 and question number 10. First we will solve the question number 9, ma. Ganesh, shall we start the question number 9? Sir, in examination, if they are mentioned the what, ma, method also, no issue, you can do that problem directly. Even though if they are not mentioning that what is that method, you have to identify the which method is applicable in that circumstances. Whether the comparable uncontrollable price isn't used or comparable uncontrollable price are used or cost plus method or resale price method, you have to identify, Ganesh. Yes, we will discuss the question number 9, ma. Please check it out that question number 9, ma. Yes. Yes, ma. P limited. P limited. Okay. P limited is purchasing the, sorry. P limited is purchasing from A limited, ma. So that P limited is selling to that A limited for 15,000. That means who are purchasing, ma? A limited is purchasing, ma. With the help of how much amount, ma? With the help of how much amount, ma? A limited is purchasing from the P limited 15,000, ma. For that expenses are incurred how much, ma? 500. We are reselling it to that. We are reselling it to that unrelated party for how much amount, ma? 18,000. We are reselling the goods from the, yes sir, we are reselling the goods that are purchased from the our associated enterprises, ma. Okay, next one, ma. From X limited also we are purchasing, ma. That is purchased for 22,000. For that expenses are incurred how much, ma? 700. We are selling it for that how much amount to that unrelated party, ma? 26,000. What is that, ma? 26,000. Ganesh, you have to make an observation. We are purchasing the goods from our associated enterprises. Yes, ma. We are purchasing the goods from our associated enterprises and we are reselling it. That's why we have to follow that which thing, ma? We have to follow here, yes, ma, resale price method, because we are purchasing from the our associated enterprises and we are reselling to that what, ma? Unrelated party. Here we have to follow that what, ma? Resale price method. Yes, next if you are observing that what, ma, that P limited is nothing but what, ma? AE. Here the A limited also that AE. So this 15,000 is an correct one, ma? No. This is an actual transaction price. We want to find out that what, ma? Arm's length price. Shall we do, ma? Shall we do? Yes. The first of all, what is that profit margin added here? We have to identify. What is that profit margin added here? We have to identify, because that is an what perfect price ma. Because that is a price charged in an unrelated party means that is a perfect price only. So nothing but in entire this transaction, what is that profit they are charged? So shall we calculate easily ma? Just in rough manner I am calculating. Yes ma, in rough manner calculating. So yes ma, computation of what ma? Gross profit margin. Sir, if I am calculating the gross profit margin, that itself you can't mix with the cost plus ma. Cost plus method is nothing but what ma? We are manufacturing the goods and we are selling the goods to AE. In this situation, we want to find out the arm's length price, that is under cost plus. Here we are selling and reselling. That's why the resale price we have to follow for that. Yes, ma. There is a difference between that all the methods, ma. Okay. Computation of gross profit margin on related transaction or unrelated transaction, ma. Unrelated transaction. Sir, many students are thinking, confusing about the methods, ma. No need to think, no need to think about it, ma. So you can't follow the cup method also. There is no comparable, uncontrollable price. Because if we are purchasing the goods from the one AE and we are reselling it. That's why resale price only applicable here. Okay. Can you calculate easily, ma? So I want to calculate easily as a rough, ma. But so 26,000 is nothing but what, ma? Sale price. What are the costs you are incurred, ma? 22,000 you are paid to that purchase, that means seller, that is an X limited. And what is the 700 you are incurred? This is only the profit divided by what, ma? 20. Yes, ma. Can you tell me what is that amount, ma? 26,000. Please calculate, Ganesh. Into 100. What is that gross profit?
12.7%.
12.69%, I think. Yes, ma, or you got this answer, ma? Nothing but this is an sale price, ma. This is an what, ma? Total cost incurred, ma, divided by selling price. We will get what, ma? 12.69. What is that amount, ma? 12.69. Yes. Yes, next one, ma. So here we can compute the arm's length price easily. Computation of what, ma? Arm's length price easily. How you can compute that arm's length price, ma? Super. Yes, ma. How you can compute that arm's length price, ma? Sir, yes, ma, we are selling it for the 18,000. That is a sale price, okay. But here we want to identify that what, ma? If the sale price minus, yes, ma, gross profit minus expenses, I can locate what, ma? Minus expenses. I can locate what, ma? At what price we are purchasing, you can calculate easily. So 18,000 we are selling, ma. It includes the gross profit and minus whatever that expenses you are incurred. So that expenses also if you remove, can you locate that what price, ma? We are actually paid to our associated enterprises we want to pay. Yes, ma. So please calculate, ma, sale price. So definitely we have to write it down the particulars amount column, ma. So that is a mandatory universal format, ma. That is a universal format. Don't forget about it. The sale price, yes, ma. How much, ma? Sale price is nothing but 18,000. Yes, ma. Minus expenses incurred 500. So the minus gross profit, ma. Can you tell me what is the gross profit we have to reduce here? Yes, that is on 12.69 percentage on what, ma? Sale price. Can you calculate on sale price, ma? That is an 18,000. 2,284. Yes, ma. Please reduce it, ma. How much it will be? 15,216. So this is only arm's length price, ma. You want to pay Yes, ma, you want to pay. That means in the P&L debit side. Yes, ma, you have to pay how much amount? You are already debited how much, ma? 15,000. That is an actual transaction price. That is not correct. We want to debit that 15,216, ma. That is an arm's length price. Because of the transfer pricing provisions, total income here what, ma? Decreased or increased, ma? Decreased. So that's why there is no adjustment is required. There is no adjustment is required. Are you clear, ma? Yes, you have to think always from this point of view, ma. Please observe. Yes, ma. Here, Ganesh and Nivedita and Parvati and all of you, please think, ma. This is not a correct price. How you can calculate the correct price? Simply, in this problem, this is not a correct price, ma. How you can calculate the correct price? So, from that similar transaction, please calculate the gross profit. So, please reduce that gross profit and expenses also reduce. Can you tell me what is that, ma? You will get the what, ma? Cost. That cost, yes, ma, you are charged more or less, then you can compare and easily you can do that what, ma? Things. Are you clear, ma? So, if there is a resale price method, you can identify easily whether it is a problem solved under the resale price or not, ma. This is a problem given under the resale price. So, if they are given in an examination, you are unable to identify, ma, please check it out. They are not given anything. So, this is an exam problem, ma. This is also study material problem. ICMAI study material problem and the past examination question also. They are not mentioned anything about that what, ma, this is a resale price. Yes, you have to identify because we are purchasing the goods from the one KE and we are reselling it to that others. That's why we have to apply that what, ma, resale price. Clear? Next, ma. So question number 10, ma. Shall we start the question number 10, ma? Yes. So this is only the last question for the resale price, ma. There remain one more question is there, resale price, ma. That you can do directly. That is on question number 4. You can do directly, ma. So 9 and 10 we will discuss, ma. So shall we discuss the 10th one, ma? So similar question, ma. Same question. There is no change also. That is on question number 4. Question number 4, resale price, the same question, ma. You can do that question, ma. And I want to tell you that question number 11. Sorry, question number 10. Same question, ma. There is no differences also. There is no differences also. Shall we start that question number 10? Yes, ma. So, summarizing information, I want to give it to you, ma. Sir, by way of looking this question, nothing but automatically you can write that, ma. So, question number 10, they are not mentioned that any name of the method also. Please compute the arm's length price. Please, same question, ma. Question number 4, please go and check, ma. Question number 4, same question, but they are changing the names only. In question number 4, if you are observing, they are given the name of the method also, I think. Okay, here also they are giving the cost, determine the arm's length price. But by way of reading that information, you have to observe, yes, this is a cost plus method, ma. Shall we start that, ma? Ganesh, shall we start that theory, ma? Yes. So nothing but terabyte is an AE to that what, ma? Terabyte is nothing but AE to the R limited. Both the parties are what, ma? Associated enterprises. Ganesh, we are purchasing the 6,000 number of units at the rate of 6,700. We got a quantity discount of 1,000 per unit. We got a quantity discount of how much per unit, ma? 1,000 per unit. Okay. And freight we are paid 200, ma. So what is that, ma? Quantity discount is nothing but what, ma? 1,000 per unit. The freight is 200. We are purchasing for our associated enterprises and we are selling to that unrelated party for how much amount, ma? 10,000. So please check it out. We are purchasing for the 6,700. We are reselling it for the 10,000. Next. Yes, ma. This is an unrelated party, ma. From unrelated party, we are purchasing. They are not mentioned that any price, ma.
What is that? Quantity discount, ma? 500. What is that? Freight and customs duty here we are paid, ma? 1200. Gross profit itself directly they have given. In the last question, you are calculated this gross profit. I think if you remember. So in last question, you are calculated this percentage, ma, because they are given that all the factors you want to calculate this, but directly here they are given. Are you observing what is the change made in that question, ma? They are directly given this, ma. That means what you have to do, ma? Adjustments directly. So that means you have to do this adjustment directly. Okay, shall we do, ma? Yes. Please, Ganesh, what is that heading we have to make, ma? Computation of arm's length price. What is that method we have to follow here? Resale price method. Why, ma? Because we are purchasing from the one AE and we are reselling it to the others. So that's why resale price method here we have to apply. What is that custom format here, ma? What is that universal format? Yes, particulars as well as what, ma? We have to mention that what, ma? Amount. Particulars as well as what, ma? Amount. Can you tell me particulars and amount? Within that, the first we have to take that what, ma? So already we are taken here what, ma? 18,000 minus we are reducing that what, ma? Gross profit and expenses and differences we have to reduce. Simply the price is nothing but what, ma? Resale price. Can you tell me what is the resale price? Yes, ma? Resale price of resale price of goods purchased from terabyte. Can you tell me purchased from terabyte we are reselling for how much amount, ma? Please take it out. What is the resale price, ma? 10,000. From this we have to reduce the what, ma? Gross profit. From this we have to reduce the what, ma? Gross profit. Can you tell me what is the gross profit, ma?
2,000.
20? Yes, ma. Into what, ma? So please reduce the 20% on 10,000, ma? 2,000. Next, is there any functional differences, ma? Yes, we have one functional difference is in discount. Second functional difference is in freight. These two are very, very important. And next attempt, your question will be this question only. Pakka. Ganesh, we are reduced how much amount of quantity discount here? 500 we are already reduced and we got what, ma? 20% of that gross profit. How much amount we are eligible for that quantity discount, Ganesh? 1,000, Jaffa. This is not 100, 1,000. Okay. Please make an observation, Ganesh. So we are already reduced the 20%. Can you tell me how much we got, ma? 8,000. Are you clear? This is only 8,000. We are reduced only 500. Can you tell me how much amount we are excessively can reduce, ma? 500. Because in this 20%, that means while you are calculating this 20% as my gross profit, we are reduced the quantity discount only 500. But we can reduce that how much quantity discount, ma? 1,000. Excessively I can reduce how much amount here? 500. Please reduce the 500. So that means nothing but we can call it as an excessive discount or incremental discount. How much, ma? 500 you can reduce. Less, ma. Why? What is the reason? Because we are already reduced the 500 only. From this gross profit calculation, we are reduced only 500. But we are eligible to reduce how much, ma? 1,000. Excessively how much amount you can reduce? Next. Less. So less or add, we don't want to think about it, ma? Yes. Can you tell me what is that amount of the freight we are already reduced, ma? Amount of the freight already reduced how much, ma? 1,200. So that means from the sale price already we are reduced the discount, that is on what, ma? 500, and already given the 1,200 we are reduced, and if you are calculated the gross profit, 20% is came. Yes, ma? 20% is came. Then here we are reduced only how much, ma? 200. Can you tell me how much expenses we can reduce excessively, ma? Yes, ma. How much amount we can reduce that excessively, ma? That is nothing but what, ma? 1,000.
So nothing but what ma? Freight purchase related expenses. Yes ma, how much ma? 1000. So can you tell me how much it will be ma? 6500 you will get ma. You are debited how much? 6700, but you want to debit that what ma? 6500 only. That's why every unit 200 price you have to what ma? Increase. Every unit you have to increase that price of how much amount ma? Yes ma, how much? 200. That means 200 into how many units ma? 6000. That is on 12 lakh you have to increase ma. So 12 lakh you have to increase. So please try to open the question number 3 and please do the adjustments ma. Shall we start the new chapter ma? That is in what ma? DTAA. Okay. Before going to the main concept ma, first listen intro ma. Intro is very very important for this chapter. Can you tell me? So in India, so right now we are discussing the tax treatment in where ma? India. In India, what is the tax treatment for the resident and the ordinary resident ma? What is the tax treatment for the resident and ordinary resident ma? Global income is taxable in the hands of resident and ordinary resident. What do you mean by the global income? Indian income plus foreign income. If any income is in that may be Indian income, foreign income, both the things are taxable in the hands of resident and ordinary resident. Resident and ordinary resident. Next one, ma. What about the non-resident ma? In the hands of non-resident, only Indian income only taxable in the India. What is that income is taxable in the hands of the non-resident in India ma? Only if you having an Indian income, that is only taxable. This is a basic thing you have to know. Suppose Mr. A is a resident and ordinary resident ma. Mr. A is nothing but what ma? Resident and ordinary resident. Okay. He having that Indian income of 10 CR. He having the foreign income that is in USA 2 crores. So can you tell me in India what is his residential status ma? Resident and ordinary resident. Can you tell me what is the income taxable in his hands? The entire global income is taxable in his hands ma. Can you tell me what is the taxability in India if I am asking? Definitely you need to say global income. What is that Indian income ma? 10 crore. And what is that foreign income ma? 2 crore. Total 12 crores is taxable in India. Suppose, yes ma, what is the tax treatment in USA ma? Simple, yes ma, based on which rule ma? Source rule. Because you are earned the 2 crores in USA, so that's why they are levying the tax on how much amount ma? 2 crore. So generally, yes ma, India here collecting the tax on resident rule. Because you are a resident and ordinary resident, for you, global income is taxable in India. So that's why we are taxed at how much amount in India, ma? 12 crores. So based on the source rule, USA also collected the tax. Can you tell me what is the double taxed income here, ma? If you are observing that what is the double taxed income, ma? 2 CR. 2 CR is nothing but what ma? Double taxed income, because that already taxed in USA, once again that is a taxed in India, so that is only called as what ma? Double taxed income. That is only called as what ma? Double taxed income. So please give me confirmation about it ma. So because one country is levying the taxes on that resident rule and one country is levying the taxes on source rule, because of this structure, yes ma, definitely there is a double taxed income. What is a double taxed income ma? 2 crores. 2 crores taxed in USA and that same 2 crores taxed in India also. So that's why that is only called as what ma? Double taxed income. So what are the consequences if any income taxed twice in any country ma? Simple. So SSEs are trying to avoid the tax or evade the tax ma. Because if you want to collect the tax, okay, that's okay for me also. You are collecting the tax twice. So this is an horrible. That's why I will hide the what ma? Total income also. I will hide the what ma? Total income also. So because of these consequences, definitely we want to provide the relief to whom ma? Mr. A here. Because 2 crores isn't taxed twice, that's why we want to provide that what ma? Relief to Mr. A.
In order to provide that relief, what is that, Ganesh? In order to provide the what ma? Relief. We have two types of reliefs we can provide ma. First one is nothing but bilateral relief. Bilateral means what ma? Both the parties are agreeing together. They can give that what ma? Relief. That means in between the both the countries we have an what ma? Double taxation avoidance agreement. Suppose example, country USA and country India, both the countries having the double taxation avoidance agreement, then how they can provide you relief ma? By using the section 90A, that is only called as what ma? Bilateral relief. By means nothing but what ma? Both the parties are agreeing together and they want to provide the relief. How they can give you the relief ma? So they will write that all the terms and conditions in an agreement. As per that agreement only, they will give you that what ma? Relief. Can you tell me what do you mean by the bilateral ma? If any double taxation avoidance agreement between the two countries are there, that countries will provide you relief by using that what ma? Bilateral. Yes ma? So normally if you are learning this concept from CA final ma, we have only two model questions and two things only we have. But in our CMA final, this syllabus is very huge ma. Just listen carefully. So how we can provide the relief by using the bilateral relief ma? Ganesh, please check it out the chart. Yes ma. In this bilateral relief, we have two things ma. First one, tax exemption method. Second one, tax credit method. So these are the what ma? Methods for giving the relief ma. How many methods we have, Ganesh? First of all, totally we have two. The first one is nothing but what ma? Tax exemption method. So first we will concentrate on this tax exemption method. Later on we will discuss the what ma? Tax credit method, etc. Okay. Can you tell me there is an DTAA or no DTAA? There is an DTAA. Then we can provide the relief under section 90 or 90A. Yes ma. So if there is nothing but what ma? DTAA, how we are going to provide the relief ma? Two methods are there. The first one, tax exemption method. Second one, tax credit method. In tax exemption method, once again we have two ma. That is an what ma? Full credit method. Sorry, full exemption method and exemption with the what ma? Progression method. Exemption with the what ma? Progression method. Shall we start ma? Can you tell me how many methods we have ma? First of all, how many types of relief? If there is a DTAA 90 or 98, there is no DTAA 91 ma. If there is no DTAA, how we can provide the relief ma? 91. DTAA full form ma? Double taxation avoidance agreement. So just we will concentrate on the bilateral relief ma. So can you tell me how many methods we have ma? First of all, the first method is tax exemption method ma. Second method is tax credit method. First we will concentrate on the tax exemption method and we will discuss the problems also. So one is a full exemption method ma. Second one is an exemption with the progression method. So please open the concept book ma. Please open the concept book. Just now we are discussing this paragraph ma. One country is taxed based on the resident rule, another country is taxed based on the what ma? Source rule. So that's why double taxation will be attracted. Sir, if there is DTAA is there, then what is the relief ma? Bilateral relief. DTAA is there, what is the relief ma? Bilateral relief. What are the section ma? 90, 98. If there is no DTAA, that is only called as what ma? Unilateral relief. What is the section number ma? 91. Yes. So please check it out the second page ma. We have an exemption method. That is, this is only the chart we are already written in the notes ma. Can you tell me what is that ma? Exemption method. Page number 2 ma. What is that exemption method? Please check it out. Shall we start ma? Yes. In this method, one country provides the exemption to such a type of income. Name itself they are revealing exempt. One income is exempt in one country. Yes ma? Generally, that means all the cases, resident country is giving up its right. That means resident country is giving the exemption and then source country is given the exclusive right to collect the tax on such incomes. What they are saying, ma? So normally in our example, can you tell me, as per the tax exemption method, yes ma, which within which country that isn't finally exempt, ma? In resident country, the 2 crores is an exempt, ma. In source country, we are giving the full right to collect the tax. Yes. But we want to discuss the ESMA exemption, full exemption method. In that full exemption method, very easy, state of source is fully exempt. So whatever that income you are earned in the state of source, that is fully exempt in the state of what, ma? Residence. Can you tell me, in residence country, sorry, yes ma, country of residence and country of what, ma? Source. So please give me treatment, ma. Here directly we can get this type of MCQs, ma. In country of resident, shall we collect the tax, ma? No. Country of residence, that is an exempt, ma. In the country of source, we will collect the what, ma? Tax. So we are levying the tax only in that what, ma? Source country. So that is a directly, fully exempt, no need to collect the tax. Then automatically there is no double taxation here. That means USA country will levying the tax on how much amount, ma? 2 crore. In the country of resident, no need to collect the tax on what, ma? 2 crore. Automatically there is no double taxation here. That is only what, ma? Full exemption method. Yes, ma. Income and in the state of source, that is exempt in the state of residence. That means who are going to collect the tax, ma? Source country is collecting the tax. Resident country is nothing but, yes, ma, not collecting the tax. Clear? That means in our example, please check it out, ma. In our example, on these 2 crores who are collecting the tax, ma? USA. In India, we are going to pay the tax on how much amount, ma? Only 10 crores, because this 2 crores is directly exempt. Clear? Okay. Second one is very important. Exemption with a progression. So these are the past examination questions also. Unfortunately, these are all the things are not covered in CA. Exemption with a what, ma? Progression. Shall we start, ma? Under this method, so state of source income. So that means what, ma? Considered by the state of resident, income from the what, ma? State of source is considered by the state of residence for rate purpose only. Here also exempt only, ma. In resident country, we are also giving exempt, but we will consider that income for the purpose of increasing the rate. For the purpose of what, ma? Increasing the rate. Shall we take one example, ma, for better understanding? Here also we will give that what, ma? Exempt in that which country, ma? Yes, ma. Here also I will take, ma, country of what, ma? What is that, ma? Residence. And country of what, ma? Source. So who can collect the tax, ma? Source country will collect the tax on their income, no issue. But in country of residence, here also exempt only. But directly not exempt, ma. We want to consider it for the what purpose, ma? Rate purpose. I will tell you what do you mean by the rate purpose. What do you mean by the rate purpose? Just listen, ma. Clear, ma? So example, ma. Yes, ma. Example, very important. Just listen. If you are listening this example, nearly 3 or 4 questions will be over. Indian company and the, yes, ma, Indian company and the income from the Indian sources 75 lakh. Can you tell me that is what my Indian income or foreign income ma? Indian income how much amount ma? 75 lakh. 75 lakh. Income from the foreign sources. Income from the what ma? Foreign sources. Yes ma. How much amount of that income from foreign sources they have ma for Indian company? 35 lakh. But relief is an available as per the which method ma? Exemption with the progression method. Exemption with the what ma? Progression method. Can you tell me what is that ma? 35 lakh. That means Indian company having that Indian income as well as the foreign income also. Indian income is 75 lakh. Foreign income is how much ma? 35 lakh. As per the provisions of the act. As per the provisions of the act, I think you know already ma. Additional surcharge is levied on that company 7%. In addition to that what ma? Normal income tax liability. I think you know. If you have calculated that income tax liability, in addition to that income tax liability, we can add what ma? Surcharge. That is for the company 7% if their total income exceeds the what ma? 1 CR. Company's total income if exceeds the 1 CR, we have to levy the surcharge at the rate of what ma? 7%. If the company's total income exceeds the 10 crores, what is the surcharge rate ma? 12% for domestic company, you know already. At the rate of what ma? 12% if the total income exceeds the what ma? 10 crores. So they are giving the detailed answer ma. In this present case, total income for rate purpose only. That means we want to increase the total income and we want to increase the rate also. So that's why for the rate purpose, Vesma only will exceed the 1 CR. How sir? 75 plus 35. How much amount ma? 75 plus 35. How much amount ma? 110. That is a 1 crore increase. And now then automatically we need to levy that what ma? Surcharge. Effective rate of the tax would be ESMA after considering. That means what ma? After considering the what ma? Additional charge of what ma? 7%. So maybe theoretically you may not understood this ma. So that's why ESMA we will discuss the mathematically how it will be worked out also. Sir, income from India how much ma? 75 lakh. Income from foreign how much amount ma? So can you tell me on 1 crore 75 plus 35, can you tell me what ma? 1 crore 10 lakh. So please calculate the tax on above ma? 33 lakh. So add that what ma? Surcharge also. Can you tell me surcharge is add on the what? Applied on the what ma? 33 lakh. 33 lakh plus into 7% how much ma? 2,31,000. After adding that income tax and surcharge plus add the what ma? Health and education cess also. Finally you will get how much amount ma? 36,72,240. Are you understood ma? To know? So that means we are calculating the what ma? Because that is an Indian company. Indian company is an always resident. So that's why global income is taxable. Yes ma? 75 lakh plus 35 lakh is 1 crore 10 lakh on that income tax, surcharge, education cess. All together, what is that amount ma? 36,72,000. So please calculate the average rate of tax. And I think in initial chapter I told this ma. Average rate of tax is equal to how you can calculate the average tax rate ma. So that means this is a tax is levied on much this income. So that is a tax divided by income into 100 if you are applied. So we are collecting the effectively how much rate ma? 33.38. Sir, can I tell you another way how to calculate this? Yes, this is only 30% plus. Yes, ma, 30% plus 7% plus 4%. Please calculate. Next one, ma. Ganesh, can you tell me? Ganesh, can you tell me? As per the exemption with the progression method, we need to collect the tax only on which income ma? In the country of residence. In country of residence, we need to collect only tax on what ma? 75 lakh. Because whatever that in that source country, that is an exempted in which country ma? Resident country. So that means 35 on 35 lakh we are collecting the tax here. That is wrong. So because whatever that amount generated in the source country, that is taxable only in the source country. In the country of resident, we need to provide what ma? Exempt. That's why. So please provide that exemption for 35 lakh. Why we are providing the 35 lakhs is an exempt here ma? Because yes ma, as per that exemption method, whatever that income there in the source country, that is an exempt in which country ma? Residence country. So please apply exemption ma. So relief we have to provide yes ma? 35 lakh into 33.8. Yes, please reduce it and tell me. 11,68,440. Please reduce it. Finally, you will get this tax mark. Sir, instead of this, we can calculate in another way also in shortcut. What is that, ma? 75 lakh only there. So indirectly, we are levying the tax on 75 lakh only. Indirectly, we are calculating the tax on 75 only. But why we are adding this income, ma? In order to increase the tax rate. Why we are adding the 35 lakh here? In order to increase the what, ma? Tax rate. Ganesh, are you clear? So without adding these things, your tax rate will be 30% only. After adding these things only, your total income exceeds the 1 CR. Then automatically you have to add what, ma? Surcharge. Yes, that is only they are given. However, that income taxable will be 75 lakh only. Yes, ma. But effective rate inclusive of the surcharge will applicable. Yes. So maybe you may not be comfortable with this example, ma. So directly we can solve one question on this, ma. Directly we can solve the what, ma? One question on this. Sir, how you can identify whether it is a full exemption method, whether it is an exemption with a procreation, ma? Easily you can identify. Yes, ma. They will give you the direction also whether it is a full exemption method or exemption with a procreation method, ma. So we will go to the question number 4. Ganesh, shall we start the question number 4? You have to solve, sir. Every person need to solve because this is not a first class, sir. I will give you that what ma question. You have to solve on your own. So don't check it out the answer also. Question number 4 is related to exemption with the procreation, ma. Sir, how we can identify whether the problem is related to exemption with the procreation? I will tell you. So page number 180, ma. Please open it. All of you, please open it. Exemption with the procreation related question number 4. Sri Anuj is an ordinary resident in India, ma. Sri Anuj is nothing but what, ma? Ordinary resident in India. Having the following incomes details relating to assessment year 24-25. Can you tell me what is that Indian income, ma? Income from India, income from country jet, and investment in public provident fund. Sir, if you are invested in public provident fund, you will get the section 80C, chapter 6A reduction, ma. You will get that what, ma? 80C chapter 6A reduction. Okay. Further that, so that means nothing but one ordinary resident. So having that Indian income and foreign income also. Yes, ma'am. For resident and ordinary resident, can you tell me what is the tax treatment, ma? In India, global income is taxable. So they will collect the in countries at what is the tax treatment, ma? They are collecting on 2 lakh. So definitely this is a double tax. That's why we want to provide the relief. How we are going to provide the relief? India has a double taxation avoidance agreement with the India has a double tax avoidance agreement with the country jet. That means they both the countries having that what, ma? DTAA. So that's why can you tell me bilateral relief or unilateral relief, ma? Bilateral relief they will give you. According to the said agreement, what they have given, ma? Income is taxable in the country in which it is earned. So that means what they have given, ma? In source country, yes, ma? In source country that isn't taxable. We know already. Not in other country. Not in other country. That means what, ma? Whatever that income is earned in the source country, in the country of residence, can you tell me taxable or exempt, ma? In the country of resident, in the country of residence, whatever the source country income is there, that isn't what, ma? Exempt. So that also they are given part. However, in such other country, such income can be included for the purpose of computation of what, ma? Tax rate. By way of looking this line itself, you have to identify this is an what, ma? Exemption with the progression. So directly we will provide exempt, but first we will include it for the purpose of increasing the rate. After that we will provide the exempt. Yes. So nothing but what, ma? In foreign income, in country jet is a tax rate, the rate of 20%, ma. Please compute the Indian income tax payable. The many students are not knowing about whether it is an exemption with a progression method also. So they are trying to solve this question, ma. That is incorrect. Shall we start, ma? Can you tell me what is that Indian income, ma? 3,40,000. What is that foreign income, ma? 2 lakh. Total, ma? 5,40,000. So this is a gross total income, ma. Can you tell me ATC deduction you can get, ma? 10,000. So this is only 5,30,000, ma. Is there any age mentioned with respect to the person, ma? Sri Anuj age? No. So that's why please compute the tax, ma. Up to 2,50,000 exempt. 2,50,000 to 5 lakh. Can you tell me how much, ma? What is that, ma? 5% plus 30,000 on that we have to levy that what, ma? 20%. So just total how much, ma? Arey total ka Jaffa. How many times are asking? Total 18,500. For that 18,500, please add the surcharge also. Final 19,250. Sir, here 19,250 is not taxable in India because how much amount is an exempt in the country of residence, ma? Whatever that income you are earned in the source country, that is an exempt. That's why we need to provide the what, ma? Relief. So can you tell me, yes, ma? What is an average tax rate, ma? 19,240 divided by 19,240 divided by. Can you tell me, yes, ma? On 5,30,000. What is that, ma? 3.63. So next, if you are observing that, yes, ma, normally how much amount is an exempt in the resident country, ma? 2 lakhs is an exempt. So residence country, whatever that income is earned in the source country, that is what, ma? Exempt. In India is a residence, India is a resident country. Yes, ma, in that country jet income is exempt. So 2 lakhs. Can you tell me what is the rate of an exemption we can provide, ma? 2 lakh into 3.63. Average tax at what rate we are collecting. So that is only on the rate we have provided what, ma? Exemption. If you have provided that exemption, what is that amount, ma? 11 lakh. 11 lakh. Sorry, 11,980. Yes, ma'am. So this is only the problem. For 7 marks they will give you. But by way of looking this line itself, you have to identify this is an what, ma? Exemption with the what, ma? Progression method. Shall we do one more problem with the exemption with the progression, ma? Yes. Sir, in an examination, they will give you whether SSE is following that optional tax rates or normal tax rates. So don't confuse about it. So in our material, they are not given anything. That's why we are not discussed, ma. In an examination, definitely they will give you whether SSE is followed that optional tax rates or normal tax rate, all the things, ma. Don't think about it, okay? So I think last questions, ma, previous examination questions, we will start. Yes, ma. Question number 21, please open, ma. Question number 21, ma. They are given these questions, ma. Please check it out. Yes, ma. First 21 within that first question, ma. Okay. Ganesh, Ranjit having how many years, ma? 35 years. He's a resident in India. As in the total income of how much, ma? In India, 11,20,000. He has another country X, that is a source state, ma. He having that 4,40,000. Assuming that, yes, ma, what is that, ma? Assuming that rate in that country X is 20% without basic exemption limit, ma. That means flat 20% in country X, ma. He opted the section 115 BAC, ma. He opted the what, ma? Section 115 BAC. And assume that incomes are assessable for that assessment year 24-25. So compute the tax liability of Ranjit as per which method, ma? Exemption with the progression method. Yes, ma. What is that, ma? We want to find out the what, ma? Tax liability as per that what, ma? Exemption with the progression method. So Ganesh, nothing but these answers are wrong, ma. Why? So because 115 BAC rates are changed based on the what, ma? Last year. So normally your suggested answers are showing still these are only the answers, ma. But can you tell me why we have to make the change the answer? Because optional tax rate 115 BAC, before that 2,50,000 only the basic exemption limit, right now 3 lakhs. So that's why we have to change that answer also. No need to get attention. Already I solved these are all the things in our, yes, ma, notes, ma. So please check it out. The question number 21, we have an answer, ma, clearly. Can you tell me computation of tax liability of Ranjit for the assessment year 24-25 ma? Income as per that Indian sources. Income as per that what ma? Foreign country. Total how much ma? 15 lakh 60,000. Is there any chapter 6A deductions that they given in the problem? No. But please mention there is no chapter 6A deduction, then net total income ma. So please find out the tax liability ma. 0 to 3 lakh nil, 3 lakh to 6 lakh 5%, 6 lakh to 9 lakh, 9 lakh to 12 lakh, 12 lakh to 15 lakh, above 15 lakh ma. After that you will get what ma? Adding that health and education cess also. Please add the health and education cess. Finally you have a tax liability of this ma. Can you tell me we are applying that average rate of tax? How you can get the average rate of tax ma? Tax divided by total income into what ma? 100. Total income into 100. What is the rate we will get ma? 11.2. Yes ma, 11.2. Can you tell me, yes ma, right now in the residence country, what is that? Source country income is exempt or taxable ma? Exempt. So that's why 4,40,000 we can provide it as a relief by using that which percentage ma? 11.2 percentage. 4,40,000 into 11.2 percentage. If you are applying 49,280, we can provide you as an what ma? Relief. So from 1,74,720, if you are providing the relief as per that which method ma? Exemption with the progression method. Please understood. Because first we are considered for the purpose of increasing this rate ma. If for the purpose of increasing this rate we are considered that yes ma income, then after we are providing the relief, yes ma, what is the relief ma? 49,280. Final tax payable is 1,25,440. 1,25,440. That is only ESMA changed answer ma. Please mention that. Please mention it ma. 1,25,440. So this is only exemption method ma. Full exemption method is easy. Exemption with the progression method, nothing but what ma? Yes, here also exempt. But we are considering the source country income in the country of residence for the purpose of increasing that what ma? Tax rate. All of you, are you understood the exemption with the progression method ma? All of you. This is a June 2023 question paper question ma. Next one ma. So we have another method, that is what ma? Tax credit method. Ganesh, what is that another method ma? Tax credit method. Sir, in tax credit method we have what ma? Yes ma. Direct credit method is there, indirect credit method is there, special credit method is also there. In tax credit method we have what ma? Direct credit method. What is that ma? Direct credit method, indirect credit method. Next one ma? Special credit method also. Direct credit method, indirect credit method, as well as what ma? Special credit method also we have. Shall we start that one by one discussion ma? So first shall we discuss the full credit method? Yes ma.
Sir, what about full exception, sir?
Sorry?
Full exception. We have covered with progression, we have covered, sir. What about that one?
This is an.
Yeah.
You are an absolutely Jaffara. So already we are discussed that one in that concept book. Directly that is an exempt in one country we are collecting. Already we are discussed the same point along with this example. Yes, if that is a full exempt method, USA will collect the tax on how much? 2 crore. Yes sir, in India what is that amount on which we can collect the tax? Pence here. Okay, you need a problem on this. You need a problem on this. So there is a chance of getting that exemption with the progression only. That is a new thing, right? So because there is a new nothing new in this. So normally we can collect the tax on this amount. They are collecting the tax on this amount directly. What is it fully exempt here? 2 crores is an exempt. Exempt means that is not included in our total income. So that means our total income, how much ma here? 10 CR. Super. Next. Yes, ma. Credit method. Yes, ma. First of all, we have an what ma? Full credit method. Under tax credit method, nothing but what ma? So if you are making an observation here, yes ma. Direct credit method is there ma. Under direct credit method, what are the things we have ma? Full credit and ordinary credit. Yes ma. First we will discuss about the what ma? Full credit. What is that matter is an over ma? Tax exemption method is over. In exemption method, how many methods we have ma? 2. Full exemption, exemption with a progression, that is an over. Credit method, we have in what ma? 4 things ma? Full credit, ordinary credit, indirect credit, special credit. What are that ma? Full credit, ordinary credit, indirect credit, special credit. Shall we discuss the full credit ma? Okay. So please start with the full credit ma. Yes ma. Full credit. Ganesh, please take it out ma. Tax paid in source country, whatever the tax you are paid in the source country is allowed as credit against the tax payable in the state of what ma? Residence. Yes ma. Exemption is a different, credit is a different. So that means nothing but in USA you are going to pay the tax on 2 crores. In our example, in USA you are going to tax on what ma? 2 crores. Here also we can collect in India, that is a resident country, we are going to collect the tax on what ma? 12 crore. But whatever the tax you are paid in USA, that will be allowed as an what ma? Credit. So whatever the tax you are paid in USA, that will be allowed as an what ma? Credit. So that means what ma? Minus, yes ma, here whatever the amount you are paid, that is an allowed as an credit. Yes ma, finally the tax we have to pay. Shall we discuss one problem ma? Full credit. That means there is no restriction. Whatever that amount you are paid in that which country ma? Source country, that is an allowed as an credit in that what ma? Country of residence. So please check it out the question number, that is an 21, yes ma, part 2. Ramesh is a resident of India, employed in which company ma? X Limited. He went on 3 months assignment to country Y. So his salary for that year is 18 lakh ma, which includes the salary in country Y is nothing but what ma? 6 lakhs. So can you tell me? That means Indian income is how much amount ma? 12 lakh only. So 6 lakhs is nothing but what ma? Country Y income. In country Y, they are taxed at what ma? 25% without a basic exemption limit. That means what ma? Flat 25%. Compute his tax liability under full credit method as well as what ma? Ordinary credit method. Can you tell me credit method means nothing but what ma? Both the countries are levying the tax. Whatever the tax you are paid in the source country, that is allowed as a credit in which country ma? Residence country. Yes. So that is only already I presented these things ma. In notes, please check it out that ma. Question number 21 2 ma. Tax liability of Mr. Ramesh for this year. Can you tell me? Can you tell me what is that ma? Indian income is nothing but how much ma? So I think okay. 3 months assignment, 18 lakh, which includes the salary. Wait ma. Yes, correct only ma. So please check it out. Sir, India, we are going to collect the tax on how much amount? Total amount. So nothing but his total income is 18 lakh. On the total amount, we are going to collect the tax because that isn't what my residence country. In source country, what is that amount on which we have to pay the tax? What is that income we are earned in that country by 6 lakhs only? So can you tell me how we are charging the tax on 18 lakh? Because this is what country of residence. In resident country, we are going to collect the tax on what total global income. So because in India, if he is a resident and ordinary resident, what is the income is taxable global? He is following the default tax regime here, and in country wide, what is that flat 25% So please calculate the tax In India, what is the tax 0 to 3 lakh, 3 lakh to 0 to 3 lakh, 3 lakh to 6 lakh, 6 lakh to 9 lakh, 9 lakh to 12 lakh, 12 lakh to 15 lakh. Yes can you tell me on above 3 lakh, that is on what above 15 lakh, how much amount is there 3 lakh, that is an 18 lakh is there? Yes, in this situation, can you tell me, finally after adding that health and education says, what is that income sorry, what is the tax 2,49,600. 2,49,600 you have to pay the tax in India. Can you tell me in country by how much tax 6 lakh into 25%? Please calculate Ganesh. 6 lakh into 25%. 1,50,000. So what is that full credit means Whatever the tax you are paid in the for source country, that is an allowed as an what credit. Whatever the tax you are paid in the which country source country. This is an what source country. This is an what residence country. Yes, but whatever the tax you are paid in the source country, that is an allowed as an credit. Can you tell me final what is the tax payable 99,600. So that is only the answer Answer updated full credit method. What is the answer 99,600. Why have to make the change here Because previously 115 BAC rates are different right now are different. That's why suggested answers are wrong That's why we need to change the answers. Clear? Next one shall we discuss the what do you mean by the ordinary credit method Full credit is on over. Just next we will discuss the what ordinary credit method. Shall we discuss the ordinary credit method Ganesh, please make an observation. Important. We have many questions from the ordinary credit only. Okay. State of residence. Definitely, who needs to give the credit Resident country only needs to give credit. So India only here giving that what credit here. If you are observing that, who are giving the credit always the resident country or source country. Resident country only needs to give that what credit. Here also, yes state of residence is allowed the credit of tax paid in that source. Normal only, but restricted to that part of income tax which is an attributable to income taxable in that what state of residence. Very, very important. So underlining line is nothing but what full credit meaning only. Whatever the tax you are paid in the state of source, that is an allowed that what credit in the state of residence. This is a full credit. But after that, they are restricted with the one amount. That is only ordinary credit. Restricted to that part of income tax, which is an attributable to income taxable in the state of residence. Yes, if you are observing that, this question, nothing but what they are asking that what as per ordinary credit method also. Shall we discuss along with the example Yes. Yes. So ordinary credit we will discuss. Ordinary credit we will discuss. Ganesh, please check it out. Here relief, normally how much you want to pay as a tax in India 2,49,600 they want to tax. 2,49,600 they want to tax. But here, what is that amount they are giving the credit? That is a relief. How much amount lower of the following. What is the lower of the following 1,50,000? Whatever that amount you are paid in the source country, that is restricted with the. That is restricted with the. Please check it out. Yes, ma'am. Here in that source country, we are paid the 1,50,000. That is totally not given as a credit. That isn't restricted with the, what is that amount, ma? If, yes, ma, that 6 lakhs income is there in source country, if that was taxable in residence country, what is the amount of tax we are going to pay? So that means in India, sorry, in residence country, what is that amount of the tax we are going to pay, ma? 2,49,600. That is on which amount, ma? 18 lakh. That is on which amount, ma? 18 lakh. On 18 lakh, we are going to pay the tax 2,49,600. Suppose if that income is 6 lakhs, what is the tax? Please find out. So you are paid the 6 lakhs related tax by using 25%. That is in 1,50,000. If that 6 lakhs isn't taxed in the resident country, by using that what, ma? Not default tax rate, attributable to this amount. No need to calculate once again, ma. So please apply the cross multiplication only. If you are calculated by using the default tax regime, answer will be wrong. Income attributable, that what they are using, ma. So that means if the same amount isn't taxed in India, that isn't what is the tax amount. So please apply, ma. So 2,49,000 is nothing but what, ma, related to what, ma? 18 lakh. Can you tell me how much amount you are going to pay the tax with respect to 6 lakhs? What is that, ma? 83,200. That 83,200 only will give in as a relief, ma. So what is that amount you have to pay, ma? Hey, 83,200 is relief. Finally, 1,66,400. Can I give you the same problem once again for you? Shall we calculate, ma? Sir, full credit is debt easy, sir. Ordinary credit only you have to think. Suppose if that 6 lakhs was taxable in India, so this 2,49,000 for how much amount, ma? 18 lakh. So please calculate for 6 lakh. Please calculate for the 6 lakh. Whatever that amount is there, whichever is lower only what, ma? Allowed as and what, ma? Relief. So in our workbook, question number 1. So this is only what, ma? Ordinary credit related answer. So in your workbook, question number 1 is related to same question, sir. Workbook number 1 is related to same question. Please go and do that problem, ma. Ganesh, please check it out. Mr. A is in country of resident X, ma. Went on the 3 months assignment to that country Y. His salary income is 24 lakh, ma. So his salary income of Mr. A is 24 lakh. So can you tell me out of that country Y, 3 months related income is what, ma? 6 lakh at the rate of 28%. So full credit method dead easy, sir. All the persons can do easily. But shall we do that ordinary credit method right now? Ganesh, can you tell me country X is following that which rate, ma? Slab rate. Country Y is following that what, ma? Flat rate. What is the total income in that country X, ma? That is nothing but what, ma? Country X. They are not mentioned that nothing but like country India, USA, etc. Just they are mentioned as country X, ma. So just please make an observation, ma. What is the tax, ma? So 2,50,000 into 5% plus what, ma? 2 lakh, sorry, next 5 lakh into what, ma? 5 lakh into what, ma? 20% plus next one, ma? 14 lakh into 30%. So please calculate how much, ma? Whether you got the how much, ma? 5,53,800, correct, ma? Why you need to add the cess? It is in India. They have given the country X. You know that country X they are charging the cess. Sir, this doubt is nearly asked by nearly 50 students, sir. So they are given the country X. No need to add the cess, ma. Okay. Next, Ganesh. Country-wide tax liability. Directly you can calculate 6 lakh into 28%. What is that, ma? 1,68,000. So can you add this S here also? Surcharge. If they are mentioned only. In an examination, definitely they will give you the country India X. That means study material problem they are given. What do you mean by the full credit, Ganesh? How much full credit you can get? 1,68,000. Whatever that source country, whatever that is nothing but this is a source country, ma. This is what, ma? Residence country. This is in source country, this is in what ma? Resident country. Whatever that amount of the tax you are paid in the source country, that is an allowed as a credit in that what ma? Resident country. Then what about the ordinary credit ma? Ordinary credit is very, very easy. So can you tell me here you are paid the 5,53,800. That is on how much amount ma? 24 lakh amount. So please the tax attributable to 6 lakhs, please calculate. How much? So I think you will get that what ma? 1,38,450. So we have to calculate that what ma?
Yes, cess is also included, sir. 5,32,500 is the answer without cess.
So okay, if you are added the cess also no issue, add chain. So no add chain. In country X you can add for your satisfaction. Okay, 5,53,800 including cess. Okay.
1,38,450.
But in country Y you can't do that ma. So country X you are treated as just India. In previous question also, yes, in previous question that is nothing but what ma? Question number 21, if you are observing that is in India. That's why we are adding that what ma? Cess. So if you are observing that question number 21 ma, so Ramesh is a resident of India. That means the resident country is in India. That's why we are added the cess. So here also you can observe that residence country is an X. Okay. If you are added the cess, no issue. Okay. Next one ma. Calculate ma. Normally 1,68,000 or whichever is lower ma. 1,38,450, whichever is lower ma. 1,38,450 only in ordinary credit you can get ma. So that is only if you are understood here. So part of income tax is an attributable to income taxable in the resident country. So that is nothing but whatever that income tax you are paid. Wait. Whatever that income tax is paid in which country ma? Resident country divided by what ma? Income of which country ma? Resident country divided by income of which country ma? Source country. Are you clear ma? That is only they are given. So income which is an attributable to. How much amount of the relief they will give you? Income which is an attributable to the, sorry, in tax, out of the tax which is an attributable to that what ma? These countries only will be given as an what ma? Clear ma? Yes. Sir, if any person is preparing the questions ma, they are thinking nothing but what ma? Directly they can do this method ma. That is an unilateral relief. Many times that question only given in examinations. So this is an easy sir for doing also. But these are only the things you have to understood with your mind, sir. Exemption with the procuration. Can you tell me for rate purpose only we have to consider? Next, full credit method, dead easy. Ordinary credit method. Can you tell me what is that ordinary credit method, ma? Whatever that income tax paid in the residence country, yes, ma. On which income we are calculated proportionate to that what ma? Source country income, source country related income. Yes, ma. We are giving as what ma? Credit. Please remember just this thing, ma. So please remember just this format. Then you can do that all the things easily. So as of now, we are done with that. What are the methods, ma? So please let me know. Half of the chapter is done, sir. We are done the, yes, ma. We are done the bilateral relief. I think right now we are in the bilateral relief, ma. That is nothing but between the parties. If any agreement is there, then we can get the relief by way of what ma? Tax exemption method. What are the what are the two things for the tax exemption, ma? Full exemption as well as what ma? Exemption with the progression. Then after we have what ma? Tax credit method. Within the tax credit method, just we are done with the what ma? Direct credit method. Can you tell me direct credit can be in two types ma? Full credit as well as what ma? Ordinary credit. I think we have to discuss the two more concept ma? Indirect credit, special credit. Shall we talk about that special credit ma? So this is only that what ma? Pending area. We can get the one question from the special credit damn sure in the next examination, because all the things are already tested in the previous examination. Only these two are in pending. So these two only that what ma pending. Shall we start the special credit first of all, that is called as a tax paying ma? Ganesh, shall we? Yes. So please check it out the tax paying ma. So in your concept book page number 218 ma, please open that. In your concept book page number 218, please open that. Tax paying. Yes ma, that is only what ma tax paying. So no need to check that only example. Directly we can solve the one question ma. So that is only question number 2. By way of understanding the question number 2, automatically you can learn the concept ma. Shall we? There is a question related to what ma tax paying. So EA company is a parent company, being it is located in country X, has a branch in where ma country Y. Yes ma, X and Y ma countries, not India. Just remember. Okay. A company is nothing but located in the country X and they having the branch in country Y also. Branch and the profit. Can you tell me branch and the profits mean in which country we have an income? Country Y or country X? Country Y. So nothing but for that country X, you are in resident ma, because that in that country only you are located. For that country Y, you are earning that what ma source of income. You are earning that what ma source of income. Yes, country X yes ma taxes the resident on global income at the rate of 30%. That means in country X we have an 10 lakh. In country Y also we have an income of what ma 10 lakh. So because country X is a resident country is taxes on that what ma global income. What do you mean with the global income ma? Country X income as well as country Y income. Okay. So country Y tax rate is 25% ma. Yes, but please remember what is that ma? However, a measure to promote the economic development, therein special economic zones, country Y is not levying any tax. Because you have started the branch in country Y, no? Yes, in that situation, no need to pay any tax because you are incorporated in a special economic zone in country Y. Country Y is not levying any tax ma. Okay, there is a double taxation avoidance agreement between the country X and Y has tax sparing provisions. What is that ma? Tax sparing provisions. So this is only that what ma special credit. Okay. So compute the tax sparing if branch operates in the what ma specified area and that is not taxed in the Y. That means what ma? So company that is a branch located in country Y is an operating in a specified area like special economic zone. There is no tax on that. So please calculate the tax liability that they given ma. Okay. Can you tell me resident is nothing but for you which country ma? You are in resident for the country X and you have in the source of income on what ma in the country Y. Okay. Can you tell me what is the tax rate ma? 10 lakh you have to pay. What is the tax ma? 30%. Yeah, the rate of what ma? 30%. Here ma, there is no tax ma because you are operating that all the things in the special economic zone area. So that's why this is only tax on the above amount before the relief. Sir, how we can provide the relief ma? If, okay, as per the credit method, what is that format ma? If you are paid any tax in source country, that will be allowed as a credit in which country ma? Resident country. So what as per the full credit method, what is the thing ma? If you are paid that any tax in that what ma? Source country, that will be allowed as a credit while you are paying the tax in that what ma? Resident country, that is only the tax credit related. So if you are observing this is one of the credit method only, please remember. This is one of the credit method only. But here how we are going to give that credit ma? Even though you are not paid the tax in the source country also, we are treated as and you are already paid the tax. Deemed to be treated as and you are already paid the tax. That's why you can get that what ma credit. Can you tell me if you are paid the tax? Can you tell me there is no special economic zone related relaxation? How much amount of tax you are going to pay ma? 25. If you are operated in a non-SEZ area, what is the tax rate you have to pay ma? 25. That means 10 lakh into 25%. What is that, ma? 2,50,000. That we will give in as a credit, ma. So we are treated as an what, ma? You are deemed to be paid the tax in the source country. That amount only we are giving it as a credit, ma. So that is only we are written here, ma. Relief is available in country X, deeming that the tax has been paid in that country Y, even though no tax has been paid in that what, ma? Country Y. You are not at all paid the tax, but we are treated as on what, ma? You are paid the tax. The sparing, nothing but what, ma? So for safe side, okay, even though you are not paid also, we are treated as you paid only and we are giving the credit. Yes, ma. So then you can understood easily by way of reading this, ma. Tax sparing means what, ma? State of residence, country X, ma, in our example. Yes, ma. Allows the credit for deemed tax paid on that income. Yes, ma. On which is otherwise exempt from the. So normally in country way that is in what, ma? Exempt only. There is no need to pay the tax in country way because that is an operated in SEZ. Are you clear, ma? Tax sparing question. So definitely you will get the question from this, ma. Please remember, all of you. So, okay, whatever the things you're going to listen for today's session, sir, definitely it will give you the 15 to 20 marks in your examination, including MCQs also. So listen carefully, and if you have any doubts also, you can message me also, no issue. So are you understood the tax sparing, ma? If you are getting these type of questions in an examination, no one can easily identify this question, sir. So they know only that one question in DTAA, sir. That is nothing but what, ma? Unilateral relief. They don't know anything about these things, ma. They know only unilateral relief, all of you, all the students, majority of the students. Okay, if they know also, they know only full credit as well as full exemption. They don't know about that exemption with the progression. They don't know about the ordinary credit. They don't know about that what, ma? Tax sparing also. So that's why examiner wants to test these questions only in an examination, ma. So that's why please check it out, all the things while you are practicing also. Can you tell me, in bilateral relief, only one thing is pending, ma. What is that, ma? Indirect credit. What is the thing is pending, ma? Indirect credit. Are you clear, ma, up to now? Yes. Indirect credit. Just, ma. And the what is that indirect credit method name? Undertaking tax credit. Okay. In order to understood this, definitely there is no separate problem in our workbook, in our concept book, or as well as any other also ICMA book also. So, but we will discuss this example in order to understood that what, ma? Undertaking tax credit. Okay. That is only underlying tax credit, or we can call it as an what, ma? Undertaking tax credit also. Shall we? Please open the concept book, ma. A is a parent company that is located in country X. Okay. They having the one subsidiary that is in B Limited in country Y. So A company is resident for which country, ma? Country X. Subsidiary B Limited is nothing but located in where, ma? Country Y. Resident of which country, ma? Country Y. So nothing but if you are observing, so A Limited is investing in which company, ma? B Limited. So by way of investing only, what relationship is an established, ma? Subsidiary and holding relationship is an established. So this is an holding company, this is a subsidiary company. Okay, B Limited out of its profits, they are paid the dividend. How much amount to the A Limited, ma? Dividend. Can you tell me what is that amount of dividend they are paid, ma? 1 lakh. So out of their profits 10 lakh, 1 lakh is distributed as a dividend to A Limited only. Are you understood, ma? Next one, ma. Out of profits of an 10 lakh. Out of profits of how much amount, ma? 10 lakh. So 1 lakh is paid as a dividend. Okay. Other income of A Limited. Can you tell me other income of A Limited is nothing but what, ma? 11 lakh. So that means already they have another income, that may be capital gain income, anything, that is an 11 lakh, ma. Can you tell me total income after receiving the dividend? 12 lakh. Dividend withholding tax rates in country Y. Can you tell me country Y means nothing but what, ma? B Limited. That country X means nothing but what, ma? A Limited situated. So if you are paid the tax, withholding tax rates like TDS, ma. Withholding the tax means nothing but TDS only. We are not at all paid the total things. We are withholding the some amount of the tax on that income. That is in what, ma? 15%. So tax rate in country Y is nothing but 25%, ma. Tax rate in country X is nothing but what, ma? 30%. Withholding the tax rate nothing but what, ma? 15%. At the rate of what, ma? 15%. Just I am writing all the things, ma. Nothing is there. Yes. DTAA between country X and country Y is underlying tax credit. That is only they can give you in a shortcut as an what, ma? UTC also. Underlying tax credit. Ganesh. So can you tell me which country, ma? Country X. This is in country YA. What is the total income, ma? How you are going to calculate the 12 lakh? Please let me know. 11 lakh is another income. 1 lakh is a dividend income. So how this is in 10 lakh, ma? So they having the profit 10 lakh only. They having the profit of how much, ma? 10 lakh only. So please calculate the tax, Ganesh. Country X tax rate, please apply 30%, I think. Country X 30%, country Y, ma? 25%. Correct, ma? Next one, ma? Next. So please make an observation, Ganesh. While I am receiving the 1 lakh from the B Limited, can you tell me how much amount they are deducting, ma? 15% of the tax they will deducted. Okay. So one more thing, ma. A Limited, normal other income is 11 lakh, ma. We are receiving the dividend of how much amount, ma? 85,000 only. After deducting the TDS, we are receiving that how much, ma? 85,000 only. But Ganesh, please check it out. We need to show that all the amounts as in grossing up. I think you know in TDS chapter also, if you are receiving the net amount also, we have to show that in our total income as in what, ma? Gross amount only. That's why we are showing the 12 lakh. But already how much amount of the tax we are paid in the B Limited, country by, ma? 15,000. So that's you can get it as a credit. That you can get it as a credit. So nothing but on this 1 lakh only they are withholding that how much, ma? 15,000. That I can get it as an what, ma? Credit. Tax credit for withholding the tax. Next 3,45,000, Ganesh. From that I will get the 2,50,000 credit. For why? So you haven't 10 lakh only. What is that, ma? On the 10 lakh, you are already paid that how much, ma? 2,50,000. Whatever that amount you are paid in the ESMA source country, that will be allowed as a credit in that what, ma? Residence country, that is only. Yes, ma. Finally, you have to pay that what, ma? 95. That means in underlying tax credit is simple, ma. If any TDS isn't deducted in the source country, the TDS amount also, you can take it as a credit in the country X. That means country of residence. So that is only the point, ma. Sir, underlying tax credit method mitigate the economic double taxation, ma. So here they are given the definition of economic double taxation. Economic double taxation occurs where the same income taxed more than once in the hands of the different person in the same jurisdiction. So nothing but what, ma? Economic double taxation occurs the same income taxed more than once in the hands of the different person in the same tax jurisdiction. They are already deducted the tax. Okay, they are already deducted the tax. And once again, we are going to pay the tax on the what, ma? Dividend income. So this is a double taxation only. That's why we have to take the credit, whatever the TDS they are deducted. Whatever the TDS they are deducted. That is only what, ma? Underlying tax credit method may not be favorite area for that examiner, ma. But if you want to refer that once, definitely this is an example. They will give you this is only as an what, ma? For 2 marks. So if my guess isn't correct, believe me. So in every attempt, if I am guessing one thing, definitely that will be that what, ma? Question only. So mark my words. Okay, after the writing that examination, so you can message me also. Sir, what are the 2 questions they will give you for that 4 marks or 3 marks also? So I think you have an tax pairing. This is a 3 marks or 4 mark question, and within that only this is a nothing but 2A 2B. Within that they will give you that what, ma? Underlying tax credit also for another 3 marks. Like total 6 marks questions you can get from this chapter. The first one, they will ask you what my tax paying, the same question, but they will give you all the things in a paragraph form. We are written that all the things in a point wise. They will give you that all the things in a paragraph. Okay, maybe amounts may be changed. And underlying credit also. So underlying tax credit also. These two things will be the next examination questions, ma. So please do practice at least once, okay? Then what is that area we have to go, ma? What is that area we have to start with, ma? Next, we have to start with the, yes, ma? Unilateral relief. You have to start with the what, ma? Unilateral relief. Shall we start that unilateral relief concept, ma?
Country A limited to 12 lakhs వచ్చింది సార్.
Country, yeah,
ఇక్కడ వీడు A limited 12 lakhs సంపాదించాడు, B limited 10 lakhs సంపాదించాడు.
A limited
10 lakhs 12 lakhs income. B limited 10 lakhs income. సో B limited ఆ 10 lakhs సంపాదించిన దానికి ట్యాక్స్ పడిపోయింది ఆ కంట్రీలో. ఇప్పుడు 12 lakhs కి ఇక్కడ ట్యాక్స్ కట్టాలి. ఎంత ట్యాక్స్ కట్టాలి? 3,60,000 ట్యాక్స్ కట్టాలి. ఆ డివిడెండ్ ఇన్కమ్ 50,000 కి ఆల్రెడీ మైనస్ చేశారు కాబట్టి 3,45,000 ట్యాక్స్ కట్టాలి.
మళ్ళీ చెప్పు.
ఆ డివిడెండ్ 50,000 రెడ్యూస్ చేస్తారు. ఎందుకు? అది అక్కడ నుంచి వచ్చింది. ఇప్పుడు సోర్స్ ప్రకారం ట్యాక్స్. సో అసలు ఈ 3,45,000 ఇన్కమ్ ఇక్కడ ట్యాక్స్ అవ్వాల్సిన ఇన్కమ్. ఆ 2,50,000 కూడా మైనస్ చేస్తే డబుల్ టాక్సేషన్ కాదు, ఉన్న టాక్స్ అయిపోతుంది కదా.
ఉన్న ట్యాక్స్ కాదు, అది కూడా మనం పే చేయాలి చూడు. సో దిస్ ఇస్ 10,000 and the tax rate applied in that what ma foreign country, that is at the rate of what ma 25%. So that means we want to give the relief for the foreign country, directly we are following here full credit. So if you are observing that, this is also needs to pay the tax because this is a parent company being located in country X, that is a subsidiary in country Y. So normally parent company normally required to pay the tax here also. So that's why relief as per that underlying tax credit, yes sir, they are given the whatever that amount is there, that is in B limited nothing but we are given as a credit directly. So that is only the point, please check it out. Underlying tax credit is an allowed to the resident not only for withholding the taxes against the dividend income, but also for the taxes paid on the underlying profit out of which dividend is paid by the company. So that means we are not giving that only for the dividend income. We are not only giving the credit for that what ma dividend. So also from which amount they are issuing the dividend, that also we can give that credit. So that is only the point. Also for the taxes paid on that underlying profit. Can you tell me out of which profits they are giving the dividend ma 10 lakh? For that also we can give the dividend. For that also we can give that what ma credit. So that is only. However, that underlying tax credit may apply only for the satisfaction of substantial interest of shareholders requirement meet. Simply here the A limited shareholders are investing in that what ma B limited. So that's why, so that is they are required to pay the tax once again. So nothing but shareholder satisfaction point of view only this will be applicable. So here you have to observe. So TDS related, yes, that is a normally we need to give. Out of which amount we are distributing the TDS, on that amount also we need to give the credit. So that is only that underlying tax credit mechanism, sir. Next. Next one, 91. So please check it out the 91. We have many questions related to 91 ma. Unilateral relief, section 91. There is no DTAA. There is no DTAA. Unilateral relief. Conditions ma, first one. SSC is a resident in India and he having that income from the foreign country tax also paid on that foreign country or deducted in the foreign country, there is no DTAA. Sir, if all these conditions are satisfied, then only we can check that what ma? Then only we can check that what ma? 91, that is an unilateral relief. Please remember these conditions, we have to written it as an what ma note points also. Otherwise, we can't get the full marks ma. In every examination, we have this type of questions. So definitely we have to write that what ma? Note points. So please make an observation ma. If any SSE is a resident in India and he is earning the income from the foreign country and he is also paid the tax in that foreign country and there is no DTAA. That's why we are going to give the relief under section 91. So how we are going to provide the relief under section 91 ma? So just here we will check it out the steps ma, and in the practical problems we can apply the steps easily. So compute the net total income. Can you tell me what do you mean by the net total income ma? Please add Indian income as well as foreign income. Then you will get gross total income minus you have to reduce the what ma? Chapter 6A deductions. So please remember what are the chapter 6A deduction covered in this chapter ma. So that only may be repeatedly given in that examination. Don't yes ma bother about that. We have to know that all the chapter 6A deductions are etc etc. Okay, what is that ma? Compute net total income. On that please compute the tax ma. Tax means nothing but gross tax. Before giving the TDS and TCS credit and before giving that MAT or AMT credit, before giving the credit of what ma self-assessment tax, before giving that what ma advance tax credit, but add that after education cess as well as what ma surcharge. What do you mean by the gross tax ma? Don't give any credits ma, but add surcharge as well as education cess. Then you will get the gross tax. So please calculate the average rate of tax. Average rate of tax means gross tax divided by net total income into what ma? 100. This is nothing but average tax rate in India. So please observe, we are already paid the tax in which country ma? Foreign country, and please calculate the tax rate. So if they are given the directly, okay. If they are not given the directly, tax divided by total income in foreign country into 100, you will get what ma tax rate in foreign country. So please select whichever is lower from this step 3 or step 4. That means average tax rate in India and average tax rate in foreign country. Whichever is lower, please select. Yes ma. Can you tell me here we have to provide the relief for which which income of foreign income, because in foreign we are already paid the tax. In India also we are going to collect the tax. That's why on foreign income we have to provide the relief by using that rate find it out in the step 5 ma. Rate find it over in where ma? Step 5. Are you clear ma up to now? Okay. So please open the workbook. I want to erase that all the things in a workbook ma. I think question number 1 done, question number 2 done. Yes ma. Question number 3 is nothing but full credit related question ma. Question number 3 is nothing but what ma? Full credit. So how you can identify that is a full credit ma? In this line only. However, foreign tax can be set up against the what ma? Indian tax liability. That means that is an what ma? Full credit only. Yes ma. Next question number 4, exemption with the progression. Question number 4 is nothing but what ma? Exemption with the progression. Give me some time ma. I want to remove that all the things. Yes, ma. I'm taking that nothing but nearly 10 or 20, 10 or 15 attempts related questions, ma. So some mistakes is there in suggested answers also. I want to give you that clarity over that mistakes also, ma. So that's why I want to write it down all the things in a clear way. So just follow it, ma. So I want to give you that clarity over that all the things. I want to tell you that many more problems also, ma. So these are all our past examination papers. Just if you are refer that all the things, then automatically you will get the what ma answers. Yes. I think this question number 21 already done in yesterday. So Ganesh, next shall we do one question, ma? Okay. That is in question number 5 we will discuss. So up to question number 4 already done. This is in full credit, ma. No need to discuss all the things. Full credit means nothing but what, ma? Whatever the tax you are paid in the source country, that is directly allowed as a credit in the which country, ma? Residence country. Question number 3 is done. Question number 4 is an exemption with the progression already done. So question number 5 we will discuss, Ganesh. Okay. So please participate in the discussion, all of you. Please participate in the discussion. So resident Indian ma derive the what ma following incomes. Derive the what ma following incomes. The first one, you having that income from profession. Can you tell me what is that income from profession, ma? Taxable under the head PCBP? No. Yes, that is in 3,74,000. Royalty income from the foreign country, that is in taxable under which head of income, ma? Income from other sources, but that is in 5 lakh is there, and that they are directly given the 3 lakh chapter 6A deduction, that is an 80 QQB you can get, ma. So they are only directly given the chapter 6A deduction, but what is the tax rate paid in that foreign country, ma? 20%. So compute the Indian tax liability of that SSC, assuming there is no DTAA. Sir, please check it out all the conditions. If the 4 conditions are satisfied, then only we can provide the what, ma? Relief under section 91. The first of all, SSC is a resident in India. Yes, that is in condition 1 is satisfied. Second one, ma, he hasn't the foreign income. Yes, condition 2 is satisfied. And he paid the tax in the ESPA foreign country, or maybe tax deducted in the foreign country satisfied. There is no DTAA. All the 4 conditions are satisfied. First, write the theory. In your suggested answers also, they are not given this, ma, but you have to write it down in an examination as a note point. Maybe. So, this will not give you a full marks for this question. It may create that impact on all other answers also. While writing that question, while writing that any answer related to that question, you have to give your best, sir. So automatically, so if you are written that any wrong answers also, it will create the better impact. That's why you have to write it down. Okay. So all the students are directly calculate. First you have